Day-to-day basis, Tom.
Yeah, so the handoff for Europe today hasn't been great, has it? There is no fear and loathing in markets, but there is certainly caution across the benchmark. Then you're seeing futures pointing lower by about 0.1%. Here in the UK, FTSE 100 futures pointing to a slightly deeper loss of around 0.3%. Oil prices are slightly softer today. Copper and iron ore also weaker, though gold and silver are currently up. DAX futures currently flat. Yesterday, autos amongst the sectors under the most pressure. Energy was on the top side in terms of your sectors yesterday, again on a day of modest losses. In terms of individual names to watch, Anna, what are you looking at?
Yeah, individual names and one sector in focus, of course, and that is tech. We have Nasdaq futures down. They've been down through much of the morning, and they're down around 0.3%, so pulling back a little from earlier losses. But what does that mean for European tech? Could we see tech stocks on the move as a result of the Broadcom numbers? ASML will be watched as well for other tech reasons. Remy Cointreau in focus as we have earnings through from that business. Slightly better than expected operating profit for the year through to March. The cognac maker trying to stem losses from a decline in demand in critical markets. So there's a focus on that particular business. We'll get a briefing in a moment. And Bill Ackman's Pershing Square is selling roughly 80 million shares in Universal Music Group, UMG. We've seen that overnight placing taking place. And so Guy will watch that one as well.
Yep, we'll certainly watch all of those. Let's get an idea of what the headline numbers look like. A quick look around Europe to tell us what is going on. Here we go, market open time. We are open across Europe. The FTSE 100, little flat this morning. We're expecting it to be one of maybe the underperformers as we work our way through this session. Keep an eye on the AEX, though, this morning. It could be interesting to see how ASML deals with what we've seen overnight from Broadcom, despite the fact it's now Europe's most valuable company. So we'll see what happens when that opens. But in so far, early indications is we're not going anywhere in a particular hurry. We have obviously rallied hard when it comes to the tech sector recently. Europe hasn't had all of that. Does that mean it doesn't get quite the downside when it comes to what we are going to see coming off Broadcom? CAC's absolutely flat. DAX is up by 0.2%. The IBEX is up by 0.1%. At a headline level, I'm not sure there's much to take away from what we see on the screen in front of us, Tom.
Yeah, do you know what? On a sector-by-sector basis as well, it's hard to find anything thrilling in terms of narratives. Energy is your sector that's seeing the biggest losses right now on lower oil prices, of course, currently down 0.8%. Retail is your best performer across sectors, up 0.5%. Consumer products also gaining 0.3%. Travel and leisure, modest gains there, just shy of 0.2. Tech is on the downside, down 0.3%. And you mentioned ASML. Currently, that company is down 0.5%. Anna.
Yeah, so yes, absolutely. At an overall index level, not really moving very far. The London market then underperforms, down 0.2% on energy to some degree. Let us talk about where we are in these markets then. Joining us for further analysis, Sophie Wynn, Senior Cross-Asset Strategist over at BNP Paribas Asset Management, with us on set this Thursday morning. Sophie, nice to have you on the programme, on the opening trade. Let me ask you about your overall sense of where we are in these markets, because in your notes you talk about sentiment starting to look exuberant. That's an interesting choice of words. Is it too exuberant?
So I think compared to last time we spoke, sentiment has fully recovered. Positioning is starting to look, I think, on the bullish side. And if you look at surveys about like potential of hard landing, the priority is very low. So I think the hopes of a Strait of Hormuz reopening on top of the AI trade pushed investors to be much more bullish at this point, when the tail risks are not taken into account.
When thinking about those tail risks, does that include a bursting of the AI bubble, if it is a bubble? We've heard conflicting views from some very wealthy investors overnight talking about their views on AI and whether we're in a bubble. We were talking to our colleague Mark from the MLive blog earlier on, and he was quite sceptical about whether all of these companies that are going after this big data center addressable market can really get the revenues that they're hoping for. Are you looking for this quote-unquote bubble to burst, or is that not your focus?
I think it's something to look at. I think on the AI trade, what I'm looking at is much more on the tokens rationing. There's anecdotes here and there that we're consuming so much tokens at this point that there's not going to be enough. And the divergence and bifurcation between enterprises and retail, users. But I think more importantly, it's going to be hanging on the timing of the Strait of Hormuz reopening, I think. And also the consensual view that once the Strait of Hormuz reopens, it's going to be a smooth process and we're all going to get barrels of oil. But what if you're going to have this initial dip, but then you're going to start doing the math, inventories are very low, and you're going to have a period where actually it's going to take time for the oil to get to you. Refineries are not going to start immediately in the Middle East, and you're going to have some period of shortage, which I think is not priced.
So on that point then, is that the rude awakening for the equity markets? It's that acknowledgement that we may get to a point where physical crude inventories actually run out. And is that what finally derails, or is it a reaction function to over-exuberance more generally and a concern about frothiness and an IPO not going well? What derails the equity market? Is it the geopolitics ultimately?
I think it could be a combination of factors, as in like central banks reacting not the right way when we're facing a supply energy shortage shock. The fact that you could have an energy shortage, like for now we're looking at inventories that are dipping lower, that's saving us. The fact that China is also net importing less, US dipping into SPR to net export to the rest of the world. And also there's like some demand destruction, which permanent or not permanent remains to be seen. But I think the fact that at this point, positioning and also hopes on economic outlook is skewed one way. There's some worries on Europe, I think. But when you have these talks about, the breadth and the equity market has been very weak, so hope for a broadening out, which means, like buy Europe or buy like sectors that have been hurt. And I think if you look at smart consensus, is very troubling is if you look at sectors like retail, autos, so that have been sensitive to potential energy shortage, you start to have smart consensus upgrading the earnings outlook, which is not in line with what's happening at the moment.
You're not ready to buy European luxury, European airlines at this point?
At this point, no. I think if you want to identify laggards, it's basically laggards where you have a fundamental story that makes sense. And that's why in our portfolio, we're still long semis, we're still long utilities, we're still long, biotech. So sectors and regions that will outperform in the long term. But then, like from a tactical perspective, if you want to identify laggards, we think that, for example, China Internet makes much more sense, where you have better China property news. The capital control news flow could be hurting sentiment in the short term, but it's supportive in the medium term. So it's more identifying laggards that are good from that perspective.
So Chinese tech is an uncorrelated asset to US tech. Is that right?
So if you look at China tech, they are much more internet. So they have been hurt because they haven't been so prevalent in terms of AI adoption, but that's changing. So their cash flow has been hurt by their food subsidies. But if you look at Tencent, for example, or the news flow we're having over the past couple of months, they are shifting towards AI adoption, which is something new.
A lot of people out there are trying to figure out, I've got all this tech in my portfolio. I'm about to get even more because of what is happening with SpaceX and these other IPOs that are going to arrive. I don't want that exposure. I don't want that concentration, but I don't know what else to buy. You give me a whole kind of, what do I buy if I'm worried about what is happening in the tech landscape? do I just go to cash and wait for that to come down? You talk about other assets that might come up over in the long term, but presumably that's a relative trade. They're going to get hit. If tech comes down, everything's coming down. So how do I manage tech? If I fundamentally believe that tech is going to come lower, how do I manage that process?
So I think it's two things. So if you're worried about tech, what if tech continues to go up? So I think the fact that AI had 3 phases, the first one has been more on the hardware side.
Sure.
Second, physical AI. And third is more going to be this unicorn sectors that will benefit from AI, but that's not priced yet. So we can talk about the auto sector that could potentially shift the supply chain and respond to AI needs. So identifying these unicorn sectors that are cheap.
Yeah.
And then on the other side,
the auto sector is a unicorn sector.
We're still looking into that, but it's more identifying these potential sectors that can shift the supply chain easily to respond to AI or start producing drones, like redirecting towards defense or like AI. But I think the other angle is, fine, if you have a bubble, what is not being reflecting the broad economic outlook at this point is, I think, gold.
Right.
Gold has been hurt because ETF are not buying.
Yeah.
EM central banks are using gold as a support for their currency. And if you look at your broad portfolio where it's been one way, AI, and potentially broadening out, gold has been cast on the side, underloved, and that could be your portfolio diversifier.
So gold could still be attractive. How does that rub up against all the big IPOs that we're going to see and the focus on AI there? Are they going after the same investor, or does the same investor? I'm thinking about retail, I suppose. Retail got very excited about gold and silver. Now retail is excited about AI.
So, like retail investors, I think they are quite momentum players. So I think in terms of like investing, if you look at I think you're right. The fact that there's been the shift towards like gold, silver into AI. But what if the Strait of Hormuz doesn't reopening is not as smooth as we expect? We start to have to price an economic slowdown and potentially like deeper than an economic slowdown. I think gold is going to be back in the forefront where even post-Iran, there's going to be this wake-up call where you're going to need more in terms of portfolio out of the dollar. And I think that's why the ongoing negative correlation between equities and dollar is super interesting, because it's not a sign that the dollar is back as a risk-on, risk-off hedge, but the fact that the dollar at this point is hurt more when dollar is up than dollar up when equity are down.
Sophie, great to catch up. Thanks for joining us this morning. Really appreciate it. Sophie Wynn, Senior Cross Asset Strategist, joining us from BNP Paribas Asset Management. Core 6 looks like this. A big focus on tech this morning post Broadcom, and as you can see, it is having an effect. ASML is a little softer this morning. Some of the defence names are also giving back some of their gains recently. More of a defensive bias in the market, certainly. Names like Nestle doing reasonably well. Let's stay in the food and drink sector. Let's hand things over to Chloe Melee. That's where she's starting as well.
Good morning, Guy. Indeed, we have the cognac maker Rémy Cointreau doing very well this morning, with shares up more than 9% after doing slightly better than expected, reporting slightly better than expected operating profits. So those are not blowout results by any means, but there had been so much weakness for Rémy Cointreau recently and for that broader alcohol sector that any indication that things are picking up, are getting better, or even just stabilizing, that is seen as very positive and very encouraging. And that's why we've got this big boost in the shares this morning for that company. On the tech sector, however, we are seeing a little bit of weakness. We are in the red across the board, especially with Nokia this morning, and that is due to the Broadcom outlook, which was seen as disappointing. And of course, the problem here is that the expectations for those companies are so high, and so any sign of a slowdown is taken very badly and really dents this AI sentiment. And so this explained so much of that weakness this morning. Moving on to Universal, which was halted earlier, it is down now about 7% after Bill Ackman's Pershing Square is selling its stake in the company, and that is just a few days after Universal rejected a takeover offer from Pershing Square. It was a deal that was seen as very complex, and now it seems that Bill Ackman is moving on from Universal after first acquiring a stake in the company in 2021, and so we are seeing that really drag down those shares this morning. And finally, Puma is doing well after being upgraded by Citi analysts, which have mentioned and highlighted a very positive opportunity in China after Anta Sports became the biggest shareholder in Puma. And so it seems that we've got a positive outlook there, and we're up more than 4% for Puma this morning.
Chloe Millet with some of the stocks on the move this Thursday. Thank you. Coming up, we're going to get more details on that Remy Cointreau story, more analysis as the cognac maker stems losses, as Chloe was saying, from a decline in demand in key markets. That is next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last two headline reports from NFP have been really, really strong.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, Friday on Bloomberg.
Welcome back to the opening trade. 16 minutes into Thursday, the 4th of June session, and actually things looking much more positive than anticipated, up by just 0.1%, but the DAX and the CAC not doing too badly, even if the FTSE 100 underperforms, but it's dragged itself out of negative territory, which isn't bad. We haven't seen a huge move in the Nasdaq to go alongside that, but one of the things that's been weighing on European stocks has been sentiment around, or weighing on stocks broadly, has been sentiment around tech, and that from the Broadcom earnings was weighing on the Nasdaq, and that still is the case. Oil prices are still down by 1%, but the European landscape not looking as bad as it did first thing 16 minutes ago, Tom.
Yes, though tech is under pressure, as we expected, as a result of the disappointment around Broadcom, with all the caveats that, in fact, the quarter was very strong. It was the forecast that disappointed some of the analysts. And so you do have that reader, Chris, because, of course, in extended trading, Broadcom was down pretty heavily, double digits. And so Infineon is down 3.4%. You're getting likes of ST Micro down 2.9%. Logitech is lower by a little over 2%. BE Semiconductor softer as well by 1.7%. ASML. The list goes on. There is caution returning to the European tech space. After some decent run-up higher, Nokia is also falling pretty significantly as well, and that has been dusted off as a new kind of AI darling recently. The move then coming after disappointing results, as I mentioned, from Broadcom. The company delivering a lower than expected forecast for AI chip revenue. The numbers suggest the firm's efforts to gain ground in the burgeoning industry are going more slowly than anticipated. They are very much going, though. With us is Bloomberg's senior strategist. You have to put context around this, don't you? Neil Campling, who will add that context, because they're still saying, what, 180% growth year on year for some of their AI products, Neil. Just why the disappointment around Broadcom, given that on some metrics it seems to be performing pretty well?
Yeah, Tom, as you were talking there in the intro about the setup into the print, and actually we take a step back and look at where the stock and the market was at the end of March. Since that time, Broadcom has risen 60%. We've also had the S&P up 20%. Broadcom, the third biggest contributor to the S&P gains over that time period. Massive, massive gains. The SOX index, the semiconductor benchmark index, up 95% year to date. AI winners basket up 65% year to date. So they've been massive, massive moves. So it's really a case of the print, the anticipation into the numbers. So you'd have to deliver a significant beat to justify ongoing momentum. And I think if you looked at what they actually said on the conference call, they were saying that, you know, in terms of the guidance for the full year, whilst it may be a little bit below some analyst estimates, the guidance for the further out year is higher because of the timing of when the chips get delivered. But it's I think it's quite a healthy, to be honest, price reaction because momentum has been so quick for the entire AI space that we need to get a sense check.
There's been a lot of momentum behind the AI story, for sure, and so we ask whether Broadcom means anything in that context. Let's take a moment to think about whether we are in a bubble then, Neil, around AI themes, and we'll play you a clip of the CEO of Cerebras talking about the bubble, or the opposite, actually, of a bubble. Let's listen.
I think historically bubbles were characterized by a notion of if you build it, they will come. What is unusual about AI right now is the builders are so far behind the demand, it's absurd. We have a backlog of more than $25 billion of demand. That there are none of us, not AMD, not NVIDIA, that can keep up with the demand that your employees are driving. And that's sort of, in a lot of ways, the opposite of a bubble.
So that seems to be the opposite of a bubble then. And we heard from Sophie Wynn, our guest in the first part of this programme, Neil, other reasons why we might be seeing the opposite of the bubble. You know, supply just can't keep up with the demand, which at the moment seems to outweigh it. What's your thinking? We heard the same from Taiwan Semiconductor's CEO overnight as well. If we look at the earnings momentum in terms of the market PE multiple, it's still very healthy. We're not at extremes. And the reason for that is because of the earnings growth. So the huge earnings growth for the pockets of the market. Estimated or rear view? Both in terms of rear view, in terms of delivered results, and in terms of the outlooks. And if an investor can potentially buy a leader like an NVIDIA, growing 70% year-on-year revenues outlook, on a 25 times price earnings multiple, you know, good old-fashioned price earnings to growth and those kind of metrics, it's actually very cheap, and it's actually at minus 1.5 standard deviations to trend. So the valuations are supportive. There is a lot of hype. There are winners and losers. Another discussion at some point about the IPO valuations of certain of these stocks, SpaceX, etc. But
and those IPOs are largely coming to market being loss-making, quite significantly loss-making. And what that tells you is that basically the AI story is being subsidized at the moment in a fairly substantial way. Are we, though, getting now to the point, and Sam Altman was talking about this earlier on this week, where we're starting to talk about token costs? We're starting to talk about kind of this becoming a utility. You have a meter on the wall, and it tells you how many tokens you're using and what the cost ultimately looks like.
Totally. It's a great point, because we mentioned it in Before the Bell yesterday that the token costs have doubled in the last 6 months. We also mentioned that Uber have actually stopped their employees from using certain AI tools because it's so expensive. So there is definitely a mix shift in terms of who the winners are, the cost of this AI spend. And of course, in technology, leadership changes so quickly. So 6 months ago, we were talking about OpenAI as being the leader. Today, we're talking about Anthropic overtaking OpenAI in terms of revenues and growth. So, there is...
Per unit of compute, that has gone down dramatically.
As it should do, because tech should, by its very nature, be deflationary.
We're just using a lot more of it.
We're using
Javon's paradox, right?
Absolutely true. But the problem that we also have is that there are certain components. We talked before about memory pricing. Memory pricing is up 600% in 6 months. So there is still a disconnect in terms of certain parts of the compute network. So certain things are getting much more expensive. In terms of the general long-term trend, tech should be deflationary. Otherwise, the iPhones in our pocket, which today cost $1,000, would actually, if you look at compute power, should be costing $50,000 based on the tech inside.
Love a paradox. Neil, thank you very much. Neil Campling joining us, Bloomberg Senior Strategist, talking all things tech this morning. Guy.
Remy's up a lot, like a lot, 10.5% right now. Stemming losses, the company declining despite declining demand in critical markets. But it's stable. The market's happy with stabilization here. Maddie Parker joins us, Bloomberg Consumer Reporter. This is good enough. Like, stabilization is good enough. The market, like 10%, that's a decent bounce.
Yeah, no, exactly. I think people are, I guess, relieved, really, in the market to see how Remy have done this morning. As you say, operating profits come through slightly ahead of expectations. They've beaten what analysts expected. That is still down 11.5%, as you say, in the year through March. The kind of really big picture here, really, is that they've had pretty solid demand in the American markets. But that's kind of being persistently quite offset by quite sluggish demand in China and in Europe for their products, like cognac, obviously being the most famous one. I mean, it's true that a lot of the alcohol companies have seen pretty poor stock performance this year. So I think, as you say, markets are just relieved to see that things are doing okay at Remy at the moment.
Yeah, what about global events, war in the Middle East? Is that sort of news flow and situation impacting a business like Remy?
Yeah, definitely. I mean, I think Remy have been they've been slightly less forthcoming, I think, about the kind of impact in the Middle East. Obviously, they're globally exposed. So we know what happens to consumer demand when the Middle East conflict began and how consumers rein in spending on fuel prices and the supply chain impact as well. Having said that, they're obviously not immune to all the geopolitical events. They've had the tariff spat last year between the EU and China, which restricted some of that duty-free cognac. They're also obviously the fallout from the US-China tariffs as well last year, which they blame for uncertainty in those markets. So it's good to see them kind of bouncing back over there.
So, Maddie, what are you and the team going to be watching for from Remy in the quarters, maybe the months and quarters ahead?
Yeah, well, their CEO this morning said that obviously their main aim is to try and kind of stabilise the cognac, the brand, and to kind of keep that momentum going. I think what's important kind of across the board for alcohol companies at the moment, that's Remy, that's the same with their rivals like Diageo and Pernod Ricard as well, is that alcohol consumption across the board has been sliding a little bit. That's because of cost of living and, of course, the kind of shift to a slightly healthier lifestyle maybe. But it'd be good to see kind of how they're able to combat that and kind of stabilise their momentum.
OK, the stock is currently up just shy of 11%. Maddie, thank you very much indeed, breaking down the Remy Cointreau results for us. Bloomberg Consumer Reporter Maddie Parker. We're checking more broadly in on European stocks currently across the benchmark. A little bit of a turnaround in sentiment, up 0.2%.
We are up 0.2%. The Dutch market, though, does underperform, which takes you to technology, doesn't it? And you can see that some of the tech names listed in the Netherlands are a little weaker, and that is not helping there. And the London market underperforms a bit, but the CAC are on up by 0.5%.
Well, so what's interesting is that Abivax is the biggest percentage gain, and it is up quite strongly. But the pharma space more broadly is up quite strongly. Abivax got smashed the other day and is bouncing back a little bit today. But there's definitely a kind of defensive bias broadly in the mix when it comes to the points gains, except for SAP, which is topping the points gains this morning.
Well,
so
that
we are
is
seeing,
interesting.
yeah.
That is interesting because it ties into our next conversation, actually, about what European tech names can do around European tech sovereignty and competitiveness. Coming up on the programme, the EU has unveiled its sweeping plan to claim sovereignty over chips and AI. We'll talk to Boston Consulting Group's Kirsten Rolfe. What have we heard from the EU? We'll get a briefing first on what it is that they have decided. Where does that leave Europe in terms of its tech sovereignty around cloud, around data centres and all the rest? And will the resulting European push be competitive with global peers? All that coming up shortly. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade. Happy Thursday. We're 30 minutes into today's session, and sentiment has turned a little bit more constructive. You're seeing bonds bid, yields are down, and you're seeing equities on the front foot modestly, but the gains are there after losses across the benchmark yesterday of about 0.7%. Today you're seeing gains, at least so far, of 0.3%. That is an adjustment from the futures picture that we saw. DAX markets are currently up 0.5%. Puma is playing a role. Guy's going to give more details in terms of some of the individual names. The CAC current is currently up 0.5% over in France, and here in the UK, the FTSE 100 putting in modest gains of around 15 points. Guy, what are you seeing?
3-4 to 1 on the upside. That's the interesting thing. 423 up, 144 down. So definitely a bias on the upside for European equities. That was not what futures told us coming into the market open first thing this morning. Volume seems to be consistently down. Anyway, so let's move on and talk a little bit about some of the gainers. Remy, stabilisation. That's enough. That's good enough to lift the stock. Remy's up by 12, nearly 13% this morning. Abivax got hit hard the other day. It is coming back a little bit this morning. We're up by 10.53%. So a little bit of a bounce in that stock. Puma also So a note out, I think it's from Citi, talking about the potential in China. That stock is up by 4.7% this morning. On the downside, we've got an unloading of... I'll go to the middle. Universal Music's stock. Nokia is down, unsurprisingly, given what we've seen overnight from Broadcom. And Pirelli, I think one of the short sellers that has been targeting this stock, has some information out on that. I think the short seller's called Grizzly. Anyway, we'll come back and maybe provide more information on that. But that, I'm not going to talk about the note, but I'm just going to talk about the market reaction. The market reaction is that the stock is down by nearly 5%, Anna.
Here's what else you need to know then this morning, Guy. The US says Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. The White House said the agreement was contingent on a, quote, complete cessation of attacks by Hezbollah, adding in a statement that the group must evacuate all operatives from Lebanese territory south of the Litani River near the border with Israel. There's been no immediate indication whether Hezbollah has accepted the terms of this suggested deal. Bloomberg has learned that the Bank of Japan officials are set to consider a quarter-point rate increase this month and see the possibility of a further rate hike later this year. The central bank is also set to unveil its latest bond buying plans at the meeting, with officials seeing little need to maintain the current pace of reductions in the fiscal year beginning in April. And TSMC's CEO says the company's global chip supply will fall short of AI-fueled demand for years to come, sustaining revenue growth for the firm. Even with new manufacturing capacity in the United States, the CEO says that the chip maker can't fulfill demand led by American customers, and reiterated the company's forecast for sales growth of more than 30% for this year. Tom.
Let's get to what's happening in Brussels around technology, because the EU has unveiled sweeping plans to expand its domestic tech supply chain and decouple from US and Chinese dependencies. The measures range from semiconductors to AI and come as the bloc struggles to keep up with competition. Joining us now is Tamlin Basin, European tech policy analyst at Bloomberg Intelligence. Tamlin, what is the EU hoping to achieve, and what is realistic?
Yeah, and I think realistic is the key question. So it is part of a decoupling, but really the EU is trying to do two things. One, it's trying to gradually reduce reliance on foreign partners for things that it views as critical infrastructure, and this is, again, cloud, AI, and semiconductors. Simultaneously, it's trying to lift its own domestic capacity to be able to sort of service some of that incoming demand. So I don't think that global decoupling is possible, given the supply chains in the technology space, but I think the EU policymakers are trying to build a little bit of more options for European businesses to thrive in this area.
Can Europe do what it wants to do without creating tech giants? Because that strikes me as being quite a challenge.
Yeah, and I think that's absolutely the key question. We're not going to see hyperscalers of the size of AWS, Microsoft, and Google pop up overnight in Europe. And I don't think that's necessarily what they're really trying to do. What they're trying to do, if you look at it on the cloud side, is they're trying to say, okay, these are some workloads that carry sensitive data. Think of things like defense, things like healthcare. We want to create an opportunity for European businesses to be able to service this demand. And that's really what a lot of this package is about, is building some of the capacity so that you can see some players compete in niche areas like this. And I think that's the more realistic near-term goal of these policies.
Yeah. So they want European businesses to stand up to this competition a bit better, I suppose, and are going to help them do that. Are we seeing innovative ways whereby big tech US companies are trying to be more European and assure that the data is in Europe and it's controlled in Europe, and all of that sort of way of getting around this new kind of regulation?
Absolutely. Now, I think this goes back to the scale that these large players in the U.S. have. They have massive R&D budgets. They are not caught flat-footed by this. If you look at over the past 18 months, they have all been touting their own sovereignty options. They have been partnering with domestic European providers, hoping to sort of be in the window for some of these workloads. They might not be able to get all of them, but they want to remain in the discussion for procurement in all of these areas. And I think that's an interesting thing to watch, how that develops going forward.
Okay, Bloomberg Intelligence Analyst Tamlin Basin, thank you very much indeed. Sets us up really nicely for our next guest in terms of a conversation that expands on this topic, because for more on what we can expect then from that EU plan and the wider impact of AI in Europe, we're joined now by Kirsten Rulf, partner at the Boston Consulting Group. Kirsten, thank you for your time. What do you make of the EU's plan? Is the prescription correct, and can they get it done?
That's a really interesting question, Tom. Yesterday, I saw a few Commission officials actually post that it was Tech Liberation Day, sort of reminiscent a bit of Liberation Day of President Trump about a year ago about tariffs. So certainly the expectations in the European Commission are high. The voices that have now read the proposal, including myself, are a bit more cautious because there's a lot in the proposal that still, yes, has to be realized in terms of the financing still needs to be there. That big shift from the supply side to creating the demand side on chips, but also on data centers, but also on frontier AI, that is still a big bet into the future. And I'm really curious to see how the European Commission is going to act on that, because they've also made a big bet on member states being in line with their sovereignty definition and with their sovereignty plans.
Yes, and I think you've been talking, and you pointed out that the definition of sovereignty is different for different, maybe different jurisdictions, possibly different companies as well. Kirsten, does sovereignty come at the expense of competitiveness for European companies?
Currently, that's actually the feeling in most of the companies that we work with. Our clients are global clients, and they're actually facing two problems. First, that so far very, very fuzzy definition of sovereignty in the European Union. Some of our clients actually prepared for disrupted supply chains. Others just felt that sovereignty from the European Commission meant decoupling. A third kind of definition that was surrounding and circling in the last few months was, okay, something just needs to be European controlled to count as sovereign in the European Union. And that really caused a lot of confusion with big companies. The second thing is that most of the big companies are global. So they're facing the problem that the US will have a certain tech stack that they want in place, compliant with all of their laws. Then China will have a certain tech stack in place, compliant to their laws and ideologies. And then now Europe is coming up with its own cloud rules and what you need to fulfill to be a cloud provider in Europe and what you need to have in place to be a cloud consumer in Europe by some of these hyperscalers. And I think businesses are really confused, and this package now brings a lot more clarity. That's great, but also let's not forget that there is a long time for implementation. There is still a long debating coming up. The European Commission is expecting this to actually go in force in Q4 2027. That's almost 1.5 years from now. So a lot of action can still happen on the ground.
Okay, so there's a lot of challenge then in getting this to be something that's competitive for global businesses doing business in Europe. Kirsten, what about opportunities here then? Are there parts of the tech stack within Europe that to this point have been done by non-European businesses that now will come with a lot more protection, and therefore European businesses might be able to scale up if they seize this opportunity? Where does that opportunity lie?
Yeah, absolutely. So, I mean, the package has two major parts. The one is the CHIPS Act 2.0, and the other one is, like you already talked about, the Cloud and AI Development Act. And both basically aim at scaling European capabilities, both in the semiconductor area, but also in the frontier AI area, an area where Europe is lagging years behind the big labs in the US and China, something that we don't have in the continent at all. And there is now a huge bet and investment in the grand challenges that this proposal lays out to finance frontier AI labs in Europe, to have that capability in Europe. At the same time, also for cloud providers, European cloud providers, this is basically a subsidy package. The levels that were defined by the European Commission clearly indicate that as of definitely level 3, but even in some areas level 2 of the 4 levels, you cannot be an American hyperscaler or Chinese hyperscaler. You have to be European-based, controlled, and even work with European personnel that has European citizenship. So that's a big subsidy package. All of that is based on the European Competitiveness Fund that's still under negotiation, and it's supposed to enable and level also a lot of private capital. So yes, there are lots of opportunities here for startups. There's lots of opportunities for smaller players to scale up. But as I said, the European Competitiveness Fund is still under construction, so there's checks being written here that may not be covered.
Right, and this could be expensive then, Kirsten, because it's a time of huge competition to scale up AI, scale up data centers, scale up all kinds of tech all over the world. I mean, the cost of memory, we've been talking about a lot on this program about how that's been seriously on the rise. So the bill for this sits with European taxation, I suppose. How is it all going to be paid for?
That's a great question. I think it will be expensive for several players. First, it will be expensive for the players that are big cloud consumers, because these sovereign products usually come with a price premium of up to 25%. If you buy a European sovereign cloud, it is more expensive than a hyperscaler right now. It also can be very expensive to push the demand side on the chips level. So so far, the European Commission's strategy was to subsidize fabs. Now they want to really build chips at the cutting edge of the AI frontier in Europe. That will cost a lot of money, and also drawing investors in will cost a lot of tax money and will cost a lot of political promises. And then, of course, consumers will also deal with higher prices, given that some of these products then also will be a lot more costly for people on the high street.
Kirsten, the call from the US tech industry is going to be that this is unfair. How do you think Trump is going to respond?
That's the great question. I was really surprised by how bold this package was and how bold it was also framed yesterday in Brussels. So I think the European Commission has gone a step further than their current rhetoric, and that was always very cautious, that was always very balanced. However, really looking at the language of the package, it is relatively nuanced. It could have been a lot worse for American incumbents, and I think that is because all European businesses know that they're currently very much dependent on American innovation, and they will continue to depend on American innovation for a long time to come. These frontier AI labs, they won't be here tomorrow. They won't be here maybe not even until 2030. So the rhetoric may be, from a political side, quite harsh, but I think from a business side, everybody knows that America needs to be a partner and will be a partner for a long time to come. Having said that, our latest research shows that already there's a little bit of a shifting away from US tech, and there's a little bit of a broadening of this sort of European partner landscape. So curious to see how the US will react. I can imagine that there will be a lot of rhetoric, but even the US knows that Europe is a big market for them and for their companies, and that they need it.
Kirsten, great to catch up. Thank you for the insight. Really appreciate it. Kirsten Rolfe, Boston Consulting Group partner on the new legislation coming out of Brussels. Coming up, oil lower following 3 days of gains. This after Israel and Lebanon agree to a ceasefire if Hezbollah also stops hostilities. Big if. Latest from the region next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome back to the opening trade, 47 minutes into our show, and European equity markets are higher than they were at the start of the trading day. US equity market futures have not budged. It's not that that's driving things, but things have turned around a little bit here in Europe. So we're up by 0.3%. The CAC and the DAX doing okay this morning, it would seem. Let's talk about oil, though, and that's the oil price weakness is weighing on some energy names. Oil is lower following 3 days of gains after Israel and Lebanon agreed to a ceasefire. The agreement hinges on a complete cessation of fire from Iran-backed Hezbollah. Bloomberg's Ona Ant is in Dubai and can bring us up to speed on what we've learned here. Ona, good morning. So this ceasefire seems to rest on what Hezbollah decides to do. President Trump earlier this week said he had the backing of Hezbollah, but it's not clear whether he has it right now in this moment. What is it worth if we see Lebanon and Israel agree a ceasefire and Hezbollah has not said anything?
Well, that's the key question that will determine how feasible and sustainable this so-called ceasefire will be, Anna. To be clear, the militant group Hezbollah was not a party to the agreement reached between the governments of Israel and Lebanon, and that was declared by the U.S. overnight. If anything, before that declaration was made, Hezbollah said that it would continue to protect its land, which it said was its duty. Now, having said that, there has been no indication that there has been a flare-up in fighting between Hezbollah and Israel overnight since the agreement has been announced. In fact, there has been no reported firing by Hezbollah into Israel's north, which is a red line for the Israeli government. But going forward, I think the unspoken consensus that is not in the letter of the agreement is that some level of fighting, especially in the south of Lebanon, is expected, and it's kind of acceptable to the parties as a part of the current ceasefire arrangement. Whether or not Hezbollah fires into Israel's north and whether or not Israel retaliates by attacks on Beirut, the Lebanese capital, is going to decide whether or not this ceasefire arrangement, we can call it that, will hold going into the future, Anna.
Okay, so we know how Lebanon and Israel, the Israeli governments, kind of feel about this. We're waiting for Hezbollah. We've already heard as well from the Israeli right, who are not happy with this deal. That just leaves Iran, Ona. Iran's reaction to this strikes me as being really critical. What's happened in Lebanon has been a big part of what Iran has been saying over the last few weeks. If it accepts this as being enough, could this push us towards a peace deal that could open the Strait of Hormuz?
Possibly. I mean, yes, Iran has repeatedly said that Lebanon, or fighting in Lebanon, is a red line. It's not going to agree to any extension of the current fragile ceasefire with the U.S. with fighting in Lebanon going on between Hezbollah and Israel. It just does not want that conflict to be treated on a different, separate diplomatic track than the current one that's going on between the U.S. and Iran. So yes, it is a very important part of those negotiations, and we know that Iran will not agree to an extension to the current ceasefire without the fighting in Lebanon Iran coming to a status where that Tehran sees as acceptable, but we cannot also treat it as the sole point that will decide the future of the talks between Iran and the U.S. There are other issues at play, from frozen Iranian funds to the future management of Hormuz. Lebanon is definitely a huge part of the discussions. If there is no real ceasefire there, we can argue that there's not going to be a progress in talks between the U.S. and Iran, which was indicated by Arakchi, Iranian foreign minister, just last night again. But we cannot expect that to solve the entire situation on its own either.
Onur, thanks for the update. Comprehensive as ever. We really appreciate it. Onur joining us out of Dubai. Let's get back to the markets more broadly and talk about what is happening. I think there's some really interesting things happening. You've got Europe up this morning. You've got NASDAQ futures down this morning. Now, Broadcom was a big part of that. But is Europe the anti-AI bubble trade now? Is that maybe what we're seeing in the market this morning? What is the beta here? What would happen if we saw tech unwinding in a more substantial way stateside? How would Europe react? I'm going to ask that question now to Mark Cranfield, who's joining us.
We've tried everything else. Europe's the only thing left. So
precisely. It does kind of feel like that. But is there some? If you're worried about the AI bubble story, is Europe your destination of choice?
I think this month is a big rotation story. And we're at the early stages of it. I think SpaceX confirmation they're definitely going to go ahead with the IPO is the beginning of that rotation. And Europe will benefit from the sense that they left so far behind. When there was the rush into all things AI and they didn't have an AI narrative of their own, Europe got left behind. And now it will benefit as people start to move money away from some of the overdone AI themes and they start to look for other places to put their money. So that is where further down the road, if we get a resurgence of the AI story, then Europe's in trouble again. But for now, they're in a good situation where they're going to pick up some of the pieces that fall out of this.
Okay. We're watching oil prices. We just got that great update from Onur about what's happening in the Middle East, Mark. I mean, is there anything new here? We're watching for how low the inventory levels get. And when this starts to get either physically really difficult or politically really difficult or price-wise really difficult for President Trump and co., is that what we watch to put pressure on the situation?
I think, yes, it certainly will. When there's headline stories that people really can't get the diesel and the jet fuel that they need, that certainly will be. But if you look at the Brent futures curve, if you look at for the end of this year, pricing has been between $85 and $90 for ages. Hasn't really moved at all. So traders in the oil market are pretty sure that whether Hormuz opens now or opens in a few months' time, there's going to be difficulty in supplies for quite a long time. They are not optimistic. They haven't. Otherwise, they'll be pricing oil at $70 or lower. They're not. They're pricing it pretty much at $90, and they have been for ages. So they're suggesting there's going to be a problem for ages.
But $90 doesn't sound extreme if we run down inventories. So is that pricing in a complete rundown of inventories, but a reopening of the Strait?
It is pricing a kind of a hybrid situation, but with room to go higher. If things don't work out well, then it'll go back above 100.
Is it so? I know Couple's got some views on this. But is there a view that actually what the commodities market is pricing is an economic rollover? That actually we're not going up because we're worried within the time spread that actually we're going to get a significant economic contraction?
Not yet. We're edging towards it. We haven't tipped over. The key to that will be the yield curve, the bond yield curve. It will flatten substantially because already short-term yields have been pushed up a lot. We do expect the European Central Bank to move. Maybe even the Fed's going to go towards a tightening as well. Other people as well. That will start to hurt the economies later in the year, maybe, or early next year, and then you'll have people grabbing long-term yields because they see the risk of maybe a recession at some stage or a big slowdown.
But are we not going up as much on oil at the moment because we're worried about that further down the road?
Probably. It's probably got a part of it, yeah.
And does that growth story in the States, though, lots of the signs at the moment seem to be pretty resilient, don't they? And AI is making up for the fact that we are, or more than compensating for the fact that we're worried about higher energy prices, and maybe that slows down things in the States. I mean, how do you balance that and think clearly about the growth story out of the US?
That is absolutely true. But if you look at some of the recent jobs data, if you look under the hood, there's some cracks appearing in there, particularly for young people who can't find jobs. They're being pushed out because of AI to some extent as well. So that wouldn't take much for the jobs numbers to deteriorate quite quickly. They seem to be on the cusp of any time the unemployment rate could go up to 4.5 or higher. And then alarm bells will be going all over the place that things are not looking so good.
Help me understand what's happening with staying on tech, okay? So the King Kospi, and yet the Korean won has fallen to its lowest since 2009 versus the dollar. With all the inflows, are there inflows into the Korean markets? Presumably, does that not support the currency? Why is the won at such weak levels?
Okay, a lot of moving parts with the Korean won. Number one is competition with Japan. The exchange rate between the Korean won and the Japanese yen is very, very important to Korean exporters. And if with dollar yen at 160, they can't afford the Korean won.
So the authorities are engineering this lower?
It's benign neglect, pretty much the same as we're seeing in Japan. They're just standing back and allowing the market to push it. At the same time, some foreigners have to reduce their holdings of Samsung and SK Hynix because they've hit the 10% barrier. So they need to sell some Korean won to get back. It's like, not everybody, but there's enough to move the market in that direction. So you're seeing some of that as well. Also, Bank of Korea, very slow, hinting at raising interest rates, but at a very slow pace.
The reason why Mark is here is because we've got an MLive event, which is going to be taking place this afternoon. If you're a Bloomberg Terminal subscriber, you will be able to watch it on Live Go. Please do. It's going to be great. We're all looking forward to it. Hope you have a good day. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Mega IPOs in focus. Elon Musk's SpaceX aims to raise $75 billion in the biggest stock market debut in history. Bloomberg also learns that Anthropic has lined up banks to lead work on its IPO. The AI rally stalls. A disappointing outlook from chipmaker Broadcom hits sentiment. Plus, the U.S. says Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. Now, also coming up, we put the spotlight on private markets. We'll be joined by Blair Jacobson, co-president of Ares, who joins me here in the studio. Now, first thing is first, there is quite a lot going on in public markets. I mean, this is what we follow day in, day out. We're seeing U.S. stocks actually retreating after a disappointing outlook from Broadcom, and that seems to be triggering doubts that the rally in technology stocks maybe, just maybe, has gone too far. Now, the downturn seems to be extending to other pockets of the tech trade, with cybersecurity firm CrowdStrike also dropping some 11% last night in the U.S. The picture for the moment, you can see S&P futures down some 0.2%. I look at euro dollar 116.04, and then of course we follow everything that's happening in the Middle East. Brent at 97.30. Now, if you look at some of the downturn that we see in U.S. equities, it'll be interesting to see whether that translates into European stocks. Look, a lot of these indices are not that rich on technology stocks, maybe with the exception of the DAX, and again, that's maybe a bit of a stretch, but the DAX, the CAC, and the FTSE gaining between 0.7 and 0.1%. So I was just talking about Broadcom. Look, those shares reacting in pre-market trade today after the company delivered those disappointing forecasts for AI chip revenue. Broadcom down 11%. So CrowdStrike's, that's also the other thing that we were talking about. A projected second quarter revenue failed to impress investors, and that's also down 7.3%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, SpaceX has officially filed for its IPO, aiming to raise $75 billion in the biggest listing ever. The mega IPO race is just getting started, as Bloomberg also understands that Anthropic has picked Morgan Stanley and Goldman Sachs to lead its IPO after filing confidentially for its own listing. Now, in a moment, we'll be joined by Aaron Captain, Global Head of Economics and Strategy Research at UBS Investment Bank. But first, Matt Bloxham from Bloomberg Intelligence joins us. Matt, every day we talk about SpaceX. Every day we talk about these mega IPOs. I mean, is this a battle actually of the mega IPOs, SpaceX and Anthropic? Does it make a meaningful difference on who comes out first?
It does, although I think probably SpaceX a little bit of a different bucket to Anthropic and OpenAI. I think there definitely is more of a battle between OpenAI and Anthropic, and clearly Anthropic is winning that right now. I think it does make sense to kind of be out there asking for money sooner rather than later, because you never quite know what the market's going to do. You know, we're seeing this huge volatility, particularly in AI-related names, and I think if things don't go well with the SpaceX IPO and or the Anthropic IPO, then maybe that for OpenAI that means they either have to accept a much lower multiple than they wanted, or kind of shrink the amount of capital they're raising. And as we know, these companies are all desperately hungry for capital to keep funding their midterm growth.
So, I mean, Broadcom, and this is kind of having an impact on markets at large. Broadcom results disappointed investors. What does that mean for the broader AI momentum?
Yeah, I mean, I actually think that the print itself in isolation was a good one, and it's positive for the AI story. You know, when in isolation, their AI revenues are up 143% year on year, and their guide for the next quarter is up over 200% year on year. So actually, in terms of executing against their AI pivot, they're doing really well. It's just that market expectations got a bit ahead of where they're going to come out. And if you look at it, it's about $1 billion of revenue we're talking about next quarter. They're guiding to $16 billion of AI revenue. The market was looking for a bit over 17. And who knows, they may well actually end up hitting 17 or more. But they're just trying to give a realistic expectation of where growth is. But it's a very healthy growth number. And I think it does underpin the fact that there's a huge amount of demand for AI chips out there.
Matt, I mean, indulge me, because I'm a little bit obsessed with SpaceX, and I've been going through, some of the prospectus. I mean, it's incredible, like 1 million people on Mars, and that gives them an extra bonus. I mean, is there any chance that the IPO is not successful because some of the metrics are, frankly, a little bit weird?
Yeah. I guess it depends how you measure success. Clearly, the banks are going to be very sensitive to making sure that there's enough left on the table for incremental demand. I think the fact that you're seeing the relaxation in the index inclusion rules probably gives you that kind of demand tailwind once it's listed. My personal view is that the next data points we see are going to be positive in terms of this kind of mid to long term story for the business. It is almost kind of fantastical, what they're planning to do on a kind of multi-decade view. Yeah. And there's clearly lots of engineering and commercial challenges they need to address to get there. But I think in the short term, the data points we get are going to be positive against that story.
So fascinating, and I can't take my eyes off it. Matt, thank you so much. Matt Bloxham from Bloomberg Intelligence. Now we're joined by Aaron Captain from UBS Investment Bank. Aaron, I mean, it feels like we're having these two conversations, which is one on AI and these big IPOs. And I know AI has been largely supporting a lot of the markets, but then there's inflation, there's concerns about the Strait of Hormuz. Like, when do the two worlds collide?
Yeah, so it looks like for now at these oil price levels, they're sort of canceling out almost perfectly, right? So, and in fact, what's sort of surprising to me is that the stress we saw in March is actually less severe in May when you look at Asia, supply chain disruption, et cetera. And so now part of that is because the tailwind from AI, it's not only large, but it's quite recent, right? So if you look at sort of the run up in what's happening in sort of Asia, export data, et cetera, the charts are just completely parabolic, right? And so when you start to sort of add up all the countries that are in the AI supply chain, you get to more than half of global GDP. And when you look at the trade in AI, it's about double the energy trade. And when you look at the memory prices versus oil prices, they've gone up 8 times faster than oil prices. So you start to sort of see the contours of why we have this big offset. Of course, what that hides is then sort of the distribution. So you're getting this aggregate strength in the U.S., Korea, Taiwan, and in equity markets. But you still, I think, are also seeing the pain from the higher energy prices, the supply chain disruption, et cetera. So we have sort of, I think, just distributional stress, but aggregate sort of resilience. I think that's sort of how I characterize it for now, right? And then we have to sort of see where the Middle East goes. So, we're still depleting these inventories at alarming rates. I think the conviction levels have gone down on when that becomes sort of binding, when you start to sort of see these prices respond to that. I think as a function of time and what you're seeing, governments say, for instance, in Asia, is, next month is the month we run out. And then, a month later, it's like, no, next month it's the month they run out, right? And so I think that the cliff effect is sort of getting pushed out. The data is not behaving in a way that suggests we're about to see some material deterioration. Right? And so that, I think, is enhancing confidence in the markets that, okay, that means we have more time to come to some kind of ceasefire agreement.
Aaron, I mean, on AI, do you believe in the power transformation at this level? So we're spending billions and trillions. What if the technology needs new data centers with new equipment? I mean, we're kind of throwing everything at it now in a technology that's still advancing very quickly.
Yeah, so what I find fascinating is that, so last year, did 500 billion, 550 or so in the U.S. on CapEx. Let's say we're at, 800-900 this year, so delta 400. That 400 delta is sort of driving everything in the world, right? So the 400 billion, which is about 1.25% of GDP, is giving you about, 20% of GDP in extra equity valuations, which is then driving the bulk of U.S. consumption, is giving you now, I think, the bulk of sort of the delta in global trade growth, which is 80% AI now. So it's all the same dollar, right? So it's amazing the multiplier effect of, I think, that CapEx build-out. Now, when you look at the projections of how much more that has to go, we have several years of that to come, right? Now, I think there's a difference then between markets and sort of national accounts in the way, the economy is measured. So it will become hard to sustain what we're currently seeing in the growth contribution, because it's not about the levels, but about the change. So if we sort of flatline at $1 trillion a year, then over time, that means we get less GDP contribution. Now, I still think that'll, be confirmation that this is progressing and we're, technology is improving, and I think the markets will be fine. But the tailwinds we're seeing now are probably pretty close to a peak in terms of the deltas that it's generating.
Aaron, so Odd Lots, which is one of my favorite podcasts, actually also spoke to Goldman Sachs chief executive David Solomon, and they were asking whether these big mega IPOs, what they meant, because there are so many coming all at once. Take a listen.
I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital.
Well, you can watch the full conversation on the Odd Lots podcast. And Aaron, I think for our conversation is that if they have to, does it change fundamentally our economies?
You mean the amount of borrowing that they need to do? Or
I mean, the markets, I mean, these big IPOs, we've never really lived through it. I don't know how that translates into your world.
Yeah, so I mean, that's the equity side. Of course, they're also going to borrow $250 billion, right? I think there's plenty of appetite to actually fund it, right? I think the markets would not be going up if there was no appetite, I think, to fund it. So I'm not sort of concerned about it. I am concerned about the distributional sort of the skew or the narrowness we now have, particularly in U.S. growth. I mean, that does create a vulnerability. But the funny thing is, like, it also makes it really hard right now for the U.S. to go into recession. So if you try to sort of, we're running our models, trying to figure out, at what level of energy disruption would the economy break, and basically the economy cannot break if the equity market doesn't go down, right? So, and if 90% of the equity market is AI, and that is driving, basically, 80-90% of your consumption of the top 20%, and you have AI capex, then you're really sort of disrupting what's left, and what's left is really small. So now that is not good if you're an average citizen, or you're worried about your job, or you're at the bottom end of the income distribution, and you're becoming delinquent. But at least for the market in aggregate, there's just an incredible level of resilience, I think, that comes with that AI build-out. So the risk then is that, something unexpected happens, that there's suddenly competition out of China where, things are much cheaper, potentially, equally good models, and then you start to question the sustainability of the profit margins, and you have a rethink about the valuations. But you would really need to do damage. You would need the market to correct on sort of a sustained basis by quite a lot, right? It's not enough to have a wobble where the market goes down, goes straight back up. That doesn't do anything. So, and I don't think anybody I speak to on the client side sort of believes that that's that likely right now, right? So there's always nervousness, but I don't think people think we're in the closing or end innings of this build out. I think we're sort of the early middle innings, and so this is more to run.
And Aaron, and you're not, I mean, you were talking about the Strait of Hormuz and actually the price of oil. You're not that worried about inflation because you're pushing back expectations for a Fed cut to what next year, 27? Yeah. So what we're actually, we had it in December. We've now pushed it to March, and that is a function of inflation. So we're a bit like the frog that's getting boiled. Like every month, the inflation kept going higher because you're just rolling this backward dated oil curve is just rolling into our forecast. So every month there's no resolution. We add another month of sort of elevated gasoline prices. And so that is, if you put that into the Fed models, what that's telling them to do right now is to hike. Now, they don't want to do that. I think they want to look through that. But if you look at the same models, by the time you get to March next year, the model's telling them to cut. And so basically what we're saying is, look, provided that inflation doesn't get materially worse from here, and provided that the labor market sort of goes sideways, then they just do nothing. And then they get to March next year. And then the window opens up for Kevin Warsh, I think, to start arguing for some easing. But that's, for now, I think that's very clearly off the table. So you wouldn't see one or two hikes and then cut quickly after that? That makes no sense to me. I think the only scenario in which you would hike is one where unemployment starts to sort of drift lower, despite the fact that we have all this distributional weakness and so then it's very uncomfortable because then basically you're starting to miss on both sides of your mandate potentially, right? And then you have to sort of respond. Now, when I look at the labor market data, it's still a bit of a mixed bag, and it really doesn't look that great, right? If you had not had the 20 basis point decline in labor force participation, unemployment would be at 4.7. I look at the beige book. Basically, there's no improvement in the employment data. Even the job openings report we had a couple of days ago, sort of weird, where vacancies go up, but then the quits are low, and then the hiring rate is super low, and so this is not a labor market that is looking very healthy. And so, provided it stays that AI,
way,
or is it really the functionality?
I think it's so. If you look at the Challenger data, which has layoff announcement data, a quarter of all the layoffs is now attributed to AI. That was 0 a year ago. Okay, so there's definitely an element, I think, of AI creeping. I think certainly into wage formation, confidence. You see it in the Michigan survey, but the Challenger data is like 5% of the overall labor flow. So I don't think we really know. I think we're seeing the beginnings of it. I don't yet think it is driving sort of the flows, which are much larger.
Aaron, I don't know whether the ECB. I mean, look, we're pricing in something happening this month. Is the Bank of England much trickier?
I think they're going to be much slower to respond, right? So the ECB now looks baked in. I think the tricky thing with all these central bank curves is that I think you have clarity about, I think, the next meeting, right? And then everything beyond that is completely energy dependent, right? So right now I look at these curves and I say, look, there's really, I don't think the Bank of England is anywhere close to hiking, right? So we think the next move is a cut. We think it's February of next year. But of course, that could all change if we see some sudden escalation in energy prices. The shock becomes bigger. They start to worry about second round effects. But for now, if you mark to market, I think where the economy is and where they are, I think we are multiple meetings away from them doing anything, right? So I think the Bank of England wants to be patient. Their economy is in a weaker position, I think, going into this than the Eurozone was. Whereas the ECB, I think, is just starting from a different starting point, and I think they're running more of a 2022 playbook, I think, than the Bank of England wants to run right now. And so, so it looks like June is certainly baked in, and then beyond that, if they can go in September, we'll have to wait and see what happens in the Middle East.
Aaron, thank you so much for joining us. Aaron Captain, they're a global head of economics and strategy research at UBS Investment Bank. Now, coming up, the U.S. says Israel and Lebanon have agreed to a conditional ceasefire. We'll have all of the details next, and this is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Well, the former UK Health Secretary, Wes Streeting, says he's not enthusiastic about a quote coronation if there's a change of leadership in the Labour Party. Now, he's indicated that he would go head-to-head with the mayor of Greater Manchester, Andy Burnham, in a race which could see the UK with another new prime minister. Well, I sat down with Streeting at South by Southwest London.
I think Andy will win in Makerfield. When none of us, Andy included, taking it for granted. I think it comes back to this fundamental point, though, which is I can see Andy's strengths. I think he needs to be tested. I think his ideas need to be tested, and so do mine. And I'm probably a rare thing in the Labour Party. I'm a monarchist, but this is one coronation that I'm not enthusiastic about. I think you need a debate. I think you need a battle of ideas. He needs to set out his stall. I need to set out mine. There may be other people. There may be women. God forbid, the Labour Party might have a woman leader for the first time in our history, and we've got any number of brilliant women in the cabinet, outside the cabinet, who might want to put themselves forward. And that's the sort of debate we should have.
So if you're not stepping aside, is there anything that you would find wrong with what Andy Burnham is offering the country?
I understand why Andy talks about a north-south divide in this country. And I think that there are real challenges of place and geography. There's no doubt about that. And there is a concentration of power and wealth and opportunity in London and the southeast. The big divide in this country is not north and south. It is rich and poor. It is those who have opportunity and those who do not. It is the haves and the have-nots. That is what is fueling so much of the rising tide of populism we're seeing. And one of the things that the voters that we've lost to both Reform and the Greens have in common is that sense of economic insecurity.
Well, that was the former UK Health Secretary, Wes Streeting, who resigned from his cabinet position last month and is now expected to challenge Keir Starmer for the Labour leadership. Now, the US says Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. Now, there's been no immediate indication whether Hezbollah has accepted the terms of the deal. Meanwhile, the Republican-led House has voted to halt the war with Iran, reflecting growing concerns within the president's own party ahead of congressional elections. Now, for more, Bloomberg's Abir Abu Omar joins us from Dubai. Abir, thank you for joining us. So, first of all, how likely is it that Hezbollah will agree to the terms of the ceasefire?
Good morning, Fran. So, look, I mean, it's worthy to note that Hezbollah has not taken an active part in the negotiations yesterday between Lebanese officials and their Israeli counterparts. Now, those negotiations happened brokered by Washington. And what we came out of that with was that Lebanon had said that, and Israel also had said, that it will stop hostilities with the condition that Hezbollah stops its attacks against northern Israel. Now, earlier in the week, President Trump had said that he'd spoken to high representative from the Iran-backed militia in Lebanon, and they had indicated to him that they were willing to stop the hostilities with Israel. So we tend to believe that Hezbollah has the incentive to stop the hostilities, especially if we're talking about a broader agreement between Iran, the U.S., and Israel to reach that interim deal that we've been talking about over the past couple of months that would enable the unblocking of the Strait of Hormuz, the extension of the ceasefire for 60 days, and then reaching the other concessions. Now, Lebanon, Fran, has emerged as one of the sticking points that Iran was not willing to compromise on. So yesterday proved a little bit of a tilt in a positive direction, but no indication, no response yet from Hezbollah as of today.
Abir, what's the impact of the U.S. House vote for President Trump?
Look, I mean, he's under a lot of pressure domestically. Obviously, we saw a resolution that was passed by both the House and the Senate that would have President Trump rethink the war in Iran. He could obviously veto that, but it just shows the amount of pressure he's under in the United States with surging oil prices, crude products, gasoline prices in the United States. So the U.S. also is incentivized to put an end to this and open the Strait of Hormuz, Francine.
Abir, thank you so much, Abir Abu Omar there in Dubai. Now, Bloomberg also understands that Ukraine's key European allies are working on plans to engage Russia and Ukraine in negotiations to end the war. Now, sources say the allies see a shift in momentum, strengthening President Volodymyr Zelensky's position. Well, let's bring in Bloomberg's Anthony Halpin. Anthony, what do we know about this diplomatic effort?
Yes, it's the big three, as you say, the UK, France and Germany, deciding that there may well be a window of opportunity for them to join with Ukraine and try and engage with Vladimir Putin in negotiations to look for a way out of this war. I think they're assessing that perhaps Russia's position is weaker now than it was a few months ago. And at the same time, the US has stepped back because of what's going on in the Middle East. And that's creating an opportunity for Europe perhaps to fill the vacuum and step in and try to find a way out. It has to be said that they haven't had their place at the negotiating table for years. They've been sidelined, particularly by the Trump-led negotiations in the last 16 months or so. And they're looking for a way, really, that makes them more relevant and to get them into the negotiating table and to find a way that helps Kiev to reach an agreement with Putin.
Anthony, Ukraine has carried out a significant drone attack on St. Petersburg just before President Putin is due to appear. So is he likely to engage with this latest peace effort?
That's something we'll be watching for today. He's due to meet with foreign media chiefs later today in St. Petersburg.
As you say, Ukraine made clear that life is not going on as normal in Russia, despite the Kremlin's efforts to present it that way to foreign investors. The drone attack got a lot of attention in St. Petersburg yesterday. Putin himself has said that it's not Europe that is refusing, it's not Russia that's refusing to engage with Europe, but Europe in the past hasn't been willing to engage with Russia. It's not clear that he's ready to take up this new initiative, but that's one key thing that we'll be watching for today.
Anthony, where's China in all of this? I remember one of my highlights, actually, in the last 6 months, was speaking to the U.S. NATO ambassador. And he told me at the time, like 5 months ago, that with one phone call, China could stop Russia's invasion of Ukraine.
Yes, it's certainly the case that Russia is increasingly dependent on China economically because of the sanctions that the West have imposed on Russia. And China has certainly been unwilling to step back from that support. At the same time, they don't want to be cast as the country that's the deciding factor in the outcome of this war. So I don't think we can expect too much change in the Russia-China relationship. China says it wants to see this war brought to an end. It's certainly stood on terms like territorial integrity and national sovereignty. It hasn't backed Russia's claims on territory that is internationally recognized as Ukraine. But it also, in some ways, serves China's interest for the West to be consumed by the conflict in Ukraine because it distracts from paying attention to what might be going on with Taiwan.
Anthony, thank you so much. Anthony Halpin there with the very latest, of course, on Russia. Ukraine. Coming up, jitters on private credit markets after a big redemption warning. Well, Blair Jacobson, co-president of Ares Management, joins us next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to the minute
covering political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Mega IPOs in focus. Elon Musk says SpaceX aims to raise $75 billion in the biggest stock market debut in history. Bloomberg also learns that Anthropic has lined up banks to lead work on its IPO. The AI rally stalls. A disappointing outlook from chipmaker Broadcom hits sentiment. Plus, the U.S. says Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. Now, there are renewed jitters in private credit markets after a big redemption warning. Shares of the big alternative asset managers fell yesterday after Cliffwater's flagship private credit fund reported even larger requests than in the first quarter. Now, let's discuss the markets and, of course, the future with Blair Jacobson. He's co-president of Ares Management. Blair, thank you so much for joining us. Look, I know there's a lot in private equities and private markets and private credits. What do you think is the pain threshold that we're seeing now and that we'll see in the next couple of quarters?
Well, thanks, Francine. It's great to be here with you. We're seeing a real disconnect between many of the headlines that are being reported and what we're actually seeing in our portfolios. If you think about it, we get signals from 3,000 companies around the world. And what are they telling us? They're growing 8 to 12% per year. We're credit investors, so we look very closely at their statistics. They're trending in the right direction. And there's a lot of discussion and anxiety about distress. We're not seeing it. In fact, when we look at non-accrual rates, which is a prelude for potential defaults and losses, it's lower than what we've seen historically.
But Blair, so why is that? Again, if you have a mismatch into, is it the quality of certain firms or the quality of investment in certain private markets compared to what you're invested in? Because there's something that's going on. You can't tell me that, it's all rosy.
What I would say is if you think about the broader backdrop, the macro situation, yes, there's volatility. We're thinking a lot about inflation, oil prices, and rates. But overall, GDP is growing. We'll grow 2% in the U.S. Europe, UK will grow 0.5% to 1% this year. We're not seeing major distress in the liquid markets for loans and bonds. Even if you look at the big bank earnings, they've telegraphed that charge-off rates for consumer loans, credit cards, C&I loans are actually going down. So I think the broader macro picture is a tailwind for many of these businesses, and it's probably better than what the headlines would suggest.
So there's a large amount of dry powder in the industry, and it's dry powder that's been built up over time. I mean, at some point, does it have to be started to be handed back to LPs, or having some of the tough conversations about what happens next?
So for institutional funds, usually dry powder is available for 4 or 5 years, which tends to be the right amount of time to put it to work. And most managers can then invest through the cycle. What we're seeing today is actually our deployment has been strong. Okay. Again, we have a positive macroeconomic backdrop. And in fact, some of the trends that you speak a lot about on your show around what's going on in the wealth channel, the retail channel, means that less capital is coming into the industry, which means less competition. And when there's less competition, we can actually charge higher interest rates, have slightly more conservative loans and conservative documentation. So we've seen globally deployment has been pretty positive. And there are also some counter-cyclical elements to deployment. When there's nervousness in the markets, that can be good for our special situations business, which had a big fundraise this year, and our secondaries business.
Where do you expect the most deals to come from, sector-wise, but also in terms of countries?
Sure. What we've seen is that U.S. is always the fundamental backdrop to most global markets. It's motoring ahead. It's the biggest market. Europe's a bit patchy geography by geography. Again, growth is a bit slower. It's more highly regulated. We're seeing Asia pick up also in a meaningful way.
Are data centers overdone?
So let's spend a minute on the digital trend. It's something I personally spend a lot of time with as well. Firstly, we're big believers in this trend. We're all using more data each and every day in our personal lives and our corporate lives. The hyperscalers keep increasing their CapEx projections, $600 billion this year, and now it's $700 billion. All of that will require more data. When you look at data centers today, the demand is actually exceeding supply, and that's a great dynamic. So industry forecasts that $2 trillion of investment will be needed, in the next 5 years for data centers. But that's the broad trend, and we don't invest in the broad trend. What we're looking for are specific assets. And we have a view that if you invest in data centers from a development perspective in major metropolitan areas that are more focused on cloud than AI learning models, and also have very significant 15, 20-year contracts and leases with investment-grade hyperscaler clients, that's a great place to be.
And this is what, across the world? Or again, I mean, it seems that everything that happens in the U.S. and gets rolled out.
So it's interesting, if we look at our platform, we actually started investing in Japan first, in Tokyo and Osaka, great markets. We're now active in East London in the Docklands. We have assets just south of Washington, D.C., in Northern Virginia, in Sao Paulo, in Brazil. Again, we like to focus on primary markets where the supply-demand is favorable rather than secondary or tertiary markets.
We spent a lot of time there on this show and actually on Bloomberg TV at large talking about these mega IPOs. I'm a little bit obsessed with SpaceX to try and understand exactly what happens next. Then we have Anthropic. I mean, does that change the nature of the public markets? Does it also kind of matter to your world?
Yeah, it's a great question. I think we're seeing this opening of the floodgates to these very large mega IPOs that'll take place in the coming weeks and months. But when we look at the overall trend and take a step back at most businesses, there's a definite trend for businesses to be private. The number of companies on the major stock exchanges in the world keeps declining. The number of companies that are private to begin with also are tending to want to stay private for longer. There's so much capital available to fund their business plans through private equity, private credit, infrastructure, et cetera, that I think they want to invest for the long term, which, as you know, is difficult when you're a public company.
So do you see, you know, with these mega IPOs, does it move some of the smaller IPOs to secondary markets? And so would they think actually of going private? Or
It certainly could. So, for example, some of the smaller public companies that are listed, maybe they don't trade much, maybe they don't have much float, maybe it's hard for them to get additional equity capital to fulfill their growth ambitions. That's why focusing more on private markets for them could be a great option.
So we talk a lot about, you know, these inflationary pressures. And at the moment, especially in the U.S., they seem to be canceled out thanks to the boom on AI. Do you worry about rates going up?
So you have to think about where we are. So rates are down around 200 basis points from their highs. And even when we talk about higher for longer, we're still at what we believe is a mathematically comfortable position for our companies. By the way, we just saw how our companies behave when rates were a lot higher. They made it through. The other thing I would say for most of private credit is we invest in floating rate assets, which means if rates are a little bit higher, our investors make a higher return.
We're starting to see, you know, some of the second quarter requests to exit semi-liquid private credit funds coming in. I guess managers are also imposing some of the new rules or lower withdrawal, you know, limits. How worried are you about the sustained retail investor retreat for private credit firms?
This is another topic that's very much in the news. Our firm's view is that wealth is not broken. In fact, our wealth business will grow this year. We've said this publicly. We have 8 products, 2 of which are focused on private credit in the U.S. Those are the ones that are under the microscope. But our non-traded REITs are growing, infrastructure growing rapidly. European private credit hasn't really come over those concerns. That's growing, sports, entertainment, et cetera. And I've probably had dozens of meetings with these types of investors. They understand that in order to gain access to institutional quality loans and investments that are illiquid, they need to be in a structure that reflects that. So I think their viewpoint is they are performing well. Again, these underlying funds are meeting what we guided investors to expect. That's high single-digit, double-digit returns, similar levels of yield. And as long as that continues, we think that there's going to be a very bright future for wealth products.
Rating agencies start to now review some of the credit worthiness of BDCs. I mean, is that something that, you know, institutional investors, will it make them more risk averse?
So when we think about institutional investors, and again, I spend so much of my time speaking to them around the globe from sitting here in London, I would say they're a lot less concerned about how private credit is moving. They're more looking at what's the next opportunity to focus on. And rating agencies will take their view based on the data that they have. That might impact borrowing costs here and there a little bit. But again, I would encourage you and your viewers to really focus on the fundamentals of how the companies are doing. That's certainly what the institutions are doing. They're continuing to back these types of funds. We're seeing it in our own fundraising results too.
I mean, is there something that will change in terms of that relationship, you know, in the next couple of years?
I think when we look at what institutions need, whether they are corporate pension plans, public pension plans, sovereign wealth funds, insurance companies, they have growing liabilities that need asset returns. And if we can continue to generate these types of returns in the future, again, we think that the fundraising will continue. And it's been very, very stable despite a lot of disruption in the world over the past few years. Our firms had record fundraising for 2 years in a row. We had a great first quarter. We said we think this year will be another record for us. And a lot of that is based on institutional support.
Thank you so much for joining us. That was Blair Jacobson. They're the co-president of Ares Management, with a thoughtful and good interview on where the market goes next in private. Coming up, why regulators are also increasingly scrutinizing ties between insurers and private markets. We'll speak to the head of Europe's insurance watchdog. That's coming up next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
I think you're going to see, and Alphabet is the first one to make this decision, I think you're going to see a bunch of them fund a bunch of it with debt, but also raise more equity, because they're starting to think about, okay, what does this look like? It's one thing, what does it look like this year, but what does it look like over the next 5 years? How much capital do we need? How much debt? If you get it wrong, if you totally rely on debt and you get it wrong, you will really regret if you wind up having a downside scenario that's tougher than you expected. We didn't win this in the last 6 months. We won this over the last 20 years. Wow. The decision wasn't made. The decision wasn't made until the last 6 months. And there's a lot of things that the team did over the last 6 months that contributed to the ultimate result, which, by the way, now we have to execute. But this is a cumulative effort of lots and lots of people over 20 years. And we first, as a firm, we first met Elon Musk. And the person that first was responsible for covering him was a guy named Stuart Bernstein, who was doing a bunch of stuff around, kind of green energy. And he and his brother had Solar City. And that's where we first connected with Elon. I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital. It's interesting. I've advised companies for years, and at one point 25 years ago, I actually ran the equity capital markets business at Goldman Sachs. That was a job I had early in my career in Goldman Sachs. And I used to say to companies, there are a few reasons to go public. You need the capital. You need the currency. You have to create liquidity for, early investors. But all the other stuff that people talk about is really not critical. We have a lot of things going on in the macro with the war, with the oil shock, supply chains, inflation getting stickier, that are going to have an effect. And, the market may absorb all that differently than it's absorbing it at the moment. At the moment, it's kind of brushing it aside.
And a reminder, you can watch the full conversation on one of my favorite podcasts, Odd Lots. Now, increasingly complex ties between insurers and private markets have led to more regulatory scrutiny. In the U.S., Treasury Secretary Scott Bessent recently met with insurance regulators to talk about their exposure to private credit. It's also something that Europe's insurance watchdog, EIOPA, is looking into. Now, the body says that over the past decade, private equity firms have shown a growing interest in acquiring European insurance firms. Now, we're joined by Petra Hilkuma, the chairperson of the European Insurance and Occupational Pensions Authority. Thank you so much for joining us. I mean, for me, this is the Apollo model, which actually has been doing really well since it started. And so other companies are saying, well, I want to do the same. Could you, with private equity firms increasingly interested in buying insurers, why are you wary of such deals? And good morning. Thank you for joining us.
Well, thank you for having me, Francine. It's a pleasure to be here. And I hope you can see, as a good supervisor, I don't look worried. I look at risk. And what are the risks? What do we see happening in the EU market? And let's make that distinction between, on the one hand, ownership by private equity of insurance firms, and then investment in equity, private equity by insurers. Now, the ownership has come up since the last decades. In the last decade, we've seen ownership going to now 27 firms, which frankly is only 2.4% of the total market, which in itself is not worrying. It's 260 billion assets under management, which is not material. But we should not stop there. We need to also think of EU as 27 member states. And if we look in that way, we see that a few member states actually have a representation, have private equity funded ownerships of over 10%. And this is indeed where supervisors need to scrutinize a bit more.
But is it fair to say that this is definitely a trend that started in the U.S. and that's now permeating or creeping more into Europe? And why do you see that?
I would say that, first of all, it's definitely a trend that started in the US and to a certain extent in UK. That has now caught the eye of many. So what can we do next? EU is not that developed, so why not EU? So fair question. In the numbers, we do not yet see that happening. So it's a very steady state already for the last 2 years. And I think there are several reasons for that. But first of all, if you want to move into an EU market with that model, there's two differences you need to consider. One important difference is that you need to match to the life portfolio in EU, which is mostly life with guarantee, with a certain lapse risk, whereas the business so far is based on annuities. And so that is something I would say you need to manage. It's not impossible, but it's something to consider.
Yeah. So, no, go ahead.
No, and so the other differences we currently see is that most of the investments then made also by private equity backed insurance firms in more private credit is still in mortgages and real estate, whereas we see also in the US that it is part of financing the AI boom that we currently see. So I think these are two considerations that you need to take on board. But for sure, we're monitoring this because we do see a lot of interest, explorations in the market. Shall we come to EU? And I think it will.
So what's been the feedback from the industry so far? I guess there's a lot more clarity at the moment on how you're thinking of this. So does it entice more buyers or actually does it scare private equity off?
I would say that currently it's really in the exploration phase. What are the possibilities in the EU market? And that is welcome. I think private credit can bring innovation. It brings access to new capital. We need that in the EU. But it should come, I think, with a reasonable understanding of the new risks that it brings, be it liquidity risk, be it credit risk, be it simply the opacity that comes often with it, and the need for transparency and clear valuation to understand not so much who's the owner of the insurer, but who's the owner of the risk.
So studies, I understand, have shown that insurers actually owned by private equity also tend to invest more in private credit. So how much is too much private credit for an insurer?
Well, I would say there is not per se a certain limit that we have, but we have a lot of tools within the toolbox of supervision, which is Solvency II in EU. And then the most important one, I would say, is the prudent person principle. And the prudent person principle says, first of all, if you invest in assets, you need to be able to identify, measure, manage, and report the risks. Yeah. So this is where transparency data is essential. And the second is that you need to do that in a way that you take on board the interest of the people you invest for, which is the individual citizens, and we're often talking about pensions here.
Do you think there's an understanding, a sufficient grasp of the risks that they're taking, and how are, I guess, losses in this asset class evolving?
I would say it depends. Credit was bank business, let's be honest. And so if you start to move into this business, you need to step up your knowledge. You need to be able to probability given default, loss given default, and the probability of default. These models you need to develop. You need to have the data for that. You need to have the competence for that. At the same time, you need to have a clear understanding of how your liabilities, the liquidity risk, the liquidity of those liabilities, the needs there, but also the credit risk that you run, the liquidity risk that you run, how that matches with the liabilities. Why? Because if the markets become volatile, and they tend to do that these days, you want to be sure that liabilities and assets move in a matched way, and there is not an increased response in the market because matching wasn't done properly. And this is precisely why we as supervisors are monitoring that very carefully.
Are there any specific insurers that give you cause for concern because of their risk exposure or their involvement with private markets?
Well, let's say that, I mean, I can never discuss individual insurers, but we have individual markets where we see the concentration already of this type of activity being larger than the EU average. And here, for sure, as the EU supervisor, we talk to the national supervisors to make sure they understand. Meanwhile, I would say we're not reacting, we're preventing in a way by publishing a supervisory statement, explaining also to other EU member states, supervisors, what they need to do when this activity starts to happen in the market, what to look for, how to address it, learning from the others that already have more experience.
But is it, I mean, we talk a lot about software companies and
yes.
the fact that they could actually be disrupted by AI in a very meaningful way. Mm-hmm. Is this your biggest concern right now? So that companies invested in that space?
Yeah. So currently, if you look at total assets in EU, 10.5 trillion, of that 5% is private credit at the moment, only 5%. And within that 5%, 80% is real estate and mortgages. So my answer is no. We do not see that in that way currently in EU market today. So we're really saying we need to be ready for the future much more, looking at other markets than being concerned about the risks today manifesting itself.
But how difficult is it for a regulator or a supervisor to look at the disruption from AI and actually the risks there that could be, in certain cases, I imagine, systemic?
Well, it keeps us on our toes, first of all, and which is good, and we need to work with it as well. And so I think a lot is about coordination, international and within EU, on what we see and how we deal with that knowledge. And mostly, and this is where systemic risk happens, it's understanding the interconnectedness and through the opaqueness. So less opaqueness helps to understand the connections that are possibly there. Systemic risk often comes up by slowly interconnection growing, not everyone seeing it, and then when risks happen, everyone moving in the same direction, which is not a good direction. So we need to be on top of that.
Thank you so much for joining us today. That was, of course, Petra Hilkuma, the chairperson of the European Insurance and Occupational Pensions Authority. Now, Bloomberg understands some members of the Glazer family, we're talking football, are debating whether to sell their stake in Manchester United Football Club after more than 20 years of ownership. Now, with more details, Bloomberg's Tiwa Adebayo is here. Tiwa, we're all obsessed. We're all football mad because of the World Cup. So there are, well, we understand, so Bloomberg Scoop, there are internal discussions. What do we actually know about the Glazer family?
Well, that's right, Francine. A Bloomberg exclusive today. There are these initial talks about whether or not to exit from Manchester United for the Glazer family. In terms of the family itself, they're worth about $10 billion. They've got interest in other sports teams like the Tampa Bay Buccaneers. But these are just initial talks, and there are said to be some members of the family that are against this, and you'd need their support if a sale were to take place. But this is really crucial because that 20-year tenure for the Glazer family at Manchester United is one of the longest in English football history. This is also quite a crucial time for Manchester United. There's talks about upgrading the famous Old Trafford Stadium. That could cost billions of dollars, but it's also something that a big football club needs. We've seen that happen with the likes of Tottenham Hotspur recently. And of course, we should mention, sorry to any Man United fans, they've had some mixed performances recently, got rid of a manager this season. So a crucial time for the club and for the company as well.
So how much interest would there be if these shares are offered for sale?
Well, the last time that there was a sale like this talked about in 1998, we had the likes of Rupert Murdoch interested in Manchester United. So there's likely to be a lot of interest both on the Middle Eastern side. We've seen the success of the Qatari sports investment arm of their sovereign wealth fund with PSG. They've had great success there. And also the likes of other wealthy US families. The Kroenkes at Arsenal have had, again, good success there. So we'll see quite a lot of interest, but it's likely to come at quite a steep price. Interest in M&As like these has been growing recently. So whoever gets to own this club, if there is indeed a sale, will have to pay quite a lot of money for it.
Tiwa, thank you so much. Great reporting there. And of course, a Bloomberg Scoop, Tiwa Adebayo, on the latest with the Glazers. Now, if you're a terminal user, you can also watch Bloomberg MLive's Money and Macro event at 5 p.m. London time. I'm not going to miss it because it's going to be really good. And this is under the umbrella of finding value in an AI world. So that's the theme. Of course, it features the anchors from the opening trade. So that's definite bonus for me as well. Use the function LiveGo, L-I-V-Go, to tune in. Up next, Bloomberg Brief, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks, record rally, losing steam as earnings forecasts from Broadcom and CrowdStrike failed to impress. JP Morgan's Jamie Dimon kicking off an unprecedented nationwide marketing push for the SpaceX IPO, even though he's not on the lead left. And Iran says there has been no progress in peace deal talks with the U.S. Let's get a check on the markets around the world. We go to Winnie Su in Singapore for the latest from Asia. Winnie?
Good morning, Matt. We are seeing Asian stocks pulling back today with these concerns around the AI demand slowdown, especially following disappointment from the results from Broadcom, and that's also raising some uncertainty in terms of the demand visibility for the AI supply chain, and hence you can see that the tech-heavy gauges in Asia, including South Korea's Kospi Index and Japan's Nikkei 225, both falling more than 1%. Now you flip the board, we take a quick look at cross-asset picture because we have the Japanese yen here strengthening just a bit after we've heard that the Bank of Japan's officials are considering to discuss a quarter percentage point rate hike in June following another potential rate hike later this year. Now, otherwise, we are looking at some weakness across the Asia FX with the Korean won hitting its weakest level since 2009 against the dollar, despite officials sounding some intervention risks as well. And also we have the Indonesian rupiah hitting another record low.
All right, Winnie, thanks very much. Let's go to London now for a look at what's going on in Europe. For that, we go to Justina Lee. Justina?
Good morning, Matt. Now, there might be no progress in the U.S.-Iran talks, but we are seeing kind of a little bit of a move down for oil, and that's kind of being reflected across markets today. I mean, the stocks Euro 600 down a little bit, but kind of it was up a little bit earlier, but generally trading in the range, same with short and bond yields. Now, I can bring to you two inflation reports from outside the Eurozone ahead of the ECB meeting next week. Now, first off, we kind of got the CPI from Sweden, which is showing kind of less of a gain than a lot of economists expected, and that's being reflected today in the Swedish krona kind of strengthening a bit kind of against the euro, and with economists kind of also not really expecting the need of a move from the central bank over in Sweden. Now, another place where you might not really need a hike is also Switzerland. So we flip the board here. We can see that all year long we've seen some strength from the Swiss franc, and that's probably helping counteract some of those inflation pressures coming from the oil move. And that's also why we're not seeing kind of a big move up in inflation also kind of in Switzerland. And so maybe over there we might not get a rate hike, but of course the focus will also be on what the ECB does next week, Matt.
All right, Justina, thanks very much for that. Let's take a look at what's going on in U.S. futures. We're looking at a 0.5% drop here after we fell in the cash trade yesterday. NASDAQ futures down more than 1% on the disappointment from, let's be clear, the beats that came out of Broadcom, the increase that came from CrowdStrike. It just wasn't enough to meet expectations. The small caps gaining a little bit. In terms of what's going on with treasuries, let's look at U.S. yields right now. You can see we're looking at a drop on the 2-year of 2 basis points to 4.0617. The 10-year coming down 1 to 4.04828, and the long bond still holding under 5% at 4.9867. In terms of what's going on with oil, as we get really conflicting messages out of the White House and the Middle East, you see NYMEX crude coming down $1.39, but still at 94.62. Brent crude off 151 to 96.30. And by the way, Bitcoin is still well under 70,000 at 63,368. Just continues to lose ground, and that may be a risk-off signal as well. For some of the single stock stories that we're following, let's get out to Chloe Melee in London. Chloe?
Good morning, Matt. Let's start with two stories of big tech companies failing to meet sky-high expectations. We've got shares plunging for both Broadcom and CrowdStrike this morning after their respective outlook failed to meet expectations, disappointed investors, and essentially put a stop to a blistering rally for both of those companies. The Broadcom story in particular is actually dragging down some of the other AI-related names in Europe and Asia as well. So that's really a key story to keep an eye on. Moving on to PVH, the owner of Calvin Klein and Tommy Hilfiger, which is seeing a lot of weakness this morning, down more than 21% after guidance missed expectations. This seems to signal that the company is really being hit by this weaker consumer spending, especially in Europe, where that was really the weakest region. And finally, let's end with Universal Music Group, which is also in the red this morning after Bill Ackman sold his stake in the company. This comes just a few days after Universal rejected a bid from Ackman's Pershing Square, saying that the deal was not in the interest of shareholders or the artists that it represents. And so we are seeing Ackman now moving on from the company and Universal down on the back of that.
All right, Chloe, thanks very much. Chloe Melee out in London with the single stock stories for you. Coming up this hour, Sharon Bell of Goldman Sachs and Rhonda Vansay Sharp, president and founder of the Women's Institute for Science, Equity, and Race. But first, the U.S. says that Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. Israel and Lebanon reaffirmed that they have no hostile intent toward one another and committed to continuing direct negotiations to build confidence and work toward a comprehensive agreement. I'm reading a direct quote there. I assume that's from President Trump, but we'll find out in just 1 second. Iran has said, though, that there had been no recent progress in talks with the U.S., despite Lebanon being a major sticking point. Joining us now is Bloomberg's Abir Abu Omar. So, Abir, what do we know about this? President Trump insists that there will be a ceasefire, and yet the fighting continues in southern Lebanon.
The fighting continues in southern Lebanon, Matt, and also we heard from the Iranian side through Foreign Minister Abbas Araghchi saying that there's no real tangible progress in the broader talks towards an interim agreement. But perhaps something positive that happened yesterday was that Israel and Lebanon met in Washington to discuss ending the hostilities, and Israel said that it will end the hostilities if Hezbollah, which is backed by Iran, stops its attacks against northern Israel. Now, what we saw over the past 40 minutes or so is that Israel has been continuing its attacks against the southern part of Lebanon, close to the Zahrani River, that is close to the borders between Lebanon and Israel, and close to Nabatea, which is where Israel has its deepest incursion in about 25 years. So we saw those attacks continuing. We've had attacks against Gulf countries over in this week. We spoke yesterday about the attack against Kuwait and the airport there, the main airport there, that led it to suspend flights because of some significant infrastructure damage. One person was killed, several others were injured, Kuwait reported. Iran said that the leaders there have to take responsibility for those attacks. So what we know is that the talks towards a broader agreement where Lebanon was a sticking point are still lagging. President Trump did come out overnight and say that a deal in theory is imminent. He said that talks could continue this weekend, but then he went ahead and said, but they may not. And so we go back to this back and forth between Iran and the United States that has been going on for about 2 months now. President Trump did say, however, that once an interim deal is approved or reached, that MOU that we've been talking about that would lead to the opening of the Strait of Hormuz and then an extension of the ceasefire for 60 days, he said that that MOU, as soon as it is signed, the Strait of Hormuz would open imminently. And look, both sides are incentivized at this point to reopen the Strait of Hormuz. Iran for the economic damages that it's been suffering. The U.S., I mean, you would know better about this, but the House and the Senate yesterday approved a resolution that would have President Trump rethink his actions in Iran. Now, obviously, he could veto this and not act upon it, but it just goes to show how much pressure he's facing domestically to end the war in Iran by both Democrats and some Republicans.
All right, Abir, thanks very much. Abir Abu Omar keeping us updated on the latest out of Dubai. That statement that I read, by the way, was a joint statement apparently between the U.S., Lebanon, and Israel. Of course, the missing link there is Hezbollah. Meanwhile, over in Washington, the House voted to stop the Iran war, with 4 Republicans joining all the Democrats present to pass the resolution, the most GOP support so far, or rather opposition. Joining us from Washington is Bloomberg Government's Mika Solner. So, Mika, what does this actually accomplish, this resolution? Because it still has to go to the Senate, and of course, President Trump would have to sign it, right?
Yeah, so this is a significant bipartisan rebuke against President Trump when it comes to the Iran war and his efforts abroad there that seems to continue to have no end in sight right now, and is just continuing to drive up costs. And the 4 Republicans are very interesting because we saw Congressman Brian Fitzpatrick, who Trump has continuously criticized online, Thomas Massie, no surprise there. But we also saw members like Tom Barrett, a vulnerable Republican from Michigan who's running for re-election, as well as Warren Davidson, who's increasingly taken some votes to break against the administration as well. So these 4 votes were interesting, but I think it shows a growing frustration on Capitol Hill with the way that the president has approached the military operation in Iran.
So what result will we see from this? I mean, I know the Senate also had some legislation written that it still needs to take action on. How does this hamper or help the president?
Yeah, I think it's going to be interesting to see what exactly the Senate does. We know that there are also Republicans on the Senate side who are growing increasingly frustrated with the war as well, and who have been not afraid to be critical of the way that Trump has handled, have raised public questions about what exactly the administration's objectives are in Iran. So if the Senate does pass the resolution, it will be a defining moment, I think, that if this goes to President Trump's desk for a signature. But we should expect to hear from the president later today, and you know, it's very possible that he may comment on this, but we have yet to really directly hear much from the White House on you know, the latest.
Got it. Mika, thanks so much for joining us. Bloomberg Government's Mika Solner talking about that War Powers Resolution Act, and we'll watch for comment from the president. That's half of the disappointment in the market today. The other half, of course, the tech story. Stock futures lower after the S&P 500 snapped a 9-day winning streak as Broadcom slips on, I guess, disappointing guidance on its AI chip revenue. For more, Matt Bloxham at Bloomberg Intelligence joins us. And Matt, I'm a little bit I guess astounded, because Broadcom is essentially saying we're looking at 200% revenue growth for our AI chip business, and that's not enough for Wall Street.
Yeah, exactly. It's quite staggering, isn't it? And I think it just shows you where expectations have got, specifically for Broadcom, but also, you know, for the wider AI market. But yeah, you know, as you say, in isolation, 200% year-on-year growth, you know, after a quarter print, which was 143% growth. So it's an accelerating rate of growth. Yeah, I think in isolation is actually a good demonstration that they are executing pretty well on their transition to a much more AI-focused business. And it's just like, you know, a kind of realignment of where market expectations have got to. You know, they're talking about $16 billion of AI revenue in the next quarter. The market's at just over $17 billion. It's still entirely possible that they could hit that $17 billion. So, you know, I think we're just, we're in a phase where there's a lot of volatility around that AI trade. You know, some prints get accepted well, some not so well. But, you know, overall, the momentum is pretty positive right now.
Yeah, and I guess the 5 trading days previous, they'd added $270 billion in market caps. The shares in 5 sessions had added an IBM or had added a Salesforce. It's pretty amazing, these numbers. Also, CrowdStrike, it's getting hit in the pre-market trading after it raised its revenue forecast.
Yeah, and again, I think this is just like an expectations management situation. I'd say they were kind of slightly better results for the quarter. I think the guidance range just essentially has brought the company up to where the market already was. So I think, as ever, the market's looking for a beat and raise. We had the beat, but not the raise, or at least not the raise above where the market already was. So I think, again, just a kind of a recalibration of market expectations there.
All right, Matt, thanks so much for joining us. Matt Bloxham of Bloomberg Intelligence talking to us about the other half of disappointment you're looking at in equities today. Let's get to some of the top stories trending on the terminal this morning. Partners Group says it's ready to gate other evergreen funds. According to the Swiss firm, 3 other mature evergreen funds with a total fund size of $9.7 billion are also estimated to see redemptions between 3.5% and 5% in the second quarter. The announcement comes a day after the firm capped withdrawals from one of its PE funds on Wednesday. Of course, we talked to the CEO in this program yesterday. Bloomberg sources say Bank of Japan officials are set to consider a quarter percentage point rate hike this month when they meet on June 16th. This would raise the policy rate to 1% flat. Officials see more hikes beyond that, citing persistent upside risks to inflation and still low real interest rates, though they have yet to act so far, as we discussed also yesterday on this program. And some members of the billionaire Glazer family are debating whether to sell their stake in Manchester United, the soccer team, after more than 20 years of ownership. Sources tell Bloomberg that some family members raised the idea and are now trying to convince others to join them. Any potential sale could attract interest from suitors, which include Middle Eastern parties and wealthy individuals in the U.S., as well as apparently Rupert Murdoch. Coming up, Jamie Dimon gearing up to pitch SpaceX, the SpaceX IPO, to JP Morgan's ultra-rich clients, even though they're not on the lead left. More on that next. This is Bloomberg.
We have liftoff. Go Super Heavy. Go Starship. Thanks for all the historic flights, Bad One.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. JP Morgan CEO Jamie Dimon getting ready to host a live interactive discussion today to pitch SpaceX's upcoming IPO with high net worth clients, with thousands of them. Joining us now is Bloomberg's Benedict Campbell. And Benny, this is, to me, fascinating on so many levels. He's probably the most respected bank CEO in the world. He's going to talk directly to thousands of his own private wealth clients to sell these shares, even though JP Morgan's not on the lead left, right? Goldman Sachs and Morgan Stanley are running this IPO.
Yeah, you're right. But this gives you a sense of just how everyone is scrambling to get a piece of this pie, and it's a huge pie. We got the price yesterday, $135. The listing, $75 billion. Retail investors obviously will be allocated a fair size of this. We're hearing about 30%, which is above what would normally be allocated to retail investors. So this is an important part of the story, and Jamie Dimon obviously trying to sort of play an important role in this. As you said, they're not the lead bank on this. That's a glory that went to Morgan Stanley and to Goldman Sachs, importantly. But yet again, you know, this is such a big story that everyone wants to be part of this, and clearly Jamie Dimon wants to be part of that as well.
I think it's worth repeating how unique this is in terms of an IPO, in terms of book running. I mean, you and I have worked together for 25 years now, Benny, and I've never seen a company just come out with a price. There's always a range, and that hasn't happened here.
Yeah, this is one of the more unusual elements in a very unusual listing to begin with. I mean, a lot of things, you know, starting with the listing that came out last week and some of those really mind-boggling numbers that we saw. So this sort of trend continues, and it shows us that Musk is doing things his way. You know, he's doing things the way he prefers. He's obviously got very tight control of the company. He'll retain control over the shares. He can really nominate the board at will. And this is one more step the way he's going about it. There might yet be some movement on the shares, but unlikely. So we're settling on this 135 number, and that gives us the valuation just shy of 1.8 trillion. And importantly, if the stock bounces on the first day, and at this point it feels like that's going to happen, we will see the first trillionaire in Elon Musk because of his stock holdings and because of just the high demand for this offering.
All right, Benny, thanks very much. Bloomberg's Benedict Campbell covers aerospace for us out of Berlin. You can see the Brandenburg Gate there behind him. And we're expecting, by the way, these shares to start trading at the end of next week. Coming up, Meta may have taken on more AI investment than it can realistically handle. By the way, SpaceX's valuation will already put it at a higher market cap than Meta. More on that and a look at what else is making headlines on your front page next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital.
That was Goldman Sachs CEO David Solomon speaking on Bloomberg's Odd Lots podcast about the IPO boom. Be sure to check out that full podcast interview, and all of their episodes is one of my absolute favorite podcasts. It's time now for your front page news. First up, the New York Times leading with the House reining in the White House and President Trump on the Iran war, a measure to direct an end to the U.S. engagement in Iran passed with 4 Republicans in support. The Senate now needs to vote on that measure. Next up on the Washington Post, President Trump's plans to nominate acting Attorney General Todd Blanche to a full term. The Post said Blanche's Senate confirmation process could face tough headwinds. Some Republican senators have expressed hesitation about Blanche, specifically questioning comments he made that appeared to excuse violence committed against the police on January 6th in the attack on the Capitol. This is Bloomberg.
Famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the trading day. Stocks, record rally losing steam as earnings forecasts from Broadcom and CrowdStrike fail to impress. JP Morgan's Jamie Dimon kicking off an unprecedented nationwide marketing push for SpaceX shares, and Iran says there has been no progress in peace deal talks with the U.S. a day after the White House said Israel and Lebanon will stop fighting. Now, in terms of what we're looking at on futures, S&P futures down 0.4%, and this after the S&P yesterday closed down 0.75%. In the cash trade, you can see that NASDAQ futures are down more than 1%, and Russell futures are actually slightly higher right now. We do see yields coming down across the curve. The 2-year yield down 2 basis points to 4.06. The 10-year at 4.48 off 1 basis point, and the long bond down under 5, still at 4.9877. Take a look at what's going on with oil, because although it is down, it's still holding around the same levels we saw yesterday, with NYMEX crude trading at 94.91, off 1% and change. Brent crude down 1.5% to 96.36 a barrel, and Bitcoin now trading at $62,674 a piece. Let's get a look at some of the individual stock stories we're following for you this morning. For that, we go to London and Chloe Maley. Good morning, Chloe.
Good morning, Matt. We've got two big tech companies, Broadcom and CrowdStrike, disappointing investors, and we have their respective outlooks coming in below what were sky-high expectations. And so we're seeing that really drag down those shares, but also drag down the rest of that tech hardware sector in US, Europe, and Asia. And so this is really denting sentiment around AI, and so it will be a big story to keep following throughout the day. Moving on to PVH, which is a retailer that owns both Calvin Klein and Tommy Hilfiger, and we are seeing a huge drop in the shares this morning, down almost 23% in pre-market trading after guidance disappointed estimates there as well. And so it seems that the company is dealing with that pressure from weaker consumer spending because of the Iran war, and in particular Europe was a region that was struggling for that company, and so we're down massively there this morning. And finally, let's end by going over to Europe, where Universal Music Group is also seeing some weakness after Bill Ackman sold his stake in the company, and that comes just a few days after Universal rejected a takeover offer from Bill Ackman's Pershing Square, saying that it undervalued the company. And so we are down about 7% in Amsterdam this morning for the record label.
Got it. Chloe, thanks very much. Chloe Maley with some of your stock mover stories out of London. We are looking, by the way, at some economic data this morning. We're getting challenger job cuts for the month of May across the ticker, and they've risen 3.4%. So more job cuts in the month of May than the same month last year. The total number of job cuts as recorded by Challenger is 97,006. So we will watch. Right now, I'm just looking at U.S. 2-year Treasuries to see not a lot of reaction in the Treasury market, and it's something that we're going to take into account in a week of labor data. Now, let's take a closer look at Broadcom. As you just heard Chloe say, its chip sales growth forecast of 180% failed to impress investors, I guess, even loftier expectations. They want to sell, I think, $56 billion of AI chips in the full year. That's incredible growth, but the shares have already risen so much so fast. In fact, over the past 5 years, Broadcom shares with reinvested dividends are up over 1,000%. So they're down 12.8% in the pre-market. Matt Bloxham of Bloomberg Intelligence joins us now to talk about, this incredible run-up, Matt, and expectations obviously match that. So I guess 180% growth isn't enough to meet those expectations for now.
Yeah, that's right. I think the market was looking for even stronger growth. So if you look at the forward quarter, they guided to about $16 billion of AI-related revenue. The market was looking for over 17. Now, the momentum is improving quarter on quarter, so I think there's still a chance they could kind of get close to that 17 billion. But it just kind of shows you, where expectations have got to on this company. I think if you look in isolation, the company's doing a great job at this transition towards an AI-oriented business. They've got big and expanding deals with all of the major AI players. So I think the outlook's pretty rosy. It's just, the shares have ramped up a lot, and the market expectations were just perhaps a little bit too frothy.
CrowdStrike shares also had done really well coming into earnings. I mean, just a major spike. Year to date, I'm looking at a gain for CrowdStrike of already 60%. So when it raises its forecast after a beat only by, let's say, 30, 40, $50 million, it's just not enough to meet expectations, is it?
Yeah, that's right. And I think it's a similar story to Broadcom, that the market had already penciled in fairly optimistic expectations for growth for this year and beyond. And the guidance raise essentially brings the market up to a level where analysts were already sitting. So no encouragement to kind of raise consensus estimates ahead. So, people are always looking for the beat and raise. We had the beat on the quarter, but we didn't have a big enough raise to kind of really push the stock higher.
All right, Matt, thanks very much for joining us. Matt Bloxham covers the tech stories for us on the Bloomberg Intelligence side. You can follow his research by typing BIGO on your terminal. Joining us now is Sharon Bell, Senior European Equity Strategist for Goldman Sachs. And Sharon, let me get first your reaction to this market. I mean, when Broadcom comes out and says we're going to grow our AI chip sales 180%, and that's not enough for investors, what does that tell you?
I think it does tell you that the market's been very concentrated recently. It's been very much driven by the thematic of AI and all the expectations related to it. You can see the growth is coming through. I mean, the companies that are reported in the first quarter, that are reporting now, are still making numbers, if not beating numbers. But there is an awful lot of expectation embedded in there as well. And you see that in the valuations. You see that in the recent share price performance.
We have seen, AI stocks, especially in the U.S., where obviously they're most concentrated, I guess outside of South Korea, drive the S&P 500 to a gain of already more than 10% this year. We don't see those kind of gains in European stocks. And I guess it's mainly because, Sharon, you just don't have the same kind of tech presence in European indexes, right?
No, we don't. We don't have the same concentration across Europe. I mean, there are tech companies, and they have, in general, been doing very well. But you've also got other companies which are, in some senses, related to the tech story. You've got the industrials. You're going to need a lot of asset-heavy capital investment driven by data centers in particular, but not just data centers, energy demand, defense, things which governments are spending on too. So there are themes in Europe that are doing well. It's not just an AI-driven story in Europe. But yeah, you're right. I mean, the US market's up 10%, Europe's up about 5%, and I do think that's the difference in sector exposures.
Do you expect that to continue? Because last year we saw European indexes for the first time in recent memory outperform the US, really trouncing US performance, and it seems to be an outlier if you look at the performance of those two markets versus each other over the last, say, 10 or 15 years.
Completely. I mean, the US had, since the financial crisis, really, almost every year, very unusual years for Europe to outperform. Almost every year, the US market outperformed Europe. And not only that, the dollar was generally rising during that time. So investing in the S&P, you may have gained from a stronger dollar, and you gained from stronger equity prices relative to Europe. I think it's been more mixed recently. In the last year and a half, you've seen periods of European outperformance, periods of US outperformance. I do think it depends a little bit on the tech trade. Obviously, Europe has a much smaller weight in tech than the US. But it depends on other things as well. Europe is a less expensive market than the US. It's a market which a lot of investors globally, including US investors, are looking to diversify into. They're buying global ex-US funds, for example. This is a route to diversifying away from extremely expensive and concentrated exposure in the US. Now, that exposure has done well, and the earnings growth, as we just discussed, have been great. But you can also pick up some good value plus earnings growth in Europe as well.
What does the AI trade or really the infrastructure build-out, Sharon, look like in Europe? Because on this program a couple days ago, we were talking about major investment by SoftBank and Samsung into France. They have a wealth of power due to their reliance on nuclear. Meanwhile, you know, Germany has been caught out by relying on Russian gas for so many decades, and they really are looking at a shortage in terms of their power needs.
I agree. Look, generally speaking, Europe does not have energy independence. Different countries differ, but overall, Europe does not have energy independence. That being said, Europe has been quite resilient over these last couple of months with the Straits of Hormuz being closed. Europe gets energy from North Africa, it gets energy from America, it's ramped up renewable energy supply over time and will continue to do so. As you say, France has got nuclear. So there's a bit of a diversified portfolio of energy, for sure, in Europe, but doesn't have the energy independence that, say, the US market has. And that may be a factor in curtailing the big growth in data centers. But what I actually think is probably going to be more of a factor is regulation, planning permission, just getting through the bureaucracy that you often see. So I do think Europe will be behind when it comes to the rollout of those things. But European companies, the listed companies on the stock market, tend to be quite global. So they've got access to growth in these areas across the world.
So what is an investor to do, Sharon? I mean, sitting in the middle, say a pound investor, where should she put her money?
I think it's a good idea to diversify. I mean, you definitely want some money in the US, you want some money in tech, you want some money in all those growth areas, although in lots of cases they're now quite heavily priced as well. So I would recommend diversifying. This is something we've been arguing for the last 18 months or so. You want to have exposure to Asia, to the US, to Europe. I think they've all got different characteristics. You've got tech exposure, obviously, very concentrated in certain companies in Asia and in the US. In Europe, you've got a lot of exposure to what we call halo assets, which is heavy assets, low obsolescence. These are types of companies like energy, utilities, telecoms, industrials, which we're going to need to build out all the infrastructure we need in the next few years.
So how much does the war in the Middle East, the U.S. war in Iran, matter? I mean, I guess you watch, like us, the headlines day by day, but does it change your investment thesis?
I'm actually being surprised at how resilient Europe has been so far, but it's certainly a negative, and it's particularly negative for the consumer discretionary areas in the market. And Europe is very vulnerable. Europe doesn't have energy independence. We are reliant on getting energy from the rest of the world. That has pushed up prices. That is hitting the consumer in Europe. Now, from a stock market perspective, consumer discretionary stocks are small versus, say, the energy sector, which is a big sector. So we've still seen earnings rise for Europe, and that's largely been driven by energy and tech and a little bit of financials with higher interest rates helping there. But there is a group of companies, consumer discretionary names, which are going to be much more vulnerable. So yes, it's certainly a negative, and I think obviously Europe will be one of the biggest beneficiaries if and when we see the Straits of Hormuz open again.
Sharon, great to talk to you this morning. Thanks so much for joining us. Sharon Bell there of Goldman Sachs out of London. Let's get to some of the other top stories trending on the terminal for you this morning. Lebanese President Joseph Aoun says the ceasefire with Israel could begin within 24 hours after the parties involved got approval. U.S. mediators will decide on the time and mechanism of the truce. Aoun's remarks come just after Hezbollah said it fired missiles at Israeli troops in Lebanon. Partners Group says it's ready to gate other evergreen funds. According to the Swiss firm, 3 other mature evergreen funds with a total fund size of $9.7 billion are estimated to see redemptions between 3.5% and 5% in the second quarter. The announcement comes a day after the firm capped withdrawals from one of its PE funds on Wednesday. And D.E. Shaw is extending the time it will take investors to fully exit 2 of its biggest hedge funds. The firm joins Millennium and Citadel among firms trying to keep client cash for longer. According to Bloomberg sources, D.E. Shaw will also shut down 2 smaller multi-strat funds managing less than $10 billion. Coming up, the tech sector in the U.S. announcing the most job cuts in nearly 2 years, according to Challenger data. We'll discuss more on the labor market with Rhonda Vance Sharp, president of the Women's Institute for Science, Equity, and Race. Next, this is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Challenger job cuts data say May job cuts were up 16% versus April. Tech leading the U.S. in layoffs with over 38,000 cuts. Companies citing AI as the leading reason. Rhonda Vance Sharp is the president and founder of the Women's Institute for Science, Equity, and Race, where she exposes economic inequalities by breaking down data by race and sex. Her work informed former President Biden's executive order on advancing racial equity. Rhonda Vance Sharp joins us now. So, Rhonda, when we look at these job cuts, companies using AI as an excuse to cut jobs, or maybe they are actually replacing some functions with artificial intelligence, who does it affect the most?
So that's a twofold question. I think it's going to impact folks who are coders. If you'll remember, we've had this huge push in getting people to be coders, computer programmers. I think they're going to be impacted, especially at the junior level. We are using AI in my organization to help us do some coding. I think it's what we already know. It's just going to affect new entrants into the job market because AI, I'm going to put in quotations, is cheaper than bringing on a new employer. And then I think it's going to affect some of the older workers who don't have the skill set or willingness to learn AI technology.
Yeah,
I don't think it's a single story.
I was going to ask about that. But because I wonder what the data shows. In my experience, anecdotally, I see my parents both in their late 70s. My father has absolutely no idea what artificial intelligence is. My mother uses it like oxygen. So are older people left behind, or are they using this technology?
I think they are. I think they are behind, but that's not a surprise to us, right? No. I think many of us come to technology as we are required, right? As everything moves towards it, and you have no choice. But I also think the important thing to realize is, what are we talking about when we're talking about AI? Many of us have had AI and been using it for years, the spell correct on your phone, AI is powered behind Word documents when we're looking at spell correct. So I think it's important to differentiate what we mean by AI. And in many instances, we're talking about using some of the AI agentics like Claude, my favorite, ChatGPT, Gemini. You know, we are talking about those tools, Magnus and some others, not AI, right? Because many of us have been using that for years and just not unaware that we were using AI.
How about, using these, Claude or ChatGPT specifically? In my experience, well, in this office, as far as I can tell, women really lead that charge. But I've seen stories that say more broadly, women fear being left behind with this technology.
And that's rightfully so, because if we think about the conversation, it has suggested that women are not in tech space, that women haven't been receiving the degrees in computer science, information science, mathematics. I think I recently looked at some numbers, and those are the areas where, depending on the racial and ethnic demographic, men earn degrees in those fields 2 to 1 pretty much to women. So I'm not surprised that women are concerned, nor am I surprised that women are leaning into using AI, because if we don't have coding skills, many of us may see this as our equalizer.
What about young people? We've heard so much during, it's graduation season, and so many speeches focused on the evils of AI. I saw a Gallup poll that said people ages 14 to 29 feel hopeful. 18%, I should say, just 18% feel hopeful. That's down from 27% in 2025. So a dwindling number of young people are optimistic about this technology.
And I think that's rightfully so. I think we have this assumption that they're not listening to the news, but I suspect that they are hearing the ways in which AI is making the job market tougher for recent graduates. So if you factor that in, and the fact that the younger generation seems to be more environmentally conscious, it doesn't surprise me that they have concerns about AI, both from the standpoint of what it means for their economic security, but also what it means for their independence in terms of being able to get a job.
Rhonda, great to spend some time with you. Thanks so much for joining us. Rhonda Vance-Sharp there of the Women's Institute for Science, Equity, and Race. Coming up, more jobs market data on deck in your day ahead. And of course, we get the all-important non-farm payrolls number out tomorrow. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead today. First up, jobless claims coming at 8:30 a.m. Eastern, like they do every single Thursday ever for your entire life. Then a marathon of Fed speak this afternoon from Barkin, Bowman, and Schmidt. Plus, don't miss our interview with San Francisco Fed President Mary Daly. That's at 11:40 a.m. And all eyes on SpaceX. Formal marketing for their record-breaking IPO expected to kick off today. Jamie Dimon himself going to sell shares to high-net-worth investors at J.P. Morgan. In terms of the movers we're watching, Broadcom is one of the big ones, down 12%, although it's added $270 billion in market cap over the past 5 trading sessions. CrowdStrike down more than 10% after not raising its outlook enough. And you can see PVH also losing almost a quarter of its value, the owner of Calvin Klein and Tommy Hilfiger, with a weak outlook. In terms of futures, we're looking at losses. In terms of crude, also down 2% to 95.84. And you can see the 10-year yield losing 2 basis points to 447.29. That does it for Bloomberg Brief. Surveillance is ahead. And, of course, my program, Open Interest, today like every weekday from 9 a.m. to 11. This is Bloomberg.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
نشو طالع يقول أخمل أخمل تشوار بانغو أخمل بانغ manchang le hay con mamanya. Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
It's all about AI.
We're still seeing a lot of strength and a lot of momentum around the AI trade.
Since March, we haven't seen anything that resembles anything sort of a pullback.
Demand is showing no signs of slowing down.
Records will be broke over the coming weeks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday, finding a crack in the tech boom. Quarterly results from Broadcom failing short of high expectations as a beat and a raise from CrowdStrike is failing to satisfy big demands, just as JP Morgan's Jamie Dimon is gearing up to pitch the SpaceX IPO to wealthy clients.
Is this supply anxiety coming to the fore a bit in markets? Is it just a sense that maybe we've gone too fast, too hard after a streak that was almost the longest winning streak going back to 1995 in terms of a 10th straight day that we did not make yesterday? Some people saying this is probably a healthy cooling off given the fact that people have already baked in such extreme valuations. It's more about positioning than it is about the results. With the SpaceX issue, though, that's starting to raise questions about supply and demand.
To your point on Broadcom, let's look at it in the pre-market. Down hard in early trading, I get it, but you've got to talk about how we got here. How we got here, going into earnings, Broadcom added $280 billion in 4 days of trading, and based on that move this morning, we're going to take those 4 days back.
And part of this is just that how much are you levering up some of the earnings that you're expecting? I mean, they really did beat expectations in certain areas. There were a couple of small misses. Nonetheless, if you have shares that are levering in so much growth over the next 5-10 years, a small miss or a subdued beat is going to give some people some concerns.
If you're bullish, look at Taiwan Semi and look at the comments coming out of the C-suite this morning. That company is telling everyone that this sector is still supply constrained.
Still supply constrained, and they're saying that they won't be able to meet demand for years to come. Not days, not months, years. And I think this is the bigger story out of all of them, because this is really the crux of the entire AI trade. They have a monopoly, really, when it comes to the supply chain. And if they're saying that they're not going to meet demand for years, well then, why are these stocks down?
We've thrown a lot at this market in just a few days. Think about it. An upsized Alphabet capital raise, not just the 80 billion we were thinking about, make it 85. You've got a mega IPOs on the horizon as well. And by the way, for the year so far, we talked about it earlier this week, we've priced in near record time $1 trillion of IG debt stateside. That's a lot of money being thrown around.
And it's just the appetizer. When you talk to investors, they say, what are they front loading? This is just the beginning of potentially a multi-year cycle of more than $1 trillion of spending over the next couple of years. For now, it's essentially take from this guy, give it to the semiconductors, and that's what seems to have worked. Now people are starting to question, how far can this go? Where is the pricing power? TSMC, yes, they were saying that demand's going to be really great for years to come and they can't meet it, but they also said they're not going to be increasing their prices as much as some other players are going to be increasing them, just simply because they want to create a stable, steady customer base.
So here comes the tighter monetary policy as well. Keep an eye on this. Next week, the ECB is gearing up to hike. The BOJ, according to our sources, also gearing up to hike. And the Federal Reserve, one more Fed official, just talking up the potential for a rate hike maybe later this year.
Yeah, we've been hearing this groundswell, although the fact that they're talking about maybe some sort of rate hike later this year, Beth Hammack leading the charge on that one, it gives you a sense of how far we are away from the ECB, the BOJ, and the U.S., the Federal Reserve saying, we probably should think about not easing. This is sort of giving you a sense of where we are.
A discussion about discussing it at some point in the future.
Exactly.
As opposed to actually hiking it the next week or so. Coming up this hour, we'll catch up with Chris Verone of Strategas as the tech rally hits some turbulence. We'll catch up with the State Department spokesperson, Tommy Pigott, as Iran says there is no progress in talks. And Angelo Zeno of CFRA as Broadcom falls short of some big expectations. We begin this hour with stocks pulling back as earnings from Broadcom and CrowdStrike fail to satisfy investor demands. Chris Verone of Strategas writing the trends remain strong across the board among the major indices, but there are some blemishes out there that can't be entirely looked over. Chris joins us now for more. Chris, good morning.
Great to be here, John.
Identify the blemishes. Where do you see them?
Yeah, I mean, listen, financials, I think, are the worst performing sector through the first 5 months of the year, so you can't entirely discount that. The banks have been a little bit squishy here over the last couple of weeks in particular. We've seen, I think, the consumer finance names start to weaken. I think Capital One, Amex, Synchrony Financial. So there's some blemishes, I think, within financials. The question that I'm trying to figure out are the impaired stocks or the impaired groups, are they weak because they're truly impaired, or are they weak because they're just not AI stocks? And I think that's the big question of the moment, because we've been in this highly rotational market. I think that continues, but you do have to just be aware of some of these little cracks around the edges.
What would your North Star be? What would be the tell in the market to back up one versus the other?
So I know there's all this debate on like what level 10-year yields really, are the risk-off signal for stocks. My gut is it's a level that's much higher than people truly believe. I mean, I think we learned last week that 4.65 10-year yields is not enough to disrupt this entire story. And if you kind of go back to past melt-up or past bubble-like experiences, whether it was Japan in '89 or NASDAQ in '99, the level of the bond yield goes aggressively higher. I mean, we saw JGB yields in '89 go 4 to 8. In NASDAQ in '99, US 10s went 4 to 7, right? So I think there's a level materially higher than 4.60, 4.65, where you start to really begin to question, is money being treated better somewhere else?
If that's the case, then bond yields aren't close to that, and you can park that for now as a story, as a tell. Yeah. The issue a lot of people are having is, are investors selling the likes of banks and non-tech stocks to finance their purchases of all of these IPOs that are coming to market?
It certainly seems like that, certainly tech or AI has soaked up all the oxygen in the room here. I would be more worried about financials weaker or banks weaker if credit conditions were deteriorating. That's just not the case at all. Whether it's subordinated bank spreads or discretionary high yield, all of these things are at or near the tight. So you're not seeing the knock-on effect in credit, what gives me some comfort that this is not some, systemic problem that's about to weave through the markets here.
Systemic problem is one thing. Overvaluation and being forced to buy a lot of paper that even the CEO of the biggest bank is trying to jam through down everyone's throats gives you a little bit of pause. And that's one of the concerns that people have. They're sort of being forced to buy into something that is becoming the market, potentially the 5th biggest company in the world, in the S&P 500. And all of a sudden, it's sort of like, do we really like what we're being sold?
Well, that's what I think we learned this week. I think we learned this week that the interest rate, the 10-year yield, is not high enough yet to prevent this from happening. So I think we have to find a level on 10-year yield that's meaningfully higher than where it presently is. And I know what we're supposed to think here. I know we're supposed to, well, listen, I think we're supposed to think that, okay, a deal with Iran gets done and yields go back to where they were pre-war, and oil goes back to where it was pre-war, and the energy stocks all sell off. But that's not what the trends suggest. The trends in global yields are still up, not down. The trends in energy stocks are still up, not down. So I have to kind of be deferential to the trends. So I think ultimately we're talking about a 10-year yield that's probably higher than where we were last week, maybe with a 5 handle on it before all is said and done here.
So you're basically baking in more inflation when it comes to AI trade, also energy. But the Treasury Secretary yesterday once again called it, I didn't think he used the word transitory yesterday, he said transient or a blip. Do you think inflation right now is a blip?
Well, I think it's a mistake to look at the move in nominal yields and think it's all inflation. I mean, look at the surprise index. It's accompanied yields higher the whole way. I mean, there's been a really meaningful growth element to this. 5-year break-evens are frankly back to where they were pre-war. So I think the growth element of this is much more potent than we're getting credit for. And frankly, you see it in the industrial stocks. I mean, the industrials still lack well. What names industrials broke out this week? United Rentals, Grainger, Fastenal, Eaton. I mean, these are not growth falling off the cliff type names.
The bond market just hasn't been a tell for the equity market. Japan's a fantastic example of that. The start of the year, if I turned around to you and said, okay, look, Japanese stocks, they're going to face the following headwinds. BIG might hike. You're going to see record highs on certain yields across certain maturities in the JGB market, and yet here we are at more than 30% on the Nikkei. What's going on in Japan?
I think it's remarkable, you know, for 30 or 40 years when JGB yields were falling, right? Why do we want to go back to that? That wasn't particularly good for Japanese stocks then. And yet there's all this alarm that they're, you know, 270 here on JGB 10s. Look at the Japanese banks making new highs today. MUFG, new high today. I think we'll get a clue when the move in Japanese yields has kind of crossed the level when you begin to see the Japanese banks weaken. And there's been no evidence of that here yet. Now, when you look at what's driven the Nikkei, I mean, up 30% year to date, in an environment where logically you'd say, oh my God, they're in the midst of an energy crisis here. It has been a lot of the same type of stocks that have driven the move here, but they still have the banks working in Japan. I think that's an important and meaningful distinction from what we've seen here.
Do you think that yields really ought to be higher just as a policy response to some of the froth that you're seeing when you're saying that some of these IPOs are getting a little uncomfortable?
I'm not saying they should or they shouldn't be, and they'll do what they ultimately please, but I think at the end of the day, when you're in these melt-up-like environments, you're going to find a level on the 10-year yield ultimately where it suggests there's sufficient competition for stocks. And if you look at this kind of market we've been in, particularly over the last couple of years, money doesn't want to leave the asset class of equities. It's just been sloshing around and rotating from this group to that group. So there has to be some catalyst or some reason why it would leave. And the only thing I can think of is a materially higher bond yield, which we haven't seen yet.
Your point, though, I think is a valid point. This move in bonds is not just about the move in energy. In fact, it might not even be the primary driver. And I think that's the change in fixed income that I've identified more recently, particularly among the Fed officials. I think even if you address the situation in the Middle East, this conversation about rate hikes doesn't disappear overnight. Not in this country.
Especially because of the CapEx spending, especially because of the resilient consumer that we continue to see in all of the earnings, especially because of the manufacturing boom that you're seeing in some of these names. I mean, that all is coming together for that.
You know, I think in this business, there is nothing less satisfying than thinking you got the story right, but losing money. And I think there's nothing more satisfying than, frankly, getting the story wrong, but still making money. And when I think about what we thought this year, you know, we went into 2026 thinking you get a melt up in asset prices because either Warsh or Hassett would be cutting into a very strong economy. Clearly, that's not happening, right? We're not going to get cuts into this environment, yet we're having a melt-up nevertheless. So maybe this year has been a lesson in the latter, wrong on the story, but right on the market.
Do you want to sound smart or make money?
Yeah, that's an easy call.
The Middle East has been a great example of that over the last few months. There's a lot of reasons to worry. But that's not going to help you make money at the moment.
Which is the reason why everyone's going for the make money and sound like,
right?
You know, this is the reason why Chris Verone came up with the mantra of 2026.
The less you know.
The less you know.
It's a great line, the less you know.
Thank you.
Is the client's picking up on that line too?
Well, listen,
it's... Got to park the worries,
think about it.
Put them in a box.
Think about the course of the year. If on February 27th, Lisa, if on February 27th, the day before the bomb started flying, when gold was 5,500, if you would have guessed where it would be today, you would not guess 4,500. You'd guess 7,000. Or defense stocks weaker over this period, or a yield curve flatter.
Energy stocks.
So my point is, the market's always 2 or 3 steps ahead of me or you, right? So let's be imaginative and open to what it's trying to tell us. Maybe gold went down because we learned during this war that energy reserves are more valuable than gold reserves. I don't know, it's an idea. But my point is, the market seems to be ahead of us. Let's just spend more time listening, less time telling it what it should be doing.
The post-pandemic period has been humbling so far. Let's put it that way. Chris, it's good to see you.
Great to see you.
Thank you, buddy. Chris Verone there of Strategas. Equity futures right now, the S&P pulling back by 0.4% with an update on stories worldwide this morning. With your Bloomberg brief, Isabel Lee has more. Hey, Isabel.
Hi, John. The U.S. says Israel and Lebanon agreed to a ceasefire. The White House saying the agreement is contingent on, quote, a complete cessation of attacks by Hezbollah. There has been no indication Hezbollah has accepted the terms of the deal. Broadcom shares falling in pre-market trading. The company delivered a disappointing forecast for AI chip revenue. Broadcom says it's making progress with AI customers, including Alphabet, Anthropic, and Meta. And in sports news, which I believe will make some of you happy, the New York Knicks are off to a strong start in the NBA Finals, beating the San Antonio Spurs 105-95. The Knicks have won 12 consecutive playoff games and are 3 wins away from their first title in 53 years. Game 2 tips off tomorrow night in Texas. That's your Bloomberg Brief. John?
Isabel, thank you. One person in particular, of course, wearing Knicks blue this morning around the table. I noticed that. A little bit of a pop and a step this morning, too.
I was excited. So I went to bed, and it was a rough game, and then I woke up, watched the second half, the fourth quarter. Incredible. Neil Dutta was there, sending me, I woke up to, a live feed of Neil giving the play-by-play.
Yeah.
He's on the Knicks Instagram.
I saw that. He's very happy with that.
cool.
Have you positioned the mug for the bump out? Yeah, let's get it. Okay, get that ready. All right. Up next on the program, mixed messaging on Iran.
In that part of the world, ceasefires when you're shooting in a more moderate manner. The negotiation itself has gone very well, actually. It might not happen, who knows? But if it happens, it could happen like over the weekend.
Up next on the program, we'll catch up with the State Department spokesperson, Tommy Pigott, live from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
More data coming up later this morning, 8:30 Eastern Time. Another read on the jobs market. Jobless claims just around the corner. Payrolls Friday, the main event tomorrow morning at 8:30. Into that, your scores look like this. Pulling back on the S&P, we are down by 0.4%. Over on the Nasdaq, we're down by 1 full percentage point. Broadcom in the pre-market getting absolutely hammered. Talk about lofty expectations. That company falling short.
Yeah, and you mentioned how much market cap they have been adding, and so far this year they're up almost 40%. The fact that they didn't outperform the way that some of the other names have, with beats that have been monstrous. I mean, we've seen some really big beats. They did not do that, and as a result, they're getting heavily punished. And it's spreading to others too. CrowdStrike as well.
Down double digits in the pre-market. More on that name a little bit later this morning. Under surveillance this morning, mixed messaging on Iran.
Is the ceasefire with Iran still on?
Well, there's a reason for everything. And we hit them pretty hard. In that part of the world, ceasefires when you're shooting in a more moderate manner. The negotiation itself has gone very well, actually. It might not happen, who knows? But if it happens, it could happen like over the weekend.
That wasn't a bad definition of a ceasefire in the Middle East,
It's not.
It's like fairly accurate.
When I go to sources and I'm like, how is a ceasefire holding? They're like, Amory, it's the Middle East.
Precisely. So here's the latest this morning. The president remaining positive on negotiations as Tehran says there has been no tangible progress. Overnight clashes between Israel and Hezbollah complicating talks as Lebanon's president says a ceasefire with Israel could begin within 24 hours. Joining us now is Bloomberg's Abir Abu Omar from Dubai. Abir, welcome to the program. Welcome back. Let's get caught up on where we are. Are we making progress? That's the one question I hear every single day on this program. Are we making progress? Any signs of that this morning?
Well, it's the Middle East is the right sentiment here. A lot of conflicting statements. We're still getting a lot of those. And the latest is still pretty confusing. What we know is that Israeli officials had met with Lebanese counterparts yesterday, and what they reached was essentially talks for Hezbollah to stop its hostilities against Israel and Israel to do the same. So it's conditional. Israel did say that if Hezbollah stops its attacks against the northern part, then Israel would reduce its hostilities. But just about an hour and a half ago, the hostilities remain in the southern part of Lebanon, where Israel has its deepest incursion in about 25 years. And so we're still seeing that the Lebanese president coming out to local media and saying that we may see the truce come into effect in the next 24 hours. But then he also did say that he's waiting to hear responses from different parties. That may include Hezbollah, that may include Israel as well. President Trump, on his own right, did say that we may see broader negotiations between Iran and the United States carrying on this weekend, but then he also said they may not. So we go back to this back and forth that we've been witnessing over the past couple of months or so since the initial ceasefire was put in place. Still wait and see mode, still waiting to see if the truce does come into effect between Lebanon and Israel for the broader interim deal to start being negotiated.
Yeah, thank you. Appreciate the update. As always, joining us now around the table, the State Department spokesperson, Tommy Pigott. Tommy, you're the man this morning. Good morning to you. Tell us we're making some progress, because I can tell you on Wall Street, this is the #1 story that people don't want to talk about right now. Are we moving forward?
Well, look, we're moving forward in achieving the president's objective. I mean, you started saying mixed messaging on Iran, but the president's been clear from the beginning what his primary objective is here. The Iranian regime can't have a nuclear weapon. So we saw Operation Epic Fury, the decisive outcomes from that. We're seeing in Lebanon and Israel, those talks being separate from these talks regarding the nuclear issue, but the highest level talks since 1993, progress being made there. The president's not going to be rushed into a bad deal. He's going to make a good deal for the American people, and he's indicated we're seeing some movement here from the Iranian side.
The president yesterday talked about a ceasefire. We talked about this a little bit earlier, saying that that basically means shooting in a more moderate manner. That's what the ceasefire is. What would it take for this administration to say the ceasefire is off?
Well, look, I think what we're seeing here regarding this is defensive actions. Of course, we saw Operation Epic Fury, decimation of their defense industrial complex, their missile complex, their Navy, for example. But of course, we're going to take defensive action to protect U.S. interests and U.S. troops. That's a common sense approach. We also have in this context economic fury, that are a blockade that we have Iranian ships, Iranian ports. So there's leverage the president has. He has all the cards here. And what we saw the secretary describe before Congress is we are seeing the Iranian regime talk about many of the things that they refused to talk about for months. But the president also being clear he's going to see this objective be fulfilled one way or another. The Iranian regime cannot have a nuclear weapon.
The Wall Street Journal reporting overnight that Trump told his aides that he won't resume an all-out war with Iran unless U.S. troops are killed. Is that going to be the line where potentially we could see more offensive attacks?
Well, look, as the president's saying, again, we're going to take defensive action to protect U.S. troops, U.S. soldiers. I'm not here to predict the future about what the president may decide, but of course we're going to take that defensive action. Of course we are. That's a common sense approach. If we see threats against U.S. interests, U.S. troops, we're going to be acting, and the president, the DOW, has done just that.
Why isn't the International Atomic Energy Agency involved in these talks?
Well, I mean, we see the president talking about a role for the IAEA in terms of the destruction of the nuclear dust. The president, this has been a long-standing concern for the entire world, the threat that the Iranian regime having a nuclear weapon could have. It's the president who has taken action to actually address this.
Well, the IAEA came out overnight with a report where they said that the risk of Iran developing a nuclear weapon right now is higher than it was a number of months ago, raising concerns that they don't have access to oversight and saying that they would like to be more involved in these negotiations. Do you have any understanding of where they are in this and the urgency to get them in to be able to surveil what's going on?
Well, again, part of the discussions we're having here, as the president has indicated publicly, is regarding the destruction of the enriched uranium. Uranium that was enriched beyond a point of any sort of peaceful purpose. The IAEA, the president indicating, would play a role within that. Regarding where the Iranian regime is, as the secretary discussed before Congress, they were attempting to develop a conventional weapons shield, which they could act with basically impunity to develop a nuclear weapon. The president taking clear, concrete action to decimate that conventional military shield. So the president taking action to prevent the Iranian regime from having a nuclear weapon consistently from the beginning of this administration.
How effective has the blockade been? we've had this blinking contest for a while, trying to work out at what point will we breach storage capacity in Iran. Have you got anything to share with us this morning about how effective that blockade has been?
Well, it's been incredibly effective in terms of blocking revenue from going to the Iranian regime. Hundreds of millions of dollars a day being blocked from the Iranian regime. This is also the broader context of that maximum pressure policy. We're actually continuing to take action at the State Department and Treasury Department to target entities that are trying to evade U.S. sanctions that are designed to deny the regime the funds they need for their malign activities. We saw actions as recently, either yesterday or earlier this week. Those actions have continuing. So this economic fury is continuing. We're seeing, in terms of the effect, hundreds of millions of dollars being denied to the Iranian regime.
Secretary Rubio was in front of the Senate Foreign Relations Committee as well this week, and he said that Iran has laid very large parts of the Strait of Hormuz with mines. Have any of them been cleared? How much of the strait is still mined?
Well, the president indicating that we're taking operations to see that demining of the strait. I think this also shows the difference here. The Iranian regime trying to close the Strait of Hormuz and say that we should be able to control who goes to the Strait of Hormuz. That's why we saw this blockade of Iranian ships and Iranian ports. We're not going to be in a situation where we're going to accept a country deciding unilaterally who gets to use an international waterway. That's not going to happen. The president and the secretary both indicating that.
Tommy, can you see why people on Wall Street right now are slightly frustrated with some of the communication coming from the White House? And I'll give an example. The president said the strait would reopen back on April 17th. The strait did not reopen. It feels like we're getting the same headlines recycled every week. Can you see the frustration right now for people on Wall Street tracking this story?
Well, look, I think fundamentally the president's a deal maker. We saw the action. He takes the action he needs to take. We saw it with Operation Midnight Hammer. We saw it with
Except
Operation
he's not
Epic
making
Fury.
a deal, is he?
Well, I think he's working on that deal. I mean, we're seeing him make more progress than anyone's ever made in terms of this addressing this issue, in terms of the real results we've seen from these operations. The president wants that diplomatic approach. But fundamentally, the Iranian regime cannot have a nuclear weapon. That would have been an untenable threat to the region, the entire world. That was being addressed, that has been addressed, that is being addressed.
Tommy, appreciate your time.
All right,
Thank you, sir. Thank you very much. The State Department spokesperson there, Tommy Pigott, on the elusive Iranian deal. Let's hope we make some progress and pretty soon, because, as I say, on Wall Street, the frustration with this story, sky high.
Well, I think the issue is, and anyone who's covered Iran knows this really well, it took 20 months to do the JCPOA. Whether you agree with it or not, the Iranians drag their feet, and they have a very high threshold for pain. They don't care as much about their domestic politics the way a U.S. president has to care.
Crude this morning, down about 1%. Brent crude around 96. Coming up next, we'll catch up with Angelo Zeno of CFRA as Broadcom's outlook fails to impress. That stock this morning getting hammered in the pre-market.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Here's a picture of the stock market this morning, pulling back on the S&P 500, pulling back on the Nasdaq, led by tech. We'll get to Broadcom's CrowdStrike in just a moment. On the Nasdaq 100, we're down by 1.2%. Yesterday on the S&P, snapping a 9-day winning run, falling short of the longest winning streak since the 1990s, following a 20% move off the low on the S&P 500, just taking some heat out of this equity market. Turn to the bond market board, check it out. 2-year yields, 10-year yields, 30-year yields coming down just a touch. We're down 3 basis points on a 2-year at 4.05%. The data so far this week, the details are nuanced, they get that, but on a headline basis, the data so far this week, claims, the ISM, job openings, take your pick. We'll get claims later. But the data so far this week has been pretty decent.
Yeah, ISM manufacturing outperformed. JOLTS came in stronger than expected. ISM services came in hotter than expected, although the caveat there being the employment figure. So again, trying to understand the employment backdrop to really support the extreme economic beats that we keep getting from the U.S.
The bond market just not in the driving seat at the moment at all. It seems to be about the economic data, which is okay, and the earnings. Are there some cracks in the earnings? Let's talk about some single names. Your morning movers, Yahira has more. Hey, Yahira.
Hi, John. The AI trade is under pressure this morning, and Broadcom is at the center of it. Shares are falling 13% after it gave an AI chips outlook that failed to clear an increasingly high bar. As you said earlier, the stock had added some $270 billion in market cap in just the past 5 sessions, leaving little room for disappointment. And just to give you a flavor of what the analyst community is thinking, Citi says any pullback should be viewed as a buying opportunity. Another company that failed to impress investors is CrowdStrike. Shares also plunging some 10% in the pre-market after the cybersecurity company delivered an outlook that largely matched expectations but failed to justify a nearly 60% surge in the stock year to date. Investors have been betting that AI-powered cyber threats would create a wave of demand for its products, but the outlook failing to reinforce that thesis. And we end on the consumer with Five Below. Shares also plunging 10% in the pre-market, even after it delivered a beat and a raise. And the issue here was the warning that Five Below gave on the consumer, saying that higher tax refunds helped drive spending this quarter, but that things will take a turn in the second half with the consumer feeling the squeeze from higher inflation. John?
Yahira, thank you. Bit of a lesson yesterday afternoon following those earnings, the difference between analyst expectations and market expectations, and sometimes there's a bit of a spread. I think we learned that with CrowdStrike.
Yeah, essentially, the analyst expectations aren't good enough, and the market is expecting much more than that. They've been spoiled, and truth be told, because you've seen beats that are some $10 billion by some companies in revenues. So you start seeing that kind of outperformance in some of these companies, you start thinking this is normal.
When a beat and raise is not good enough over at CrowdStrike. On our radar this morning, the US saying the ceasefire with Iran is holding up. The president confirming Israel and Lebanon have agreed to hold strikes, addressing a key sticking point for Tehran.
We actually spoke with Hezbollah for the first time ever. We didn't know they spoke. And They agreed yesterday they're not going to shoot. Israel's not going to shoot. We're just going to see.
The president on Hezbollah. I mean, sometimes you don't know what to say. How do you respond to that?
We didn't know
that they spoke.
We didn't know that we spoke. Yes.
They're part of the Lebanese government.
Yes. That was interesting.
Yeah. Hezbollah yet to agree to the deal, reportedly firing rockets at Israeli troops in the last hour. Elsewhere, the Bank of Japan considering hiking rates when it meets later this month. Sources telling us here at Bloomberg officials are likely to raise the policy rate to 1%. They see scope for more hikes, citing persistent upside risk to inflation. And finally, JP Morgan boss Jamie Dimon pitching the SpaceX IPO to the bank's high net worth clients today. According to invites seen by Bloomberg, Dimon hosting the interactive discussion with SpaceX executives. It will be cast to 90 JP Morgan locations in 26 states.
Yeah, with thousands of some of their high net worth individuals joining in. A question here about JP Morgan's involvement. First of all, not the lead bank at all. That is Goldman. That is some of the other banks as well that have gotten that lead left kind of position. The fact that Jamie Dimon himself is pitching this is notable, and the fact that it's coming with a price tag that's already fixed is notable, and it comes with a much bigger potential participation from the retail investor just based on the share going to them, and frankly, the scope of paper that needs to get taken down by people who might not already have exposure.
Well, it's really interesting because you look at the arc of this relationship. This is when Elon Musk at Tesla, Jamie Dimon, JP Morgan, there have been lawsuits. They've had a lot of issues. But I was reminded yesterday reading this story that Jamie Dimon said something at Davos a few years ago. They hugged it out, and that he is the Einstein of our generation. So I'm not surprised that he's taking this personal touch, because who knows, there might be another one for Elon Musk, another public offering, and he can, you know, get the number one bank.
I'm going to park JP Morgan and Jamie Dimon and just talk in general terms, of course. Money can convert a lot of people, and there's so much money to be made from this IPO. This isn't your usual IPO. This is a company that's been in private markets for 2 decades, founded some 24 years ago, coming to market raising $75 billion, which is a multiple of the largest IPO we've ever seen. In fact, the demand is so high, and we covered this story earlier on this week, that SpaceX and Elon Musk is basically telling the bankers now what the fees will be. And before the roadshow, he's fixing the price. That just tells you how much leverage right now that company has, or at least the leverage it believes it has, coming into this process.
And the incentive from the biggest bankers of the world to pitch this very hard,
big time,
to get this cleared in a positive way, especially given the fact that this is the lead up, the appetizer to 2 other very big IPOs. All of these banks want a big piece of that too, and they want to get the fees associated with all the add-on deals. You take a picture of that and you understand why there is such a bullish tone coming out.
All these C-suites are incentivized to keep everything spinning, to keep everybody dancing, to keep this market at decent levels. No one wants to push back and ruin the party. There's so much money to be made. And if you're not on the inside, you're behaving very differently. Jefferies and the story we wrote in the last 24 hours offering a vehicle to take the other side of the trade because they're not part of the IPO process. At least that's the way people believe things have played out here. That tells you everything you need to know.
Yeah, well, it tells you 2 things. Number one, there are some people who are getting skeptical about the story and the euphoria around some of these names. And number 2, if you're not in on it, you are bitter, and you are going to come up with a way to play the other side.
Let's talk about Broadcom and the other side of the trade, lower in the pre-market this morning. AI chip revenue falling short of Wall Street estimates. Angelo Zeno of CFRA maintaining a buy rating on the shares and writing the following: the bar was extremely high. Broadcom delivered exceptional results. Angelo joined us now for more. Angelo, welcome to the program. The numbers are exceptional, your words. The reaction is not. What's the lesson from the reaction this morning?
Yeah, I mean, and I think that summed it all pretty well in the sense that, you know, expectations were definitely high kind of going into this, right? And I don't know, you know, as far as lessons learned here or you know, what we can make out of this, you know, I would say, listen, the demand environment looks extremely good still. Valuations actually still look pretty good, especially on Broadcom's side of things. And this is not, you know, something where expectations have really been built up too high. But I'd say this is one of those situations right now where when we look ahead, there are still red flags to consider here. Broadcom kind of, I think, brought up some of those concerns that the market may have looking out into 2027 and beyond. So, you know, you kind of have to start putting all that stuff into context. But you kind of look here for Broadcom, you know, over the next, you know, couple of quarters, and Broadcom more specifically than others, they remain very entrenched in the key players. out there within the AI ecosystem. And as a result, I think this is a place you still want to be acknowledging, though, that there are risks that are heightening.
Angelo, as a group, these stocks have absolutely ripped, but within the group of chip makers, there are individual different strategies. Broadcom notably helping others build chips for themselves. Slightly different to the strategy at some other chip makers. Angelo, how is that strategy playing out at the moment?
I mean, I think for Broadcom, they've got some pretty good visibility because of that strategy. And, you kind of look at, again, who they've kind of built and partnered with here over the last couple of quarters. That visibility is there. But you kind of, again, you kind of look at, where the money is flowing right now. It's not going to the NVIDIAs and Broadcoms of the world, which have really been the two big winners and taken the lion's share of the AI money here over the last couple of years. It's going to, the content gainers or perceived content gainers that we expect to see here over the next couple of years. It's those bottleneck guys. It's the CPU players. It's the optics guys. Some of those guys that maybe haven't benefited as much here over the last couple of years that are going to maybe sell into the NVIDIAs and other guys of the world. So those are the winners at this point in time. Again, if you're kind of more of a long-term strategic player looking at valuations and growth, as well, I think kind of the more balanced approach at this point in time probably shifts a little bit more towards Broadcom with this pullback as well as NVIDIA.
There's an important potential theme that could be emerging, Angelo, and I'd love your thought on this. Are we already seeing the CapEx plans by the hyperscalers getting fully priced in the semiconductor index? And essentially, if you want that kind of growth, that trade at least is over, and it's got to move elsewhere.
I think that's a fair point to make. We obviously don't know until all this stuff kind of plays itself out. But I think you're right. I mean, I think as far as the CapEx expectations are concerned, as we look out here into 2027, the expectation is you're going to get another record CapEx spend year, and then we'll see what happens in 28 and 2029. But yeah, I mean, as far as the CapEx numbers itself, probably. That is largely priced in, with also the caveat that there could potentially be risk to those numbers as we go into 27 and 28, not because of what's going on from a demand perspective, but more so on maybe, let's call it, some of the energy bottlenecks out there. When you look at a company like Broadcom that reported last night, they did hint at, or they cited that the rising backlog out there, but that rising backlog is increasingly being dictated to more, forward kind of numbers. And the big reason for that is a lot of these players out there need to ensure that they're getting access to that power. So you could potentially see some hiccups along the way as we kind of, again, get into 27 and 28 tied to some of those CapEx expectations.
We're seeing right now the pullback after the SOX index is up almost 100% so far this year. I mean, it's been a pretty stunning rally. Oh. From your perspective, what would you have to see to say, yeah, we've seen the top. Yeah, we probably have seen the bulk of the gains?
Yeah, I mean, that's a great question. And I don't know if that's one that can necessarily be answered. I think this is one of those situations where you never know where valuations are going to go when it comes to the chip industry and tech for that matter. I think you can make a case where, as growth rates start to ease going into the next couple of years, those valuations have to kind of compress a bit. And I would think that should be kind of the overarching sentiment. But at this point in time, you just don't know how sustainable some of this stuff is going into the next couple of years. I don't know if there's necessarily some sort of, what that red flag is going to be, because there are so many different ways that this can play out here over the next couple of years. But again, as long as that demand landscape remains intact, and right now it really does, and you kind of look out here over the next couple of years and you look at what the drivers of demand, at this point is, and I think at this point in time you have to kind of assume, again, that in demand looks fairly well. I do think those other bottlenecks, some of those constraints out there, specifically on the energy side of things, is something that could kind of put a dent in the party here looking out over the next couple of years. But that being said, I think as long as that demand landscape remains intact, the market it's just something the market's going to have to work with. And potentially it does lead to an intermediate term peak. But again, as long as that demand landscape is there, it's something the market could probably work through.
Angelo, good to see you. As always, buddy. Angelo Zeno there of CFRA. The beats have been so big that the misses are making headlines. A notable miss from Broadcom this morning. The Nasdaq is down by 1.2%. With an update on stories worldwide, let's get to your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. The House approved a war powers resolution that would end U.S. military action against Iran in a rebuke of President Trump. 4 Republicans joined Democrats in a push to end the 3-month-long conflict. The measure now faces a vote in the Senate. President Donald Trump will attend the G7 Leaders Summit in France later this month. Trump will also attend the NATO summit in Turkey next month, according to Secretary of State Marco Rubio. There were questions about Trump's attendance as he repeatedly expressed anger with NATO members for not helping with the Iran war. And Anthropic gearing up for its IPO. Sources telling us here at Bloomberg, the maker of the Claude chatbot picked Morgan Stanley and Goldman Sachs to lead its offering. Anthropic was valued at $965 billion after its last funding round, making it one of the largest private companies. That's your Bloomberg brief. John?
Isabel, thank you. Appreciate it. More from Isabel in the next hour. Up next on the program, balancing the dual mandate.
I'm increasingly concerned that higher interest rates could be necessary later this year to fully restore price stability and appropriately balance both sides of the Fed's dual mandate.
We got another one. Andrew Sheets of Morgan Stanley joins us next.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
snapped the winning streak in yesterday's session. Here's the pullback this morning, down by 0.5% on the S&P, on the Nasdaq down by 1.2%. Broadcom getting hammered, CrowdStrike getting hammered. Not your typical day in big tech. By typical, I mean usually these names are just ripping post-earnings, but we haven't seen that this time around. In the bond market, heading into economic data, and the data so far this week has been decent. Yields are lower by 3 basis points, 4.05% on 2s, but still around 450 on 10s, 447. And more Fed officials just coming around to the idea that maybe it's time to think about tighter policy, not now, but in the future. Under surveillance this morning, balancing the dual mandate.
The labor market appears stable and broadly balanced. These conditions indicate to me that monetary policy is not restraining the economy. I'm increasingly concerned that higher interest rates could be necessary later this year to fully restore price stability and appropriately balance both sides of the Fed's dual mandate.
So here's the latest this morning. The Federal Reserve's Beige Book showing steady employment and rising inflationary pressures. Andrew Sheets of Morgan Stanley writing, we think the Fed stays on hold, then cuts next year. Andrew joins us now for more. Andrew, welcome to the program. So how would you describe some of the commentary we've had from certain Fed officials? Is that just theatrical, a communication exercise, or is it something else?
No, thanks, and good morning. Look, I think it's accurately describing the state of play to this point. You know, the Fed's dual mandate is inflation and jobs. On jobs, the labor market remains very solid. Unemployment's, 4.3%. But on inflation, the 3-month, 6-month, or 12-month average of core PCE is over 3%, well over the Fed's target. So certainly, I think coming into the second half of the year, there's I think a justifiable concern that the Fed is succeeding on the job side of the mandate, but not succeeding on the inflation side. Now, what we think changes is that we think that inflation picture does look better in the second half of the year. We think inflation does come down, that we think even the next CPI reading that the market will get will be a bit lower than consensus. And we also think the labor market data were a little bit below consensus on this Friday's number. And we think the labor market will remain choppy and again, with enough uncertainty to keep the Fed on hold this year, and then opening up the potential, in our case, the base case, for some cuts next year.
So on net, putting that together, cutting for the right reasons next year, what about the hiking conversation now? Is that conversation for the right reasons or the wrong reasons?
I think it's for the right reasons. Again, the inflation numbers are above the Fed's target. They've been above the Fed's target for a number of years, for an extended period of time. And I think there is a lot of uncertainty around where inflationary pressures of the economy really are. We were just talking on this program in the prior section about semiconductors and the enormous demand for AI infrastructure. I mean, there are huge increases in the costs of memory and power and compute that are going on as you have this historic build out within the AI ecosystem. So you look at things like ISM prices paid, either on services that we got yesterday or on manufacturing. Those measures are pretty elevated relative to the last 20, 30 years. So there are certainly, I think, signs that the Fed should be on guard for those higher inflationary pressures. Again, in our view and in our modeling, those pressures do ease in the second half of the year. And so by the first half of 27, that creates some space for the Fed to ease policy modestly. But it's absolutely, I think, a very fair thing for these officials to be thinking about and contemplating.
Do you think that there is anything that could happen between now and the end of this year that you think should prompt them to raise rates?
So I think there'd be a few things. I mean, and again, I think the elephant in the room would be the Iran conflict. Our thinking is that the Fed would look through that the Fed would see that as more of a growth shock than an inflationary shock. And so that's probably not the factor that we think would move the Fed towards hiking. But I think it would be a few things. One is it would be that you start to see core services continue to remain elevated. And again, right, a lot of disinflationary pressure is coming from the shelter categories, from housing. You could argue those are more backward looking, and it's some of the core services numbers that are representing the real kind of tightness in the economy. I also think this idea that if jobs growth looks a little bit better in the second half of the year, again, the first half of the year, the data was very noisy. And I think there's been a lot of fear around kind of AI related technological progress leading to job losses. If that does not happen, in the second half of the year, then again, I think you have a situation where maybe the Fed feels a little bit more comfortable. But I think it really needs to run through the inflation path. I think that's the thing that we think is most likely to move the Fed towards a hike. Again, I think we'd be watching inflation break-evens. Those have still been reasonably well behaved. But I think if those were to move higher as a sign that the market is getting more concerned about this mix of easy fiscal policy, bank loan growth accelerating, kind of more market confidence, and then just broadly a lot of AI spending into the economy, I think we'd expect that to show up in higher inflation break-evens than we see today. Maybe that is something that moves the Fed to take that step.
Andrew, does the Fed matter still? I mean, they're sensibly in this restrictive position, at least according to them at their last meeting. And we're seeing incredible issuance in the corporate debt market. We're seeing IPOs that are the biggest of all time. And we're seeing valuations that are extremely rich. How do you square this?
Yeah, so I think the Fed being on hold is absolutely fine. I mean, I think the way I would answer that is the market does not need rate cuts to be strong. And I think there is a lot of good precedent for the market remaining quite robust and remaining at elevated valuations when the Fed is on hold. We saw that in 2006. We saw that through a lot of the second half of the 1990s. The market doing just fine if Fed policy is stable. In some ways, stable policy suggests that policy is in the right place. I think, though, a hike would matter. I mean, and even if it was only 25 basis points, the markets have a tendency to extrapolate. And so if the Fed or any central bank, whenever you make one cut, the market's naturally going to ask, well, when is the next one? And I think given that the market has been so confident that the next move from the Fed, whenever it is going to be a cut, I think stronger signs of the Fed moving towards a hike absolutely would inject more volatility into the market. And also it would, potentially flatten the curve, which could undermine some of the strong demand we've seen for fixed income and for corporate credit. Again, the fact that yields are higher has been great for bond demand. But, when you go back to 2022 and when that curve was flatter or even inverting, those high yields didn't bring in the same demand. Flows were weaker. I think the inverted curve had something to do with that.
Andrew, appreciate it. Bit of a clinic on fixed income. Andrew Sheets there of Morgan Stanley into the back half of this year where there is a conversation beginning to emerge slowly at the Federal Reserve to consider tighter policy.
And the market's essentially saying, please consider this, please look at this, because we're pricing in a rate hike almost entirely by the end of this year, something more than 50%, 70% the last I checked, of a chance of a rate hike. At what point is the market also sending a signal, like we heard from Chris Verone, that yields where they are not high? In fact, they're completely manageable, and this is not necessarily restrictive monetary policy. Lots can change, but where the pendulum swings, I think a lot of people are debating.
I get the sense that's the argument that Laurie Logan is making at the moment as well. Not much evidence for sufficiently tight, restrictive monetary policy right now.
When you see the incredible issuance, when you see the IPOs, when you see the risk appetite, it's just not there.
Up next on the program, don't miss this, Jim Zelter of Apollo Global Management. Then we'll catch up with Betsy Stevenson of the University of Michigan, plus the former White House senior advisor, Amos Hochstein, the second hour of Bloomberg Surveillance, just around the corner.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Whatever concern we have about the consumer, they're still spending.
The Fed will remain on hold for the rest of the year.
No matter what the Fed does, everything else is kind of self-correcting.
You're seeing a bond market that flipped from cuts to the potential for hikes.
The bond market still very much believes that the Fed is going to fight this inflation.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. Pulling back yesterday, again this morning, just a little bit. On the S&P 500, we are down by 0.5%. On the NASDAQ by more, by 1.25. Here's the stock responsible for much of the move so far in the pre-market, Broadcom. Disappointing. The stock is down by 14%. The analysts look at the numbers, and they say the numbers are still exceptional, but the numbers fell short of some very high expectations.
Yeah, essentially, Broadcom beat, although the sales missed some expectations that were incredibly lofty. You did see this actual guide up for the current quarter in terms of revenues and profits, but not as much as some people had expected. The response tells you more about positioning and more about what we've been seeing in other earnings, which has been earnings, needs to keep performing in an incredible way for people to have faith in a story at these valuations.
I'm really honing in on the supply and demand issue today. TSMC saying they're not going to be able to fulfill demand led by these American customers. On top of that, you had industry groups. I'm talking about medical devices, the Retail Federation, writing letters to the Treasury Secretary, the Commerce Secretary saying, we're excited about this AI build-out, but we also need access to memory chips. And this is going to be a huge problem for us, our industries, and the American consumer.
Bit of a pullback in the equity market. More still to come on that topic. Let's turn to the day ahead. Jobless claims a little bit later this morning at 8:30 Eastern Time. We've had a string of decent data so far this week. Job openings, ADP, ISM manufacturing. So far, so good. I've said that a few times through the week.
Yeah, although a lot of questions about what's under the hood of that. There was some data that came out this morning from Challenger Gray and Christmas, the potential planned job cuts. And in general, they're actually going down. Okay, positive for the market. But you're seeing the tech sector planning the greatest number of layoffs, cuts, in about 2 years, and they tie it directly to the deployment of AI. And this kind of goes to the anxiety a lot of people are looking at. Is the job growth or even some of the resumption of strength sustainable, not only broad-based across the job market, but in some of the higher paid jobs that can lead to wage growth and a persistence of some of this consumer strength?
Look at the estimate for tomorrow morning on payrolls, 85K. It's pretty decent. We're told the break-even rate might be somewhere closer to zero. You get an 85K. There's evidence that job growth is still pretty healthy in this economy.
The unemployment rate's going to be key. The hours worked is going to be key. These are the metrics people will look at to understand whether this Fed
does have a dual mandate, and one side of that mandate is just fine, and the other one not so much.
Futures this morning, negative 0.5%. Coming up this hour, we'll catch up with Jim Zelter of Apollo Global Management on big tech's mega spending spree. We'll speak to Betsy Stevenson of the University of Michigan on the AI-driven changes impacting the workforce, and the former White House senior advisor Amos Hochstein on the struggle to make progress with Iran. We begin this hour with Broadcom pouring some cold water on a red-hot tech rally. Apollo Global Management President Jim Zelter is highlighting a pressure point on the horizon. He writes the following: if Alphabet can't self-fund AI capex, think about the smaller players. June is shaping up to be a real stress test for the investment-grade market. Jim joins us now for more. Jim, good morning. Good to see you.
Good morning. Always fun to be here.
Think about the paper that we've been moving. We have priced almost $1 trillion plus of investment-grade credit in almost record time so far this year. We're talking about mega IPOs on the horizon. Alphabet issuing numbers that are so difficult to internalize. An $85 billion capital raise. Is the demand out there to meet the supply?
I think it just shows the breadth of these global markets, and I think if I've come here in the last couple of years and I've used a term, it's always and, not or. It's the IG market and the private credit market and the equity market, and I think that theme just really continues. I mean, certainly what Alphabet executed this past week, in the scale, the scope, I suspect it won't be the first big mandatory convert that gets done. I'm sure many other companies in that sector are now looking at these securities, the ability for an investor to clip a nice coupon and have a debt exposure to these companies. I think that's a new market. But I think also, I would also ask you to take another step back.
Sure.
It's not only the scale of these. I mean, the last 15, 20 years, the annual equity issuance between IPOs and equity capital markets activity has been plus or minus $200 billion a year. That's the number the last 20 years. You take the year of 21 out with SPACs. You know, with OpenAI, Anthropic, and SpaceX, those three companies will eclipse that number. And I think there's commentary about what it means to take a company public today. I mean, the scale that you need to achieve to be relevant is much, much higher than it ever was before. That impacts a lot of smaller enterprises that are 5 to 10 billion. I also think, as much as we're talking in the last 4 to 6 weeks about the AI capex boom, which is phenomenal and unprecedented, I think we're forgetting that there's a lot of other industries. There's the defense industry, there's the utility industry, there's going to be a number of other industries. So I think it's broader, but these numbers are unprecedented, but it just shows you the scale of the marketplace.
You're getting to the heart of a potential issue, though. Is there space for everyone? How much crowding out will there be?
Well, I do think, we've been consistent, Torsten's been consistent about the impact on longer tenor rates for governments around the globe. I think that is a very real issue. I've been consistent here, coming here in January and February and April, that rates were not going down in the short term. I do think, we've always talked about 15, 20 years ago, the crowding out effect of government debt. I think you're seeing a potentially long-term crowding out of this massive, long-duration capex boom around the globe and the impact on government debt yields around the globe. So I think there is some dynamics to that. But as I said a few weeks ago, this year, the IG market will have net issuance higher than the Treasury market in the U.S. I mean, we got to put these numbers in perspective. The Mag 7 capex this year will be larger than the Defense Department spending. I mean, these are phenomenal numbers, and again, I just think it's broader. I think there is no doubt that there is health and breadth in the market, but I think some pullbacks once in a while and some good questions that get answered. These numbers are unprecedented, and these companies will have to make the return on capital to justify the capex.
How are you at Apollo trying to protect yourself against the increasing risk as these numbers get bigger and bigger and as expectations get higher?
Well, it all goes down to what your liability is. For us, because we have our third-party business as well as our regulated balance sheet, we're trying to find areas where we can fund the picks and shovels, the AI infrastructure, not just the AI capex to the equity. There's a difference. We've been rumored to be involved in a variety of chip financings, and those financings allow you to get in the middle of a variety of investment-grade companies. that want to fund the purchase of the chips for a variety of these companies, and you can do it in a structure that basically lets you amortize that risk over 3, 5, 7 years. So you either are or taking, if you take residual risk, you've taken your basis down to zero. So I think there's ways to do that. I'm not suggesting there's investors who are really good at buying the equity of these businesses.
Sure.
That's not what we do. But I think the ability to fund the infrastructure and really structure it such you're not taking residual risk, I think there's an ability to do that. Now, it comes at a lower rate, a higher quality counterparty, but that's all really structuring.
Well, let's talk about the rumors. So I'll explore them in ways that maybe don't put you on the spot too much. Let's just say there is a firm that's getting together with another firm, maybe talking about roughly $36 billion of debt financing to help maybe some company like Anthropic pay for some chips from, say, Google that Broadcom helps develop. Let's just throw that out there and just say maybe that's a story that might be on the rise and something that happens. Let's get into how you structure that. So there's a senior tranche, and then you've got a subordinated tranche as well. Can you just explain to us how you could use an IG balance sheet like Broadcom to support something like that? Just help people understand how you put this deal together.
I think that what I would want to highlight is in every financing, there's folks who want to take shorter duration risk, 1, 2, 3 years. There's folks that want to take longer duration risk, 3, 5, 7 years. There's either senior and then there's subordinated. So between maturity, between where you fit in that stack, you appeal to different buyers in the fixed income universe. The fixed income universe is like the equity universe. There's value buyers, there's growth buyers, there's growth at a reasonable price buyers in the equity market. In the fixed income market, there's folks who like short duration risk, 1 year, 2 year risk, i.e. sometimes banks. There's longer duration investors who will take more of a residual risk. And so you're just appealing to different risk tolerance, all in the investment grade community, but you're doing it just like in the equity market when Alphabet goes out and raises an equity deal and a mandatory convert, you get what they're really doing is they're appealing to an income buyer in the equity market that might not necessarily be able to buy that equity because of the low dividend yield. So again, you're just really appealing to the beauty of the U.S. is we have the most robust, deepest, broadest markets in the world. And so, you know, a company can do a mandatory convert 5, 10, 15, 20 billion in size, and there's plenty of equity income accounts that want to buy that. And you can also do a large equity offering and then a follow-on at-the-money offering over the next several months. And there's breadth and depth. Really nowhere else in the globe has that breadth and depth of the marketplace.
Breadth and depth is certainly here, which is the reason why you're seeing these incredible IPOs and debt issuance. The scale of money being raised, though, around the world really is mind-boggling. It's not just the U.S., it's Germany. It's also over in Asia, in a number of places, whether it's IPOs, whether it's corporate debt. Where is the money coming from, right? I mean, how do you compete for this money? Yeah. And how much higher do yields have to go, not just in the treasury world, but also on your end when you see coupons? Don't they have to climb considerably just to compete for your capital?
Well, relatively, even though rates have risen to where they were 3 to 4 years ago in the U.S., rates in the U.S. are approximately where they've been over the last 30 to 40 years. Like, we're in a more normal rate environment right now. And a theme that I've been talking about, when I've been here over the last couple of years, is we have an amazing, broad retirement challenge around the globe. There are many investors in the UK and Canada and Australia and the West that do not have the right retirement saving structure. At the same time, you've got this major global industrial CapEx. Today it's in AI, it'll be in other industries. And appropriately matching that duration of demand for assets with the duration of the companies needing to borrow money, it actually, you'd be surprised the depth and breadth of these markets. And so, you know, we're active now in the UK. In the UK, there's a concept called matching adjustment, whereas a regulated balance sheet, you need to actually have long duration. And so they funded student housing and a lot of other activities. So, you know, I do think there is a natural point in time right now where we do have these retirement pools around the globe that are looking to invest long-term. And actually, if you look at what the Treasury market has done, the Treasury's really been funding a lot of their financing in the short end the last 3 to 5 years, really 1 to 5 year financing. There's a shortage of long duration paper out in the globe right now. You've had other guests on this show talk about the lack of long duration assets against the breadth of long duration liabilities. So I do think that's a broader theme that we should talk about. The other thing I would talk about is, this came up last year. We were talking about a lot of the tariff activity. The benefit of the breadth of these capital markets is U.S. companies are the beneficiary of lower cost capital and access to capital. That's a flywheel of economic growth. And again, going back what Alphabet was able to do, their IPO was, $1.7 billion 26 years ago or 25 years ago, and it is phenomenal. But it's a hidden gem of the U.S. economy. And so when we talk about taxing foreign investors, we have to be very, very careful, because this cost of capital, this breadth of capital, I think it's no surprise that we've been leading the globe in this CapEx cycle, because these companies do have access.
It's the secret sauce, without a doubt.
No doubt.
Without a doubt. Are we at the creative stage of financing? From the outside looking in, people might hear some of these stories, the conversation we just had, and they'll think circular financing, off-balance sheet debt. Are we at the creative stage? The more dangerous stage, I would suggest.
I think that you always have to be aware of who's taking equity risk at a fixed rate of return. I think, my 41 years tell me I want to be investing with the leading companies. When you think about the world today in terms of winner take most, concentration in the top 3 or 4 companies, I think it would lead you to be wanting to invest alongside these companies, and to do so in a manner where you are well structured with downside protection. But I think that let me be very clear. There will be companies that enter this CapEx cycle, some on the investment grade side, some on the non-investment grade side, that their business models will prove not to be as resilient over 5-10 years. That's the destructive aspect of capitalism. And I think you're getting paid for it still with a lot of structure. But I do think the overall trend is in the right direction.
So we're not at the very precipice of hitting capital constraints right now?
I don't think so. I think, I do think it's interesting. When you think about, why Alphabet did this, I mean, there is a depth and breadth in the IG market. We talked about it earlier, how much they've done. What's interesting, though, is I talk about a lot is, in the equity market, if you're an investor, you don't mind, or you can absorb the idea of getting very concentrated in a name, because you can move in and out of it very quickly, and you're getting paid because of the convexity of that equity. In the fixed income market, as a IG buyer, bonds don't go to 200. They can go down dramatically. And being a little facetious there, but my point is, you need to have breadth of distribution and diversification in the fixed income markets. And so it's not as if Alphabet or Microsoft or Broadcom doesn't have exposure. They're just trying to find a broader universe of other buyers that will be able to access and provide funding.
Jim, you're going to stick with us. Jim Zalta there of Apollo Global Management. Equity futures this morning down by about 0.5% on the S&P. With an update on stories worldwide with your Bloomberg Brief, Isabel Lee has more. Hey, Isabel.
Hi, John. Bank of Japan officials are considering a 0.25 percentage point increase to their interest rates. Sources telling us here at Bloomberg, the central bank plans to leave the door open to another hike later this year. The BOJ is set to meet on June 16. Partners Group is ready to curb investor redemptions in more of its private equity funds. This comes after redemption requests from its private wealth clients surged to more than 9%. The announcement prompted a sharp sell-off in the Swiss firm stock. And more than 24 hours after the polls closed, they're still counting votes in the California governor's race. With 58% of precincts reporting, Republican Steve Hilton is leading, followed by Democrat Javier Becerra. Fellow Democrat Tom Steyer is holding on in third. That's your Bloomberg Brief. John?
Isabel, thank you. More from Isabel later this hour. Up next on the program, uncertainty in Iran.
In that part of the world, ceasefires when you're shooting in a more moderate manner. The negotiation itself has gone very well, actually. It might not happen, who knows? But if it happens, it could happen like over the weekend.
Up next, we'll catch up with Jim Zalta of Apollo Global Management on the threats abroad from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Equity futures on the S&P pulling back just a touch. We're down by 0.4% on the S&P. On the Nasdaq, we're down by 1.2%. Just a little bit softer in the equity market. Under surveillance this morning, uncertainty in Iran.
Is the ceasefire with Iran still on?
Well, you know, there's a reason for everything. And we hit them pretty hard. In that part of the world, ceasefires when you're shooting in a more moderate manner. The negotiation itself has gone very well, actually. It might not happen, you know, who knows? But if it happens, it could happen like over the weekend.
So here's the latest this morning. The president maintaining a deal could be near as Tehran says there has been no tangible progress, and Hezbollah and Israel continue to exchange strikes.
They continue to exchange strikes. And a question we have been asking on this program is at what point would this administration say, actually, drones coming at our allies, ballistic missiles coming at our allies and our air bases means that the ceasefire is over. I think the most important story is the Wall Street Journal overnight saying Trump has told aides privately that when he would consider ending the ceasefire is if Iran targets American troops directly. So if American troops' lives are injured in a way or that they're killed, that is when maybe he would decide to end the ceasefire. So basically, I think this tells Iran they can continue with some of these clashes and skirmishes until they get a deal. The president says we're going to get a deal soon, but the point you've been making continuously is how many times have we been here since the end of February?
For markets, it hasn't really mattered. Who remembers this conversation from a few months back? Take a listen to this.
Sometimes there's days where you should just go out and just take a walk around for 30 minutes. You just had a quarter with record M&A, literally record M&A in the United States and globally. We've really lost the plot on credit. We're talking about a little bit of skirmish on the sidelines here. I suspect if I'm sitting here in 3 to 6 months, we'll be talking about a much, much different backdrop.
Here we are a few months later. Jim Zauter back with us. Jim, congratulations, because you were dead on. Absolutely right. A few months later, the market stopped having this conversation about this issue.
Well, it was interesting to see with a strong earnings season in the last 6 weeks, you know, and they were strong across the board. The big focus was CapEx. You know, who has the bigger CapEx budget? And listen, that's a marketplace where there's more greed driving the market than fear, as David Solomon quoted yesterday. So that's certainly the backdrop. I mean, certainly I've been consistent having a view that for the next year to 2 years, we think that inflation is a bit more of a concern. I don't think it's going to affect the fundamentals of the market. I am candidly surprised, and I've been consistent, that if we were still talking about Iran at this point with the straits being closed and the impact on oil prices, that we would see some second and third derivative volatility that. So I'm a bit surprised, but you know, momentum and emotions can work both ways and they can change pretty quickly. But I do believe this bigger trend is upon us, and I think this will be the conversation we have for the next couple of years.
Take a walk. That was the advice at the time, and it was good advice too, based on how things have turned out. The one thing that really surprised us is how much earnings expectations have climbed through this war. That was the surprise, and clearly to the market as well, Bramo, given the price action we've seen.
Yeah, and when they don't outperform in a significant way, then they're penalized. At what cost? And ultimately, this is one thing I'm wondering whether this is keeping either Jim up or others.
the labor market? And at what point do we start to see the ramifications of all of these cuts potentially to pay for AI? And we're seeing that in some of the Christmas Challenger reports earlier this morning.
Jim, what stage are we at? The return on investment stage? Is that still further down the line? Are we at this point where you have to cut operational expenditures to support a lot of this funding, a lot of this debt, a lot of this money?
I think there's some marginal optimization around hiring right now. I think the secular trends that are the big question mark in front of a lot of folks, if we're sitting here in June of 28, we will have a much better insight in terms of really what's the secular impact of this CapEx cycle and AI on broad employment numbers. I think any changes you see over the next year or two where a percent, a quarter of a percent up or down, I don't think they're long-term secular trends. And I think we'll be talking about how does the extent of this CapEx cycle, the extent of the AI boom, the extent of the return on invested capital, that's the conversation I think we'll be having. And I think that then at that point in time, once you have a sense of the employment numbers or the employment impact, once you have a sense of the returns, then that's going to feed into, is the inflation going to be curtailed and turning into a deflationary environment? But I think that's 18 to 24 months out. I think anybody that tells you they really have it nailed right now, I would suspect that they really have not been doing this for a long time. Because I think there's a healthy degree of humility you have to have by making those huge macro views.
Does the labor market keep you up at night, this transformation?
I think it does. I think any leader of a business today is thinking about how they want to evolve their business. Last week, I was at a leadership meeting of a bunch of CEOs down in Texas. They were, these were not all tech companies. And the big questions were, how do I fund my aspirations in my industry? That was a conversation that they would not have invited the head of Apollo to be there 24 months ago. Okay, we were front and center in that conversation. And they're also thinking about how they deploy their resources, of which human capital is the biggest element. And they want to execute their plan today, but they also want to make sure they're investing in the future. And I don't think anybody's having a massive, you're seeing sub-headlines of companies that will make 10 or 20%, hiring cuts across the board.
Yeah.
I don't think that's the mainstream.
Jim, it's always good to see you, buddy.
Always good.
Thank you. Jim's out there of Apollo Global Management. A good lesson for us all. I took a walk yesterday.
Good.
Beautiful day in New York.
It was beautiful. It was beautiful.
Do you feel better?
Listen to a podcast with Derek Khosrowshahi.
Oh, nice.
Very good. I'll tell you more about it in the commercial break.
And then you took an
which is
Uber
not helpful for the audience, but anyway. All right, coming up, Betsy Stevenson of the University of Michigan joins us next on the Jobs Market.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The scale of the numbers involved is so difficult to get your head around all of this and to internalize it. A $75 billion IPO. More still to come later this year. We're talking about SpaceX first. An $85 billion equity capital raise. I've mentioned the number of issuance that we've seen, the supply. On the investment grade side, stateside, topping $1 trillion already so far this year. The scale of it is just off the charts, Lisa.
Yeah, it's the re-leveraging of the industrial world. It's the re-leveraging of the corporate sector. It's the re-leveraging of a world trying to build out for a new future. And the tolerance for it has been absolutely incredible. I mean, we've all been asking, when are the capital constraints coming? When do people start pushing back? When do some of the prices start to get adjusted? Right now, the answer is not yet. Let's keep going.
You don't see a lot of pushback. A couple of cracks this morning. We can talk about that. A pullback on the S&P 500. We're down by 0.4. Pull back on the NASDAQ, down by 1.2. Couple of names in the mix we need to talk about. Broadcom being one, CrowdStrike being another. Let's get into some of that with your morning movers. Your single names, Yahira has more. Hey, Yahira.
Hi, John. The losses are mounting for Broadcom. Shares now down nearly 15% in the pre-market as investors focus in on an AI chip revenue outlook that failed to clear an increasingly high bar. That's because this name has added some $270 billion in market value in just the past 5 days, leaving little room for error. And that weakness is dragging down the entire chip trade. So we are seeing names like Intel, SanDisk, and ARM all falling in the pre-market. These are some of the AI stocks that helped drive the 9-day winning streak on the S&P that snapped yesterday, and just goes to show you how high the bar has become after this earnings season delivered massive beats from the Mag 7, plus companies like Dell and HPE. And we end on PVH. This is the company, the owner of Calvin Klein and Tommy Hilfiger. Shares are plunging 22% after the company cut its sales outlook, even after it said it would get $100 million in tariff refunds this year. That's because the issue is that PVH is seeing weakening demand across the EMEA region due to the war in the Middle East. John?
Yahira, thank you. What do you make of that excuse?
I think people aren't buying it, because if that were the case, those shares wouldn't be down as much.
Exactly.
That struggles to...
I just don't think people are really buying Calvin
That's why I
Klein
gave so
anymore.
much credit to the Gap CEO to come out and just say, we missed it.
We missed the mark.
We didn't get it right.
Honest.
I'm not going to blame the war.
You're not going to say
we missed it.
The sheikhs aren't buying underpants.
Right? It just doesn't...
It doesn't add up.
You know, I hate those excuses, the weather, foreign exchange.
So does
Obviously,
the
it matters to some extent, but like this...
I'm not trying
You're
to
either in the right spot right now in retail or you're not. And it gives me greater confidence when I hear a CEO like the Gap CEO come out and say we weren't at the right spot at the right time. We need to pivot. We need to make a change.
It seems like the shares and the shareholders seem to be agreeing with you this morning.
Equity futures on the S&P 500 this morning down by 0.4%. On our radar this morning, the US and Iran struggling to finalize the details of a peace deal. Israel and Lebanon reportedly agreeing to hold strikes addressing a key sticking point for Tehran.
We actually spoke with Hezbollah for the first time ever. We didn't know they spoke. And they agreed yesterday they're not going to shoot. Israel's not going to shoot. We're just going to see.
Lebanon's president saying a ceasefire between the two could begin within 24 hours. Elsewhere, SpaceX looking to raise $75 billion in its IPO. That would make it the largest of all time and clear a path for more mega listings, including Anthropic, which lined up Morgan Stanley and Goldman to lead its IPO, which could come as soon as October. And finally, the Swiss asset manager Partners Group preparing to cap investor withdrawals across its $9.7 billion evergreen funds. The move coming after a surge in redemption requests from private wealth clients triggered its stock to plunge. That stock has had a difficult time of it.
Yeah, and this kind of feeds on what people were worried about a couple of months ago, although just as we were talking about with Jim Zelter, it seems like those fears are getting kind of backed out in terms of some sort of broad market ramification. I do think one point that Jim was talking about was really important, which is what he said was the dearth of long-duration bonds or long-duration assets and this glut of retirement funds that needs to be deployed and actually have matching kinds of assets and liabilities. And I wonder if you start to see a pushback on some of the retail funds that are directed that don't have that mismatch, that have a mismatch in terms of duration. If people want to redeem their assets more quickly, do you start to see an increasingly shrinking pool of potential funds for them to go
We've
to?
seen that in these so-called BDCs, which is like this big compared to everything else that's happening right now. And everything else that is happening right now is getting funded and financed pretty easily based on the headlines that we've seen.
Yeah, the issue, and we've heard this from a lot of private fund managers as well, saying that actually because of the retail involvement, there are some assets at a discount now because of some of the stress that you saw earlier this year. There is a bigger question here. Do these things belong in retail funds that can be redeemed on a daily basis?
Sure.
And if there is a retail fund, should it have longer-term lockups like all the other funds just to prevent forced selling and then the people who remain in the fund being left with some of the bad stuff at the end?
Some of the financials had a difficult 24 hours, and that story was part of that. Elsewhere, investors bracing for the May payrolls report due out tomorrow. The Dallas Fed President, Laurie Logan, signaling optimism that AI will boost labor demand.
There are a number of data centers that are either in the planning stage or in the construction stage, and that's creating significant demand for labor. We're seeing wage growth in those particular areas.
Joining us now to discuss, Betsy Stevenson of the Ford School of Public Policy at Michigan University. Betsy, welcome back to the program. It's always good to hear from you. There's a great debate on the future of this labor market, given the technological revolution we're working through right now. Betsy, how are your thoughts evolving on that matter?
Well, I mean, I think what we just heard her say is we're going to see a lot of construction workers as we build data centers, but that's not a solution to the challenges for white-collar workers as AI starts to increase efficiency. I mean, I think what we're seeing right now is a lot of companies that are still doing really well and able to grow. And that's why we're not seeing a lot of layoffs, but we're also not seeing a lot of hiring. And so what they're doing is they're trying to take these gains in terms of increased productivity so that they can increase their output, but they can do it without hiring workers. And that, I think, I think that's the best way for technology to work through the labor market, is to do it in a period of growth so that people don't lose jobs, but the people who have jobs become more productive. The challenge for the U.S. right now is that it is such a low hire, low fire environment that the people who do need to enter the labor market, either they lose a job or they've been out of the labor market and need to re-enter, they're the ones struggling. And that's why we're seeing the rate of long-term unemployed increasing.
Betsy, it's really hard for us to judge at the moment just how tight this labor market actually is. As you reflect on that, we've had this negative supply shock to the labor market. We haven't had the entrants come into the supply pool, so to speak, because of these tighter regulations around immigration and the enforcement of the southern border. Betsy, with that in mind, how do you gauge how loose or tight this labor market actually is right now?
You know, I think it's actually a labor market where we want to look at the particular skills that workers have to think about whether it's loose or tight is going to depend on exactly the market that you're in and the skills that you have. So I think of it as a time of great reshuffling. You might find that you're in actually quite weak labor market given your skills and where you're at. And that might mean that you need to skill up with something different or relocate. So that's part of why I think we see it as both. Wait, it's a weak labor market. No, it's a tight labor market. I think it's because it's both, and it really depends on exactly where you are and what set of skills you have.
Betsy, where are we in what you referred to before as the white-collar recession?
Well, I don't think we're in a white-collar recession, but I do think that we're not really prepared for a lot of white-collar workers to need to make some transitions. Now, there are some good things. One is that white-collar workers have developed a lot of skills around how to learn and develop new skills. So that makes them actually really well positioned to make changes as their company says, hey, I don't need you to do this anymore, but we might need you to do this other set of tasks. Can you learn how to do them? Can you skill up? And I think historically we have seen that many workers are able to do this. And, you know, one of the other things with AI is that it is disproportionately going to impact women's jobs held by women. And women have historically been a bit more flexible around, whoa, I need to change what I'm doing because my old job isn't there anymore. So I have a lot of optimism that we're going to have a lot of ongoing demand for human workers. And we have workers who are able to have the flexibility needed to make changes. But I think we should understand that any period where people are having to make changes, where there's uncertainty, is going to be a period of weaker consumer confidence and anxiety around for the public.
So if you push this through the Fed's response mechanism, a lot of people are looking at the labor market report tomorrow as a guide to whether the labor market can be some sort of indication of weakness that could leave the Fed on hold indefinitely or even remaining with an easing bias. Do you think it's an appropriate stance for the Fed to be a bit more dovish with this type of backdrop? Or do you think that they should prioritize inflation because of the uncertainties around the labor backdrop?
Look, inflation isn't good for workers either. I think, Jerome Powell said that few press conferences ago, and it really stuck with me because I think it's important to remember that workers don't want unemployment, but they also don't want inflation. And so then what the Fed has to do is look at what can they be more certain about. Right now, unfortunately, they can be more certain about inflationary pressure than they can about a weak economy, right? We still see a GDP now forecast for Q2 of 3%, where we saw job openings actually rise in April. I don't think we should overinterpret those as the economy is really strong, but I do think that they make it hard for the Fed to justify cutting rates at this moment.
But Betsy, this inflationary pressure is coming from a conflict, and it's energy driven. Isn't the Fed historically, haven't they been taught to look through this?
I love this. I feel like I was like in my econ macro class and a student was like, hey, we're supposed to look through this. You're 100% right. But there's one problem. We had high inflation in 2021, and we have a public that is on tender hooks, worried about inflation. What that means is that inflation expectations may not be as well anchored as we need them to be in order to look through a brief period of inflation. So what the Fed has to be looking at is, you're absolutely right, not what is the transitory inflation that's going to pass through very quickly, but what's the potential for that transitory inflation to become sticky, either because it takes the conflict a while to resolve or because inflation expectations are not well anchored.
Betsy, well communicated. Thank you. Betsy Stevenson there of the Ford School at the University of Michigan. That last point I think is so important. The way a policymaker looks at price pressure and the way the consumer experiences it is so different. The policymaker might look at month over month the base effects, and they'll say things are transitory. Because of the base effects, you'll work your way out of this in the next 12 months. It won't endure. The consumers experience the accumulation of price pressure over a period of time, which is why they feel so downbeat about this economy right now. It's not about where we are at this given point. It's how we got here over the last 5-6 years.
And the fact that people have gotten accustomed to prices moving around quite a bit, because they have been moving around quite a bit, gives companies a bit more leeway to kick up prices a little bit higher. Remember what Mohamed El-Arian said, which is in board meetings, they took the sticker off of some of the products they were selling that had $1.99 or $2.99 that had the price on it, suggested retail price, so that there could be more flexibility in real time.
You could have 1% inflation year over year. It would not make a difference to the consumer because price pressure has built so much over the last decade.
Yeah.
It's not going to move the dial. It really isn't.
If the Egg McMuffin now costs $8 rather than $4 or $3, you know, Houston, we've got a problem. Allowance is going up.
McDonald's is not cheap in New York City, is it?
You know,
it's
all
not
the
cheap food.
fast.
It really isn't.
But you know, then if you have no, it doesn't. But I think that you know the role that the offspring buys in the morning, the inflation gauge has gone up, as has the allowance request.
Do what we used to do: get a bowl of cereal. Right, you know, the expectations have risen so much in the Brammer household, right?
I bet it's one of those. I bet it's one of those like bacon, egg, cheese, add the avocado. That's another $1.50
from the food cart. But yeah, that's right. I'll just get Lucky Charms.
And a slice of toast.
Yeah, I can't wait to hear what you have to say about that.
Talk about that later. Let's give you an update on stories elsewhere this morning. Cattle feed for humans. You know that.
We'll wait till later. Yeah. Actually, right now.
Your Bloomberg Brief with Isabel Lee. Hey, Isabel.
Hi, John. JP Morgan's Jamie Dimon pitching the SpaceX IPO to thousands of the bank's high net worth clients today. According to invitation seen by Bloomberg, Dimon will host a, quote, live interactive discussion with SpaceX executives. The company is looking to sell over 555 million shares at $135 a piece. Netflix is using AI to personalize content for its customers. Speaking at the Bloomberg Tech Conference, the streaming giant said it plans to integrate generative AI to its platform. It hopes to gauge the viewer's mood and tailor its recommendations. And in sports, the New York Knicks are 3 wins away from their first title in 53 years. The Knicks beat the San Antonio Spurs in the Game 1 of the NBA Finals, 105-95. It was New York's 12th consecutive playoff win. Game 2 tips off tomorrow night in Texas. That's your Bloomberg Brief. John?
Very cool, thank you. Isabel, thank you very much. Partial to some muesli sometimes.
Oh my gosh.
But the broader array of cereals doesn't quite.
Okay, all I can say is, Jonathan Farrow, he should eat cereal. Jonathan Farrow, that's cattle feed for humans. Jonathan Farrow, maybe muesli?
Muesli might do it. You know, just thinking, you know.
Have a good time.
I know the younger one hasn't left for school yet, so I'm just, you know, trying to help him out.
Encourage that for muesli. I'm sure he's saying thank you very much for the muesli recommendation.
Save mom some money.
Oh, yeah.
Up next on the program, still waiting on a deal.
The Hormuz Strait will open immediately upon signing. Now, that's subject to a couple of areas being cleaned out also of mines, which we don't think there are any. So it'll happen very quickly.
We'll catch up with the former White House senior advisor, Amos Hochstein, in just a moment.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Stocks pulling back here. We're down by 0.5 on the S&P. You'll notice Broadcom in the pre-market new session lows down by more than 15%. The Nasdaq is down by 1.3%. Let's talk about geopolitics. Under surveillance this morning, still waiting on a deal.
The Hormuz Strait will open immediately upon signing. Now, that's subject to a couple of areas being cleaned out also of mines, which we don't think there are any. So it'll happen very quickly, and we'll take the southern route anyway. But immediately upon signing, we open up the Hormuz Strait.
So here's the latest this morning. The president reiterating an agreement with Tehran is imminent as the House voted in favor of a war powers resolution to halt further action against Iran. The former White House senior advisor Amos Hochstein writing in the Financial Times, there is one solution to all of this. It's not military, it's diplomatic, and the clock is running. Amos joins us now for more. Amos, good morning.
Good morning.
How do you think this one ends up?
Well, I was trying to figure out when you showed the video just now of him saying the straits will open immediately upon the deal, and I was looking for a date because I thought that that's what he said 2 weeks ago or 5 weeks ago or yesterday.
April 17th, the strait was reopening.
So look, we're in this. If I were anyone watching this, I would say ignore all videos and all news because it's all BS. There's no real talks towards. There are real talks, but you won't know that you're there until you're there. And so this is just market management and so on. And I actually think the market should just ignore it. Ignore the war. We've had a ceasefire. It's been in place for weeks. The straits have not opened, despite the fact that we have a ceasefire. We have flare-ups every once in a while. I mean, think about it. Iran fired at the Kuwait airport.
The pictures are shocking.
Our ally, where we have military presence in Kuwait near the airport. We have the U.S. military presence. They shot at Bahrain. And we're saying, no, the ceasefire is still intact because ceasefire definition is that we shoot at lower volumes, I think he said.
I thought that was fair, Amos, so I don't know about you.
I've negotiated a number of ceasefires in my life. We've never accepted, but you can still shoot. That's sort of the tenet of seize the fire. But, so I think it's all fine because we have about 4 weeks or so still of buffers for the economy. Then they go away. So this is sort of, it's very binary.
I think the president's point on the ceasefire is that given the region you're in and the neighborhood, the shooting in a more moderate manner is what he's meant. It basically suffices for how they feel right now. But I'm totally with you. It's not clear to me what would it take for this administration to say Iran has crossed our red line in terms of a ceasefire. But when it comes to this summer, the president to the New York Post said potentially the strait won't open, the blockade won't lift until September.
Yeah, I don't think that's real because we're acting as though the crisis is not affecting the energy market because we have enough, which is true. We actually do. The market's working the way it's supposed to. After the 1970s crisis, we said we need a lot of inventories. So we created the SPR in the United States and Japan. We created commercial stocks. But those are all drawing at historically high levels, and they're not renewable, okay? They are finite. When they run out, they don't exist anymore. And so we know, we have a roadmap of when that will happen. Some of that will happen at the end of June, early July, and the SPR probably mid-July. That's the timeline that the administration has to reach a deal. After that, they can't. After that, the leverage is gone.
You worked for Biden, and you were really the energy czar for the Biden administration, and we had the highest gas prices this country has ever seen, north of $5 a gallon. Will Trump now own that, you think, this summer? Will he surpass that?
I mean, look at his polling numbers. He owns it now, not this summer. It's $5.03, June 14th, was the highest price in 2022.
Well, we're not there yet.
We're not, but we reached $4.50.
They deployed these strategic midterm reserves, do you remember?
Yes.
Do you remember?
And I expect that to happen
I'm
with
sorry,
this
are
administration.
we now in June and it's the midterm? Here's the difference. When we deployed it, it brought down the prices to below $4 by August. So we already knew where the solution was because we didn't have a disruption. Now, if you continue this for a few more weeks, what do you do when the SPR is not available to you anymore?
What are they going to do?
Well, I think at some point they'll probably look at restricting exports. They'll look at all the things that we
But that
talked
won't
about.
actually work.
It will work on to some degree if they do, not banning export, restricting. But again, this is if they don't reach a deal. I think they will reach the deal before the timeline. I said that the president says September, it won't happen because he'll have to reach a deal before because that's when you're near the energy cliff. And it is a cliff, guys. It's not this is not we think. We know if you reach the tank bottoms and you can't take out. So we're not living on an increased production. The United States has not increased oil production at all in this war. Because every day you tell them, oh guys, put $1 billion in the ground, but the war is about to end in the next 24 hours and your $1 billion is wasted.
We talked about this with Chevron. They are increasing production as much as they can currently, and they are exporting a lot of it to European allies. Do you think there'll become a time where they'll stop exporting to international allies?
Why would they? You're getting a higher price. Remember, Brent price that you see on your screens here on Bloomberg are not real. Those are fake prices. That's computer screen prices. You can't buy a barrel for that price. Brent is not selling.
Well, how much can you buy a barrel for now?
Probably 120. So in the physical market, to get those barrels, it's much more expensive. So if Chevron sees I can sell a barrel for more, why would I sell it domestically? That's why they're exporting. But also increasing as much as they can. They're right, as much as they can, without increasing CapEx. That is going to be risked by the war ending. So if you tell producers the war is about to end, why would they increase production? We have only increased production 300,000 barrels in the last year. So we haven't actually seen any increased production. So what are we living on? We're living on inventories, on a buffer. And the buffer gets smaller. And the market's right to say, okay, but I don't need it to be a crisis right now because I have the buffer.
Yeah. And then you get this non-linear move and things change. And I imagine the negotiations would change pretty quickly too, Bramo.
Yeah, which is the reason why Amos says it's not realistic to get to Labor Day.
Do you not like that, the Strategic Midterm Reserve? It was a good name for it at the time. No, it didn't work for you.
But the same people who called it that at the time, I don't know, we're again in a midterm year. So I'm a bit confused by the 2022, May, June. Now we're in May,
Politics
June 2026.
You know?
It's not fair, I'm just confused.
One day Biden was coherent and now people say he wasn't. You know, people figure things out. Alex, it's good to see you.
Yeah.
Out of Togstein. From New York, this is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving someday.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
It's all about AI.
We're still seeing a lot of strength and a lot of momentum around the AI trade.
Since March, we haven't seen anything that resembles anything sort of a pullback.
Demand is showing no signs of slowing down.
Records will be broke over the coming weeks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. In your price action, your scores look like this. Equity futures pulling back by 1/3% on the NASDAQ, down by more than 1 percentage point. One single name in focus, Broadcom, in the pre-market down negative by 15%. Following earnings.
Yeah, people point to the fact that revenues and their projected sales didn't come in as high as some of the highest projections on the street. Still, they did improve their estimate for the full year. This just highlights how much we've baked into some of these names. Outperformance needs to be met by incredible beats in the earnings, and if they're not, the punishment comes.
Look at this from Jim Reed over at Deutsche Bank. 2-month change in the S&P 500 since World War II. We put out a chart. Contact Jim, get hold of it. Fantastic picture. We've only seen gains like this rapid, coming out of recession or before the big market crash of 1987. Moves this big, like we've seen off the lows of March, are pretty rare to almost unheard of over the last few decades.
We were talking yesterday about how if you made it day 10 in terms of the daily winning streak, it would be the longest streak in the S&P 500 going back to 1995 or 1996, that kind of era. That's the reason why it is rare, is because it tends not to be continued, considering the fact that people start to get worried about elevated valuations. This is different in the sense that the earnings have been there, and that's the reason why the one thing that would make Max Kettner over at HSBC bearish is if you do see earnings start to roll over or the supply of chips start to exceed demand once more.
It was also CrowdStrike yesterday. CEO sounding so optimistic. The worlds of cybersecurity and frontier AI collided. This was the mythos moment, he said in the press release. AI security infrastructure, critical to success of AI adoption. You were talking about the need for this type of technology everywhere, and yet, disappointment.
So stocks are a bit softer this morning off the back of that. We're down by 0.4% on the S&P 500. This hour, we shift towards the economic data at 8:30 Eastern Time. We get US jobless claims, and it follows a string of better than expected economic data through the week so far. Manufacturing, the ISM at the headline level, good. Job openings exceeding all estimates on Wall Street. The ADP in line north of 100K just yesterday. And claims have been a snooze for all the right reasons now for more than a year.
Yeah, this has been the low hire, low fire dynamic. That said, all of those metrics that you just mentioned, including ISM services that came out yesterday, there's some hair on them. And this is what people keep talking about. You take a look at the employment component of all of these metrics, not great. When you take a look at the JOLTS number, it looks fantastic on the headline number. It looks fantastic in the ratio of unemployed Americans. And then when you take a look at the number of people who feel free enough to quit their jobs, typically a metric people look at, that actually went down or came in beneath expectations. So again, it goes to the confusion of what actually is happening under the hood.
We can do our part to foster confidence, to get people to feel good about the labour market so that they do think about switching jobs for...
And asking.
That's the data point I always look for. Nita Richardson joins us later. Always ask about job switches and the pay bump that you get from switching jobs. Decent sign of just how hot this labour market might be, or not.
Yeah, and you have seen that tick up in certain sectors. You also have seen people who stay get some wage growth. So, you know, there are lots of different
things.
things.
Some good news, Bramo.
Yeah, this is great.
Get a pickup in wages.
And you always say that economists are the worst, because who's rooting for people who do not get...
Economists are the only people on the planet who worry about hotter wages.
Well,
right?
Yeah, well, yes. But they're doing it because of what Betsy Stevenson said, which is that workers have to pay the prices on the other side too. And if the prices are going up faster than their wages, that becomes a problem.
Prices paid in the ISM yesterday, the highest since August 22.
There you go.
Prices paid pretty hot on both the manufacturing side and the service side as well.
Yeah, and understandably, if people can keep up with those prices, that's a good thing. You want people to be able to afford their lives. But if they can keep up with the prices, those prices can keep climbing. And that is the concern by economists. Not to defend them, but that's exactly what people...
Wage price spirals are scary things.
Exactly. Frightening.
To nobody else.
Exactly.
But economists. Coming up, Tracy McMillan of Wells Fargo, with stocks pulling back from all-time highs. Andrew Dickasberry of BNP Paribas as CrowdStrike misses the high bar for software. Nita Richardson of ADP joins us a little bit later. I'm right there with you, of course I am.
No, you're not.
Come on, of course I am. We begin this hour with stocks edging lower after Broadcom results call off the record-breaking run for chip makers. Tracy McMillan of Wells Fargo with a year-end target on the S&P of 7,500, expecting no Fed rate moves, a better economy, and increased M&A activity through to year-end. Tracy joins us now for more. Tracy, a wrinkle this morning, and good to see you. And that wrinkle comes from Broadcom. What's the lesson from the price action this morning?
Good morning, John. So the lesson is that after such amazing run like we've seen in the AI names, there is still some room for disappointment. So we have overweighted information technology, but we're telling investors not to chase those names at these prices right now, and that there are probably better opportunities in some other sectors like industrials or utilities or even financials.
Well, you've liked financials. That's been a high conviction call, and Tracy, it hasn't been working. Why hasn't it been working, and why would that change?
Yeah, so it hasn't been working because of the steepening yield, the flattening yield curve and the private credit issues. And we think that going forward, we are going to start to see that yield curve steepen some. Right now, there are a couple of rate hikes priced into the markets. We think those are going to come out by the end of the year. And we also see some additional potential upside in rates on the long end. M&A activity, you mentioned that as well. IPO activity, both really good for investment banking. So all of those things we think support financials.
We were talking about concerns around private credit. We're getting another headline this morning. The Blackstone Private Credit Fund plans to cap investor redemptions at 5%. This comes amid a slew of different information that we've been hearing, including from the Swiss Partners Capital we were talking about earlier this morning. Does this give you pause, or do you think that this is noise, given a duration mismatch and not necessarily a broader signal about the market?
Yeah, so we think that that is not necessarily a broader signal about the market. We're watching spreads in the public markets that are at near record tights. And so we don't see broad concern in the fixed income markets. That said, there are some pockets in the private credit market that obviously investors are starting to worry about. And so we would tell investors that it's important important to keep that diversification within a fixed income portfolio, with some potentially in private credit if that fits their risk profile. But in the public markets, we are just not seeing that strain.
There's also an issue of consumer spending with their wages not really keeping pace. We just saw credit card balances hit a record $1.28 trillion on the margins, delinquencies picking up. Do you see signs the consumer is getting tired? Does that give you pause?
Yeah, so definitely there is a component, a segment of the consumer that is starting to get stretched, get tired, if you will. We've talked about, the higher prices that they are experiencing, and so they continue to spend, but some of that spending is now coming from savings, some of it's going onto credit cards. And I think the positive here is that it's not all consumers, and we are continuing to see, some firming in the labor market. And as long as consumers have jobs, they can continue to spend. And really all we're expecting from the consumption part of GDP this year is maybe a modest improvement, because most of our GDP expectation is coming from CapEx.
Tracy, what do you think about the energy space right now? I noticed in your note you said you want your investors' portfolios to trim energy equities and commodities, but we just heard from Amos Hochstein, who basically said we're living right now globally on a buffer. And when that dries up, we could see tremendous upside when it comes to energy prices.
Yeah, so we are telling our investors that it is a source of funds for some other areas of the market where we see better valuation. So we're not necessarily disputing the fact that, almost 1 billion barrels of oil have been lost through this conflict, and that there are going to be some pockets of the global economy that are going to start to experience severe shortages if we don't get oil flowing again. That said, though, we do think that when oil spikes, that it is an opportunity for investors to reposition, because we don't think this is a long-term supply issue. It's a supply shock.
Is this basically investors needing some capital to allocate elsewhere, maybe with some upcoming IPOs? Where else do you see investors moving money around to make sure that they are getting in on that AI race?
Yeah, so we definitely think we see that happening. We have seen the Mag 7 starting to underperform. We've seen crypto underperforming. And so we think it's some of those higher beta areas of the market where investors are pulling funds, raising cash, so they will have that cash available as these big IPOs come to market through the summer.
Tracy McMillan of Wells Fargo. Tracy, thank you. Appreciate it. Still constructive on this equity market. Financials not working ready at all. There's lots of reasons for the bank's trade to work. Hasn't really picked up. It's been a stop-start story through the year so far. And this story for the broader financials, from the private credit players, that story's not getting better.
No.
For the names, at least, for the individual stocks, they've struggled to get off the mat.
Yeah, and investors still have a desire to withdraw more than potentially the funds can handle without affecting their other shareholders. This particular Blackstone private credit fund saying that repurchase requests exceeded about 10%, or were about 10% of shares outstanding, and they will only fulfill about 5% of that. And we've seen this practice pretty much across the private credit retail-focused sector.
Just a cloud hanging over the stocks through the year so far. Equity futures on the S&P pulling back by just 0.4%, with an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Dallas Fed President Lori Logan says the central bank may need to raise interest rates later this year to bring inflation back to its 2% target. Logan joins a symphony of Fed officials highlighting inflationary concerns and raising the prospect of rate hikes. Broadcom shares falling in pre-market trading. The company delivered a disappointing forecast for AI chip revenue. Broadcom says it's making progress with AI customers, including Alphabet, Anthropic, and Meta. And some members of the Glazer family are debating whether to sell their stake in English football club Manchester United. After more than 20 years of ownership, some family members are trying to convince others it's time to sell. That's your Bloomberg brief. John?
Isabel, appreciate it. Thanks for the update. Up next on the programme, the Morning Calls Plus, Andrew de Gasperi of BNP Paribas as CrowdStrike fails to meet sky-high expectations. That name down in the pre-market by 10%.
and news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The demand environment looks extremely good still. Valuations actually still look pretty good, especially on Broadcom's side. They remain very entrenched in the key players out there within the AI ecosystem. And as a result, I think this is a place you still want to be, acknowledging, though, that there are risks that are heightening.
That was Angelo Zeno of CFRA. Equity futures this morning look like this. On the S&P 500, down by about 0.4%. On the S&P, on the NASDAQ, we're down by 1.2%. Broadcom weighing on this equity market this morning. More on that a little bit later. In the bond market, Treasury yields shaping up as follows. 2s, 10s, and 30s. Yields down across the curve. We're down 4 basis points at the front end of the curve. Heading into jobless claims, 15 minutes away.
And jobless claims have been basically a straight line. It sort of looks like what you would see on Scrubs if someone did pass. It seems like we haven't gotten a real signal here. Do we start to see anything in terms of either tightening or potentially loosening ahead of tomorrow's key employment report?
Looking forward to that. Payroll's just around the corner. Looking for something around 80 to 90K. 80 to 90K, we've said that a few times already this morning. Break-even rate for this economy. Some debate about the estimate around that, but closer to 0 than 100. So anything north of 50 right now is going to be taken pretty well.
Yeah, I really do think that people are going to ultimately look at the unemployment rate and the wage growth figures, because those are going to be the biggest tells about how much inflationary pressure. The wage price spiral that only economists care about, and me, by the way, in terms of perpetuating any kind of inflationary pressure.
I'd love to see a wage price spiral.
Same. I was like, I'm excited.
Right, for
Hope
a
it
wage price
happens. Yeah.
Bring it on. Let's get you some morning calls. First up, Bramo doesn't want one, just for the record. Macquarie, downgrading Broadcom to neutral, expecting market share to decline meaningfully as Google moves to insource its chips. That stock is down by 15%. Your second call from Citi, raising its price target on Oracle to $330, expecting the company's cloud strength to continue. And your third and final call from Citizens, hiking its price target on CrowdStrike to $780 from $550, saying it's a retail opportunity for a household name in cybersecurity. We appreciate that you're doing your part.
She's like the adult in the room.
Yes, I think, thank you.
I personally don't want to see prices go to pandemic levels. I don't want to see my toilet paper
so you're going to do your bit
and be $15 for two rolls. I think that's not necessary.
Where are you paying $15 for 2 rolls?
I'm saying I don't want that to happen.
Oh, right, okay. Your year-end eval must be fun. Must be so easy for management.
All right, okay.
Okay.
It's just like positive for me, negative
Let's
for me.
get to CrowdStrike. Andrew Gaspari of BNP Paribas has a neutral rating on the stock with a $400 price target. He writes AI should be a catalyst to cyber demand, but the stock is not attractive on current growth expectations. Andrew joins us now for more. Andrew, good morning.
Good morning.
Good to see you, sir. Let's just start with this massive rip off the low before we even get into today's declines. We're talking about a name that's up 100% from the lows of the year.
That's right.
Why has this become the sweet spot for software?
Well, I think at the beginning of the year, we had a lot of the kind of leaks in terms of the AI companies, the AI labs, essentially saying that they'd be disrupting certain segments of software. And cybersecurity actually was one of those that were flagged and leaked into the press. What was interesting is that after the announcement that essentially Anthropic was going to partner with the leading cybersecurity companies, that completely changed the entire narrative, because prior to that point, cybersecurity was considered a disruptable sector. After that, I think it was viewed as one of the key sectors in order to protect all of us from potential bad actors in terms of disrupting the economy or anything in that regard, with tools that are essentially very advanced when it comes to how to hack organizations.
So the narrative improves, the stock gets squeezed because it was beaten up so much, and now you've got this spread between the narrative and growth expectations and growth. How do we close that spread? What are you expecting to see from the company?
Yeah, so at the end of March, there was a completely change in terms of tenor from customers. I think the CEO of CrowdStrike has mentioned that as well on the earnings call last night, saying that he saw a massive inflection point in terms of tools that could protect against AI, essentially. So in order for companies to deploy AI internally, they would need to adopt a lot of tools like CrowdStrike. So what happened is essentially the company is now, and this is probably ties into the improved optimism on their part in terms of the pipeline, is that a lot of customers are essentially asking for the tools that CrowdStrike offers, among others like Palo and others. But I would say CrowdStrike in particular last night was vocal about it.
At this point, how do you gauge whether we've already priced in all potential growth and versus still have more room to go, and this is just a temporary blip as people are used to a much bigger outperformance from other tech-related names?
Right. No, that's a good question. And I think one of the issues is right now the stock is baking in a lot more than what is currently the street estimates for growth, right? And I think part of that is the enthusiasm behind the potential demand that would come from what's called AI detection and response. And I think we believe more like, look, we need to see the actual revenue coming in before we would get excited about the growth trajectory. Right now, and this was the title of of BNP's note this morning, was Mythos Moment or Aggressive Guide, mainly essentially saying, look, like you have to either believe or you're going to have to wait and see. And we're more of the wait and see camp before we kind of get excited. And essentially, you have to really put some of the most aggressive multiples on software on the stock in order to be really optimistic in terms of the performance. And that's where we need to obviously have more proof before we go there.
What does it say about the amount of leverage being built into some of these names? And I'm not just talking about borrowing money, but I'm talking about levering up the expected returns over the next 5 to 10 years when there's very little visibility? Is it getting to a place that's getting a little too heady for investors?
Right. So at BNP, we essentially looked at several stocks that we considered a kind of AI winners, right? And some of them cover chip design, some cover cybersecurity, very few in software. You guys just talked about Broadcom, for example. Like all these stocks have kind of been moving in one direction, while a lot of the other software stocks, for example, have not. So I think when you look at how does that shift, a lot of it is going to be outside of these companies' like own strategy and control. A lot of it is going to be what happens, for example, with the hardware versus software trade. I think a lot of it is going to also depend on what the AI labs do, particularly as they go public. So we think that a lot of the expectations versus actual results will be different versus how these stocks perform. I think the valuation versus fundamental dislocation is widened, frankly. And so when it comes to how this sort of how does the gap narrow over time, that's the question.
Is that why you have a $400 price target?
Well, we did upgrade it last night a bit to 5 plus over 500, so we're not
at 675, I think, even with the stock down 10%.
Right. So again, when we talked about valuation multiples, right, we're applying an 18 times sales, which is again one of the more higher multiples we apply in software land. But like I said earlier, a lot I think investors are looking at this incremental revenue that is likely to materialize over time from these security products. And that obviously hasn't materialized yet, so it's obviously the valuation is leading the potential adoption of these tools.
I'm sure you don't want to make headlines about this becoming a bubble, so I'm not going to put you on the spot.
That's outside of my scope.
Of course, of course. But as an analyst who's seen a lot of things and been in the market for a while, how unusual is this moment to see this market get away from analyst expectations in the way it has done in the past few months?
It doesn't happen that often, but I think in this case, some people are considering AI similar to how like the cloud companies emerged like 10, 15 years ago and what happened to the industry at that point. So it's definitely an inflection in terms of change and from a technology standpoint. And so a lot of investors are struggling to understand how does this play out, of course, right? But I would say it's unusual. It happens maybe once every 10 years. So I would say how this plays out, I don't know, and I won't give you a forecast of where if it's a bubble or not. But that's where we are.
What if for CrowdStrike this is a Mythos moment? What's the upside potential?
Well, I mean, the TAM would be, I think, look, this is CrowdStrike's management team in terms of how they explained it. They think it can be as big as the endpoint detection and response market, which is a pretty massive TAM. I mean, if you look at CrowdStrike's revenue, that's still the majority of their revenue today. I think they're planning to get to, give or take, $6.5 billion of revenue this year. So if you see how, if you apply what they're saying, that this could be bigger than that, I mean, we're looking at a few $1 billion of incremental revenue for CrowdStrike. And the reason why companies like CrowdStrike or Palo Alto Networks or Zscaler are playing that role is because AI labs can't detect these threats in real time. You need to have very accurate way to detect them. You can't just take probabilities or you're in trouble. So they're considered critical tools in that process. But to give you a sense of like in terms of how big it could be, yeah, could it be 10 billion? Could it be 20 billion? Who knows? One of the things is that they also said is that the market for AI security is going to be meaningfully bigger because we're not just talking about mobile devices and workstations, which is what CrowdStrike is famous for. We're talking about data. We're talking about models that you need to protect against, prompts, right? Browsers. This is where users like you and I essentially engage to with AI algorithms is through these devices. So it's a lot wider, what I call threat footprint that you need to protect against.
Andrew, this was smart. Appreciate your time. Thank you, buddy.
Thank you, John.
Thanks for coming in. I'm sure you've got a busy morning ahead of you with this name. CrowdStrike down in the pre-market following a major rally, a massive rally off the lows earlier this year.
I love that, John. I don't want to put you on the spot and ask you if it's a bubble, but is it a bubble?
Well, no. I think for analysts right now, this has been somewhat frustrating. It's not something they're used to. Usually, the median target on a stock like this is above where the stock is trading. And for so many of these names, it's below. And that's a massive switch because the markets move so quickly.
How do you price in an industrial revolution? I sound like Dan Ives. I'm not meaning to, but that's essentially what increasingly people are saying. No,
second innings?
Yeah, at 10 p.m.
Do you want to pick a basketball player, something like that?
You know, going
Jalen
like
Brunson.
running.
The Jalen Brunson of cybersecurity.
With a leather jacket, yeah.
There you go.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The opening bout just around the corner, 60 minutes away. Equity futures on the S&P 500 pulling back by 0.4%, on the Nasdaq down by 1.2%. Lots of coverage of Broadcom down in the pre-market by around 15% through much of this morning. The next stop for this market is the economic data. Jobless claims just seconds away. In the bond market, 2s, 10s and 30s shaping up as follows. Yields look like this morning, down by 4 or 5 basis points at the front end of the curve on 2s, at 4.03%, on 10s down to 4.44. Let's get you some jobs data, some claims and some unit labour costs in the mix as well. Jobless claims coming in at 225. That's the wrong kind of upside surprise. The median estimate in our survey was 215. One number just caught my eye, crossing the Bloomberg terminal very quickly. Unit labour costs for the first quarter coming in at 1.8%. That is a downside surprise. The estimate was 2.4. So that's a big downside surprise in many ways, Bramo. And that's taking some heat, I would suggest, out of this conversation about a Federal Reserve that might need to hike sometime soon. Yields down at the front end of the curve now by some 5 basis points.
If you're worried about a wage price spiral, theoretically, well, this would actually dampen some of those fears because it's not necessarily picking up at the same pace that many people expected. The expectation was 2.4% for those unit labor costs. It came in at 1.8%. You also had a slight upside surprise in the initial jobless claim. So again, that is not the right kind of move if you're looking for some sort of heat or growing strength in the U.S. labor market. So, well, this isn't screaming some sort of crisis. It definitely is dampening some of the potential inflationary pressure.
Yeah, I'm not going to freak out about claims just yet. 3-month average still around 215.
Yeah.
Anything close to 200K, things are okay. Look the other way. But the unit labour cost does catch your eye. And I know it's the first quarter and somewhat backward looking, and maybe things have changed in the last few months. I don't know, but that sets the stage for a conversation of the Federal Reserve to say, this is the data we've got. At the moment, unemployment is still north of 4%. Wage growth and labour costs don't look like they're getting away from us right now. Maybe we've got time to figure this out through the summer. So when it comes to urgency, the ECB is looking to move in the next week, maybe the BOJ as well. The Federal Reserve's just not there yet, and this market's not screaming at them. This jobs market is not screaming at them to make a move.
You see consumers still spending, but they're spending from their savings. They're not seeing their wages grow at a commensurate pace in many cases. And as a result, that is one reason why people are using the T word once again. They might call it transient, but it's essentially the same word, which is transitory. And essentially that has been the theme. This would lead maybe more into that camp.
Can you imagine if Walsh uses that word?
That would be
first news conference out the gate.
That would be a bad thing.
T word out the gate.
No, don't do it.
What if it turns out to be right?
But just pick a different word. You know, like honestly, a moving experience of inflation.
A moving experience. Okay. Looking forward to this speech that Lisa's writing for Kevin Walsh.
I hope he's not watching.
Mr. Chairman, if you're watching this morning, good morning. Making some edits, courtesy of Bramo this morning ahead of that meeting 2 weeks away. Looking forward to that. Jobless claims, 225, the estimate 215. Unit labour costs for the first quarter coming in at 1.8%. The estimate was 2.4. To discuss, Anna Wong, Chief US Economist at Bloomberg Economics, joins us now for more. Anna, welcome to the programme. Just take stock of this labour market for us, heading into payrolls. What kind of labour market do we have?
It's a good labor, it's an improving labour market. And with this upside surprise in jobless claims, I would say that most of it is due to seasonal factors. The seasonal factors expect about 5-something decline in jobs claims. And in fact, we have seen a little bit tick up in layoffs and hence the seasonal adjusted jobless claims surprise on the upside. But all in all, we're seeing decline in unemployment flows, which precedes a decline in continuing claims flows. So we're expecting in the next 6 months, unemployment and continuing claims would continue to go down.
That would be good news. One way we're trying to measure the heat, the tightness in this labour market, Anna, is just to look to wage costs, labour unit costs. Walk us through where we are right now and how much weight you would put on unit labour costs for the first quarter going into the next Fed meeting.
Yes, so first of all, unit labor cost is a very important concept. At the Federal Reserve, where I used to work, they would track the underlying pace of inflation by looking at unit labor cost adjusted for productivity trends. And the fact that it's running below 2%, and this is something that economists could have predicted, because coming into the year, we are seeing that firms don't have pricing power, and therefore the hiring power is also not very strong. But now, using the latest earning data, we are seeing renewed wage pressure growth, just a little bit, not as strong as 2021. But nonetheless, I think we can take a little bit of signal from Q1 unit labor costs that, in fact, the underlying pace of inflation was on track to fall below 3% this year.
Anna, what's your base case for rates now with the team over at Bloomberg Economics?
We're expecting a 25 basis point cut in fourth quarter of this year.
Okay. Anna Wong there of Bloomberg Economics. Anna, good to see you. As always, great to have you in New York as well. Anna Wong of Bloomberg Economics, looking for better momentum in this economy, but ultimately a rate reduction at some point, maybe in 4Q later this year.
In part because of the labor pressures, because ultimately this might be a moving price increase, or it might be a mercurial price increase that we're seeing right now. Impermanent price increases, shifting price increases is one person suggested.
Who is this courtesy of? ChatGPT, Gemini? Who have we got going? A nice thesaurus on the
AI
desk?
of Bramo's brain. No, one person did suggest shifting. Please keep it coming. We're going to have a new vocabulary.
You're getting Bloomberg subscribers to weigh in on this too.
Please do.
Nice.
If you have a suggestion, please send it my way.
Nice. Nita Richardson of ADP is waiting very patiently to weigh in on this. Nita, good morning. Good to see you.
Good morning.
I'll give you a pass on that particular debate. Let's talk about this labour market. How tight are things? What do you see? We had a really decent ADP print early this week.
In fact, when I saw the number, I thought immediately of Lisa, because she has been asking me for several months now, is this employment picture broadening out? Is the hiring pattern broadening past healthcare? And yes, this month it did.
Good.
This was the first month we've seen in years with this broad of a hiring pattern across 8 out of 10 super sectors. Even manufacturing, for the first time in over 2 years, saw positive job gains, and we saw gains on all size fronts in terms of the establishment sizes. But to your question on tightness, if you look at the wage data, it ain't tight yet. And so the quality of the new jobs, different beast than the quality of jobs 2 years ago. That means lower pay growth, not higher. And so when we look at job changer pay growth and we can match them with each individual for each cohort, it's down a bit from last month, 6.5%. That's not bad, but it's not something that bends in any way towards a wage price spiral.
You talk about changing in the composition of the types of jobs that are getting created. Can you give some color around that? Which jobs are being created and which aren't, that would lead to more robust wage growth?
So because we're tracking paychecks, we actually know how many hours people are working. And from that, we can calculate the part-time share of new jobs and the existing headcount for all jobs. And what we're seeing is that before the pandemic, part-time share was about 37%. It's gone up 5 percentage points. It's now 42% of all the jobs we're seeing in the payroll data are part-time. And then if you look at healthcare, the jobs that are being produced there, remember healthcare is the stalwart, is producing still the bulk of job gains. Those jobs are tending towards home healthcare aides and lower paying healthcare jobs for the sector. And then if you look at the size cohort, it's the young, the smaller firms that are creating the bulk of jobs. Over half of the jobs created in the ADP report were for firms with under 50 in headcount, and they tend to have slower pay growth. So all in all, this is a lower wage dynamic than we saw before the pandemic.
You know, you talk about part-time jobs, and it's something that people talk about when we get these jobs numbers, the job growth numbers, and they say that they're overly inflated because they reflect people getting multiple jobs. They reflect someone having to work 3 different jobs to support their family. How much is that what we're seeing in the headline numbers, and frankly, even from some of the job creation?
Well, if you look at the part-time share, that suggests that it's more than one job if you're thinking about supporting a full life, right? So I think that multiple jobs, gig work is really important. And it's not just young people who are doing multiple jobs. It's older workers. It's workers who are at retirement age and now have a 1099, a side business. We used to say back in the day, a side hustle. That's something New Yorkers are very familiar with. That is common and growing in the retirement age, older age workers. So this is not going to be an unusual aspect in a very expensive economy. Affordability is a factor, and it's leading to a lot more multiple jobs.
You know, I met
a
lot of Uber drivers in this age cohort that are picking up this second job. They actually are retired. Some of them are retirees, and they're finding other ways to make means. What does this say about where we are right now in the economy and inflation?
Well, it says a lot about the structural foundation of the labor market. Yes, people are working longer, but as you work longer, that labor force participation drops. And so you have this mixed bag of, yes, people have to work longer because they're living longer, and maybe you're spending 30 years in retirement. You're either bored or broke, and you need to go back and get that second, maybe even that third job or a different career.
Shouldn't people be asking for higher wages at their primary job instead of picking up a second or third?
Maybe some can, but workers lack that kind of leadership and being in the driver's seat that they had during the Great Resignation. Remember, this is still a low-hire, low-hire environment. If you look at those jobless claims, if you look at the JOLTS numbers, yes, jobs openings were up in April, but hiring and quits stayed basically where they have been. People are not quitting their job, and if you ask why early career are not finding a foothold, maybe it's because their older brothers and sisters who got jobs in 2022 aren't leaving those jobs. They're not being promoted. They're not seeking new opportunities. And so that entry-level job just isn't vacant yet.
What a labour market they walked into out of that pandemic. I know they were super upset about not having big parties and stuff because everyone was locked inside, but they walked into one heck of a labour market in this country.
Yeah, although they now have a reputation that isn't great. I mean,
how many?
Well, I mean, this is the question. How many people sort of blame that generation for the quiet quitting, for not necessarily understanding work ethics, and that was part of the reason why certain people were cutting back or not hiring certain entry-level people, and they were using AI as an excuse.
They were saying paid so much money.
Yeah, they made so much money.
Decent case study of that, right?
Okay, please.
New York City. Okay, for those of you that don't live in New York City.
I know where you're going with this.
Where am I going with this?
West Village.
There you go. Good. You used to go and live in Murray Hill, right? You'd do an apartment share, and now they all live in the West Village. Second-year grads on Wall Street living in the West Village, which is like, what? When did that happen?
Kind of ruining it, to be honest. I mean, maybe that's
Is that how you feel? To tell us how you really feel about the situation.
They kind of are.
That's how I'm gauging how much people are getting paid.
If they're worth it, great. I hope they set a good example for future generations that will be going into the workforce in 4 years.
In defense of Gen Z. It's hard to learn the skills of work without being onboarded. And a lot of them are onboarded in a remote hybrid work environment, and they don't get the peer and the older peer mentorship that leads to good work habits.
Drew Mattis shared research from the New York Fed this week that said youth unemployment has risen dramatically since the pandemic, and it's not about AI. It's because they're at home and they're working from home and they're not getting the mentorship as you described, and that's why there's a rise of youth unemployment.
But is that because they want to work at home or because their superiors don't want to work in the office?
It's probably a mixed bag, but I think maybe, I mean, I don't know. I hear a lot of Gen Zs that love the idea of scheduling their schedule to them, not their employer.
Nita, it's good to see you. It always is. Thank you. Nita Richardson there of ADP, just holding on to a better jobs market, just a bit of momentum there, some broadening out.
I liked her defense of Gen Z. I'm going to run with that. The idea that they weren't mentored, they weren't brought into something. They were psychologically devastated from the pandemic of graduating into a social void where you really couldn't experience one another. And then they were foisted into work environments where you didn't get the normal discussion. You didn't get the vibes of an office, of the water cooler. That's hard.
Yeah. Thank you. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Recapping the data we just got, jobless claims coming in at 225,000 last week, well above estimates of 215,000. Continuing claims coming in at 1.77 million, ticking down slightly from the previous week. Another setback in U.S.-Iran peace talks, the Hezbollah chief saying the Iranian-backed military group rejected the ceasefire deal between Lebanon and Israel. He says the agreement must include all of Lebanon. And Blackstone Private Credit Fund hitting its quarterly redemption gate in the second quarter. It's now capping withdrawals at 5%, despite investor exit requests hitting 10%. The news comes after Partners Group announced it will curb investor redemptions in more of its private equity funds. That's your Bloomberg brief. John?
Isabel, thank you. I guess I've got to come back to it.
Oh, no, really?
I've just got to squeeze it in a little bit.
Okay.
The generation that won't pick up the phone and you think they've been starved of the conversation in the office.
Part of it is because they haven't been forced to engage in social circumstances. I can't talk in abstractions. I know that it's not quite the difference. That I see a different Gen Z at home.
Okay.
It's not
Things
as
are better.
stunted. I see the friends. I'm optimistic. There's some wonderful, wonderful people coming to the workforce.
That I totally agree with. I completely agree with. We're talking about a very specific cohort that graduated
the
at a very
music is still
specific
playing.
time. I know, because I've got to go. I know, I've got to go.
Okay, let's go.
Just explaining myself. Set you up for the day ahead. We'll do that next. We'll catch up with Kelly Kowalski of MassMutual on the further risks to the chip rally.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with a debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
question that I'm trying to figure out, are the impaired stocks or the impaired groups, are they weak because they're truly impaired, or are they weak because they're just not AI stocks? And I think that's the big question of the moment, because we've been in this highly rotational market. I think that continues, but you do have to just be aware of some of these little cracks around the edges.
That was Chris Verone of Strategas weighing in on the equity market a little bit earlier. Got this message from Kevin Gordon of Schwab moments ago. I'm Gen Z and I come in peace. I don't consider Kevin Gordon part of that generation, do you?
No, he is absolved from any Gen Z associations after the conversation.
We're talking about this very specific class of Wall Street. Do you remember that presentation at Goldman by that first-year analyst?
Yes, I know you're talking
they
about.
Put a deck together for partners at Goldman about how they were overworked.
There is an issue, and I will just say, it might be a generational thing of people who grew up on Instagram doing things and believing themselves to be more inflated, and sort of the vision that you can craft for yourself online being similar to the amount of work that has to go into it.
I also think it's a massive opportunity for anyone of that generation to separate themselves from the pack, because you just have to act.
The bar's low.
Right? A certain way, turn up to work first, stay late, be in the office all the time, meet with that old school manager, that boss that's always there, never takes vacation. You know what I'm talking about?
I do.
Right.
I think, what I love about this is you're clearly talking about someone. Who are you talking about?
Futures are negative by 1/3 of 1%. Let's get you some single names. Some stock movers this morning. Yahara has more. Hey, Yahara.
Hi, John. Well, the AI trade is under pressure this morning, and at the center of it is Broadcom. Those shares down 15% in the pre-market as investors zero in on an AI chip revenue outlook that just did not meet the lofty expectations. That's because investors added some $270 billion in market value on this stock in just the past 5 sessions, leaving little room for error. And that weakness is dragging down the entire chip trade. We're seeing names like Intel, SanDisk, and ARM down in the pre-market. And remember, these are the names that not just helped us, that lifted us in this 9-day rally that ended yesterday, but also lifted us from the lows of March. And we end on CrowdStrike. Those shares also falling in the pre-market 10% after its outlook failed to impress investors. The outlook largely matched, but it failed to justify a stock that has surged nearly 60% year to date. John?
Yahara, thank you. Appreciate it. One final point. Can I make one final point? It's actually in support of that generation.
Oh, good.
This, I think, is the strongest argument. I don't think the upside potential exists for them in the way that it used to, and at least that's how they perceive the jobs market right now. Let's take Wall Street as an example. The years of the crazy business is kind of in the rearview mirror. Joins us now for more. Kelly, good morning. Good to see you.
Good morning.
We'll avoid all of that. Are there cracks emerging in this trade?
I don't think there's cracks. I think this is more about too high of expectations versus the fundamental long-term story. We've been accustomed to revisions of 50%. If you look at sort of the Gartner forecast for memory chips for this year, for revenue, it's 3x. Next year, that's expected to slow to a 20% growth rate. So we're kind of in the joyful part of the parabola, but I think this sort of, this modest sell-off we're seeing is a bit healthy because it's kind of resetting some of these expectations.
Is it enough to get back into some of these names?
We wouldn't recommend chasing the parabolas, but we think you have to stay in the market, stay diversified. The risk is really being underweight this long-term secular macro trend.
How concerned are some of your investors, or some of your clients, about just how quickly things have shifted and their inability to keep up, their inability to sort of wrap their heads around some of the numbers that we're seeing coming out of IPOs or even just the debt raises?
There are some signs of froths, a little bit of signs of euphoria that we're seeing. If you look at retail call buying, maybe some of that is Gen Z trying to get in on that trade. You're seeing some of that. But at the same time, you've got the fundamentals that are supporting it through the earnings side. So I don't think we're at peak growth or peak euphoria yet, but there are bubble-ish things coming up. We don't think AI itself is a bubble. It's a wave that's going to crest and fall. But we should be on the lookout for overexuberance.
How excited are people about space?
Well, I think if you look at sort of the SpaceX IPO and how much the valuation is, there's a lot of excitement out there. You look at the ETF flows into some of these new space ETFs, there's excitement. But again, going into the IPO, excitement. Look back decades ago to Facebook. You had some negative returns post that IPO. So it just really enforces for us the importance of taking a long-term view and really looking at the broader trend versus sort of the immediate excitement.
Kelly, are there some things about this particular moment for SpaceX that remind you of that moment for Facebook?
Perhaps.
What stands out to you?
I think it's hard when Facebook IPO'd, it's hard to really just wrap your mind around the future and the trillions of dollars of market cap that they would capture, right? I think if you look back at that moment, no one sort of saw how much ad revenue they would capture and how dominant they would be with billions of users. And I think you kind of have that same paradigm with when we're talking about data centers in space, for example. None of us can wrap our minds around that, right? That sounds very far-fetched, and perhaps right now it is. But looking into the future, a decade or two, maybe it's possible. Again, it really comes back to the long-term view and thinking about it in that way.
Kelly, it's good to see you. Thanks for being here. Thank you. Kelly Kowalski there of MassMutual. The failure to imagine. If we were doing this in the 90s and we were talking about Amazon, there's no way that I would have imagined what Amazon would ultimately be in 25, 26 years' time.
Yeah, books. You thought that it was a really easy way to get books.
Why can a bookseller have a market cap this large? It makes no sense to me because it wasn't about books.
And I remember being really skeptical of Netflix. Who's going to want to buy rent a subscription to get a CD, a DVD shipped to you in permanence? And guess what? They totally transformed themselves with debt issuance. They used the capital markets to really create a behemoth. This is why you're seeing analysts fail to get ahead of the earnings growth that we've been seeing again and again.
This was fun. Appreciate it. No doubt the conversation will continue after the show's finished. All right?
I think I'll be remote tomorrow.
Coming up tomorrow, Jonathan Gull of Seaport, Priya Misra of JP Morgan, Nadia Lovell of UBS, Jeff Rosenberg of BlackRock. From New York City this morning, good morning. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything. And he ended up paying for the production costs.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Taking a little bit of a breather after a drop yesterday as well. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a disappointing outlook from chipmaker Broadcom revives fears that the AI rally may have gone too far.
Banking bonanza, JP Morgan, Goldman, Morgan Stanley, they are pulling out all of the stops, including an in-office rocket ahead of SpaceX's blockbuster IPO.
And a rare rebuke for President Trump. The Republican-led House votes to stop the war with Iran as peace talks falter.
So a few stocks on our mind this morning. I'm looking at Blackstone because about an hour ago, we got the redemption numbers.
Because of course you are.
When am I not, I guess? I always am. But today I'm also showing it to you all. That's usually the difference. So about an hour ago, we got Blackstone redemption numbers, and they were higher than last quarter, and they were gating at this time. Last time around, you'll recall that they gave back all of their money. But a couple important things to note, Matt. It was 10% redemption requests. Compared to Cliffwater, it was something like 17 for them, so much better than feared. So you're seeing the shares rally 1.6%. They emphasize we have ample liquidity. We're doing okay.
I also think, like, it's just 10%, right?
Yeah.
And a lot of people just want to get out before somebody else.
And you know, like we've looked at all the numbers for a lot of these funds, it's only a couple of investors that are the ones that are trying to redeem everything. So you had 10%, but maybe it's only a handful that are actually asking for their money back.
And they're going to plow that money back into a new vintage anyway. Broadcom's strong outlook isn't enough to impress investors despite being above estimates. This is, to me, the story of the day. This company had added $270 billion in market cap over the past 5 trading sessions. So it added an IBM, it added a Salesforce, and it says it's going to have 180% revenue growth for its AI chips. That's already pretty good, right? 180% growth. That's like at least double the kind of growth that NVIDIA puts up. But it just wasn't enough for markets. And we see that, Danny, really across the spectrum. CrowdStrike, for example, beat estimates and raised its forecast, but still is falling today.
I mean, it's not just falling. It's down 15.33%. Let's talk about that with Bloomberg Equities reporter Carmen Reinecke. Carmen, what do you make of that? Because numbers are strong. Yeah, expectations are high, but 15, that's pretty brutal for a drop.
It is, and I think the thing that we're seeing really is that that forward outlook just wasn't enough to really excite investors, especially after the stock saw such a huge run up. I mean, $270 billion in 5 days is incredible, and that was only the last 5 days. It's up more than, it was up through yesterday's close, more than 60% from a March 30th low. We've seen this extended rally in the semiconductor space overall, and so it makes sense that especially if expectations sort of fell short, investors might want to be taking some off the table, especially I've heard from a few sources that you might want to take some off the table with some huge upcoming IPOs.
That's exactly what I was going to ask you. You know, if we're going to see a $2 trillion almost SpaceX IPO, if we're going to see a $1 trillion Anthropic IPO, OpenAI as well, that money for a lot of investors needs to come from somewhere else, right? And we see it for sure coming out of Bitcoin. But is it going to come out of more adjacent stocks, more sort of industry adjacent stocks?
I think it's definitely possible. And I mean, and it's something we're seeing even this morning. There's really broad selling sort of across the semi space. Nothing is down quite as much as Broadcom, but people are taking some of the money off the table. And I think especially some of the companies that investors have been going for exposure to things like Anthropic and OpenAI are maybe top of mind.
It's an interesting point on this idea of like adjacent sectors, because for a while, all of the space stocks were rallying really hard on this idea that we'd get a SpaceX IPO. But presumably, the indexes, when they absorb this, it's going to be a lot of industry indexes, right, that like have to put this in. So other things get sold. So how are you and the team thinking about
ETFs,
that?
for example,
Yeah,
right?
yeah, yeah.
If you have a space ETF and they put all of a sudden 15%
and it's market
SpaceX,
cap weighted,
then Rocket Labs is...
Virgin Rockets, whatever. So is the team really looking at that, kind of like what specific industries might come under fire?
100%. I mean, you have to. These are huge IPOs, and they have a lot of enthusiasm and demand around them. People have been waiting for these for a few years now at this point. So indexing is going to be really interesting. I'm definitely thinking a lot about, if SpaceX is added to NASDAQ 100 or, some of these bigger indexes very quickly, how is that going to change some of the volatility that we see in first-year IPOs? They can trade very choppily in that first year, but if you have that big index support, will that be different this time?
By the way, Vanguard's ETF just crossed $1 trillion for the first ETF that's ever done that, and I wonder how many people are just front-running the IPO, saying, if I'm in this index, I'm going to get my hands on SpaceX, so I'm going to rush in.
I also think it's important to think about the first-year volatility. Keith Lerner put together a list of the 30. You saw that? The 30 biggest IPOs, and the year one max drawdown average was like 55%. So these things can swing. Carmen, thanks so much for joining us. Carmen Reinecke covers equities for us on the BN side of the building. Now, today, JP Morgan CEO Jamie Dimon will discuss the upcoming SpaceX IPO with the bank's ultra-rich clients alongside SpaceX's president and CFO. So basically, Jamie Dimon, the most respected bank CEO in the world, is going to pitch SpaceX shares to thousands of clients, and they're not even the lead left on this IPO. To me, this is really unique. Sri Natarajan covers Wall Street for us. He joins us on this story. I'm kind of freaking out about this a little bit. Is it too much? Is my reaction too much, do you think?
Yes, it is too much. I don't think there's any reason for you to freak out just because Jamie Dimon is talking to his clients. But the fact is, this is unlike any other IPO. You're not looking at a typical IPO roadshow where you're going to just the biggest institutional investors in New York and Boston and
Was
London.
there a roadshow? They just said you're paying 135 and that's it. There wasn't even a range, dude. When was the last time you covered an IPO with no range?
It clearly tells you that the bankers are confident, that they know that there will be demand, and that's the starting point, and they'll probably hope to go up from there.
Wait, so this isn't a pitch from Jamie Dimon then, right? Like, why does he need to convince any of the wealth clients to buy this thing?
No, he brings a little bit of sparkle. He is the star of the show today because you're not trying to sell investors on the value prospect and the growth prospect. You're trying to sell them on a grand vision. And short of Elon Musk, I think if you look at all the banks in the lineup, whether it's David Solomon at Goldman Sachs, Ted Pick at Morgan Stanley, Jamie Dimon at JP Morgan, of the three, one stands out really tall. And it's really smart of the JP Morgan bankers to bring him out to talk about this deal with their ultra high net worth clients. And in some ways, that is the beauty of a franchise like that, right? When you have the really wealthy clients, you want to be able to bring something special to them. One way to do that is to tell them you would get an allocation in a SpaceX IPO, which is a really big draw. The other way is to tell them you will get FaceTime with Jamie Dimon.
Maybe they don't want that IPO right away. We had someone on recently who basically is like, for wealth clients, maybe it's good that they don't really get access to this because they won't be in that like period of volatility that retail will be in.
Right. Also, did you see Matt Levine's recent column saying like they should make an IPO or an ETF, I'm sorry, that's X SpaceX, like X Anthropic, X OpenAI, because so many people are crying about the index inclusions. Sri, thank you very much for calming me down a little bit. Sri Natarajan, our chief Wall Street correspondent.
No, I like excited Matt.
I just
you should never calm down.
Like, there's so much. Ed Ludlow has gotten me so pumped up about this.
Yeah, well,
the fact that it's so unique and the fact that it's so unusual.
No, we should be. There's so many aspects of this which are groundbreaking.
All right, let's get to, speaking of groundbreaking, the Republican-led House voted to halt the war with Iran, breaking with President Trump on an unpopular conflict that is taking a mounting economic toll. The president blasted the move, calling it a meaningless vote in a social media post. Joining us now is Anne-Marie Hordern, Bloomberg's chief political correspondent, co-host of Surveillance. So this is a rare rebuke. I mean, you typically, normally, you know, Speaker Johnson wouldn't even let this vote come to the floor, right? Somehow that happened. Well, he canceled it last time, right?
Right. And
because people were sick?
And 4 Republicans decided to vote with these Democrats, yes, To Trump's point, though, it's meaningless in the sense that the Senate would have to take this up, and the president's not going to stop this engagement, this conflict right now, and the Senate likely would not follow through on what the House did. But it's an important signal about where, especially members of the Republican Party, we have an election coming up in November. It's the midterms, especially if you have a district that's maybe more purple. This is going to be an issue, especially this summer, as we see gas prices continue to rise. The president telling the New York Post the blockade might stay until September. Amos Hochstein, which was the Biden energy czar, he's an individual who dealt with north of $5 a gallon gasoline, and he's saying right now we're basically living on the bottom levels of inventories. What happens when that runs out and the Strait of Hormuz and the blockade still remain? You're going to see a tremendous amount of upside to the energy prices, which is why so many people think Trump in the end will have to concede something and take a deal.
Well, in the day-to-day volatility, we're looking at Brent crude falling about 3% this morning, and maybe that's optimism with the U.S. saying that Lebanon and Israel have agreed to some sort of ceasefire, but we've seen a lot of back and forth between the president and a lot of contradiction between the president of the United States and Benjamin Netanyahu.
Well, yeah, but for Iran, and the reason why they probably tried to really push this through in terms of Israel and Lebanon, and obviously I'm sure you've seen the reporting about the president's frustrations with Bibi Netanyahu, but for Iran, it's all one war. It includes Hezbollah as well for them. This is a major proxy of the Iranian regime. So they view this as one war. And that is why when you see more incursions from Israel or strikes in Israel on Hezbollah, the Iranians will start in terms of their strikes on U.S. allies. This past week, we saw really hostile acts from the regime. Did you see the airport terminal in Kuwait?
Yeah.
Did you see what is happening to the ballistic missiles and drones towards Bahrain as well? And right now, this administration is saying this is defensive. We spoke to State Department spokesperson earlier this morning. He said this is clearly defensive. The question I have is at what point will there be such a red line where you're no longer hanging on to the ceasefire? And the Wall Street Journal overnight said that President Trump, this is their reporting, told aides that he would consider ending the ceasefire with Iran if Tehran kills American troops. And we've actually already seen some American troops die. But you can see that the president...
But that's clear. I mean, if they do something that kills, that takes American lives, he's going to have to strike back in a manner that
more
extends
forceful
beyond
way.
a ceasefire, right?
But I think that gives you a sense of where the president is right now in terms of clinging on to this ceasefire and trying to get some sort of negotiated deal across the finish line.
And take any deal that's no longer the unconditional surrender that he beat his chest about on March 6th. So Anne-Marie Horton is our chief political correspondent. She also co-anchors Surveillance, an excellent program. I recommend checking it out. Pushing for a wage price spiral, I saw this morning.
Well, I mean, the whole debate is like, why not ask for a raise?
Yeah, no, I thought it was fantastic. Check on markets right now. They're not supporting that, right? We're down 0.3%, but we were off 0.75% yesterday at the close. 75.48 is your level on S&P futures. We're also looking at a bigger drop for tech futures, down more than 1%. Even as yields come in, the 10-year at 4.45, 4.46, and Brent crude comes down. Brent down 2.65 right now to 95.17. So those signs should point to a rally. We'll see if this turns around at the open. Let's get a look at some of the other single stock stories on our radar. Five Below tumbling after earnings that blew past estimates, but analysts are concerned the growth rate may be peaking.
Bad for them because Dollar General and all those other discount stores did well. Calvin Klein and Tommy Hilfiger owner PVH is falling after it lowered its outlook due to the war
losing a full quarter
in Iran
of their value.
I guess we're not.
Are those still hot? No, they're not.
No, Anne-Marie is like this ain't the war in Iran.
Yeah,
this is nobody wants Calvin Klein anymore.
I mean, just talking about the man on the street. Networking software firm Sienna raised its revenue outlook, but not enough to impress investors. That's the theme for today. You've got to beat the beat. We're going to talk to the CEO of Sienna, Gary Smith, in the next hour.
Coming up first, though, a major Blackstone fund now capping withdrawals after it saw a surge about 10% in withdrawal requests. We're going to talk more about that coming up next, right here on Bloomberg Open Interest.
funds are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jan report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Let's get now to high interest. Look what's making headlines around the world. PIMCO CIO Dan Ivison says the first sustained credit default cycle in years is already underway. He is warning investors to expect higher losses even as credit spreads remain near record tights. He points to looming debt maturities, risky 2021 and 2022 leveraged buyouts, and uncertainty around massive AI infrastructure spending as key threats to the market. And speaking of that, Partners Group says it may cap withdrawals across more evergreen funds as investors seek liquidity. A $15.8 billion U.S. private equity fund is expected to hit redemption limits after requests topped 5% of assets. The move follows restrictions on its global value fund and highlights growing pressure across private markets. I spoke with the CEO, David Layton, earlier this week about some of the pressures he's seeing.
I think that there are some idiosyncratic factors for this fund in particular, but indeed, you do see that investors broadly, after having redemption pressure within private credit for a number of quarters, are now starting to redeem other asset classes.
Meanwhile, Blackstone's private credit fund is putting the brakes on investor withdrawals after more people wanted their money back than the fund was willing to pay out all at once. Investors asked to cash out about 10% of the fund, but Blackstone will allow withdrawals on only 5% this quarter. The company says the fund still has plenty of cash coming in from loan repayments and new investments, and its debt levels remain low. Danny.
Let's talk more about this. We're joined now by Silas Brown, Bloomberg senior private credit reporter in London. Silas, it's probably notable that Blackstone shares are higher after this because we've seen a lot of these redemption flows come out and usually the stocks are hit. What is maybe different this time for Blackstone?
Well, I think, look, I mean, this is the second series of the private credit BDC angst story. And so I think maybe quite a lot of the pressure on share prices may have been kind of priced through the first quarter. And I think with Blackstone, I mean, we'll see how the day plays out. But I mean, the redemptions that they had were at 10%, which is kind of lower than a lot of the other industry peers that they have. I mean, Cliffwater came in at 17% earlier this week. So a few more reporting over the course of the next few weeks. So that may give some indication as to why. But I mean, yeah, let's see how the day progresses.
I wonder about, for one thing, Silas, it seems to me that there's some prisoner's dilemma at work here. Danny has pointed out.
I should just say that Scott Goodwin of Diameters thinking that there's a.
And I know it's Scott Goodwin as well.
Yeah. I don't want to take credit for it. This is
but I mean, the point is, some people are going to want out just because they think others will want out, and they want to get ahead of it. And I wonder if also a lot of the money that's taken out is still earmarked for private credit. So it's just going to go back into maybe a newer, better vintage. Is that the case, or are people actually lowering their allocations, are institutions lowering their allocations to private credit?
Yeah, I mean, it was actually one of my favorite lines from yesterday's credit forum when Danny interviewed Scott Goodwin, and he spoke about the prisoner's dilemma, aka, this problem for retail investors, which is like, if I don't redeem and everyone else redeems, then I'm the one kind of left holding the bag. And I do think that is, having spoken to a few retail-ish investors, that is something that they they think about. Look, private credit performance, despite all of the kind of clear difficulties that are going on in the market, private credit performance by and large has still remained pretty solid. And I think, as long as that maintains itself, Blair Jacobson was on earlier today, and that was his point, that they need to demonstrate their kind of resilience through performance, and if that carries on, then I would suggest that in the next quarter they may see a bit of an easing off of retail redemptions.
And as fate would have it, I also spoke to Mike Arangetti of Ares yesterday, who said a very similar thing to his colleague Blair. Silas, thank you so much. You're brilliant, and also because you complimented me, and flattery will buy you everything. Silas, thank you so much. Silas Brown from our credit team. Coming up on this show, Nancy Tengler joins us as we see some weakness in the AI trade after Broadcom's earnings this morning. This is Bloomberg Open Interest.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues. And how do you do? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Just on my conversation with Ray Dalio yesterday.
No big deal.
No big deal. Let's bring in Laffer Tangler CEO and CIO Nancy Tangler. Nancy, so wonderful to see you. I mean, Ray Dalio's, on this sort of kick right now, basically saying like the AI bubble will burst at some point. It's going to happen when people start not just wanting paper wealth, but actual wealth and convert it. And we're about to see a lot of paper wealth created around SpaceX. In the meantime, it's a market that feels jumpy. I mean, Broadcom falling 15%. I just wonder, are we kind of vulnerable for volatility at these highs after such a big run up really built on this pillar of, chip makers?
Yeah, good to see you too, Danny. And that was a great interview. I think a couple things. So no, that was a compliment. So. I think, of course, he's ultimately right. I mean, if it is a bubble, then it will pop. I'm just not convinced we're in bubble territory. There's still a tremendous amount of skepticism. That's a good thing if you're an investor because you want to climb that wall of worry. But also, you can juxtapose his comments against John Durr from Kleiner Perkins, who said, this is one of the great tech tsunamis ever. And so I think what we have to think about is in the short term, you get the flight to what's next. All of these stocks, CrowdStrike, Broadcom, have run up pretty heady levels ahead of earnings. And so I'm not surprised to see, in each case, triple plays, that the short-term traders are turning their attention to what's next. This becomes a source of funds. Do I want SpaceX? Do I want Anthropic in my portfolio? Yes, I'm going to raise the cash now.
Yes. I mean, we can't talk about that enough today, Nancy. Broadcom added $270 billion in market cap in the last 5 sessions. Of course, they're down today. Even 200% AI chip growth isn't going to save them. We're going to keep you around because we love you. Nancy Tangler stays with us through the opening bell. We have stocks down 1/3 of 1%, almost on futures, I should say. This is after 0.75% drop yesterday. But remember, it was all-time high after all-time high after all-time high. I think 6 sessions in a row, 9 weeks in a row of gains. So we're still up at these very high levels, and we're looking at 10-year yields and oil that are coming in a little bit. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are down just a little bit. We could see if this holds a second day of declines, which would feel so unusual in this climate. Right now, off 0.3. NASDAQ futures off so much more. It's been a while since I've seen a spread like this. I mean, the delta is almost a full percent, right? NASDAQ futures off 1.2%. You hear the opening bell at the New York Stock Exchange. SSMR ringing the opening bell. Sunshine Silver Mining and Refining. And you can see the little silver bars that they make. A lot of people think silver will be the currency of choice, you know, post-apocalypse.
Wait, why over gold?
Because gold, like, you're not going to buy breakfast for a piece of gold. That's way too much money, right? So what preppers do is they buy, like, rolls of 1965 and older diamonds. I mean, dimes.
Interesting.
Because those are, like,
silver.
So that's worth about one breakfast post-apocalypse, apparently.
Okay, good to know.
INEO ringing the opening bell, the NASDAQ. They're doing an IPO. They make the Gensbacher engines out of Austria. Interestingly, Gensbacher Werke was actually bought by General Electric in 2003. Then it became INEO when they put it together with Waukesha, gas engines and diesel engines.
But do they play music at these things? Because they're decidedly dancing. There's a guy tapping his foot in the front, and I was not aware that music was being played.
I don't know, but they are all clapping to a beat. Each, it looks like to his own. And there's the confetti cannon as well.
Rhythm is tough. It's hard to have.
This company was originally, way back in the Austrian Tyrolean days, started by the Fugger family.
Interesting.
Of Germany.
Good
German Fuggers started this company.
I'm gonna leave that there and show you what Blackstone shares are doing this morning at the open. We are up 1.6% for Blackstone. They've limited withdrawals from its flagship private credit fund, BCRED, for the first time. Investors sought to pull 10% of shares last time. It was more than 7%. They met all those redemptions. So a couple things. One, it's not as bad as some of their peers saw in terms of redemptions. They said they have plenty of liquidity, so shares are up 2%. But I should also just note they fell about 4% yesterday. There are those fears over what Partners Group was doing. It's a little bit of a rebound from yesterday and a little bit of, oh, it's not as bad as it could have been.
Yeah, for sure. Broadcom's strong outlook also was not, I guess, not as good as it could have been. It wasn't enough to impress investors despite being way above estimates. Shares down the most in a year, even with revenue growth overall due to jump 84% year over year. This quarter, the full year AI chip sales are expected to grow 180%, which is at least double what NVIDIA, I think NVIDIA is looking at like 60, 70% growth, but of course at a much higher level. They sell about 4 times as much stuff as Broadcom. We're back with Laffer Tengler, CEO and CIO, Nancy Tengler. Nancy, how do you as an investor, I mean, if you're going to allocate some capital to SpaceX, if you're going to allocate some capital to OpenAI, if you're going to allocate some capital to Anthropic, that money has to come from somewhere, right? I imagine you would have to sell other stuff to do that, and there's so much money that's going to be sucked into those IPOs. Do you think it's going to have a visible effect on markets?
It could, Matt, for sure. And then let's not forget that most of Wall Street's heading out to the Hamptons shortly, so volumes will be a little bit muted, and that will exacerbate volatility. I think this summer is an opportunity. We are likely to get a correction. What we've been doing is trimming our winners, not selling them, but trimming them. So think Lam Research, Micron, to some extent AMD. We had been trimming Broadcom, and we will continue to do that as a source of funds because we want to be long this trade for a while. And to your point, the Broadcom report was excellent, and it's not trading at a lofty valuation. If you look at it on a price earnings to growth basis, it's trading at a PEG of 0.7 times. So it's not even at 1 time, and that is a benchmark for us. So we'll continue to hold it, and when it appreciates further, we'll trim back with new money. We'll buy some, but we're not adding to our positions here simply because we're at full positions.
Nancy, so can you just clarify? So you trimmed these positions, and what are you using that capital to deploy into newly?
We have been shifting, and I think I've talked about with you guys, we've been shifting for the last couple of months to software. And I feel like that was a good move because we've seen software run. We didn't believe the SaaS apocalypse, I can never say it, story. For some names, yes, and we are not in those names, we don't think. But for the winners, and we think there will be winners in the software space, and we were adding to cyber. So not just CrowdStrike, but Palo Alto Networks. And I think the CrowdStrike report, though you didn't ask, was also excellent. And the CEO said something very smart, George Kurtz. He said, look, cybersecurity is now a foundational AI infrastructure. And I think that is something that the market is underestimating because as we add to agentic AI around the enterprise, you have to be exposed to cybersecurity. I mean, you have to utilize cybersecurity, and you have to increase your exposure as a CIO at an enterprise company.
By the way, you were talking about John Doerr earlier. I see in your notes you quote him as saying AI is the biggest tech tsunami ever. The AI revolution is underhyped.
Right.
Where do you, I mean, I don't think we could hype it much more, but where do you see the underappreciation? You know, what is underpriced? Because you mentioned the valuation of Broadcom, and it's not terribly high. NVIDIA trading at a forward PE that's even lower, right? And then these companies like Micron, which are up 1,000% in the past 12 months, are trading at way lower valuations. I'm just looking at PEs. Obviously, you might have a different measure that you prefer for different companies, but where do you see the most value?
Well, I think interestingly, NVIDIA is a name that we recently added to our value portfolio. And before I hear the audible gasps, I mean, if you look at what they did with the capital allocation strategy, increase the dividend, and it's trading at a silly multiple compared to growth. So we did the same thing with Google about 2 years ago. And by the way, Google, I think Amazon, I think AMD were in the Russell 1000 value index. So while it seems counterintuitive because these names are still growing, we view them as fallen angel growth stocks. So I think NVIDIA is being overlooked and that the market will return its attention to it at some point. But beyond that, I mean, I didn't say it's underhyped, but I do think we're in the early stages of adoption. And we saw that today, I think, to some extent in the unit labor costs. Productivity continues to be strong, and unit labor costs came in or came down, if you will. And so I think that is going to be the driver. People are still working. The JOLTS numbers showed us that companies are still hiring. The estimate was 800,000 jobs light of the actual number. None of these numbers are set in stone, as you both know. They'll be revised, but I think the trend is moving in the right direction. So companies are still hiring. We're not seeing unit labor costs driving inflation. So I think this is a pretty perfect environment to allow technology to continue to drive productivity and therefore economic growth.
I'm just wondering, you're in Scottsdale. Are you in Scottsdale? Right now?
I'm in Tahoe right now.
You're in Tahoe. I was going to ask, where's the Hamptons of Arizona? But I guess you've answered the question already. Alafra Tangler, CEO and CIO, Nancy Tangler, talking to us from somewhere in America. Let's get a check on the stock market. Right now, we're looking at losses in the cash trade. The NASDAQ down almost 1%, Danny, but the S&P is little changed.
It's little changed. We did have a drop yesterday. We had 9 consecutive days of gains, so we'll add to a second consecutive day of losses at this pace. As you point out, Matt, it's not a lot, because the thing that's really dragging us down was the only thing that outperformed yesterday, and it was chip makers. So in the positive column, you have all the big tech names, the Mag 7s, which had a poor day yesterday too, so they bounced back. Eli Lilly, so you just have a who's who of the really large companies. And again, to the downside, it will be no surprise that Broadcom is at the top of the pile, down 14.5%, but we should just note it's run up a lot, but all the chip makers getting dragged down again after running up a lot. So not too much to see here. Sienna Corp, they're falling about 16%. We're going to be speaking to the CEO a little later in the next hour. Let's look at some of the sectors, though. Infotech, again, this is all the chip makers that's dragging it down, despite the fact you have some of the Mag 7 doing well today. Energy falls as the price of crude falls, too. At the top of the pile, you have some decidedly safety stocks, healthcare, staples, comms, again, that's Amazon, Meta, the other Mag 7s that are helping to lead us higher, and financials rebound after dropping yesterday, too, for an index that's just slightly lower this morning, Matt.
I think I would go to Flagstaff. I think Flagstaff.
Oh, is the Hamptons of Arizona?
It would be for me, I think, if I lived in Phoenix. You know,
I don't know the area well enough, so I'm going to have to trust you on this one.
We should explore it. We should look into it.
Sure, why not?
Coming up, Liftoff Mobile, a Blackstone-backed company, is set to make its trading debut today. CEO Jeremy Bondi joins us next. This is Open Interest.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini.
We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Time now for our top calls. Some of the analyst action that we are watching this morning. First up, the sell side is weighing in on Broadcom's disappointing AI outlook, Citi sees a buying opportunity. JP Morgan sees longer-term growth prospects. But Baird does highlight that customer-related headwinds do remain for the company. Next up, Five Below, they crushed first quarter expectations and raised its full-year forecast. But Jefferies and Citi say that the bigger question is whether that growth can last. Jefferies sees momentum starting to peak as comparisons get tougher. And finally, Bank of America upgrading United Health, saying healthcare costs are improving and setting the company up for a strong second quarter. They believe that lower costs could help profits recover faster and say that United Health is positioned well to keep earnings growing over the next several years, Matt.
All right, today, JP Morgan CEO Jamie Dimon will discuss the upcoming SpaceX IPO with the bank's ultra-rich clients alongside SpaceX's president and CFO. To me, this reads like Jamie Dimon is going to pitch SpaceX shares to his wealthiest clients. Let's get details about the live interactive discussion with Bloomberg's Bailey Lipschultz, fresh out of Lake Como. So, did you go to Villa d'Este?
I did. Okay, have you been?
No, I have not been to. I've been to Lake Como, but I've not been to the car show.
All I'm gonna say about Lake Como is it's beautiful. Yeah. Way too many tourists, and some of the villas, women are wearing, I'm not joking, dresses that you would wear to a wedding, and just for the Instagram photos. It blew my mind. I've never seen that before.
Interesting. Cool. I have been on like very rainy, and no one was doing cool Instagram stuff. Anyway.
All right, let's get to the story that I was so jazzed about this morning, and Sri Natarajan kind of tamped it down a little bit. But to me, it's interesting to see this CEO who's so highly respected putting it on the line to sell SpaceX shares to clients when he's not even leading the IPO, right?
Well, it's part of the pitch, right? And the whole vision from the start from Elon Musk was leaning into retail. Again, whether that's high net worth individual retail or people who are buying and selling zero DTEs on Robinhood. And part of this pitch from Jamie Dimon, part of this event is really to lean into the JP Morgan brand. We also need to call out the fact that Bank of America is having their own conversations with both Gwen and Brett as well today. So it really is just part of the broader push to try to get retail and get as much retail capital and interest as they can in this IPO.
And Wall Street seems so jazzed about this. There's this story about Goldman putting up a rocket in their lobby, which I don't know if we have the pictures. It's not as big as
a real rocket?
I don't know. It doesn't look that big.
If you're so I'm from the great state of Ohio, right? We have the Central Ohio Science and Industry Museum, COSI, that every kid goes to. They have an actual rocket.
And it's big. But I don't
think
this
looks like just a picture of a rocket. Did they not just put up a screen with a picture of a rocket?
I think that's a small rocket in front of a screen. It's very confusing for our audience because they literally cannot see what we're talking about. But anyway, it's not the biggest of rocket. Anyway, it just feels like there's just so much hype and excitement, Bailey. I mean, like, I don't know. It just feels like in the IPO world, considering this is the biggest ever, that we don't really have anything to compare this to, and we're maybe venturing, in a space pun, into the unknown.
We are venturing into the unknown, and I want to call out this morning's roadshow that's dedicated or really focused for retail. Brett Johnson was talking about, the company's CFO, was talking about mining asteroids and something, and kind of these other futuristic technologies that they want to lean into. As you can see there's the photo of the picture of the rocket.
I think it looks like it's a screen of a rocket, but I think it's just that rocket's in front of a screen on a platform. Right? It's on a platform. Look, you can kind of tell.
Maybe. Then they chose a very small rocket for the world's biggest IPO. Like, they could have gone bigger, right?
Well, it'll be interesting.
What are they making in fees on this? They could afford a bigger rocket.
The thing that's going to be interesting is the marketing around NASDAQ and Times Square and what we do see potentially next week when it does price, because we have seen NYSE and NASDAQ both kind of go full send, if you will, with different things. We saw that with some other IPOs as well.
Bailey, thank you very much. Bloomberg's Bailey Lipschultz. By the way, I had kind of heard, so, Goldman puts up this rocket, and Goldman's also behind the Liftoff IPO. So apparently there was this joke going around of Liftoff being like, that's our rocket, because our name is rocket related. Of course, it's not a rocket company, but they are going
What do you mean, of course, it's not a rocket company?
Sorry, you wouldn't know that.
I mean, I would have thought it was a rocket company or a mobile phone network operator.
It's the latter. And let's get into what the company is, because they're going public. The Blackstone-backed company is set to begin trading on the NASDAQ today under the ticker LFTO. It raised $437 million in a successful second attempt in going public this year. And let's bring in the CEO, Jeremy Bondi. Jeremy, so great to see you. And there are going to be a lot of questions of like, why IPO in the midst of all this? But maybe it would also be helpful just to describe to our viewers who don't know what Liftoff does, because it has a rocket name, but it's, not a rocket company.
Yeah, it's great to be here, Danny and Matt. Thank you so much for having me.
There are indeed 2 rockets in the Goldman building this week. And we are honored to be sharing Rocket Week in New York with SpaceX. Our business was built to help businesses grow and monetize within the app economy. And we do that across every single category you can imagine. I heard you talking about Instagram a few moments ago. Social is one of the verticals that we engage with. We've been at it for about 14 years now, and we're really excited to be going public today.
So what exactly does that mean, though? Monetization in the app economy. It's a good tagline. Well, maybe it's not a good tagline because I still don't really get it.
Yeah, great question, Matt.
Does that mean you're doing marketing campaigns on Instagram?
Yeah, great question, Matt. So what we do is we help developers integrate advertising into their apps. So there's 4 million apps in the App Store today, and they currently can integrate our software developer kit to help show advertising to support their business. We also help every single category of apps that you can imagine. For instance, Knicks won last night. It was a great game. A lot of predictions being placed in sportsbook action. We work with players across the prediction market vertical as well as OSBs to help them find profitable users across the app economy. So it's growth and monetization that we do through advertising across this burgeoning app ecosystem. People spending 3.5 hours a day on their phone.
Well, Jeremy, you know, I spoke with some of the Blackstone crew, and as you'd imagine, they are very pumped, and they did nothing but sing your praises and how incredible of a CEO you are. And you've been through a lot. I mean, it's tough, right, in the beginning of the year to think that you're going to IPO and have to pull it. What has this process been like to get it off the ground? Sorry for the pun. To lift off, actually, this time around.
Yeah, it had to come up. That makes sense. It's Rocket Week. Well, Danny, thank you for that. It's very generous from the Blackstone team. This has been a everyday labor for many, many years to build out this ecosystem, and we've been market making in advertising in the app economy since its inception. The business has now grown 10 consecutive quarters since our release of our new recommendation engine. And we think we're just getting started. We're really excited to start this new chapter. Market is early. We have a strong position, and we're really excited to go forward.
And Jeremy, just to remind our viewers who maybe don't, the first time around, the reason you didn't IPO is because it was in the midst of the SaaS apocalypse and comps are really difficult. But now it's a pretty difficult environment, too. There's a lot of attention going to SpaceX. We're going to be getting Anthropic and others soon. There's also this monster Alphabet offering coming into the market. Jeremy, isn't there a concern at all that you're competing for the same institutional capital by coming to market this week?
You know, the February roadshow that you're referencing was actually a phenomenal experience for our team in terms of getting investor enthusiasm and testing our thesis. And what we saw, as you mentioned, was pretty choppy conditions in the market. We went back, we delivered our 10th quarter of growth. We further reinforced the empirical evidence and the pattern that we've been showing the market. And we were excited to come back out here last week, and we were met with even more enthusiasm. I think what investors are seeing is that this business is in the AI winner camp. It's a recommendation engine that's built on neural nets. And we hear a lot of conversation about action-based pricing, outcome-based pricing. This category was the first to bring that to market. So I think there's a lot of enthusiasm as we sift through who are the AI winners and maybe who will have to redevelop their foundation.
What kind of growth, by the way? I remember seeing some stats last year that you were up like 40% in your core advertising business. What kind of growth are you expecting now, Jeremy? If you could quantify
Matt, that's great research. We are a compounding engine, so we focus on growing quarter over quarter. As I mentioned, we've done that 10 quarters in a row now. We continue to feed our model with data. We get $160 billion of purchase data from our advertisers annually that feeds into that model, and we attempt to find breakthroughs with our model each quarter. And so we release a prudent guide to the market while we live to beat that guide. The market on a blended basis, we see growing at 11% CAGR. We expect to beat that. Everything above that we certainly aspire to do, and the empirical evidence of the last 10 quarters at an average rate of 8% quarter over quarter, I think shows what's possible. But we want to be prudent and responsible as leaders of this business and grow confidence from our shareholder base.
Under promise and over deliver, dude. Thank you so much.
That's the goal.
For joining us. Liftoff CEO
Really
Jeremy Bondi talking about Rocket Week. Coming up next hour, we talk about how mega IPOs are minting more wealthy private flyers with the president of VistaJet. That's next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Check on markets as we get to the top of the hour here. We're looking at continued losses, although they're slight on the S&P 500, 0.2%, 75.42 the level in the cash trade. The NASDAQ down much more, 1.3%. So much bigger loss. 30,184, still a pretty high level there. 10-year yield coming down, 445, 446 if you round up. And Brent crude also off about $3 a barrel to 94.86. In the next hour, we're going to hear from Ciena CEO Gary Smith, plus Catherine Board-LeMay from Goldman Sachs and the president of VistaJet on private jet demand.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
ABC News. I'm Sherry Preston. With Americans already paying record prices for beef, a recent arrival to the U.S. cattle supply threatens to push them even higher. ABC's Jim Ryan is in Dallas with more on the new world screwworm that's been detected on a ranch in South Texas.
The mere threat of a screwworm infestation has prompted a ban on imports of live cattle from Mexico, sending the average price for a pound of ground beef to nearly $7. And while infected animals can be effectively treated, the arrival of the pest on a South Texas ranch has grocery stores and butcher shops bracing for new price increases.
Agriculture Secretary Brooke Rollins says the screwworm is not a threat to the nation's food supply. Hezbollah has rejected the latest ceasefire agreement reached between Israel and Lebanon, saying anything less than Israel leaving Lebanon for good would be considered a surrender. The deal would ban Hezbollah from a series of security zones in southern Lebanon. President Trump calling the handful of Republicans who voted in favor of the War Powers resolution that passed the House on Wednesday grandstanders who are unpatriotic. ABC's Rachel Scott.
4 Republicans joining Democrats to support a War Powers resolution requiring the president to withdraw U.S. forces in Iran unless Congress approves military action. While the measure is an uphill battle, it's a sign of the growing fractures within the president's own party over his handling of the war.
More GOP frustration over the $1.8 billion fund to reward the president's political allies.
Several Senate Republicans now saying they will likely today support legislation to legally ban the president's so-called anti-weaponization fund. It comes even after Acting Attorney General Todd Blanche assured lawmakers this week that fund was dead. But last night, when asked if it was truly defunct, the president said he didn't know, adding, quote, ask the lawyers.
The president says he will nominate Blanche, who used to be his own personal attorney, to take over as attorney general. You're listening to ABC News. A concerning incident at a TSA checkpoint in Sacramento last weekend. As ABC's Pierre Thomas reports, a man tried to get on board a plane with an explosive device in his luggage.
The bizarre incident unfolding just after 9 p.m. on Saturday, with a suspect showing up at a TSA checkpoint at Sacramento's airport wearing a scarf covering his face and latex gloves. Authorities say when they checked the carry-on bag of Kamani Jones, they discovered an explosive device, a torch lighter, as well as a knife, scissors, blades, and zip ties.
We've learned a little more about the man who held 10 people hostage for 15 hours in Bakersfield, California, threatening to detonate a bomb. ABC's Alex Stone says the suspect was upset, apparently, about a past criminal conviction.
It was apparently this case where he was found to have had sexual relations with a child or children under 14 years old. He had apparently been angry about that case and had gone on social media and on YouTube arguing against it, and that he had problems with the way the prosecutors had talked about him and the allegations that they had made against him. And according to police, this was his way to go in there and try to be heard.
He was shot and killed by the FBI. The latest crisis in Havana, Cuba, after the U.S. cut off oil supplies to the island, garbage. People who've been living without power for weeks now are now dealing with mounds of trash and the flies, rats, and cats, they say, who are drawn to it. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live at Bloomberg.com as well. Scarlett Fu and Paul Sweeney with you. This is the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist. What's the Treasury market? What's that discounting tomorrow ahead of the big jobs report? We'll check in with Ira on that. Ethan Bronner, Bloomberg Israel Bureau Chief. He's based in Israel. He'll give us the latest news coming out of that part of the world. Kathy Entwistle, Morgan Stanley Managing Director, Private Wealth Advisor, giving her thoughts on these markets. And we can figure out what's going on with global crude. I got WTI crude oil down about 3.8% to $92 here. We'll check in with Ellen Wald, President of Transversal Consulting. She's an ace when it comes to global oil. So we got a lot coming up over the next couple of hours. Let's kick it all off with John Tucker, named Bloomberg Business Flash.
All right, guys, good morning. And this Bloomberg Business Flash brought to you by IBKR, with the Fed raised rates by 25 basis points in June 2026. Trade your predictions alongside your stocks and options at ibkr.com/predictions. The last trading day is June 17th. Sell-off in tech this morning, led by semiconductors. Worst performing stock in the S&P 500. You guessed it, Broadcom after their results. Avalon will break it down in just a minute here. The Philadelphia Semiconductor Stock Index right now falling over 5% in the early going. And you see in the Dow higher, up 800 points. So, yeah, a bit of a rotation there. United Health Group, Norwegian Cruise Lines helping push the Dow higher right now. The lower oil, that's helping boost some of the travel-related stocks. Meantime, Max Kettner at HSBC isn't too worried about the valuations of the AI stocks.
They're generating cash. They're generating margins as if there's no tomorrow. So frankly, yeah, that AI bubble concern, it's a bit overblown to me.
The NASDAQ Composite Index 279 points lower. That's a 1% decline. S&P 500 down 16. That's down 0.2%. And again, the Dow right now up 794 points. Brent crude down close to 3%, 94.92. Also seeing yields lower. 2-year yield down 5 basis points, 4.02%. The 10-year down 4 basis points at 4.45. And a wake-up call for mattress maker Sleep Number. The company said to be laying the groundwork for a potential bankruptcy filing. And shares of Sleep Number right now down 70%. Yikes. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
Yeah, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Getting some Supreme Court news today, some decisions. Red headline crossing the Bloomberg terminal. Supreme Court bolsters SEC's power to recoup illegal gains. We'll have more reporting on that coming up in just a moment. We're looking for some other notable decisions here, particularly, I guess, President Trump's ability to fire the Fed's cook. And that is at the Supreme Court. And that's something that people are looking at pretty darn closely. And
we've been waiting for that, and we may not get it until the end of July. And also birthright citizenship.
Yes, birthright citizenship. That is also one of the key things. So we'll keep you on top of that. John Tucker just reporting here. We got red and green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News. She joins us here in studio. Avalon, what are you looking at?
Well, we have to start off with Broadcom. That's ticker AVGO, currently falling about 15%, most intraday since last January. And that's after the semiconductor maker forecast third quarter AI chip sales that fell well short of elevated expectations. Citi, though, is writing that the AI sales, while below estimates, they view the sell-off as an enhanced buying opportunity.
Enhanced buying opportunity. I like that.
Very good. Not just a buying opportunity, enhanced buying opportunity.
I have to agree with him. I mean, come on, what are we doing here? This is AI. We're first inning here.
Yeah, and of course, expectations got stretched because that's what's happening across the AI infrastructure. What's next on your list?
Petco, another one down, ticker WOOF, sinking 16% for its biggest intraday fall in about a year. That's after the pet health company's profit forecast fell short of expectations as well. Citi also writing that while industry outlook remains stable, recent data does suggest that there may be weaker dog adoption trends, which obviously would not bode well for a company like Petco.
Yeah, well, post-pandemic, and everyone has to go back to work, so the dog adoption craze has faded.
Yeah, I think so.
I was very tempted. I went into a Petco the other day. They had a ferret for $500.
Oh, a ferret?
A ferret.
What do you do with a ferret?
You let him run around the house. You let him do whatever he wants.
All right, he's a ferret. United Health.
Yes, United Health, that's ticker UNH, currently up about 5.8%, most intraday since April, and that's after Bank of America upgraded the health insurer to buy on improving medical cost trends. They say that United Health's bellwether status within managed care could lead to a broader rally if those utilization trends continue to moderate. Kind of important for health insurers that if patients are using their services more, then obviously their costs rise. And it seems as if those, things are starting to shift. Also worth noting that Morgan Stanley did boost the price target for the stock as well. And that's making UNH one of the top gainers on the S&P 500
And it's really contributing to the Dow Jones Industrials today. The Dow's up 770 points. UNH accounts for 140 of those.
Yeah, that would explain why the Dow's such an outlier, right? Up 1.5% versus declines in the Nasdaq and the S&P. Avalon, thank you so much. Avalon Purnell is one of our Bloomberg Equities reporters. And for more conversations like what you just heard, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. You can find it on Apple Podcasts, Spotify, or anywhere you listen. Remember the great bond sell-off? I mean, I don't want to say that it's over, but it's definitely, yields have come down significantly from where they were before just a couple of days ago. Let's bring in Ira Jersey. He is our chief U.S. interest rate strategist. And of course, all of this is happening as we await the jobs report tomorrow. But it feels like the bond market is less concerned about the employment picture and obviously much more concerned about inflation.
Yeah, we're really trading on oil, right? When you look at the correlation between particularly front end rates and the oil complex, whenever you get big moves downward in oil like we have today, you get a rally in treasuries, and the front end leads that, because that's really where these inflation expectations are going to show up most acutely. So you mentioned the bond market, great bond market sell-off. Now we're in the great bond market stabilization, I think, especially in the 10-year and the 30-year part of the curve. And that 2-year is just going to trade on oil until that stabilizes. We get a resolution in the Iran war situation. You're just going to have 2-year yields go up whenever oil's up, and 2-year yields go down whenever oil's down.
So what do you think is kind of is there a steady state of maybe a ex-war type of range for the 10-year? We'd kind of been hanging in that 4 to 4.5% kind of range. Is that still where the data suggests we should be?
Yeah, so most of our fair value models, and we just put out a note this morning actually with 6 different scenarios for if there's a prolonged conflict that kind of meanders on in low intensity, or if there's an early exit or an intensification, and what might happen in those different situations. So I think the 10-year yield in most of those scenarios is probably going to continue to be range bound between, say, 4.25% and 4.75%. So wrapped around 4.5%. It's really what goes on with the front end that will change that dynamic and that shape of the yield curve. A couple of reasons for that, and one of the big ones is that we do have a lot of debt, and the more debt that you create, the harder it is, right? Just simple supply-demand dynamics are going to suggest that it's going to be harder to see yields go down as significantly for any given level of growth. And then there is going to go significantly higher, and you're going to see more volatility on the as the Treasury market sells off, just because you have so much debt outstanding. And I think that we're in that dynamic now where you're going to see 10, 12 basis point sell-offs, but only 5, 6 basis point rallies. But it's still going to be very economic sensitive because the Treasury market is still the safest, most liquid bond market in the world.
In about 2 weeks, the Fed will hold its next policy meeting. It begins June 16th, and they come out with their decision on June 17th. Do you think we're going to get any sense of Kevin Warsh's thinking or any reporting on what he is doing behind the scenes there? Because right now, I mean, he's not going to be able to move forward with any kind of rate cut given the inflation picture, but we're all kind of waiting for him to frame his thinking here.
Yeah, I think so. I think when Kevin Warsh takes the stage for the first time in his post-meeting press conference, he's going to be asked, like, hey, do you want to cut rates? And I suspect that he's going to be a little bit more coy about that and be like, well, given the inflation dynamics right now, it wouldn't be prudent to cut rates, but without the war, I think we should cut rates, and some of my fellow members agree and some disagree, right? And so Lori Logan out this morning, the Dallas Fed president, she was hawkish, but every single Dallas Fed president has been hawkish since I started in this seat 30 years ago, right? So really it's the, can you get those kind of middle members, so call it the neutral members, to go along with your thinking, and that's where Kevin Warsh is going to have to spend most of his time.
DOTS go, dots. Are the dots short-lived, or do you think they're going to continue to be a tool for this Fed?
Yeah, I mean, we're going to have a dot plot in June. I think that is something that might change under Kevin Warsh. I think that he and some of the other members know that there's limitations to how it's used. You have heard a couple of other members of the Fed say maybe instead of getting rid of them, that we should maybe highlight which dot goes with which economic forecast. So remember, we have the dot plot, but we also get the CPI and PCE deflator forecast, as well as GDP and unemployment once a quarter. And if you match those up, that might actually give some interesting information, and certainly to strategists and market participants, right? Because you want to say, okay, this person thinks that if you get, X unemployment rate, you're going to have Y Fed funds rate in the future. And that's really something that could be helpful too. Now, I don't think Kevin Warsh will go for that, but I do think that he could push forward the discussion about how to change that kind of communication around the Fed's forecast.
Yeah, if anything, isn't the reporting that he wants to do less communicating than what the Fed has been offering?
Yeah, he'd like to get his fellow members to not speak as much. I don't know how he's going to be able to rein that in, but it's not impossible, right? And if you go back to the days of Alan Greenspan, back in the 1990s and early 2000s, Alan Greenspan spoke about monetary policy. Whenever other members of the Fed spoke, it was much more broad, and it wasn't specifically, here's what I think the economic outlook and the rate outlook is going to be. Alan Greenspan was the one who really spoke for the board.
All right, Ira, thanks so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist. Folks, the news of the day here is we had egg and cheese biscuits at Bloomberg.
About
John Tucker
15 minutes
graciously said, I'll go up and get you guys one. None left.
It was like throwing a French fry at the beach at the Jersey Shore. The seagulls attacked.
Exactly. It is rough around here, folks. All right, we're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Major averages, quite a divergence here. You look at the NASDAQ, the tech-heavy NASDAQ, down over 200 points, and then the Dow up 743 points. The S&P 500, little change right now, down 4 points. Healthcare, best performing industry group right now. That's because of United Healthcare, and that's also lifting the Dow higher. United Health Group and your Norwegian Cruise Lines. UNH was lifted to a buy at Bank of America. Lower oil boosting some of the travel-related stocks. That explains the rise right now in Norwegian Cruise Lines. And, of course, back to the worst-performing stock in the S&P 500 right now, Broadcom, with that disappointing forecast for artificial intelligence chip revenue. Rutro Astro, Petco, plunging 16%. The second quarter profit forecast missing the estimates there. And then the data that we had this morning, applications for unemployment benefits rising last week. It was the highest level since February. The AI boom minting a swath of new millionaires last year. An extra 2 million wealthy individuals joining their ranks. The world's rich now overseeing almost $100 trillion. That's actually the world GDP, or just shy of it.
We haven't even gotten to the SpaceX IPO or the Anthropic IPO or the OpenAI IPO. I mean, there are not a lot of people, but the ones who are involved are going to have a lot of extra dollar signs to their network.
And it's also, being a millionaire is kind of relative, depending on where you live. Doesn't mean much around here.
In Silicon Valley out there, there's a
Doesn't get you a house.
Exactly.
It doesn't get you much at all. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul Scarlett.
People my age that are in Silicon Valley still scarred by the dot-com bubble burst.
Yeah.
Because it took them a decade to get back the 80% of their net wealth that they lost. I mean, to this day, they talk about it.
Yeah, but the younger generation of engineers and programmers, they have no memory of that. And what they know is that they do make a lot of money, relatively speaking, but they can't find a house.
Yep. And it's just buy the dip. And speaking of buy the dip, Broadcom, if I were a portfolio manager and I owned Broadcom, I'd be buying hand over fist today. If it was a core position of mine, I'd be like,
Be greedy when others are fearful, that kind of thing?
Yeah, I don't know. We'll see. All right, John Tucker, thanks so much. Appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. Lots of news coming out of the Mideast. The U.S. and Iran clashed overnight, with Kuwait and Bahrain caught in the crossfire of the most serious flare-up since the ceasefire went into effect in early April. Continues to be some unsettling news coming out of that part of the world. Ethan Bronner is our Israeli bureau chief for Bloomberg News based in Tel Aviv. Ethan, what's the latest here? We have rhetoric coming out of the president. Does not seem to match at all the rhetoric we hear coming out of Iran. What's kind of the latest thought out there?
Yeah, well, that's a pattern we've seen, isn't it? I guess I would say, Paul, that it looks like they are making a tiny bit of progress, even though the Iranians said nothing has happened lately. One little tiny bit of progress in Lebanon is that yesterday the Lebanese government, Israel, and the United States agreed to try to move forward in a kind of limited combat operation, as opposed to, I would say, ceasefire is a bit overstated. But the plan seems to be that Israel, which has taken over a large section of southern Lebanon, will start handing over bits of it to the Lebanese armed forces. And the first such handover occurred today. I think it's a pretty small space, but, we'll take what we can get.
So when it comes to any kind of discussions on a more permanent ceasefire, we know that the U.S. and Iran have been using mediators like Pakistan and Qatar. Israel is obviously involved here as the partner of the U.S. Is Pakistan and Qatar also negotiating on behalf of Israel in any way?
No, I don't think so. I think Israel's pretty much left out of this, except for the strong relationship between the United States and Israel. So the U.S. is passing its messages to these guys, and I think there is daily contact between the U.S. and Israel. But as we've said to one another in the past, the U.S. and Israel do not have exactly consonant interests. The United States is more interested in opening the Strait of Hormuz. This means very little to Israel. Israel wants to get rid of the aggressive capacity of Iran and its proxies. And so, and in theory, the Americans do too, but first they want to get the Strait of Hormuz open. They're worried about the global economy, the price of energy, the price of fertilizer. Those are things that Israel's less focused on. But in theory, after that starts, the United States wants to move to defanging Iran, and we shall see if that happens. And the Israeli argument is the Americans say they're going to do it diplomatically. Let's give them a chance to do so.
Ethan, yesterday we had the Republican-led House vote to halt the U.S. war with Iran. How was that news interpreted in Israel and in the Mideast?
I think the way it should be, which is that this is a very unpopular war in the United States, and that he's on a short clock, the president, with what he's got ahead of him. There was a story in the Wall Street Journal in which he said he doesn't want to go back to war, or he will go back to war only if American troops are attacked. Or maybe he just said he will go back to war if American troops are attacked. Maybe it's not only, but he's obviously eager to try to wind this down. And the Israelis, a little worried about that. I think the rest of the region is pretty happy about that. So we'll have to see.
Is Israel on a short clock? There are elections coming up later this year.
Yes, but the clock works in reverse here in a funny way, which is that the prime minister who's running for re-election wants to show his people that he is working to protect them. And the north of Israel, it does feel under attack, from Hezbollah. People are worried about Gaza and Hamas. People are worried about Iran. And some months ago, there was a feeling, well, these things are under control. Now there's less of that feeling. So a more aggressive stance, in theory, might help the prime minister in his efforts to get reelected. We'll have to see where that goes.
Ethan, thank you so much. Appreciate it. As always, Ethan Bronner, Israel Bureau Chief for Bloomberg News. He is based in Tel Aviv, giving us the latest reporting there. Again, looking at the market, we've got red and green on the screen here. Not a lot of direction. Let's break it down with Kathy Entwistle, Morgan Stanley, Managing Director in the Private Wealth Business for Morgan Stanley. Kathy, what's the conversation you're having with your clients these days? We see some sentiment data that suggests consumers are kind of antsy about the economy, antsy about inflation, yet stocks hitting all-time highs every day, it seems like. What are you chatting with your clients about?
Yeah, thanks for having me. We are definitely having a lot of conversations right now with clients about not just the K economy, but where the opportunities are with potential, higher for longer, for also inflation, inflation staying sticky, and opportunities that still exist for them in their portfolios that we can make changes now that can help them in the long term. That might include real assets, U.S. We still like U.S. quite a bit, and also shortening the duration of some of those longer fixed income munis as well.
Okay, so, it's kind of tweaking around the edges. I'm curious how alternatives fit into people's strategies right now, given that we have definitely some fear percolating in private credit, Blackstone now limiting redemptions from one of its funds, and fear in private equity as well. There's a firm, Partners, gating an evergreen fund. How are people thinking about private credit and private equity right now?
That's a great question, Scarlett, and certainly it's top of mind for a lot of clients because there's a lot of headlines in the news about it and have been for a few months now. Private credit is no different than, public credit in the sense that there are some credits that are going to be strong and there are going to be some credits that are going to be challenging. So what you really need to consider is the underlying credit that's being invested. And if it's a strong credit, there should be no fear about it. They're still able to do what they are supposed to do when we put them in the portfolio. The issue is when you have a lot of people getting nervous and panicking, they might not necessarily understand the long-term nature of alternative investments, and that even though you can have liquidity, it's not meant for liquidity in the short term. So again, the fear is driving some of this dislocation in the private credit market.
Kathy, we're seeing a ton of equity issuance these days. We had Google with a follow-on offering this week, and of course SpaceX has filed, and we're also and some of the AI plays, Anthropic has filed confidentially. Are your clients calling into you saying, hey, I'm interested, or what are you hearing from your clients?
We are definitely having clients asking us and showing interest in opportunities in IPO markets and so forth. We also recognize that a lot of wealth is being created in companies now in the private markets, which is why we still like the private markets for our clients. And when we do get IPOs that are interesting or available and clients are interested in those, we certainly are happy to explore those areas with them as well.
Are people wanting to put new money to work when it comes to these IPOs, or are they looking to switch from maybe existing holdings in tech? Because putting new money to work in some of these IPOs means an even bigger bet on tech.
Yeah, that's a great question. And I think, with that kind of a question, it's more individual in nature, like what the client's portfolio already looks like and how they're positioned. But I would say generally, a lot of times in IPOs, you're not going to get a huge allocation. So we're thinking more about the concept of it versus the actual allocation of it. So if clients want to hold a certain position for themselves or their children or their grandchildren as more of a mark of, yes, we participated, or yes, this was something that was really cool that happened during this time period. I'm looking at it for some clients more like that, and other clients, looking at private markets to get into a lot of these type of investments. Yeah, so we've definitely been adopters of alternative investments for our clients' portfolio. And when we think about it, typically alts are non-correlated assets, which, as you guys know, just means that it's not going to behave exactly like the equity or bond market. So it's good to have some differentiating factors in there. So we do allocate, 10, 20%, and sometimes more depending on the size of a client's portfolio and their appetite for something like that. We also think with inflation being a little bit more sticky, that it's also a good time to add some commodities, real assets, energy, infrastructure, gold, and hedge funds to a client's portfolio.
When you talk about gold, how would people express that? Is it necessarily through ETFs? Is it through gold miners?
Yeah, it's actually, it can be through both. And it certainly is easy to, just to use the ETFs for that exposure, but we will also use gold miners.
Kathy, thanks so much for joining us. Always appreciate getting a few minutes of your time. Kathy Entwistle, she's the managing director in the private wealth group at Morgan Stanley, based there in Ridgewood, New Jersey. One of my favorite towns in the swamps of Jersey is Ridgewood. Heck of a golf club.
I don't think they would call it swamps, though, would they?
I do. I'm born and raised, but Ridgewood's, yeah, they're pretty...
they're fancy there.
They're fancy there. Ridgewood Country Club, they love me.
See,
Ridgewood
fancy.
Country Club. Yep.
Well, not anyway. Now that you called it a swamp.
Yes, exactly. And I'm going to take the New Jersey Transit, hopefully, through the swamps back to Jersey today. S&P up. You know what? S&P's unched. Dow up 700. The NASDAQ down 150. Go for it. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. So right now, the major averages, they're mixed. The Dow rallying, the NASDAQ selling off. The S&P 500 unchanged. United Health Group got a buy rating at Bank of America, so that's doing the heavy lifting right now in the Dow Jones Industrial Average. And of course, after the results, after the close last night, Broadcom, worst performing stock in the S&P 500, also the worst performing stock in the NASDAQ. And
in the key players out there within the AI ecosystem. And as a result, I think this is a place you still want to be, acknowledging, though, that there are risks that are heightening.
NASDAQ Composite Index down 155 points. That is down 0.6% right now. The Dow up 691 points. That's a rise of 1.4%. And the S&P 500 pretty much dead flat at 75.54. We're looking at oil right now. The Brent contract down 2.6%. It's at 95.28. The decline in oil helping lift some of the travel-related stocks as well. Yields also lower because of oil. 2-year down 4 basis points. The 10-year is 3 basis points lower. And just to bring you that Supreme Court news from earlier, the U.S. Supreme Court reinforcing the SEC's power to recover illegal profits. They ruled, and there was no dissent here, that the SEC doesn't have to show investor harm in order to win disgorgement. And that's one of the more powerful tools at the SEC. Sellers pulling their homes off the market at near records. Nationwide, 5.8% of all home listings were taken off the market in the month of April. This is according to the real estate firm Redfin. Delistings on the rise, and they say largely because it's a buyer's market. But again, I would say it depends on which market you're in.
Yeah, I mean, certain places in New Jersey, Connecticut, New York are always in demand no matter what.
Yeah, because, we're so exclusive, I guess. We check the markets for you all day
good schools and jobs.
Oh, okay, that's it. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, thank you so much, John Tucker, with our Bloomberg Business Flash. Let's talk about oil. John had mentioned that oil is down today. You look at Brent, the global benchmark, and it peaked at about $118 back in late April, and now it's sitting at around $95 a barrel. So definitely lower. WTI, the U.S. benchmark, at about $93 a barrel. Ellen Wald is president of Transversal Consulting. She's also a senior fellow at Atlantic Council, and she joins us from Boca Raton, Florida. And Ellen, you say that oil prices are significantly lower than where they should be right now. What do you mean by that?
Well, if you look at how we've been draining the inventory stocks, we've been draining commercial stocks. The U.S. has also been draining its SPR at a very rapid rate. And so if you look at all of the oil that's actually off the market, from the Middle East because of this stoppage, and then you look at the rate at which we're still using oil, we're draining our inventory stocks, really oil prices should be much higher. They're pricing in all of this expectation that there's going to be a peace deal, right around the corner. And at a certain point, we're going to drain our inventories. They're going to be essentially gone. Okay, and then what are we going to have left to fall back on? And so at some point, there has to be some kind of a price rise to accommodate for that. And, the question is really, when are we going to see that? I think we've seen Exxon and Chevron saying it's coming pretty soon. Other people say maybe July, maybe not until late July, definitely by August. But it does seem like there is a great disconnect here, and that because prices have really remained below 100, we're not seeing the kind of demand destruction that we would need to see given how much supply is actually off the market.
Ellen, is there an expectation that there will, I'm not going to say always, but for the foreseeable future, be a risk premium for any of that energy that comes out of the Middle East, that you just really cannot get comfortable with the Strait of Hormuz no matter what peace agreement comes?
I believe right now we are in we have fundamentally changed the way that oil flows out of the Persian Gulf at this point, because, if you just take the Bab el-Mandeb Strait, for example, and not even nearly that much oil actually went through the Bab el-Mandeb because the Suez Canal can't even handle the largest crude carriers. marine traffic has never returned to where it was after 2.5 years after these Houthi attacks. Now we've got the Strait of Hormuz closed. I mean, that risk premium is never going to go away. Combined with the fact that we're now going to see Gulf oil countries, we're going to see them building more pipelines. They are going to see pipelines as a national security imperative, whereas before it was something that might be nice if you had the money to do it. Now it's a national security imperative, and so I do think that oil flows will be forever changed because of this. Because no matter what, there's always the idea that this could happen again.
When you say that pipelines are a national imperative, who's that good for? Who gets left out?
Well, so that's an interesting story because Saudi Arabia and the UAE have been in a relatively good position because they'd already built pipelines. They're definitely going to be building more at this point to bypass the Strait of Hormuz. But then you've got countries like Iraq, Bahrain, Kuwait, Qatar that are basically trapped. Iraq has a small pipeline that goes up to a Turkish port, but Iraq can start investing in pipelines. Iraq has more options. They can go, all the way to Syria. Potentially, maybe they could go through Jordan to the Mediterranean. And ship oil through there. You're going to have countries that are going to invest in oil storage all around the world just so that they can keep, commercial stocks available the next time this happens. But really Kuwait and I would say Kuwait, Bahrain, Iraq, and Qatar, they're really in the worst position, and they're going to have to work together. They're going to have deals with other countries, with Oman, with the UAE, potentially even with Saudi Arabia, to secure pipeline access so that their crude, or at least a portion of their crude and their natural gas, can continue to flow the next time this happens.
Is there a risk that that whole part of the world, the Middle East, the 20% of oil that flows through the strait, that they lose market share to other producers around the world that, as a buyer on the margin, I'm not even going to talk to these guys in the Middle East?
So that's a possibility, but they always have the potential to lower their prices. Remember, these are big state oil producers. Yep. A lot of them are fairly well capitalized, particularly, say, the UAE and Saudi Arabia. And now there's an opportunity for these other producers to act in similar ways, to buy up storage capacity, to build storage capacity. Say, look, Saudi Arabia, Aramco, has storage facilities in Egypt, for example. They have storage in Japan. They have storage all over the place, and that provided them with a great buffer to continue to be able to supply customers. They can't necessarily change the price of oil, although they can act through OPEC to impact it, but they can make it so that they have more built-in redundancies to be able to continue supplying their customers with oil, which in turn then makes their revenue more secure.
What are the U.S. producers saying, Ellen, about their production goals in the short term and the longer term?
Yeah, that's a really great question. I think we've seen some growth in terms of more wells, but not a whole lot. The question is really, I think producers are looking at these oil futures prices, and they're saying, hey, look, these prices, yeah, they're higher, but how long is this 60% increase going to remain? Is it worth it for me to, diverge from this capital discipline that we've been practicing that has been so profitable, for them, and to expand in a mass way? Or are they going to be looking for incremental ways to, produce more and take advantage of higher prices right now without having to, say, lay out for massive new projects? And I think that really depends on where oil prices go, in the next couple months. And also, once it becomes clear, say, if there is some kind of deal that reopens the Strait of Hormuz, it's going to be a long process. Things are not going to go back to where they used to be. But as that plays out, I think producers will have a better sense of how long they can expect, say, increased demand for their domestic oil in the United States, and whether it pays to invest more and drill more.
Ellen, thank you so much. We really appreciate your time. Ellen Wald, she's the president of Transversal Consulting and a senior fellow at the Atlantic Council, joining us from Zoom from Boca Raton, Florida. I don't know. I'm looking out the window. I'm saying our weather is as good or better than our friends down in Boca.
Oh,
right?
They got nothing on us.
Now, the only difference is I went in the ocean yesterday.
It's cold.
It's cold. It's 61 degrees, so we needed to warm up a little bit. So I'm guessing our friends down in South Florida are enjoying like 75, 77 degree ocean temps. We got a ways to go there, but I saw some dolphins yesterday, so they're happy. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Boy, it's just all about equity markets, new issuance. We had that monster issuance of secondaries, or not secondary stock, but a follow-on offering from Google. Market just sopped that up, no problem. SpaceX hitting the road today for their IPO, looking to price arguably, ideally a week from today, and then trade next Friday. So let's see what's happening out there in the new issue market. Then we have the AI trades coming after that. Those IPOs are going to be monster as well. Bailey Lipschultz, he's busy these days, senior equities reporter for Bloomberg News, trying to make head and shoulders out of this whole thing. Bailey, talk to us first about SpaceX. I mean, there's so many aspects to it which are fascinating. A, it's space. B, it's Elon. C, the total magnitude of the underwriting, 75 large on maybe a 1.8 trillion market capitalization. Where are we? Did they start the roadshow? Are they starting the roadshow today?
Meeting started today. Calls and first interactions with investors formally started today. It's kind of weird. They went a bit ahead of schedule. Normally, you need 15 days from the public flip to the start of marketing. Okay. They went yesterday setting a fixed price range. Our understanding is that teed them up to start engaging with folks in Australia and Asia this morning, as opposed to them being kind of stuck on a one-day delay. Okay. Because the deal is, again, a bit truncated, expected to price next Thursday. So they are talking to investors. This has been I'd call it worst kept secret in capital markets history. So they've had one-on-one meetings, they've had TTWs, they've been meeting with investors, they've hosted meetings at Starbase, they've hosted meetings out in California. So it's one of those circumstances where if you are surprised by anything you're hearing right now, you haven't been doing your work. So I guess the issue is Elon part of the sales pitch? Because if I'm a portfolio manager, in my mind, it's 100% a bet on Elon. That's it. And if I don't hear and see and feel the vision from him, I'm not sure I can write that big a check. What do we know? We haven't heard if Elon is or isn't part of these individual meetings now. What we do know is the 17-minute video, that kind of roadshow, was just CFO Brett Johnson. We do know that Brett Johnson and Gwen Shotwell will be meeting with Jamie Dimon for interactions around retail later this evening. Bank of America also hosting an event with those two. Again, our understanding is Elon is not part of those conversations. When we look back to the trip that SpaceX put together where they rented out, I believe, a 747 and took a few hundred of the biggest money managers down to Starbase, Elon did make an appearance. He spoke, from my understanding, for about 30 minutes, but for all intents and purposes, what we've heard from bankers is it's very much CFO Brett Johnson's show. Does that change? How does that evolve over the coming week? Will be interesting. Interesting. Do we know whether they're going to, again, you're talking about Asia and Australia. Do we know whether they're going to London? That's kind of another financial global hub. The terms we've seen center on the U.S. The one thing to keep in mind is that, again, we know investors from around the world trip to Starbase. We know that Elon has had interactions. So the roadshow, again, they have a fixed price. They have a fixed valuation from our understanding from bankers. It's really kind of the line is set, drawn in the sand. The stage is set. It's a question of how much you're in for or not in for at this point, as opposed to a more traditional IPO where, the CEO, CFO, management team is kind of jet setting around the world. Interesting. One of the there's so many interesting aspects to this transaction, obviously, but one of them is kind of governance. Mm-hmm. If you're a public shareholder, you're basically handing over the keys completely to Elon Musk. Super voting stock gives him complete control of this company. I think he's probably learned a few things from Tesla in terms of that. Is there any pushback on that? Are we hearing any of that from investors? We've seen pushback from, third-party entities. We've seen pushback and heard from different kind of groups that are, upset about things like the fast-track entry rule for the NASDAQ 100, the S&P 500 changing their rules. When I talk to investors, again, if you invested in Tesla, you believed in Elon Musk's vision for robots and autonomous vehicles. If you're investing in SpaceX, to your point, you're investing in Elon's vision. Is it a bit scary from some investors' perspective that you're kind of all in on a guy who is the only person who can remove himself? Yes. But if you've made millions of dollars on Tesla, it's hard to say you want to take your money and go home now. Yeah, and one of the things, again, if I were a portfolio manager, one of the millions of questions I've had for Elon Musk is, where's your attention? Because it's wandered in the past, going into government with Doge
and how do you allocate your time between Tesla and all your other things? I would like to think that this is the priority for Elon Musk. Is that something that we've heard from investors?
Investors have pointed to that, and the inevitable next point is, well, he now has super voting on SpaceX, this whole notion of merging SpaceX with Tesla some point down the road. Elon seemingly has endorsed it. What does that look like? Is that something that really comes to fruition? Again, the big question around SpaceX is not only the governance issue, but truly the CapEx needed for AI, for data centers in space, for this notion that they're going to mine asteroids is tens, if not hundreds of billions of dollars. How do you actually finance that? And what does it look like in the next year and even the next decade?
And what's the lockup again? Isn't there a unique lockup?
There's a unique lockup. Basically, more shares can be unlocked just after earnings, and then Elon isn't locked up for a full year. One of the things that was interesting talking to folks on the buy side is this whole kind of deal has come together was, well, Elon never really sold Tesla. And if his whole vision is to merge the two together, he's not going to sell a year or 20 years from now. But they have had some unique structures where it's tied to performance, it's tied to kind of expediting getting more shares available for trading.
All right, very cool. I'm going to be, like everybody else, I'll be watching this one closely. Bailey Lipschultz, senior equities reporter for Bloomberg News, joining us here in our studio here. Again, they launching today, SpaceX, the roadshow in New York, looking to price next Thursday. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only digital global audio experience coast to coast 24 hours a day. Bloomberg Radio is on Sirius XM Channel 121. It's presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning from Bloomberg Intelligence. We are live in the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Paul Sweeney, Scarlett Fu, and John Tucker bringing you the second hour of our program. And there's not a whole lot going on. If you look at the S&P 500 just on the surface, it managed to recover from yesterday's dip. But there is maybe some rethinking of the AI trade. I mean, at least a knee-jerk rethinking. We're going to dig into all of that. Mandeep Singh, he is our global tech research head here at Bloomberg Intelligence, will join us because Broadcom seems to be the one that is causing investors that opportunity to rethink everything about AI. Mike McGlone, our senior commodity strategist, will join us to talk about Bitcoin. It has been a bad week for Bitcoin. Bitcoin, of course, now down at $63,000. So it's gone through several key benchmark levels. Where does it stand and how low does it go? Adel Zaman is Wall Street Alliance Group partner, will join us to give us his outlook on the markets. And we're pleased to say that Gene Munster, managing partner at Deepwater Asset Management, will join us to talk about big IPOs, SpaceX notably, and then Anthropic after that. First, let's go to John Tucker for our Bloomberg Business Flash. John.
All right, guys, stocks that have, well, been AI winners, giving back some of the big recent runs. Information technology, the worst performing major industry group in the S&P 500 right now. That's home to the worst performing stock in the NASDAQ and the S&P 500. Broadcom's forecast for sales of its AI chips disappointing investors. Isabel Lee is going to break that down in just a minute here. Rotation of other stuff. United Health Group got a buy rating at Bank of America, and that stock is helping lift the Dow Jones Industrial Average higher. United Health Group is up close to 6% right now. Broadcom, that was down close to 15%. And you also have Treasury yields easing with oil prices today. The price of Brent crude, that is down right now. 2.5%, we'll call it. The 10-year yield down 3 basis points. 2-year is 4 basis points lower. And Chris Verone at Strategas keeping an eye on those bond yields.
If you look at this kind of market we've been in, particularly over the last couple of years, money doesn't want to leave the asset class of equities. It's just been sloshing around and rotating from this group to that group. So there has to be some catalyst or some reason why it would leave. And the only thing I can think of is a materially higher bond yield, which we haven't seen yet.
NASDAQ right now down 122 points. S&P 500 up 6. The Dow 805 points higher. That's a rise of 1.5%. You know, with the soaring power bills, federal officials are suggesting breaking up PJM interconnection. This is the nation's largest power grid. It runs the grid from Illinois to the Jersey Shore, in fact. So the new data center straining electricity supplies across the 13 states that PJM serves, pushing up prices and fueling political backlash. I'm not exactly sure, you know, breaking up PJM, how it's going to improve power prices, but there you go. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, John Tucker, thank you so much. Appreciate that. As always, John was just reporting. We got red and green on the screen here. Scarlett Phil and Paul Sweeney live in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Isabel Lee, cross-asset reporter for Bloomberg News. Isabel, what are you looking at?
I brought stocks that are all red across the screen. Nice, I don't know if that's symbolic of something. Not my mood for sure, but let's start with Broadcom, ticker is AVGO. Shares are down bad by nearly 15%. Again, it's really the outlook that underwhelmed investors. It just honestly means that the effort that it's put to gain ground is going slower than anticipated. The AI semiconductor revenue will be $16 billion in the fiscal third quarter. Analysts projected $17.2 billion on average. And we have the CEO saying he will sell $56 billion in AI chips in the year that ends in October. Again, that fell short of estimates. So we also must remember that they're trying to pivot to AI, but they're against outsized investor competition, which sometimes makes you think, should I even try? But I guess
you can't not
should
try,
always
though,
try.
right?
Yes, exactly. And they're also taking a bigger role in helping finance purchase of chips. But yes, they're down by nearly 15%. That's the biggest drop since January 2025.
All right, let's stick with the tech theme because you have another decliner that's down quite large.
Quite large. We're talking about CrowdStrike, ticker CRWD, down by 8%. And if you just put the ticker in your terminal, you see a slew of upgrades, which is honestly a little, I mean, one would think that it's confusing, but I guess they're just seeing it as more runway from here. So CrowdStrike is a security software company. They reported first quarter results and gave outlook that kind of met estimates. And you see a slew of Scotiabank, Susquehanna, Stephens, TD Cowen raising their price targets from a range of 700 to 800. And that's coming from some around 400 to 500. So those are big increases. But even still, investors, again, are disappointed. I guess it's really all about the outlook for here. And stock is down, and we're seeing the biggest drop since at least February.
Five below.
Five below, ticker is 5, F-I-V-E, so I think they won there. Shares are down 14%. We also see, this one now we're seeing some downgrades from them, at least when it comes to price targets. So the stock is down. This is a discount retailer. They reported first quarter results that beat expectations, and they boosted their full guidance for the year. But again, it's the profit guidance for the full year that really spooked investors because they signaled caution because they said that, consumers might not be as strong. We always talk about the K-shaped economy, and I think this is the lower end of the K. An interesting tangential note, I read from Vincent Delaware of StoneX saying that the upper K actually is splintering. So
really?
Yeah. Which was, I thought, but, even for people who are, quote, doing well, they feel the pinch. Like when you go to the grocery or when you do things, everything just feels much more expensive. But yes, we're talking about the lower K on this one because I think everything here is below $5.
Yeah, especially when your pay is not keeping pace with inflation.
Yes.
All right, Isabel, thank you so much. Isabel Lee is our cross-asset reporter here for more conversations like what you just heard. Be sure to subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. It's available on Apple Podcasts, Spotify, or anywhere you listen. Isabel referenced the weakness that we're seeing in tech with Broadcom and with CrowdStrike. So let's bring in Mandeep Singh, our global tech research head here at Bloomberg Intelligence, to talk more about what we're hearing from a company like Broadcom, whose ticker, by the way, is AVGO. So it always gets confusing.
It does.
Avago. That's what it used to be before it was renamed Broadcom.
Oh, I didn't know that.
Hock Tan runs Broadcom, formerly Avago. Is he someone who tends to be conservative in his outlook? I mean, this was a disappointing outlook for investors who wanted more, but is he by nature conservative? Could that be part of it?
I would characterize it slightly differently. He's not like Jensen, who really would always, go big in terms of his numbers, and he will always talk trillions. Hock Tan, on the other hand, is more, I would say, grounded in the sense, like, yes, he would talk in terms of gigawatts, and how he's got more customers now, but he won't make any bold bets around, 4 trillion, 5 trillion. So we didn't hear those sort of numbers. But look, overall, I thought the print was solid. Whenever you see, valuations really go up so much in anticipation of good earnings, and you could say the buy-side bogey was higher and they didn't live up to the estimates. But to me, this is a company that's growing top line over 60%, and it's going to do that at least for the next 2 to 3 years. That's very solid.
So is this a company that is setting the bar low, and is that the way that perhaps some of these hardware companies need to be going into earnings announcements, setting the bar low so that they can easily top it and then kind of wow people at the end of the day?
Yes, and also everyone is trying to triangulate here. If Google is doing more business with Anthropic and Anthropic's backlog is 200 billion, shouldn't Broadcom be getting a piece of that pie? Because that's definitely not going to NVIDIA. Or if it's going to NVIDIA, then is it coming at the expense of Broadcom? And so, that $200 billion number was so big coming from Anthropic that everyone was modeling, Broadcom should be the obvious beneficiary because they make most of Google TPUs. That wasn't evident in the guidance last night, where they said they have 6 XPU customers now, and they will do up to 10 gigawatts in 2027, and it's going to ramp up very nicely. But there wasn't that sort of lift, that $200 billion backlog converting to probably a bigger estimate than what they had guided to previously.
Broadcom, did they make good chips?
I mean, look,
if it's a good chip maker, I'm buying it on the pullback today.
Look at the entire Google TPU ecosystem is all made by Broadcom chips. Like, Google doesn't make its own chips, so it does it in partnership with Broadcom. And now Anthropic, which is the leading frontier model, that was all trained on Google TPUs. And Anthropic gave a $200 billion contract for Google TPUs that's going to go through 2030. So in theory, Broadcom should be a major beneficiary of that Anthropic.
So why is the stock selling off today?
Well, they didn't raise their guidance. Everyone is saying, you already you told me this 90 days back. In the last 90 days, this Anthropic contract came into the scene. Why are you not lifting your guidance more? And it happens all the time.
Okay, so that's the story with Broadcom, and it sounds like it is specific to Broadcom rather than applicable to the rest of the AI world because of that Anthropic announcement.
Yeah.
What about CrowdStrike? The shares are down about 6.7%, modest sales guidance. Again, something that didn't live up to investor expectations.
Yeah, again, a case of valuations front-running a lot of the good news, and they conceded, clearly, coding agents is the big driver when it comes to AI use. And for a company like CrowdStrike that does cybersecurity, they don't have as much exposure to coding agents being used more and more in terms of the data security or, providing cybersecurity around coding agents. They said they are ramping up AI products, but then they were more focusing on general AI use case. Whereas right now, 80% of incremental spend is going towards coding agent, and they didn't really call out that as being a driver of their revenue. So, the market picks these little things where they would measure the bullishness of a company in terms of how much they're raising estimates, as well as what is it that market is fixated on right now? It's coding agents and Anthropic. Well, if you're not telling me that story and that's not your key focus on the earnings call, then people may be disappointed when the valuation is so rich. I think that has changed over the past 2-3 years with this AI. like every data point is being scrutinized to the level of, measuring the supply chains. What are they implying really? So yes, I think that's changed in a big way.
I mean, I feel like there's so much certainty attached to things that is still very, very vague and, kind of big picture. Jensen talks about trillions of dollars.
Yes.
How can you pinpoint things like that?
Well, we're about to put a company in the public markets to talk about putting 1 million people on Mars. I mean, what do you...
That's not happening today or tomorrow or next month or next year. All right. Thank you so much, Mandeep Singh. He's the best of the best. Mandeep Singh is our global tech research head here at Bloomberg Intelligence on the top tech stories of the day. Let's go now to another big story of the day and of the week, really, and that is on Bitcoin. Bitcoin has just been falling through these key levels. It's currently at about 64,000. I was just going to say 63,000. It does bounce around quite a bit during the day. Let's bring in our Mike McGlone. He is our senior commodity strategist. Mike, what happened with Bitcoin this week?
Ian calls it bit dog. It just went up way too much. What we're finding out about Bitcoin and probably putting a pretty good peak last year on the back of Mr. Trump's election, ETF's launch, what it did is it had the best back test in history. Then it went mainstream, and now we're realizing Bitcoin basically was one in 2009. Now there's an unlimited supply of similar cryptocurrencies. So it's a space that I look at as a commodity person, unlimited supply, a lot of volatility, high correlation to the stock market, and very poor performance. So what's happening now, it's just breaking down support. I think people are seeing the limits of it. The key theme I'm worried about it was a great leader on the way up for risk assets, i.e. it was launched in 2009. It was a great time to buy a stock market, and potentially might be a leader on the way down for risk assets.
So, I mean, when we think about crypto here, how does technical analysis figure into this? Does that work for a commodity or an asset like Bitcoin?
Well, Paul, you can't see me smiling on the radio, but I am, because you have to use something because there's no underlying fundamentals except for stablecoins. The most bullish part of cryptos is the increasing assets under management of stablecoins. One thing I want to point out there is Tether is number 3 right now. It's probably going to be number 1 eventually. That's been the trend. But so technical analysis is used a lot because the main purpose there, most of these things are used for is speculation. And that's what I just keep pointing out. There's millions of cryptocurrencies worth billions of dollars, so we just need to purge that, and then we can go back to a decent foundation. So I'm still looking for Bitcoin. The next level is probably around 50,000, and it might have to get down to 10,000 to purge all the excesses. All in with one. Dogecoin, well, Dogecoin right now is like number 9 or 10. It was launched as a joke. It's worth about $15 billion. It probably should go to 0, and to put that in context, that basically is the amount that people say the average cost of the war we've had in Iran so far.
Okay, that is good context. Mike, one thing that did happen this week, or at least we learned this week, is that Strategy, run by Michael Saylor, formerly known as MicroStrategy, sold a portion of its Bitcoin holdings, which they had kind of indicated they would. It was only $2.5 million worth, but the fact that they sold is significant nonetheless. What kind of signal does that send to the Bitcoin faithful as well as those who are just kind of dabbling in Bitcoin?
The lessons of commodity trading: don't buy and hold, you sell high and buy low. And I really thank Michael's strategy, because he gave me a great signal back in 2020 when Bitcoin was around $10,000. He jumped on board. I was looking for it to add a 0, and it did. But what did add a 0 and went up 10x, in a year or 2 years ago, he double-dogged the market gods and made fun of Warren Buffett for not being in that. And he's learned the lessons. You never double-dog the market gods after they give you a 10x. You give some back to the market. He didn't. Now I think the worry is most people are expecting, like me, that he needs to be stopped out before we can put a bob in the market. Because the problem with Bitcoin, it's only one, and then there's millions of other similar type of cryptocurrencies competing for a similar space.
Mike, I look out the window here in New York City today. We're going to do mid-80s and sun. Can you beat that down in Miami?
No, we're blaming it on my colleague from London who brought the rain. We got a little rain for a little while, but that's okay. We'll get over that.
It does look a little cloudy behind Mike.
Oh, boy.
I mean, usually you don't see gray behind Mike. It's too bright, you know. He's
Exactly.
almost washed out.
Exactly. But the good news is all the snowbirds have left, so Mike and his wife can get reservations at their favorite,
That's what
restaurants
matters.
and stuff. Yeah, exactly. Mike McGlone, thanks so much. Appreciate it. As always, Mike's a senior commodity strategist for Bloomberg Intelligence. He is manning our Miami office down there, doing a yeoman's work down there. S&P up $20, turning positive there. How about that? The Dow's up 870 points. The Nasdaq's down 44. points right there, about 0.1%. The Russell, higher here today. The Russell small cappers are up 1.4%, so we'll keep an eye on that.
So no two-day decline for the S&P 500, which hasn't happened in about 2.5 weeks.
Is that right? Okay.
Yeah, yesterday the S&P and NASDAQ snapped a 9-day winning streak, and now we've resumed our rally. So the melt-up continues with a bit of a pause.
All right. Oil, it's lower here today, $3 and change, just under $93 a barrel for the West Texas intermediate crude. More coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So it's a rotation out of the chip makers into a broader set of stocks today. As the Dow is rallying, the NASDAQ is down, although it's paired some of the earlier losses. And, of course, the stock to talk about today, Broadcom's underwhelming outlook, testing the artificial intelligence trade that, of course, has powered the market in recent months. We're also seeing a decline in oil prices after this conditional ceasefire between Israel and Lebanon. And that decline in oil today giving a lift to some of the travel-related stocks. For instance, Norwegian Cruise Lines, that is up right now 4%. Brent, the active contract, down close to 3%, $94.99 a barrel. The 2-year yield down 4 basis points. The 10-year yield down 3 basis points right now. Overall, the S&P 500 of 15 points. That's a rise of 0.2% at 7569 in the index. The Dow Jones Industrial Average up 854 points. That's a rise of 1.7%. Again, United Health Group doing a lot of the heavy lifting there. Those shares up right now 6%. And the Nasdaq Composite Index 66 points lower. That is down about 0.25%. I guess we call this a milestone because the world has its first, over $1 trillion ETF. The S&P 500 fund, Vanguard's S&P 500 fund, the ticker symbol VOO.
VOO, for those in the know, John Tucker. That's
and
how Eric
I'm not
Balchunas
quite
calls
sure why you want an index fund as an ETF format.
Cheaper.
Well, I guess cheaper, but you'll recall that at Vanguard, you got to talk about Jack Bogle. He was never too hot on that ETF format.
He was also not hot on active investing, and they also have active ETFs as well. So things have changed over in Conshohocken.
Yep.
Or Valley Forge. Where are they based? Valley Forge? Conshohocken? You have to get through the Conshohocken curve to get there.
That's a good, I'm glad you got that pronunciation.
Wow. Very impressive, Scarlett. And we check the markets for you and other stuff right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
Thank you, John Tucker. You can't keep the stock market down. Yesterday, we had a decline, the first in 9 days, I believe, or 10 days, ending a 9-day rally. And it looked like we were going to get a back-to-back decline today, certainly in the first hour of trading, but that's no longer the case. The market has recovered, and the S&P and the Dow are higher. The Nasdaq still remains in the red. Adil Zaman is partner at Wall Street Alliance Group, and he joins us now in the studio to talk a little bit with us about how people are viewing investing in stocks right now, given that things feel overextended, especially when it comes to those big tech names. And we see that with the extreme reaction to Broadcom's disappointing outlook. How are people talking to you about their exposure and what kind of exposure they want to tech?
So as far as tech is concerned, we think that that's basically the phase one. That's what we are calling the AI winners. And we think that those companies did benefit a lot. But right now, what we're also seeing is that if you look at the Mag 7, they're actually underperforming. If you compare the NASDAQ returns and Mag 7 returns up until Tuesday's close, it's less than 50% of the return of the NASDAQ, right? So what we are talking to clients about is just even within tech, you have to be broad, you have to improve your breadth. And the other thing that is very important right now, extremely important, is right-sizing your positions. Because if a stock is up like 500-600%, it's very easy to get 15-20% of your portfolio invested in that. So make sure that you're booking some profits, make sure that you're right-sizing your positions. That's how we are framing it with our clients.
How are you framing the AI story? Because I think maybe 3 years ago when we first started really hearing about this, and we got some crazy CapEx numbers, and we got some crazy numbers out of it, NVIDIA. It's gone from just buying the chips, which is still a great strategy, as you see with the stock in the stocks. How else do you play AI in your mind?
I think we've identified 3 phases of AI, which is phase 1 is the AI winners, which is, as you said, the chips, the hyperscalers. Phase 2 is that where's all this CapEx spending going to go to, right? This $800 billion that the hyperscalers are going to spend this year, who's going to receive it? There we are talking about the AI enablers, which are the brick and mortar companies that are building the infrastructure for AI. Think utilities, think construction, think industrials. And then the third phase is AI beneficiaries, which are companies that are now actually implementing AI into their businesses and seeing some cost savings there, seeing some meaningful productivity increase. I think a lot of times what we are seeing is that people are just focused on phase 1 and neglecting phase 2 and phase 3. So we are advocating to clients, we are working with clients that making sure that the exposure is there across all phases of AI, not just the first phase, which is easy to miss.
And of course, at some point, you want to have something other than tech in all its different forms. You want to get to industries that are also in the news. I think about energy, for instance, or utilities. They might be adjacent to tech, but they're not in the white hot spotlight.
Absolutely, and it's a lot about diversification. So for example, if you look at the market today, some of the sectors that are up are sectors like energy, right? So it sort of balances it out. And I think that diversification, making sure you're into utilities, making sure you're into energy, not just focused and hyper-concentrated in tech, is really the key.
Yeah, energy, by the way, the best performers of the year, up 29%, almost 30%, whereas the tech index, sub-index, is up about 24%. What about international? Are people still obsessed with the U.S. and kind of overlooking what opportunities might exist outside the U.S.?
I think so. I think it's an under-owned sector right now, international. So it's very important to, and what, from a cyclical point of view, it works as well, right? So when the tech bubble burst, for nearly a decade, international outperformed. And we are coming out of a 14-year cycle where US has outperformed, and I think that cycle is now changing, starting from last year, going into it this year. There are much better valuations available. There's much better breadth available in the international markets. So we do really like international here.
Yeah, Paul, I'm looking at the Nikkei up 34% year to date versus the S&P's 10% or the Nasdaq's 11%.
Yep, absolutely. How's market sentiment out there? It seems when we get a lot of these big new IPOs, it signals this market's in good shape and companies are rushing to raise capital. How do you view investor sentiment out there?
There are two schools that we are seeing. You know, we are seeing some clients that are cautious and that realize that, you know, at some point there could be some type of volatility or pullback in the market. There's one set of clients that have a little bit of FOMO, right? They have this fear of missing out and they don't want to miss out on the latest technology. They want to be invested. So our job as advisors is to help them balance it out. Because at the end of the day, AI is here to stay. Economy is doing well, right? So you want to stay invested, but you want to invest in it the right way. And that's where we are guiding people.
How does fixed income fit into your portfolio? We have seen treasuries not really serve as the safe haven that many people had expected. And there's obviously a lot of big concerns about structural issues with our fiscal spending.
Sure, yeah. I think that for us, the way we have always viewed fixed income is from an asset allocation point of view, just a diversification. And for clients, a lot of our clients are physicians that are, you know, in their 60s, and they want safety. And for them, high quality fixed income is a key part of their portfolio. We tend to do about 20 to 30% in fixed income, just as a balance out of their portfolio.
On the flip side of that, how about alternatives? Because I've been surprised at how many advisors, or the allocation that advisors are putting clients into alternatives. How do you guys think about that?
Yeah, I think sometimes advisors go overboard with alternatives, right? And we tend to be a little bit more cautious there. What we do like a lot is gold. I think that serves as a natural hedge in the portfolio, right? Whenever there's geopolitical tensions, gold tends to do well. If you feel that the dollar is going to become weaker, gold tends to do well, right? And last year was a classic example where we could optimize the risk-adjusted returns for our clients by having exposure to gold. Some portfolios we had 3%, some portfolios we had 5%. It went up more than 60% last year. So we are playing the alternative that way.
Anyone asking about private credit and private equity? I mean, there's been the golden age of private credit was 2023 to 2024. We're definitely seeing some cracks in the foundation now. And you now have Blackstone limiting redemptions from one of its funds. So we're seeing this happen quarter after quarter. Are people seeing opportunity there, or is this something that they want to steer clear of?
I think it hasn't. We deal with a lot of physicians, a lot of retail clients. It hasn't caught their attention as yet.
Really? There's, I mean, the industry is doing a hard sell.
Yeah, in the sense that the fear of private credit, right? That fear hasn't caught on to them.
I see.
That's what I meant. So that hasn't caught on to them as yet. So yeah.
They're staying. They're not ruffled.
They're not ruffled by that. Yes. So
are your clients saying, I want to get in on this SpaceX IPO. I want to own Anthropic and trying to scrounge up some shares for me? Are you getting reverse flow interest?
Of course. Yeah. That's always, you know, like whenever there's these type of sexy stories, people always want a piece of it, right? But so we talk to our clients. We remind them what happened with Meta, if you remember.
Yep.
Came out with the IPO, shot up, then shot down, and that was the best entry point. So we sort of, we understand that these are, especially in the case of Anthropic, really good company, but you have to be careful about valuations and you have to look into piecing into these type of positions. So that's how we are guiding them.
Is this something that people are going to try to get into? It'll be difficult to, especially in a case like SpaceX, which is not making a lot of shares available, but it will be included in indexes eventually. So without much of a choice, people will be exposed to it anyway.
Sure. Yeah, that's true, and that's why these positions could potentially continue to go higher in the long term because their indexes will have to take part in them as well.
How do you guys utilize ETFs? That's been such a growth story on global Wall Street over the last decade or so. How do you guys use them?
So we use them in our portfolios in a way that it helps us diversify, right? Especially in certain sectors. So for example, we like Mexico as an example. Why do we like Mexico? Because their relative tariff rates are very low, so their exports to the US are increasing. We like Japan as well because we think that that's a great way to get exposure to developed markets. For those two, we do the iShares ETF, right? And we get exposure that way. So whenever we want some specific exposure where we think it's safer to go with the ETF, we put it into the portfolio and overall make sure that our asset allocation is on point.
So it sounds like for exposure, you go to ETFs for beta, but you're not necessarily doing it for alpha.
Correct.
Awesome. All right,
Taking
Adil, thanks so
advantage
much.
of those low fees.
Yep, exactly right. Adil, thanks so much. We appreciate it. Adil Zaman, partner at Wall Street Alliance Group here in our Bloomberg Interactive Broker Studio. Want to continue the tech discussion? We can do that with Gene Munster, managing partner at Deepwater Asset Management. Gene, got to start with the big one here, SpaceX. What's your call to your clients?
This is a fundamental company to own for the long term. And let's just skip all the noise around what's happening with the IPO, the trading over the next month. There's a lot of dynamics in that. My sense is that it probably moves up and then might move off a little bit as some of those lockups get released. But I think what's most important is where this company is going. And like him or not, Elon is a generational founder. And what he's put together in terms of building a sovereign AI company, that's everything from chips to energy distribution, that piece is unique. And if we take the approach that having vertical or sovereign AI is a competitive advantage because you can innovate faster and distribute faster, if that is true and you believe that AI is going to ultimately be foundational to humanity, I think this really sets up as one of those generational companies to own. And so I think you kind of got to look at the conversation in two pieces, but this company really does stand alone when it comes to its unique set of assets. And it's, I think, just a very exciting time in tech.
You know, I was talking to some sell-side shops. It appears like the aerospace analysts are going to cover this name. I'm wondering how the company, how the underwriters are going to position it. You kind of gave us the AI angle here. It's a space company. I don't know what this thing is. They're talking about putting people on Mars. It's tough to position, don't you think?
I think that it's tough to position if you kind of look at where they have been, I think, over the long haul, thinking about kind of their rocket business. And I think that if you look at what they've done over the last 1 and 3 years, I think it's easier and easy to position. Also, if you think about what is at the core of Elon's most passion, which is AI.
Yep.
And he's had electrification, he's had other businesses, but really AI is kind of his violin concerto. And so when you think about this $1 trillion revenue target that they have for 2030, they're going to do, $40 billion this year. I mean, that's a meaningful step up, is an understatement. But when you think about that trillion, they didn't break out in the S1 where the contribution comes from. But my sense is the majority of that is going to be somehow AI related, whether it's connectivity, subscription services, third parties like Anthropic using some of their capacity. So I think that the AI piece is going to be what this company is all about. So I want to go back to your earlier comment, which is this company is going to be covered by space analysts and kind of that side of it. I think it's a miss, and it reminds me back in 2004, 2005. I was an analyst that was covering consumer tech, and was the first to pick up Apple as a kind of a device company at the time, just on the heels of the iPod. And the entire coverage universe, now keep in mind, Apple was like a $4 billion market cap at the time, but the entire coverage was based on them being competitors with HP and Compaq, and it just missed the point.
Yep.
So I think what we will see here is this narrative around specifically is that their biggest revenue opportunity is in AI, and I think that's where it's going to be positioned. I would just say this is, I mentioned all of the this breathtaking growth that's expected and how unique these assets are. I think the biggest challenge for SpaceX is this is a company that a lot of the employees are passionate about space. I mean, if you look at Starbase, I mean, this whole concept, I was down for one of the Scrubber launches recently, and the concept of Starbase, I think, is just really surprised me. I think it's underappreciated, the city that they have built and will continue to expand. But I think one of the challenges is just in terms of culture. Imagine being an engineer and you've moved your family into the middle of nowhere in Texas. You're living on a city that essentially Tesla or that SpaceX has made, and you've had this passion around going to Mars, and then you go public on this inspiration of being an AI-first company. There's that piece to it, but beyond that, AI is really core to that, and I think that's where the followership from investors is going to lead to in the months to come.
SpaceX is in the portion of its process where it is holding its roadshow for investors, and what we know of it so far is that it has a 17-minute video presentation in which the CFO, Brett Johnson, appears. What do you hope to learn from this roadshow, or do you have all the information that you need in order to, move forward with how you believe this company is positioned?
Well, I've been studying the company for a long time. I think I've got a good sense of, undoubtedly, I'm going to watch the presentation. What I do hope to learn is more about how they're communicating this kind of acceleration and growth, because that ultimately comes down to how the value is going to be created over the long term. And they don't have to, of course, hit those numbers, but that's the specifics. Is this $1 trillion number? I think they talked about a $42 trillion market opportunity, but just some more specifics around that. Undoubtedly, he will be asked around that. Give us pockets. Of that $1 trillion, is it $200 billion in cloud getting served to third parties? Is it their launch business? Some of the kind of the details around how to get there.
Right.
Whatever his answer is, the street is going to run it through the Elon filter. And he will undoubtedly stand up and say, these are the real numbers. These are the numbers we feel confident in. And when you think about putting the filter on those numbers, we have to do some of that.
Yeah.
But when we think about it, just think about what they've done over the past month and a half. I mean, they've done this Anthropic deal. They're launching rockets. They're preparing for an IPO. Yep. This company, I can say, is just an intensity level that can do things that are very hard to do. So what I'm saying is, don't put it through too much of a filter. Right. $1 trillion number.
Gene, always a pleasure speaking with you. Gene Munster, he is the go-to guy for all things in investing in tech, managing partner at Deepwater Asset Management. We've been talking about tech. Let's talk about AI's impact on the economy. And for that, B-Tech anchors speaking with Mary Daly, the president of the San Francisco Fed. Let's listen into their conversation.
It's really people in the middle, as you said, who are using that technology, thinking about it, and I've seen tremendous interest in it last year, and now I am seeing tremendous investment in it, thinking about how do they train their workforces to be AI ready? How do they think about what AI can do, not just in the back office, but in the front of house of operations? And we're seeing this in small businesses, medium and large, in global companies and more regional ones, and importantly, in everything from agriculture to machining and building things to services. And I think that's really the place. We haven't seen widespread productivity gains yet. The ROI is still to be developed, but I'm definitely seeing the enthusiasm, and it's picked up tremendously in the last year.
We haven't seen the productivity gains yet. You're being very clear on that. As you remember, I asked you over and over again for an hour, please show me the productivity gains. But in the economic data, whichever set of data you want to look at, do you see an impact from AI, negative or positive?
It's really hard to take, we have had productivity growth that's been outside of the historical norm, and I think that's a positive for the U.S. economy. Everyone wants to say that's AI. what I think of it is as, sure, it's possible that businesses are looking for cost savings and they hire fewer workers and they do just as much because they're using, you know, an LLM assistant to help. But we just haven't heard from businesses that they're seeing transformative, ongoing productivity gains yet. And they want to always underscore yet. And so then I said, well, what's the time frame? And they said, next year, year after. Because what we know is it isn't just about getting a model and using it for things or an agent. It's about transforming your business processes so that you really take advantage of things we don't even think about today. What can be done differently that will transform the economy? So that you can definitely find a single business or sectors who are using it and seeing the gains, but we haven't seen that across the economy going forward. But I'm pretty bullish. I see the possibilities, and I'm hearing more and more that people are seeing early rewards and really recognizing that next year is the litmus test.
Look, bullish is an interesting turn of phrase. Today, putting aside the slight dip in the market, the exuberance that we have seen in financial markets to want to back these companies, and we're about to get more public companies coming, more liquidity, more money. Is that in and of itself a financial stability issue? Are you worried about the markets riding so high?
You remember, you know, who's doing most of this investment, the Mag 7, who's really there. This is actually something they can do and fund, and their enthusiasm is real. They see what's possible. But I don't think that we should think, oh, there's financial stability concerns just because the market's gone up. It could go up or down as it has in the past, but a financial stability issue would mean it's spread to the banks, it's spread to consumers or businesses. Right now, I'm not seeing evidence of that. We keep our eye on it for absolute sure, but what I am seeing is that companies, other than the technology enthusiasts, companies outside of technology are using AI to think about how to do their business better in real ways. I mean, I was just meeting with some make machines for a living. That's what they do. And they're thinking about, how do I scan in 50 years of plans of these machines I've built for companies and then use those plans and a model to generate innovative new ideas of things I can sell that will be faster, better, cheaper than things I've sold before. We toured a robotics company that builds things that help manufacturers do better in terms of shipping and distribution. These are real things that do have a capacity to change the economy. So that's the underlying part of my bullish. It has less to do about the investments that tech companies are making and more about the investments that everyday regular companies that make things and provide services, the things they're doing.
President Daly, inflation is still the biggest risk. And you know, those are not my words. We heard it, you know, all week long at the Bloomberg Credit Forum, for example. One of the things that you and I have discussed in the past is the massive capex commitment, build out of data center, in conjunction with a bottleneck in some core areas like memory, inflationary, or is it disinflationary? You know, that's the thesis that, like, a utility of PG&E would argue, disinflationary, because the big guys are buying in aggregate. I still don't understand where we are with that.
It's a timing issue, in my judgment, that, you know, in the beginning, of course, when companies want to invest in big construction projects, a lot of electricity demand, then the companies that are providing those things or areas that are providing those things are going to see competition for the limited amount of services they have. But what they're building creates the infrastructure. The data centers create the infrastructure. Or if the big guys come in, as you just said, and help with electrical plants that help with electricity generation, that eventually can help with the prices of those things.
But not here and now.
But you just have to think about the timing. And one of the things is really important in policymaking is that we not assume we know. We actually look for the evidence of what are we seeing in prices today? What are we seeing in, what is the forecast of prices tomorrow? And then how do we think about policy? So right now I'm focused on, you know, other energy prices, oil prices, and food prices are driving up inflation. But we do know that down the road, these things could maybe compete for services and cost and raise costs, but we haven't seen real evidence that that's the limiting factor. The limiting factor seems it's hard to get generators, it's hard to get the infrastructure equipment you need, and so you see the big tech companies thinking about solutions they can provide for themselves.
The inflationary data must be fascinating here in San Francisco. When I think about all these companies potentially going public, what that means for the employee base, what that means for your house price. and the ability to be able to buy yet more real estate here, what it means for the cost of labor as well. Is there an inflationary pressure that you're seeing here in San Francisco?
I've lived through, so I moved to San Francisco in 1996, and then we had the dot-com, and I know what it feels like to not be able to rent a place that's affordable because you had people who were making many more orders of magnitude. And I was, in a position where that's manageable, but that's what's happening is people feel like they're getting crowded out because other things are happening. But that's more about the supply of housing than it is about the demand for housing. We want people to come and invest in this community. We want the city to thrive. We want regional activity to thrive and employment to grow. But as you said, the more interest people have in living in a place, if you have limited supply of housing, then you're going to have a run-up. So those are the things that not the Fed, but other policymakers, other federal policymakers and local policymakers like the mayor are working on. But it looks very, you can see the elements of 1996 already here, where there's productivity growth, there's enthusiasm, et cetera. But the data
Is it a bubble? Is there a risk that we're in that same?
The dot-com was very different than the AI boom. And so I just want to, there's a lot there that's already being put into businesses, and it's very pervasive. It's not just the dot-com. So I don't jump to the conclusion that if it has similarities to the 90s, it's going to be the 90s.
Well, if I may, President Daly, you went out and did some of the most important work in that era of how the advent of the internet would change the economy. Look, so you've kind of established where we sit right now. Inflation continues to rise. How likely or unlikely would that make a rate cut in 2026? How do you tie the two together from this juncture onward?
I think one of the questions I get asked regularly is what's the path for the rates going forward?
Yeah.
And the answer I give, because this is how I really think we have to think about it, is we don't know how the economy is going to play out. We have, as we've been talking about, this tremendous possibility with AI, but we have at the same time the war in Iran that is with an uncertain end, which has pushed oil prices up and fertilizer prices, which have filtered into food prices. And right now, those are fairly contained. And if you look at the futures market for oil, it's $80 a barrel by the end of the year. But, we have to think about that. And so right now, policy's in a good place. We are prepared to respond either way, whatever the economy brings. But I think giving more forward guidance about what's possible could be misguiding in the end, because we just have to wait for the economy to evolve. Everybody wants to resolve the uncertainty today, but I think that's a mistake, because it will close off our mind about what we really have to look at. The inflation risk possibility, but also the possibility that the war ends, oil prices come back down, and we're back to the underlying dynamics with some of the positives of AI we've been talking about.
Can I ask you about the labor market as well? Because you've tried to bring this transparency of how you're thinking about things with your blog, for example. And one of the really interesting ones that I was reading and captured my attention was the idea that we've got zero labor growth now. Immigration's changed, the way in which demographics change. Are you feeling like we've seen some improvement, some resilience in the labor market? Is it strengthening? And will that hold?
Has it firmed?
Yeah.
I think it's too early to say firmed. I think there's always statistical error, so you can bounce around from month to month. But if I was one of the policymakers who were a little worried about the labor market at the end of last year, was very supportive of the cuts that we took to stabilize conditions there. So relative to that point, I think we've really stabilized. And I'm starting to see businesses feel a little more cautiously optimistic, which will feed through to hiring. But they're not being they're not just running out to hire people. They are being cautious.
Right?
They can get an agent. They're interrogating how much AI can do for them before they hire. And, regularly we talk to our businesses and they say, we don't want to hire a bunch of people. Find out AI can do certain things, and we need a different set of skills. So we want to wait. We want to be patient on our hiring and make sure we're not over hiring, because if you ever go through a period of time where a business has to lay workers off, it's a painful experience for the workers and for them. And so they just don't want to get overly confident only to find out they have to make adjustments. So that caution will be with us for a bit.
We are live on Bloomberg Television and Bloomberg Radio. We're in San Francisco and we're at the Bloomberg Tech event, and we're speaking with San Francisco Fed President Mary Daly. Reset a little bit, but if I may, it's the first opportunity we've had to ask you. Have you spoken to Chairman Warsh about how he sees the Fed evolving, about changes to the institution? And if you may, fold in the context of your district, San Francisco Fed, yes, much more than that, and your role going forward.
Sure, absolutely. So, I think what we really want when any new chair comes in, and what we want from all of our leaders of Federal Reserve banks and all of our governors, is that you're thinking constantly about how can the Fed be better? How can it better serve the American people? How can we do our work more efficiently, more effectively, and more resiliently? Ultimately, everything we talk about is put between two bookends. We are fiduciary stewards of public trust, which means we better have services that people can depend on, and we better work hard to achieve our goals. And we're fiduciary stewards of public funds, which is we are very careful about how we spend taxpayer dollars. So with those two things in mind, I mentioned I joined the Fed back in the 90s. So I joined the Fed in the 90s, and we had check processing. Remember checks? We had check processing.
I still have to write loads.
Everywhere we had a location, we had people who processed checks. But then check demand started to fall, and so we consolidated those activities into a few locations. And that level of modernizing, constantly thinking about how can you do better is what I see now.
So what is the chair's equivalent of that present day?
He just joined, so I'm going to give him the right time he has to announce that. He's talked about making sure he's holding on to that tradition, and he comes in with a lot of ideas. But what I've heard him say again and again, which I really appreciate, because he's the 5th chair I've worked with.
Wow.
All of the chairs I've worked with have the same basic compass. It is to do our best work for the American people and work with all the individuals who are earnestly doing their work in the Fed to do it well. And I see that in Chair Warsh.
That earnest work within the Fed, how much of that is being modernized to adopt AI? How hard or easy is it at this moment when you're such a regulated institution in and of yourself?
Well, we're careful, like all regulated institutions, and importantly, like all businesses. Businesses, when I talk to businesses, the last thing they want to do is take huge risks that destroy their shareholders, the value of their company. The same is true for us. So good fiduciary stewards of public trust and good fiduciary stewards of public funds, which means we're always driving to adopt new technology to do our work more efficiently, but we recognize we have to do that safely. People want to know they get their money when they need it. They want to know that the banks are well supervised. They want to know that monetary policy is not made by machines, it's made by people, making judgments not only about models and rules, but also about the lived experiences of people across our country.
Very quickly before the show ends, what are you seeing in credit? That's a big story for us in how data centers are financed. For some, it's very worrying.
Well, we're watching that carefully. I watch that carefully. What we do see is that there's those companies investing a lot of their own resources in those. So it's something to keep our eye on. But at this point, again, if you stack rank the things that are worrying today, I'd say getting inflation back to target, getting Americans the relief they deserve that we've been working on for quite a while, that's my #1 priority.
San Francisco Fed President Mary Daly, you've been very generous with your time, and we always cover such a broad spectrum of topics. Really grateful to have you here with us in San Francisco at the Bloomberg Tech event.
Yeah, what an event it has been, what an event it continues to be.
We're just getting started.
I know, that does it for this edition of Bloomberg Tech, the show.
All right, that was Bloomberg and B-Tech Ed Ludlow and Caroline Hyde from the Bloomberg Tech event in San Francisco. Best place to have it, right there in the center of technology, Silicon Valley. They were speaking with San Francisco Fed President Mary Daly about this Federal Reserve and the new Fed chairman, which has recently taken his position. And we'll see how the Fed performs going forward as it looks to work on its dual mandate here. Just looking at the markets here, we got the S&P up 13 points. The Dow's up 850 points. The NASDAQ, due to the decline in Broadcom, down 100%, 0.4%. Definitely off of its lows there. Just looking at we've been talking a lot about SpaceX, and the SpaceX roadshow started today here in New York City, and they look to price this deal a week from today and then have it priced on the Friday the 12th. So that is kind of the schedule at the moment. And they have a 17-minute long video presentation of the company's efforts. And you can find that website, and you can find that video hosted on the company's website, which is spaceipo.com. So just taking a look at that. And it includes Brett Johnson, who is the chief financial officer of the company. He tries to, I guess, join the dots, if you will, of their three main businesses: the rocket business, the satellite business, and their AI business. Elon Musk does not appear on the video. It's just Mr. Johnson, the CFO. But he says that Elon started SpaceX with the goal to change mankind and makes us a multi-planetary species, Mr. Johnson said. What has been very exciting is we have been able to expand that vision with our Starlink constellation as well as with our AI solutions. Video's a little light on details. The roadshow details a handful of future targets by an unspecified date here, including lifting gross margins to around 70% from 49% last year, and to generate nearly 45% net income margin versus a negative 26% last year. So Mr. Johnson says, we achieve what others think is really the impossible, he said, highlighting achievements like becoming the first private company to send a liquid-filled rocket into orbit, the first to successfully dock a spacecraft at the International Space Station, and to develop a fleet of reusable rockets. So we'll see how this plays out. So there's a lot going on here. They're going to need approximately, the underwriters have said that they're going to allocate approximately 30% of the deal to retail investors. That's a little bit higher than usual. Maybe 15 to 20% might be the norm on a typical IPO, but this is anything but typical, starting with the absolute size of the transaction. All right, just wrapping up this morning trading here. Again, the S&P is up 15 points. The Dow's up 850. That's 1.7%. The Nasdaq's off 80 points, 0.3%. That is off the low for sure. 10-year Treasury yields come in by about 3 basis points, 4.46% there. Oil's moving lower today after the rise yesterday. It's down about $3 per barrel for WTI crude oil, now sitting right around $93 a barrel. Brent crude down about $2.70, $95. So a little bit of a premium there for Brent, as we're used to it. Bitcoin, Tom from the Upper East Side, asking for a quote, down 1.6%, just under $64,000 per token. Looking at the DXY index, sitting right at 99.3, a little bit weaker today against some of the major currencies. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a minute. Again, the S&P up 14 points. The Dow up 850 points. United Healthcare pushing that one higher, along with Goldman Sachs. NASDAQ down 84 points. That's 0.3%. The VIX below 16. We'll have more coming up. This is Bloomberg. Good morning.
From ABC News, I'm Brian Clark. Former National Security Advisor John Bolton is going to plead guilty to charges of mishandling classified documents. ABC's Catherine Falder says this follows a raid last summer.
And the FBI went to his home. They were at his home, entering his home, carrying out boxes of what was believed to be information on classified materials, if you will. So they obviously have been reviewing those documents, and they have alleged that Bolton had a number of them.
Sources tell ABC Bolton's agreed to pay a fine of more than $2 million. This will be the first successful prosecution as part of President Trump's retribution push. The president on social media said that Republicans who voted to limit his war powers in Iran did an unpatriotic thing. ABC's Karen Travers of the White House said the vote was largely symbolic.
4 Republicans joining Democrats to limit the president, requiring him to remove U.S. forces from Iran unless Congress approves military action. We have seen similar resolutions fail before. Of course, Republicans have that very narrow majority right now in the House. This will now go over to the Senate, but it will not likely end up at the president's desk because of the nature of this resolution.
The Supreme Court upheld FCC penalties against the nation's 2 largest wireless carriers, Verizon and AT&T, for failing to keep cell phone user location data private. The FCC had assessed more than $100 million in fines. For the first time in 13 years, Walmart is not tops on the Fortune 500 list, says ABC's Sherry Preston.
The Fortune 500 ranks companies based on revenue, and in 2025, Amazon's revenue grew by 12%, thanks in part to its growing web services, cloud computing, and advertising businesses. The venerable Walmart is still king when it comes to retail.
A Boeing 787's front landing gear collapsed at the gate in Frankfurt. No passengers were on board, but several Lufthansa employees were hurt, and the flight to L.A. canceled. You're listening to 8. With Americans already paying record prices for beef, a pesky new arrival's threatening to push prices even higher. It's the New World screwworm detected on a ranch in deep South Texas.
The mere threat of a screwworm infestation has prompted a ban on imports of live cattle from Mexico, sending the average price for a pound of ground beef to nearly $7. And while infected animals can be effectively treated, the arrival of the pest on a South Texas ranch has grocery stores and butcher shops bracing for new price increases.
That's ABC's Jim Ryan. A concerning incident at a TSA checkpoint at a California airport. Authorities say they arrested a man who tried to get through security with an explosive device in his carry-on. ABC Chief Justice Correspondent Pierre Thomas has more.
The bizarre incident unfolding just after 9 p.m. on Saturday, with a suspect showing up at a TSA checkpoint at Sacramento's airport wearing a scarf covering his face and latex gloves. Authorities say when they checked the carry-on bag of Kamani Jones, they discovered an explosive device, a torch lighter, as well as a knife, scissors, blades, and zip ties.
According to the TSA, if the explosive device had detonated next to a window on a plane flying above 10,000 feet, it could have caused significant damage and a loss of cabin pressure. Melinda French Gates is pushing again to help women around the world. She's pledged $215 million for contraceptive access and maternal care, as well as initiatives for middle-aged women. I'm Brian Clark, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Gather round, kids. It's time once again for the Votorama. Welcome to the Thursday edition as senators kick off debate on a reconciliation bill aimed at funding immigration enforcement now that the Anti-Weaponization Fund and the President's Ballroom have been excised. And as amendments start flying here, we're going to get the latest from Bloomberg's Eric Wasson. He's live on Capitol Hill in the middle of it all, and we'll have analysis this hour from our political panel. Iran says no progress has been made in talks with the U.S. We'll get the latest on the stalemate when we spend some time with Bloomberg's Michelle Jamrisco this hour. But let's start on Wall Street, where we're still traveling in both directions today. Charlie Pellet has the latest from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Let me throw in a third direction. Yes, the Dow, the S&P, they're both higher. We got NASDAQ moving lower, but that third direction I'm referring to is the price of crude oil. Yes, stocks higher. West Texas Intermediate crude down 3.3% right now, $92.89 a barrel. Barrel of Brent dropping by 2.8%. All of this is a conditional ceasefire between Israel and Lebanon offers to ease the way toward a U.S.-Iran peace deal. But as you point out, we've got the Dow, the S&P, they are both advancing. S&P right now up 16 to 65.69, making up some of yesterday's decline, up by 0.2%. But what a story for the Dow, surging 857 points, up by 1.6%. And we have got NASDAQ down 72 for the NASDAQ Composite Index. That is a drop right now of just about 0.2%. So bottom line here, Wall Street driving a rotation out of chip makers into a broader swath of companies. This after Broadcom's underwhelming outlook. Shares of Broadcom, AVGO on the ticker, down 14 right now. Among some of the other tech names, we got Ciena down 18.4% after earnings. CrowdStrike after earnings down by 6.8%. Right now, the 10-year currently yielding 4.46%, the 2-year 4.04%, the 30-year 4.97%. Gold is up $41 the ounce to $44.76, up by almost 1%. But crude, the big story, down 3.3% now on WTI, $92.90 a barrel. Ellen Wald is president of Transversal Consulting, and on Bloomberg Intelligence this morning, she said oil is significantly lower than where it should be.
We're going to drain our inventories. They're going to be essentially gone, okay? And then what are we going to have left to fall back on? And so at some point, there has to be some kind of a price rise to accommodate for that. And, the question is really, when are we going to see that? I think we've seen Exxon and Chevron saying it's coming pretty soon. Other people say maybe July, maybe not until late July, definitely by August.
Ellen Wald of Transversal Consulting. She mentioned the oil majors, ExxonMobil up 0.4%, Chevron unchanged on the day, ConocoPhillips also little change, lower, down by under 0.1%. But again, West Texas Intermediate crude $92.93 a barrel, down now by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, that's quite the wind-up. He'll be back in about 15 minutes with more on the Thursday trade here. Look out below for a couple of these stocks, but it's a moneymaker. If you're in healthcare, if you're looking at financials today, interesting trade, and we'll keep tabs on it through the program with our eyes, of course, on Capitol Hill. Can you feel the drama in the Vote-A-Rama? It's not too often we have this take place in the light of day, but this is something. You want to see the sausage made? We're throwing the lights on and ripping the covers off the bed on this, Thursday edition on Bloomberg Radio. Streaming live on YouTube. Check us out now by searching Bloomberg Business News Live, because you want to see Eric Wasson in a seersucker suit. Now, here's what's going on. A lot of the amendments here, this is the reconciliation bill. This is the money for ICE and Customs and Border Protection. A lot of these amendments require 60 votes, but the first one out of the chute does not. It's a simple majority. This is the amendment from Chuck Schumer. A motion to commit, sending the bill back to committee with instructions to eliminate the president's anti-weaponization fund after he said last evening, I don't know, let's ask the lawyers, there might be motivation here. And I don't even know what the vote count is right now, if they're still voting. Eric joins us right now, having come from the Senate chamber to the rotunda just to talk to us. Throw a tip in the jar for Mr. Wasson. Eric, can you tell us where we are?
The vote is still ongoing. It's been, by my count, 99 minutes. It's been open. There are several Republicans, Bill Cassidy of Louisiana, who was ousted in his primary, John Husted, who's in a tough race, potentially, high, who have not voted yet. This is potentially a negotiation going on between them and their own leadership on a potential Republican amendment to address the weaponization fund. There is a Tillis amendment that's out there. I just had a look at it in the Senate computer. It only addresses a weaponization fund created on a specific day in May, very narrowly tailored, so they could create a new weaponization fund next week, and this wouldn't address it. So maybe there's some negotiating over that. As my colleague Steve Dennis also points out, if the Attorney General and Trump are really hell-bent on paying January rioters or others, they can just continue to settle lawsuits that are brought, out of court and pay from existing funds. So, there could be some consternation about that. Certainly, there's a feeling among moderates they don't want to have to vote for this. I see Susan Collins has voted for this Schumer motion to send it back to committee. She's also in a very tough race, perhaps the race of her life against Graham Plattner.
Yeah. Wow. All right. So if any of these amendments do pass, and the bill must then go back to committee to be rewritten with this language, would that end the Vote-A-Rama today and come back for more later?
Well, the Judiciary Committee is almost like a bill ATM. It could very quickly, without meeting, reissue a new version of the bill, which they did yesterday without that ballroom money. So they could go back to committee technically. We could see them release it and bring it back. Perhaps there would be another motion to proceed vote. There could be some technicalities, but I wouldn't expect necessarily a lengthy delay. The real question is if the bill has language in it that really does limit the president's hands on paying allies, would he veto it? would it threaten this bill entirely? So that's going to be a very tough negotiation for John Thune. He wants to protect his members. He's got to protect his majority by giving, the ability of Susan Collins and others to vote in a way that positions them for their own electorate. But he also has to be, conscious of the fact he needs the votes to ultimately pass this bill in the end of the day, get those $70 billion for immigration enforcement, going for the next 3.5 years.
You mentioned John Thune. I just pictured him this morning getting out of bed and beating his head against the wall after hearing the president last evening, because Todd Blanche said this was done. We dropped the fund, point blank, in testimony this week, the anti-weaponization fund. President Trump was asked about it in the Oval Office last evening. You heard it and saw it live here on Bloomberg, and he was not quite so definitive. Here he is.
Excuse me, Mr. President, just to clarify on what you were asked earlier, is the $1.8 billion DOJ fund dead or is it on hold?
It's, I'd have to ask the lawyers, I don't know. I know one thing, the weaponization, are you talking about the weaponization fund?
Yeah, what's your decision?
The weaponization fund, as far as I'm concerned, was a beautiful thing. It was something I didn't make it, but I heard that, I thought that was the greatest thing because people like you have abused our people so badly.
I still don't get that part. Was Caitlin Collins in the weaponization fund? Anyway, that's aside from the matter. So still a live issue just because of that one exchange, Eric Wasson, which brings us to these votes now. If that language is put in this bill, Eric, does it actually unlock the votes for passage?
I think, if the Tillis language got in there, it may, but, Thune aides and others are pretty confident they won't get 60 votes it needs to pass. But the question is, then when the bill finally comes to final vote, will Tillis and others vote no? Rand Paul, who's often a naysayer on GOP initiative, is a yes on this, I'll note. He is the chairman of the Homeland Security Committee. He said he does believe in this kind of spending for Border Patrol. We know normally he's more skeptical of other spending measures. So they may have the votes for it. It's going to be tricky. Interestingly, the president is now planning to move forward to nominate Todd Blanche, the permanent Attorney General. We asked Thune about that, and he suggested that he may have some trouble doing that. We asked Tom Tillis about that, and he said if this guy is in any way supportive of the January 6th riot, he's a hard no, and he would have the power in the Judiciary Committee to block that.
Yeah, Tom Tillis continues to feel himself. So, look, this could go all day, right? Eric, what's your expectation? And if it does pass the Senate, it goes to the House tomorrow morning?
Yeah, there's an expectation it will go into at least darkness around here. An old colleague of mine said things are really happening after dusk in the Senate, and darkness is even better. And then the House is poised. They're going through the motions to quickly pass it tomorrow if the Senate sends it to them.
There's the matter of war powers to deal with as well. That was the big story as we closed the day yesterday, Eric Wasson, with the House actually passing a resolution 215 to 208. 4 Republicans on board, some of them not very surprising, but we saw Brian Fitzpatrick, Warren Davidson, Tom Massey, Tom Barrett, and they were called out in a truth by President Trump today, expressing his extreme disappointment in what he calls a meaningless vote. If this goes to the Senate, does it pass? And if that's the case, we assume the president vetoes it and it all dies, right?
Yeah, I mean, the War Powers Act, is very contested territory. The form that this was passed in the House, can't really be forced to be brought up in the Senate. There's a different mechanism. Without getting into all the technicalities, as you mentioned, the president can veto it, but it does signal and create an overall pressure. And we do see the president in these negotiations, even though he says he doesn't care how the negotiations go, that he's willing to go back to more active combat operations. The general sense is he doesn't really want to do that, and I think this sort of reinforces that. Even he has his bluster and calling these guys unpatriotic. I think there is a sense that he's getting the message the public's not on board. Tom Barrett was very interesting. I talked to him after the vote. Very contested district up there in Michigan, and he just said, look, the War Powers Act says after 60 days you got to authorize this. We as Congress need to come forward and set parameters, set goals. We can't just let a carte blanche go forward. I thought that was a very interesting comment. Brian Fitzpatrick, talking to me, talked about the economic effects as well. This certainly isn't helping with the inflation picture and needs to be solved.
Well, I'll tell you what, the retribution tour could come around for these individuals. Eric, the president writes 4 bad Republicans and all of the Democrats voted to limit my war powers right in the middle of my final negotiations to end the war with the Islamic Republic of Iran. Who would do such an unpatriotic thing? He says Democrats are fueled by Trump derangement syndrome, but the 4 Republicans, it's a whole other story. They're grandstanders. In our remaining moment, Eric Wasson, what happens to these 4?
You know, it's going to be a tough calculation, but it may actually help Fitzpatrick and Barrett in their races. You know, it's really going to come down to independents in Michigan 7 and the Pennsylvania district. So, you know, I think, you know, the primaries are passed, and you know, we'll see what happens there.
Fascinating. I know you've got to run back, and it's really kind for you to spend some time with us. What's better than this? At the lunch hour, we have one of the top congressional reporters in Washington, D.C., just as the sausage is being made with us with live play-by-play. Eric, thank you. That's great. Bloomberg News congressional reporter. When the vote concludes, we will let you know here, because we could have some cross currents today that, again, as we just heard, pulls the bill back into committee for a minute, comes back on the floor with changes. There are dozens of amendments that could be voted on by the time this is done. And I'll remind you, this is the bill the president said he wanted on his desk by the 1st of June. He may well have it on his desk by the 5th of June, tomorrow. But as Eric just floated, if he doesn't like the anti-weaponization language and there's no ballroom, does he veto reconciliation? That would be a whole new world. We'll consider that thought a little bit later on with our political panel with great analysis on the way. We'll turn to Iran next. Michelle Jamrisco with the latest from the Bloomberg newsroom. Iran saying no progress has been made in talks. That's coming up next on Bloomberg.
621 on Wall Street. We do check markets all day long here at Bloomberg, right to the numbers, because we have got the Dow Jones Industrial Average now surging by 932 points on the Dow. That is a gain of 1.8%, a record of 51,621. We are seeing a rotation out of chip makers into a broader swath of companies. Goldman and United Health leading the Dow higher. Bears repeating. Dow Industrials now up by 937 points. All of this against the backdrop of the S&P 500 index. Yes, it is higher. Best level of the day now, up 25, up 0.3%. But a tough day for tech stocks. NASDAQ is down 47, a decline there of 0.2%. The NASDAQ 100 index down by 0.5%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, right now trading lower by 2.7%. All of this with the VIX right around 15. We've got the 10-year 4.46%, the 2-year 4.04%, and the 30-year 4.96%. Gold is up 1.1%, 44.84 the ounce. West Texas Intermediate crude just above $93 a barrel, down 3.1%, and a barrel of Brent 95.10 now, down by 2.8%. I mentioned the weakness in chip stocks. Broadcom, after earnings, is plunging now by 14.5%. That is the most in more than 16 months. Ciena shares lower after the company reported second quarter revenue that beat the average analyst estimate. Still, Bloomberg Intelligence says the company's 2026 sales outlook may be viewed as underwhelming. Ciena down by 16.7%. CrowdStrike Holdings down now by 6%. It also reported earnings last night. So again, recapping, Dow Industrials pushing higher. The Dow up now by 1.8%. West Texas Intermediate crude $93 a barrel, down 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie Pellet, the voice of Wall Street, and, you know, the voice of the New York subway. Charlie, of course, is very familiar with what happens underground in New York. And so, Charlie, I've got to ask you about these reports and the videos. You see this stuff on social media. People are going down into the sewer to hang out or look for something. Have you been down there?
You know, I've also seen those videos on Instagram Reels, also on TikTok. Yeah. And, you know, if you want to join me some weekend, maybe you and I can do a special for Balance and see what happened. Joe, I have no idea what these people are doing. But my hunch, I saw one report that these were people looking for valuables, but it just raises security concerns, especially with the World Cup coming up, and also too, it just. I'm going to go there. It raises common sense concerns. You don't want to be trapped down there in a New York City sewer. Your cell phone may or may not work. And how quickly are people going to come and bail you out? I mean, this isn't Teenage Mutant Ninja Turtle stuff. It's shocking.
That's exactly right. You know, this is what Charlie tells his kids.
Whatever happened to common sense, Joe Matthew? I mean, this just does not make sense.
That's been gone for a long time, Charlie Pellet. I love that you were ready for that. Sam was ready for that, too. You saw the picture there of Aki Auto Care in Astoria. That's where that line came from. He says these guys look like the Ninja Turtles. Yeah. He spotted 3 men prying open a manhole cover, and then they fall into the bowels of the city, only to be re-emerging later on some other video. At one point, a video saw a group of 7 men climbing out of a manhole and lingering unhurriedly on a nearby sidewalk.
Correct.
Maybe they're finding
the other thing
valuables.
is, I mean, regardless of the sewage and the muck that's underground there where you don't want to be, there's the issue of fumes. And then also, my heart goes out potentially to the first responders who have got to get these idiots out of the sewer system if and when something goes wrong. Joe, it's common sense. We have lost our collective minds.
Well, I saw this wacky story. I didn't know I'd be hitting a nerve, Charlie. Thank you for weighing in.
Doesn't happen in D.C.,
He does more than cover the markets. No, I don't think so. I don't want to find out.
All right. Can I put in a shameless plug, though, for an open invitation at some point? One of the things, we've got a couple of partially constructed subway tunnels in New York, a couple of times of the year.
That's cool. That is actually pretty cool.
It is very cool. You get to go down and see these partially built subway tunnels, but that's more up my alley than these random walks under Wall Street.
It's so weird, Charlie. Thank you. He'll be back 20 minutes more on the markets. That's the guy right there, Charlie Pellet, the voice of the New York. So take the subway, not the sewer. might be the moral of the story here. It's interesting, you know, the Washington Post wrote this up looking at New York, and so we're wondering here in the Capitol what the heck is happening in the big city. The string of subterranean episodes I read has baffled New Yorkers, become the stuff of group text threads, and spurred speculation online. What are they doing down there? I say they're not Ninja Turtles. They're Goonies, right? Goonies never say die. Let's turn to matters more important than what's happening in the sewer of New York. And that, of course, brings us to geopolitics that we've not gotten our arms around yet this hour. We've still got our eyes on what's happening in the Senate with an important vote today on reconciliation. But Iran today says there is no progress being made in talks with the United States, and Hezbollah is now rejecting the outcome of this Lebanon-Israel peace deal. So we're wondering if this is still a ceasefire. The president was asked about it last evening in the Oval Office. Here he is.
Ceasefire with Iran still on?
Well, you know, there's a reason for everything. And we hit them pretty hard. In that part of the world, ceasefires when you're shooting in a more moderate manner. The negotiation itself has gone very well, actually. It might not happen, you know, who knows? But if it happens, it could happen like over the weekend.
Okay, so we have no idea, it seems, what's happening, and Michelle Jamrisco joins us to try to guide us in the right direction. Bloomberg News White House and National Security Editor. I know it's difficult to connect the dots on all these, but they are certainly all connected.
Yeah.
And you wonder if this shooting ceasefire, as I've been calling it, is starting to circle the bowl, or if we've just arrived at the new normal, where this just keeps rolling and we have these skirmishes each day with not much progress.
Well, two things at the start, Joe. I mean, ceasefire is really doing a lot of heavy lifting.
Well, it
it's
sure
really
is.
straining the English language.
Yes, it is.
And it's straining the English language on two fronts, because we've got two supposed ceasefires, and we use air quotes in some respect to talk about these deals. But first, you have the U.S.-Iran ceasefire, which everyone, you know, has been debating. You know, obviously, U.S. officials are keen to keep that tag on something that they say strikes are happening from the U.S. side as only defensive in nature. Iran counters, and they're countering via other means to you know, in ways of retribution. Yep. So they're both disagreeing about what to call that sort of situation since early April. But in the meantime, the past few days, as you point out, we have this Lebanon potential ceasefire, which almost seems more egregiously, you know, violating the terms of the English language, because you're talking about a fighting situation that has gone on and has gone on even after the Trump-Netanyahu call earlier this week, in which Trump had said there was a broader, fairly sweeping agreement for peace. And then, of course, we had Netanyahu come right after and say, well, okay, hold on. We do agree to have a ceasefire in northern Lebanon, in Beirut, but not in southern Lebanon, where operations will continue. He was very clear about that. That's what kind of punctuated the disagreement between the two leaders earlier this week. And now we have Hezbollah saying, hey, we're not agreeing to this ceasefire, whatever you want to call it. Their chief saying today it's absurd. So that's not very encouraging, especially coming the morning after overnight strikes in southern Lebanon, which kind of punctuated the idea that this isn't really a ceasefire, and you know, fighting can continue. Iran, meanwhile, looking at all this and repeating, hey, this needs to stop for us to get to a deal with the U.S. They, as you quoted, say no tangible progress right now. That's not what you're hearing from the president on this side. So it's a bit of more Groundhog Day situation again.
This type of confusion can frequently do damage to the markets. We're actually seeing oil prices drop today. Brent and New York crude both down about 3% right now. WTI is down more than 3%, about $93 a barrel. Brent's at 95. There are analysts we've heard even today on Bloomberg who are perplexed by the fact that these prices are not actually higher. The Strait is still closed. Do we have anything on the books, a real round of talks that could signal a breakthrough on anything?
There is some insight in terms of prices, and I don't want to try to put on a hat for something that I'm not an expert in, but we do have people internally who have been tracking the sort of price movements, especially in oil, ahead of a weekend. So oil traders typically don't want to be out of position in case
not unlike stock traders.
Peace breaks through over the weekend. And, you know, as we all know, President Trump likes to make news in the Friday evening hours and over the weekend, and kind of own the news cycle into the Monday morning Asia open. So you just don't know. I mean, that could account for some of the kind of quirky and unexpected moves in oil today, even as we're getting all this bad news.
Right.
But also wouldn't rule out, potential movements on the upside as the day wears on.
It's great to have you back, as always. Michelle Jamrisco, our national security and White House editor, with us here live in Washington. And the latest on Iran, of course, when the next time we get a truth or a headline from overseas, we'll let you know. It all does tie into the markets today, and it's been a bit confusing watching some really heavy losses after Broadcom posted earnings last evening, and CrowdStrike. Both are sharply lower still at this hour. But the Dow Industrial Average is up over 900 points, and we're seeing big gains in financials, in healthcare, and we try to rationalize this move in the markets with our eyes as well on lower interest rates and lower oil prices. With our buddy Christine Aquino, who's back with us at World Headquarters in New York, Bloomberg's managing editor for Markets Live. Christine, it's great to see you. What are we thinking about this? Because the market has been unforgiving for companies that in many cases beat and raise in their earnings reports. Were they just coming in too hot ahead of the news?
Well, Joe, I think the key there is the markets have been unforgiving to tech companies that have been coming into earnings with really high expectations and only really beating them by a smaller margin that Wall Street expects, right? And this is exactly what we're seeing at the moment. In a lot of ways, Broadcom and all these other big chip companies, tech companies, are really the victim of their own success. The expectations have grown so much that even a modest beat isn't enough for analysts anymore, isn't enough for investors anymore. And this is a little bit of why we're seeing this bit of a pullback at the moment. And, I would like to draw attention to the divergence that you're noticing there, Joe, with chip stocks leading declines on some of the tech-heavy indexes, but then the Dow nearing a record here. And this is exactly what we're seeing today, right? It is that rotation trade from these big tech companies that perhaps have gotten a little too big for their valuations. And now we're seeing a bit of an outflow from those companies to your more traditional companies, the defensives, financials, healthcare, some of the companies that have lagged the massive gains that we've seen in the tech sector. That's exactly what you're seeing today.
Really interesting. See that? The divergence that Christine Aquino is pointing out here is critically important, and I wonder what it's going to look like next week. In our remaining moment here, Christine, we've got SpaceX next Friday. Could we see liquidation continue in stocks like these as people try to raise cash to buy SpaceX?
Joe, I mean, that is the short-term concern, is that, a lot of funds are wanting to get into the SpaceX IPO, needing to reallocate some of their funds. But ultimately, the history of mega IPOs shows that this comes at a time when markets are flush with cash. There's a lot of confidence. And so for a mega IPO such as SpaceX, potentially, there might be no issues at all for markets ultimately absorbing the supply that's coming to the market. Could be a vote of confidence ultimately in the state of funding and the state of liquidity in equity markets.
See, I love that. Avoiding the doom scroll. Christine Aquino, live from New York. She's the managing editor, Markets Live. Great to see you, Christine. Thank you so much. Something tells me we'll be talking more about this next week. With the Dow Industrial Average up 925 points, an S&P up 24, but a NASDAQ losing 64 points. Maybe we'll get a lift a bit further for tech this afternoon. Our panel's next on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Chip makers are sinking. The Dow is surging, on track for a record close today. 51,616 where we stand on the Dow. Looking at a gain right now of 928 points, up 1.8%. Wall Street driving a rotation out of chip makers into several other industries. The S&P at the best level of the day right now, 75.80, up 27, up by 0.4%, but a tough day for a lot of tech stocks. NASDAQ is down 0.2%. The NASDAQ 100 index down 0.5%. The Russell 2000 index of small cap shares is up by 1.2%. The SOX, meanwhile, pulling back by 2.5%. The VIX above 15 and the 10-year 4.46%. Gold is up $47 the ounce to $44.82, up 1.1%. West Texas Intermediate crude 92.55 a barrel. WTI down 3.6%. Barrel of Brent 94.84, down now by 3.4%. Amos Hochstein is managing partner at TW Global. He was a top national and economic security official in the Biden administration, and on surveillance this morning, he told us he is watching oil stockpiles, specifically the Strategic Petroleum Reserve.
We have a roadmap of when that will happen. Some of that will happen at the end of June, early July, and the SPR probably mid-July. That's the timeline that the administration has to reach a deal. After that, they can't. After that, the leverage is gone.
Amos Hochstein of TWG Global interviewed on surveillance. Again, bears repeating. Brent crude down now by 3%, 94.83 a barrel. WTI 92.53 a barrel, down 3.6%. Sleep Number is plunging 64.5%. That is the mattress company. It has laid the groundwork for a potential bankruptcy filing. Sources say that's all a part of efforts. The company has approached lenders for new financing, which could be seen as a bankruptcy loan. Sleep Number is known for its customizable beds. It's been bogged down by industry pressures, dwindling store traffic, and the sting of tariffs. Again, Sleep Number, it is down now by 64%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie Pellet, we thank you very much. He'll be back in just about 20 minutes' time at the top of the hour, 1 p.m. Eastern, with the latest on the markets here. It's been an interesting divergence, as we were discussing with Christine Aquino. And who knows, a NASDAQ here that seems to be pulling itself off the mat. We could turn this ship higher by the time it's all done. Thanks for joining us on Bloomberg Radio. We're streaming live on YouTube. Search Bloomberg Business News Live if you want to join us for our great panel that we have lined up for you, with our eyes on the Senate floor. High drama here with the Vote-A-Rama, which is officially underway. And things could come to a bit of a halt depending on what happens. You know how this goes. This is the reconciliation bill we've talked about so much. Republican-led effort to fund ICE and Customs and Border Protection here. And so Democrats and some Republicans are going to throw a lot of amendments. This is how we get the poison out, the Vote-A-Rama. The thing is, there are a couple of amendments that could pass that will force new language to write out the idea of this anti-weaponization fund, to rule it out of the bill officially, after the president suggested to reporters last evening that, well, maybe this is still a live issue. He said, I don't know. Ask the lawyers. We ask our political panel for their take on this, and I'm glad to say Rick Davis is back with us here in studio in Washington, D.C., Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, alongside Frederick Hicks, founder, CEO, Hicks Evaluation Group, our Democratic strategist. Fred, it's great to have you as part of our conversation on Bloomberg, and we'll see what we can figure out here, gentlemen, because this is going to be an interesting day, and it could be a long one, Rick. Do you expect any of these amendments actually have the votes to pass after the president threw this much uncertainty on things last night?
You know, I think this is one of the most interesting Senate sessions. Nobody was really happy with this reconciliation bill when it got put on the floor. People have been talking about finding ways to vote against various provisions in it, you know, whether it was the ballroom or the fund, and fund came up first, right? I mean, like that was the first thing that I think people had a real shot at. And there are many different versions of how to fix this problem. We were just talking about Senator Tillis has a version, Senator Schumer has a version. There's a version, just amendment to amend it on the floor. So there's a lot of confusion about what to do about this. The fact that they're holding open this vote around the Schumer amendment is creating a lot of speculation that there are deals being cut right now to have the judiciary staff rewrite that portion of the bill, which could slow things down even more than they already are. So votoramas tend to last a long time. This one may set a record.
Well, that's saying a lot, and I know you've been through a few of them. Fred, is this an opportunity here for Democrats to see the president find the line with his own Republican establishment in the U.S. Senate?
Absolutely it is. You know, I'll just say this, the parliamentarian is going to get a workout today. I hope that parliamentarian got a lot of rest last night. This is going to be a long day. For Democrats, I think we're feeling quite encouraged by the vote in the House yesterday to curb the President's War Powers Act, and that we were joined by four Republicans. And I think that really set the stage or encouraged or added fuel to the fire for today's vote-a-rama, because we are now starting to see cracks in the Trump armor. He's had the Congress, the Senate, really in a chokehold since he came back to Washington in January of last year. And just a couple of weeks ago, it seemed like with his string of wins in the primary that he would really be able to force his will upon the Senate. But I think maybe the way he played that, as well as each senator facing their own midterm pressure, or each congressperson facing their own midterm pressure, and several senators facing midterm pressure, is really creating an opportunity for Democrats. But really, I don't think of it that way. I think of it as creating an opportunity for America, because one-party rule and is bad in whichever party is in charge. And Donald Trump, who is a party of himself, right, unto himself, has really been leading the way. And this is, I think, good for democracy to see that Republicans are starting to stand up and speak against him.
Well, I'll tell you what, the president was pretty unhappy with the four Republicans who voted in favor of that War Powers Act that you mentioned. He took to Truth Social last evening to say the four Republicans, that's a whole other story, referring to other than the Democrats. He said they're grandstanders and they should be ashamed of themselves. Rick Davis, I'll throw another log on the fire here. Bill Cassidy, who has felt the wrath of Donald Trump and was dispatched in his primary in Louisiana, has just signed up with Senator Cory Booker to file an amicus brief urging a federal judge to block the weaponization fund. I guess what goes around comes around. What do you make of this move?
Yeah, there's a lot of talk, especially in the Senate, around judicial fraud. And there are a lot of senators who are very worried that this is a new area of contest with the Department of Justice. And this debate is not very conducive to getting a new attorney general confirmed anytime soon. And so it just keeps getting hotter and hotter. And so I do know that there are a lot of staffers looking at sort of new art around legislation that would tighten up the ability to basically bypass the judicial system by cutting a deal with yourself if you're the Justice Department. And so, yeah, a lot of concerns. And look, it's a combination of things happening within the Republican side. One, on the House side, the War Powers Act, that is survival, right? Those four members, other than Massey, voted for war powers because they want to get reelected. And Donald Trump should hope they get reelected. I mean, the whole point is he wants a Republican majority. So he attacks the same people who are actually most likely to get beat if he doesn't give them some room. And then
maybe his attacks help them in the end, considering their districts.
That's getting kind of scary. When you have to rely on that, it's not healthy. But in the Senate, you actually have the opposite, where some of these people aren't necessarily worried about their reelection, but they are worried about the encroachment of presidential power into their business in the Senate, and they're trying to throw some elbows on that. So it's kind of every man for himself right now on Capitol Hill.
Well, it's really an incredible moment here, and I just want to point out ahead of our conversation, we're going to be hearing a fascinating interview in just a minute that I'm looking forward to bringing you here with Daniela Amadei, the president, co-founder of Anthropic. Fred, will this matter of the anti-weaponization fund be handled legislatively or legally in the courts?
I think how it's handled is just as important as whether or not it is handled. Americans, I think we're at a point right now where we really do want to see each chamber of or section of our government stand up and fulfill its duties. And we feel like people have abdicated that, or the institutions have abdicated and folded over the last 18 months or so. I think that for the president and for the Republican Party, they should hope that they can resolve it legislatively. That way they can go back to the constituents and say that, hey, look at what we've done. We can make Congress work. Our leadership works because, Republicans are in charge of the House and the Senate. So I think they would want to, I would think they'd want to resolve this legislatively. But if it's not handled there, the judiciary was the first branch of government to really stand up and exert its independence or reassert its independence in this Trump 2.0 administration. And so I think the courts will handle that. But it's really my hope that we can resolve this legislatively, because that is the point and role of Congress. And I think that some of these amendments might really get in there, because when we talk about ICE and we talk about other funding mechanisms for this government and the way the deficit has just ballooned in just 18 short months, we have to figure out a way to do this, and Congress needs to do its job.
We're just about a minute away from hearing from Daniela Amodei. Rick, if this in fact is a situation in the Senate where one of these amendments passes, Tillis, Schumer, whatever version, that forces a rewriting of the bill, does that blow the whole timeline? Speaker Johnson was hoping to vote on this tomorrow morning.
Yeah, it could. These guys could work through the night and get them a bill tomorrow. Okay. We thought maybe they'd do that Wednesday night, and they didn't wind up really tipping it off until this morning. So, yes, I think they could still make that deadline if they can get a quick agreement, on any substitute amendment that might be voted for. Again, we're giving it too much credit right now. It hasn't passed yet. And if it doesn't pass, that means other amendments that are in the queue in the vote-a-rama that affect the weaponization fund will even get more time and scrutiny. Jeez, so we could be at this for some time.
What's it like in the cloakroom in the middle of a vote-a-rama? What's happening behind the scenes right now?
Well, I mean, I think people are trying to figure out how to get a deal cut, right? And when you're making a deal on the floor of the Senate, it's the hardest thing in the world to do, right? You want to do that in the confines of the leader's office where it's really nice and they can cold sweat you all by yourself or cut a deal with your staff and then they relate it. But it's hand-to-hand combat now. Jeez. I mean, once they're on the floor, especially during a vote-a-rama, there's a lot of staff-to-staff conversations going on, and then staff running down to the floor to get hold of their member, to inform them, and then the members cutting the deal, handshaking in the cloakroom. And frankly, it's going to be great theater today. C-SPAN's going to have heightened viewership because it'll be worth seeing.
Fascinating stuff. And a great panel. We'll be talking more about this in our second hour with Rick Davis and Frederick Hicks. Thank you both, gentlemen, as we now bring you the conversation that we were just promising with Daniela Amodei, the president, co-founder of Anthropic, in conversation with Bloomberg's AI reporter, Sharon Gaffrey. Let's listen live on Bloomberg.
Started Anthropic back in 2021. Now you employ thousands of employees, many of them in a reporting chain up to you, in your role as president. I'm curious, what is the difference in the leadership style between you and Dario?
Well, first of all, thank you so much for having me. It's great to be here today. And, Dario and I really think of how we sort of split duties. Dario is this incredible technical visionary. I think, years before AI was this amazing idea that people were excited about around the world, he had this really strong conviction that artificial intelligence is going to be a big deal. This is like early 2010s. And I think Dario is constantly reminding the company about the scale, the ambition, sort of where the technology itself is going. I think of my role much more as actually running and managing the day-to-day of the organization. So I manage the executive team. We spend time making decisions about customers, about our products, about the research and how that applies to the people that are using artificial intelligence. And I like to think that the two of us are a great balance. And I have to say, I don't know how one CEO just runs a company by themselves. It seems like it's actually much easier to do with two people, particularly when they know each other really well.
I remember in one of our conversations earlier, you telling me that you and Dario rarely fight. And I'm curious how you manage, what are some examples of places where maybe you have disagreed and have been able to settle it in a healthy way with regard to the business?
Well, as someone who also has a brother, I know I think we've had several decades to kind of practice fighting and still loving each other, right? So as early as like, why did you take my toy? Can I have that back, please? I think that has served us well in being able to operate well together at Anthropic. I think what I would say is that, we do disagree sometimes, but I think how you disagree really matters. And I feel like there is always like an incredible mutual respect between us. So if we look at the same situation and we see something different, I like to think that what our default is to be curious, right? So I usually view it as like, oh, this felt like an obvious call to me. Like, why do you see it that way? Because usually he'll have a piece of information that I don't have, or he'll have a different perspective. And I would say about 80 to 90% of the time, what ends up happening is we meet in the middle. And so we'll think like, oh, I think this is the right thing to do. You think this is the right thing to do. Actually, there's probably a third way to do this. That's the combination of what we both think. That's actually a little bit better. I think that's part of the strength of having both of us. The ability to practice looking at situations and decisions just from different points of view and perspective. And I think it helps us make better decisions.
So 2 years ago, when you were sitting on the Bloomberg Tech stage with Dario, Anthropic was still very much the underdog in the competition against OpenAI and just in the race to AI generally. Now it's in a very different position, no longer the underdog. Claude is a runaway success, particularly among coders. Your company is projecting $47 billion in annualized run rate revenue, and the company has eclipsed OpenAI's valuation for the first time. Do you feel like you're definitively the front runner right now, and how does that change your approach?
Something that I think both Dario and I, really hammer at Anthropic is that is just completely the wrong way to think. I think our view has always been, this is really about how do we show up every day for our customers? How do we stay humble and make sure that we're really focused on the mission, right? The whole reason we started Anthropic is we want to be able to build and develop this technology in a way that is ethical, that's responsible, that's fair. And I think it's really incumbent upon everybody at the company, but especially leadership, to say, all of these numbers, they're actually not the point, right? We are really here to do a job. We're here to support the businesses that rely on us every day. AI is increasingly a bigger part of everybody's workflow, their experience at the office, their experience in their personal lives. That's a huge privilege and responsibility. And so I think if anything, we work really hard every day to say, like, our job is to be the best version of who we can possibly be as a company every day. That takes work, that takes humility, that takes time, that takes focus and energy.
I want to talk about the big news earlier this week that Anthropic has filed confidentially for an IPO. SpaceX has also filed. OpenAI is expected to file anytime now. How far back had you been planning to file? And do you think that there's a race here to be first among the AI companies?
So yes, you're correct. We confidentially filed our S1, and that gives us the option, to potentially go public after the SEC review. Unfortunately, that's all I can say about anything IPO related. I'm sure you understand.
I mean, if we can just maybe level up a little, what is the calculus for a kind of an AI company generally to go public or not in this moment? What are some of the pros and cons here? Because on the one hand, yes, you can access more capital if you're not a startup, but on the other, then you're beholden to quarterly results, shareholder calls, et cetera. So what are some of the pros and cons just generally for an AI startup, do you think, to go public in this moment?
So I think, at least speaking for, ourselves, and I think ideally, probably really for the AI industry more broadly, it's a very capital-intensive business to train AI models. I think that's something we've been, very open about from day one. I don't think that's, a surprise in the industry. And I think this kind of concept of like, how do you access the level of capital that you need to train these models, right? It's a really big kind of upfront cost to train the models and to serve inference on them. And I think that is, my guess is that, over time, the sort of core set of companies that are working to advance the frontier are just going to need access to capital. And I think the public market is very well suited to that. So there's obviously, of course, trade-offs, but my sense is there's just a fundamental structure of how training and kind of serving these models for customers works, that it will require that level of access.
It's clear that many businesses can't get enough of Claude, but at the same time, we are hearing about some customers who are concerned about the pitfalls of so-called token maxing, of companies making leaderboards of who uses the most AI tokens for using AI's sake. One of Uber's executives talked about it getting harder to justify AI spend if there isn't a clear metrics-backed ROI. Do you think there's truth to the idea that some businesses may be overspending on AI tools in this early experimental phase, and they may cut back as they move out of that phase?
So I think kind of two things are true at once here. I think, I like that you said, experimental, because I think the reality is it feels like these AI tools are so powerful and so capable, which is true. And comparing them, particularly to, even 2 years ago when I was on stage at Bloomberg with Dario, I think the models have just come so far in what they're able to do and the economic value that they provide. But I actually think there's a lot more distance to go still for what the models will be able to do, 2 to 4 to 6 to 8 years in the future. And I would suspect that we will see some experimentation in different fields to understand how do you kind of get the most value out of these models for what particular workflows. I think the second thing that's true is how businesses are choosing to use AI will change. So the use cases today, some of them I expect will continue to be kind of the primary driver of efficiency or creativity or new approaches to doing things within businesses, whether that's coding or financial services, legal, healthcare. But I also think as the industry as a whole, not just the AI industry, but really the business community gets more familiar with the tools, we're all going to learn together, like what is the best way to apply these tools that also supports employees. And so I think today there's this feeling that it's like, oh, like AI, the leaderboards, and it's like I have to use it, and what do I even use it for? And I think my hope is that over time it'll be more incorporated into the day-to-day of how humans do our work, how we communicate together, and that there will actually be a lot more value realized in a way that feels really good to people.
Does Anthropic have a leaderboard itself?
We don't have a leaderboard, no, or at least not in the way you've described. We do track how much we're using Claude internally and for what use cases, because we really try to prototype all of the tools that we give to our customers. And so all of the products that you see, whether that's Claude Code, Claude Design, Cowork, like all of these are things that we actually built at Anthropic first, because we said, hey, this is a real need we have. Could Claude help us with this? And so I think it's important for us to just have a kind of a metric for checking, like how are we using it and how much are we using it? But there's not like you must use AI and you must use Claude and it's better if you use it or not.
What type of job function outside of coding or research are using Claude the most internally?
The entire company uses Claude for topics large and small. Probably the second biggest, I would actually say, is finance. And so a lot of the kind of back-end financial planning analysis, like just number analysis, I think Claude is really, really helpful at that. But honestly, like our people team built an incredible tool internally for how we do performance reviews that leverages Claude. We're in the middle of performance review season. I have to say, like the feedback from our team has been so positive. Claude, they're like, it just feels so much more fun to do this. It's so much more interesting, interactive. It's pulling in information about what I did over the course of the past 6 months when I'm assessing myself. And I think that it really just speaks to the generality of these tools. Their ability to, I think, reach across a business and just take a lot of information in and help you as an employee be more successful in your role.
Dario and Anthropic's leadership has been vocal about the need for more compute. Your company recently made a major deal with xAI to lease compute. There are others. OpenAI made a big splash sort of earlier on with securing huge data center deals and spending, up to $1 trillion on infrastructure. Why did Anthropic take a little bit of a different approach? And in hindsight, do you think you should have done more earlier on the compute front?
We've talked publicly about this concept of sort of the cone of uncertainty related to compute. And I think something that's important to know is the sort of structure of these deals is you have to commit to a certain amount of compute, reasonably far in advance. And so I think Anthropic's view has always been we are wanting to plan for the best outcome, but not overextend ourselves such that we're buying more compute than we could productively use. It's really hard to predict that perfectly. And I think we would much prefer to be on the side of having a little bit more demand for the product than we're able to serve, than the inverse where you overshoot and then you're actually like not in a great situation because you've bought something, you can't pay for it down the road. It is really hard to get this right. I think the industry as a whole is still grappling with how to kind of structure these deals. But I think my sense is it's impossible to know what the future will look like. On balance, I continue to think it's better to be fiscally responsible and think carefully about how much you're going to buy, make sure that you have the ability to actually use all of that compute in the future, and we'll probably undershoot or overshoot at some point a little bit.
In the announcement with SpaceX, Anthropic expressed preliminary interest in using potential data centers in space. What do you think about that? Is that a reality, and how far out are we from that?
I don't think that data centers in space are something that will be on our to-do list in 2027. But I will say AI is the field that has surprised me the most. It's probably surprised the world the most in terms of just what new things are made possible by the advent of this technology. So no immediate plans for working with the astronauts to get Space Center data centers going, but you never know.
A few months ago, Anthropic had a very public battle with the Pentagon over restrictions on its AI software. Are you more or less optimistic today about finding a solution to that?
Anthropic has been really leaned in from day one and talked very publicly about our commitment to national security. And we were the first AI company available on the top secret cloud. I think our commitment to these values and these principles are also very, very old, right? It's sort of not a new thing for us. But I have to say, I've been very impressed the degree to which we've been able to work productively, with the administration around a wide variety of topics. And I think that's actually been the much bigger story over a long period of time, is our ability to partner productively with government at all kinds of levels, because fundamentally, I think artificial intelligence is and will be a geopolitical issue. And in order to be an ethical and responsible lab, we need to work with governments around the world, in the US, but also in partner countries, to say, how can we roll this technology out in a way that's safe, in a way that's good for people, that's going to protect democracy. And so I do really feel optimistic about this in the long run.
Do you think other companies like OpenAI or Google have been able to negotiate better deals with the government because of Anthropic sticking to its position?
I think every individual company is going to have their own stance and sort of their own principles about like what their red lines and what their values are. And my sense is Anthropic will always be as open as we can be about what our principles and values are, why we have those principles. But ultimately, I think it's important that whatever those values are for you as a company, that you are true to them. That you feel like you can explain them to employees and to the world more broadly. And fundamentally, we can't really control what other businesses are going to do. I think Anthropic's role is to be the sort of best version of itself. Again, to say, like, if we were the only organization in this situation, how would we want to behave? I think that's really the best way we've been able to navigate many difficult decisions at the company over the years.
I think philanthropy seems to be a big part of Anthropic's culture. I know you and many Anthropic co-founders have pledged to give away half of your equity. Is that right?
80%.
80% of your equity. I'm curious, would you be in support of something like the proposed billionaire tax ballot in California that would impose a one-time tax on individuals whose net worth exceeds $1 billion?
So Anthropic has, I think, again, pretty publicly talked about the fact that we think AI is going to create a huge amount of wealth. We're already seeing that. And I think we've been pretty open about this idea that should be redistributed in some fashion. Both the pledge and then a lot of sort of views of Anthropic when we're talking about, potential for labor displacement are really grounded on this belief that if we don't take intentional actions, AI, like many technologies, will probably widen the gap of inequality and disparity. That's not what we want to see. So I think there are a lot of interesting suggestions kind of floating around for how to approach that. Of course, the part we can control is, what do we as a company and as individuals, as co-founders, sort of choose to do with, any, economic benefits that we get from AI. But I think this is a really big and important question that actually goes beyond the walls of any individual company.
There's a lot of potential upside with AI to cure disease or lower the cost of consumer goods, but also real fears that, Dario has validated, saying last year that AI could potentially wipe out half of all white-collar work. Do you agree with that? And if so, what's the solution? Is it something like more taxes? We talked about basic income, job retraining, and how do you pay for all of that?
Sorry. I think AI we're already seeing the ways that it's disruptive. I don't necessarily think we know the future. So exactly what the type of disruption that might happen, a year or 3 years or 5 years from now is unknown. I do think it's important for companies to be open about and study what we're seeing today, which is part of why we publish our societal impacts research. We say, hey, here is how people are using AI. Is it displacing jobs? Is it supplementing jobs? What we found so far is that in 2025 and 2026, replacement is a tiny, tiny, tiny fraction of what AI is doing. And really where we see that is mostly in jobs that are overseas and mostly in customer support. And so these are jobs that are sort of already being automated by more traditional ML, non-generative AI systems. Could that change in the future? Absolutely. And I think we're a little bit unusual in the sense that we talk about it a lot. We say, hey, this might happen. But I think there is this just broader, again, sort of societal challenge. AI is going to be able to do so many productive things that humans can do today. What does that mean for how we find meaning, how we earn income, how we relate to one another? And again, I think the default will be to treat it like past technologies and say, okay, we're going to integrate this into existing workflows, and that's sort of the end of the story. I personally believe there's a real opportunity here for us to say, how do we accelerate and sort of accentuate the parts of doing work and finding meaning that only humans can do? I have this very fundamental belief that humans like to spend time with other humans. We like to create things together. We like to relate to one another. Sometimes we like to disagree with each other. And I don't think AI will fundamentally take that away from us, but we have to figure out how we apply that within the existing economic infrastructure so that people can still find meaning in their work and so that people have a way to earn a livelihood. Again, I think there could be a lot of different ways to structure that, but I think this is an important moment for us generally as a society to say, like, what are the lives that we want humans to be able to live, and how do we work closer towards that future?
2 months ago, Anthropic unveiled and restricted access to Mythos, your most powerful model, right, citing significant concerns about its potential to wreak havoc on critical software by spotting and exploiting security vulnerabilities. Now, Anthropic plans to release these Mythos-level AI models more widely. Can you help us understand what's changed in the past 2 months? Are you confident that these models are different now in any meaningful way from the version before? Are they safer?
This is a great question. We actually, on Tuesday, just expanded the set of customers that have access to Mythos. I think it's about an additional 150 organizations around the world in 15 different countries. And really our approach to Mythos has always been, there's a time component to it. So we released it initially to cyber defenders. So some nonprofit groups, some governments, some organizations that are critical infrastructure for protecting against potential cyber attacks. And what we found is, just like in any kind of security vulnerability situation, you have to give the defenders a head start. The technology, AI models are going to keep advancing. If it's not us, one day releasing a Mythos-level model, another AI company will. But it actually matters who you give access to first and how long they have to patch some of the vulnerabilities that Mythos was capable of revealing. And so we're taking this very cautious, very tiered approach, which I know in some ways is frustrating because people really want access to the model. But I think again, as a company that's founded on these principles of being ethical, being responsible, we felt it was important to give access to the organizations that were capable of really helping us defend against some of these risks, and then slowly widening that circle to more and more critical infrastructure until eventually we feel it's safe to release it more widely.
So far, Anthropic has been very focused on enterprise, even in how you're talking about that rollout. But could we see a push into consumer this year?
So we do have a consumer product. It's Claude.ai, and I think we have always really from day one felt that enterprise and business is the best kind of spiritual fit for Anthropic and our values. I think this focus on trust, on responsibility, reliability, transparency. These are just so baked into the DNA of Anthropic, the company. And I think, we have a increasingly growing consumer base. It mostly looks like, professionals and individuals that are using AI for productive uses. So it doesn't necessarily have to be, work. Sometimes it is, but it's often for, advancing your own skills and knowledge, whether that's in a hobby or helping, I'm a mom, right? Helping me organize applications for preschool when my son was younger. I mean, Claude is so powerful in being able to just help abstract away some of the administrative duties of just being a person. But I think the difference to us in our consumer product, maybe compared to competitors, is it's not an entertainment tool. We're not using it for people to sort of have fun and have it be this it can be fun to use it, but it's really for kind of productive activities, whether those are at work or at home. And I believe that is going to continue to be a reasonably large number of people that wants to use that product and service, even though enterprise is our primary focus.
Great. Well, thank you so much.
Thank you.
Daniela Amadei, the president and co-founder of Anthropic, the sister of Dario Amadei, in conversation with Bloomberg at the Bloomberg Tech Summit in San Francisco. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, taking a look at Wall Street today, seems we're moving in two directions.
Yeah, tech is moving in the downward direction, interestingly enough, even as you have the S&P 500 higher. So let's get a quick check on the major benchmarks and everything else as we turn back on the markets to Charlie Pellet.
Thank you very much. And here's what's going on. Got to begin with the Dow because we're at a record surging 820 points now, up 1.6% on the Dow. We're at 51,504 on the Dow Jones Industrial Average. S&P higher as well, best level of the day. And by the way, on the Dow, at one point we were up more than 900 points. The S&P right now at 7583, up 29, up 0.4%. NASDAQ lower, little change, down under 0.1%. The NASDAQ 100 index down 0.5%. Wall Street driving a rotation out of chip makers into a broader swath of companies after Broadcom's underwhelming outlook. Broadcom, by the way, down now by 12.6%. The VIX holding just above 15 with a 10-year at 4.46%, the 2-year 4.04%, the 30-year 4.97%. Gold up $40 the ounce, $44.75, up 0.9%. West Texas Intermediate crude down 4%, 92.23 a barrel. Barrel of Brent, 94.58 on Brent. That is a drop now of 3.3%. I mentioned Broadcom down 12.7% after earnings. Ciena right now down 15%. CrowdStrike after earnings down 5.5%. Lululemon reports after the close of trading today, it is down by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet with an eye on the markets for us. Thank you so much. Meantime, Joe and I here in Washington are keeping an eye on the Senate floor because, yes, the vote-a-rama has begun. This long, laborious process of trying to get the budget reconciliation bill that funds ICE and CBP for 3 years passed on the Senate floor and onto the House. But there's a lot of amendments that are going to come up in this vote-a-rama, and we're still stuck on the first one, put forward by the Minority Leader, Chuck Schumer. This is essentially something that only needs 50 votes, a majority, and we'll send it back to committee specifically with the purpose of having language in it, this reconciliation bill, that would make sure the $1.8 billion so-called anti-weaponization fund is dead to the extent that it can never be resurrected? As that is very much an open question. And this question is indeed, Joe, still open on the floor. It's been hours now, and there's high drama, it seems, among Republican senators as to whether or not they're going to get the votes to kill Schumer's amendment, because Senator Bill Cassidy, of course, relatively fresh off his primary loss, in part at the behest of President Trump, is now acting as somewhat of an impediment to forward progress here.
Not for the first time in recent memory either. Let's play it to our political panel. Bloomberg Politics contributor Rick Davis, Republican strategist and partner at Stone Court Capital, is with us alongside Frederick Hicks, Democratic strategist, founder, CEO of the Hicks Evaluation Group. Rick, you've been through a lot of vote-a-ramas in your day. Should we assume that Democrats are involved in these negotiations, or this is all being held inside the family?
Yeah, I think right now you've probably got conversations going on with family members. You've got Senator Tillis who's looking for a way out of this by not having to take the bill down and take it back to the Judiciary Committee. You've got other people like Senator Cassidy, who is likely a no vote on anything related to the weaponization fund. Senator Collins is probably talking to the leader about the fact that she's already issued a no vote, what it'll take to get her to change her vote. I mean, so there are probably at least 8 Republicans that I can count right now who would be willing to vote against the bill in order to get an amendment in or some kind of statement that prohibits the development of this the weaponization fund.
Well, so the question becomes, Frederick, given how we see things in Congress, a lot of times they're looking for symbolic moves more than anything else. Do you think this is about a show vote to show that they tried to block the weaponization fund from ever becoming a thing again, or do they actually want to see that as the end result? Because that could mean different outcomes here if that is the result they are actually seeking, not just something for show.
Well, that's a great question, but I think they really want to see this thing dead and never, ever resurrected. Listen, the public backlash to this idea, this notion, has just been pretty consistent and pretty robust. And Republicans, from really the introduction of this, they have been uncomfortable with it. At least certain Republicans have. And so this is basically an uphill battle. And I think many Republicans in the Senate are disappointed that that it's gotten to this point where they have to make this kind of a statement with their votes and with this process. But the president has persisted with this, despite his unpopularity, despite his own vocal, acknowledgement that he's not really concerned or doesn't think much about the economic plight of everyday Americans. And so, here we are, and this is where we are. And I think this group of Republicans now, this 2027 Senate might be something completely different, but this 2026 version that still has Cassidy, that still has Conrad and other people that the president has opposed, really do not want to see him score and win with this. And I think they really are opposed to it.
Well, before it was the weaponization fund, Rick Davis, it was the ballroom. We can continue counting the ways this president continues to drop pianos on his own Republican Party here in Washington, D.C. If the anti-weaponization language is struck from the bill, or I guess if the prohibitive language is added, is there a chance he vetoes this reconciliation?
I doubt it.
Okay.
This president has never stood his ground. I mean, part of the reason we're in this right now is he didn't stand his ground and say, we're not going to have this weaponization fund. He vacillated on it. And remember, there's no language in this reconciliation bill that says anything about a weaponization fund. What Schumer's amendment is saying is we're going to put language in there that says there'll never be a weaponization fund. And that's why it's got to go back to be rewritten. If it was just an amendment, say, strike the language on weaponization, we'd actually not be talking about this now because it would already be done.
Got it, right.
And that's what Senator Tillis and some of the others who actually have re-elections coming up, not Tillis, but Husted and Sullivan, who have tight re-elections, they're trying to find a way to not have to gut the bill, send it to the president with language that's enough that they feel like they can go back to their constituents and say there'll never be a weaponization fund.
Well, you mentioned Husted. He actually just voted with the Democrats on this one, voting for the Schumer amendment. However, Bill Cassidy did not. He voted no. We're awaiting the gavel to come down. But right now, it looks like this is going to fail 48 to 50.
So
My question is, what did it take to get Bill Cassidy to a no on this? What was he promised? in order to secure
They're
a
going
no
to hold
vote
another primary
on this particular amendment. I don't know if you have any theories of the case here, Frederick, but I would imagine that this story around the fund isn't over just because this particular amendment put forward by Schumer looks like it's going to go down.
Well, I think you're absolutely right about that. Number one, I didn't expect Republicans to give an amendment with a Democratic name to it, any kind of real chance of success. I think we still might see the elements of the Schumer amendment pop up in something else throughout the day. Again, we're just at the beginning of this vote-a-rama. I am curious about what was promised to Cassidy. Listen, there's a lot that's going to be decided in this reconciliation process, and I'm sure there's some things that he would like, for Louisiana, and some things that might even help, secure his own future and his exit as he exits Congress. But I think to me the story is that with this being so close, 50 to 48, that's not a good sign for Republicans going forward. I mean, that shows that there really can be a lot of movement and that there's really, as we were talking about, a lot of will, I think, to see this thing die and to never come back. And so it's going to be interesting to see what kind of deals are traded. As Rick mentioned in our last segment, there's a lot of horse trading on the floor right now, and then a lot of movement back and forth, literally running and figuratively running back and forth between chambers and all, or between office and chamber. But listen, we're just at the beginning of this, and this is a fascinating turn. I think we're just going to see even more happen throughout the day.
Well, it just got a lot closer. No longer 48 to 50, 49 to 50 as Dan Sullivan also votes with the Democrats.
How about that? This is really interesting here, Rick.
I'm so glad I said Sullivan and Husted.
That was well done. It's amazing. When Rick Davis says it, it happens. Okay, even if this doesn't pass, though, what about a Tillis version? I mean, if we keep chipping away at this, could one of these get the votes today, Rick?
Yeah, look, I mean, obviously Cassidy's not running for re-election. Thank you, Donald Trump, for having beat him in a primary. And yet, the thing you got to always remember is these people all have strong relationships in the Senate. Cassidy's very close to Thune. It could have been, hey, this isn't going to affect you at all at this stage. I need you to walk the line on this to save this bill. But I'll give you something in return at another point in this vote-a-rama. And that could be what Tillis is working on, for instance, is, okay, I'm going to find a way to put this in there without having to rewrite the whole bill.
Wow.
So those are the kinds of negotiations. And then they send it to the staff to say, is there legal language that we could actually develop? That's got to go through some of the parliamentarian. And so there's a mad dash to try and get this done. And in the meantime, Schumer's just dishing up one amendment after another. You'll have an amendment in there about this IRS settlement. That could actually gum up the works again. Somebody is probably going to drop down an amendment on the ballroom just because you can. It's not in the bill either, but why not get everybody on the record? So it's a combination of politics, real policy, but also some performance. And you see it all during a vote-a-rama anytime. I'd say the stakes are higher now than they've ever been.
Eric Wasson told us earlier, Kaylee, that either way, this is going into the dark hours. This will be still underway tonight.
Well, and how lucky are we that Eric Wasson, who covers Congress for us at Bloomberg, is joining us now from Capitol Hill. Rick and Frederick, stay with us. We'll come back to you in just a minute. We just want to get the latest from Eric. So, Eric, Bill Cassidy, who seemed to be like the biggest of holdouts here, votes no to the Schumer amendment. Do we know what he got for that no vote?
We don't know. We're going to try to find out almost immediately. But we did see them workshopping potential amendment on the weaponization fund with the parliamentarian. The big question here is whether such an amendment would require 60 votes to clear the Senate because it's not germane to the bill, or only 50 votes. They did remove some Justice Department funding from the bill, and so therefore any amendment related to Justice Department would require that 60-vote threshold. It'd be harder for Cassidy to get that through. They're negotiating that, but it was interesting to see how other vulnerable members, like Susan Collins, like Dan Sullivan, like John Husted, all voting with Schumer to sort of give themselves cover and some distance from the president when this fund is so controversial, and the idea of paying people who beat up cops on January 6th is just anathema to many of them.
Wow. Is the Tillis amendment similar in language to the Schumer amendment? I know there might be others. Eric, will this be a replay when we see the others come up?
we really have to see what they're revising. But the key thing I noticed when I look at the Tillis Amendment and the Cassidy was that a date certain. A fund created on a certain day in May will not be funded for anti-weaponization. You could just create a similar fund in June, perhaps. There's a big loophole there. So we'll be looking very closely at what this amendment says, whether it gives enough satisfaction to all parties and also allows the president to not veto it.
Well, so as we consider the president's role in this, do we know if he was involved in these conversations over the last few hours? Eric, we know he is no stranger to having to call in to votes on the floor that are being held up, waiting for his hammer to come down.
I can't say whether the president himself has been talking to John Thune, but we certainly know that John Thune coordinates very closely with the White House Legislative Affairs Office, and they will be trying to get a signal and a read from them on what is acceptable. They don't want to put this bill in any jeopardy. Very eager on the Republican side to fund ICE and CBP for the rest of Trump's terms, taking away any leverage Democrats might have on changing ICE tactics, such as dropping masks or requiring judicial warrants.
So, Speaker Johnson's hoping to get his hands on this for a vote tomorrow morning. Eric, what are the odds that happens?
I still think it's more likely than not it passes. At the end of the day, the dissidents and rebels did get a concession. They got at least a verbal acknowledgement that this fund is dead. They also got the ballroom dropped, and that was a real weakness for many Republicans of this bill, the idea that they were, quote, ballroom Republicans in the eyes of Democrats who were caring more about a ballroom than people's ordinary lives. That's out. So those are significant concessions. I think they just want to really square this language and see if that can come through. But if I was a betting person, I would suspect that this is passing it by the end of the week and gets into law, probably without, a funding language, but we'll see what they come up with. Funding language on the weaponization fund, I should be clear.
Understood. You've been great today for us, Eric. We'll let you get back to it. Live from Capitol Hill, Eric Wasson, Bloomberg News congressional reporter, as we bring the panel back around for their take, Rick Davis and Frederick Hicks. Rick, this is going to be a long one. What is the staff doing on a day like this? You picture a room full of guys with sleeves rolled up and gals who are trying to get themselves as quickly as they can to the principal and I guess back to the leader's office. What's the exchange happening look like behind the scenes?
Yeah, it's pretty tense right now because there is a clock on this, right? And typically Congress hates clocks, except for that Friday afternoon when they go home. Probably lots of boxes of pizza laying around the room, stinking up the offices. And these guys are really crushing it to try and find little seams in the legislative language that can be used to hook these amendments into place that would then satisfy the parliamentarian and satisfy the sponsor of the amendment and get enough votes. And that's a really difficult exercise because it's legal language art. Because remember, these are statutes in law. These are not things that are easily changed in the next administration. You got to have another 50 vote. And so they take it very seriously. And so you have the legal staffs within these members' offices, the committee staffers who have written the reconciliation bill to begin with, and they're debating as to whether or not it fits, and all that getting cleared through the parliamentarian. It's a real big struggle during a big debate like this in a vote-a-rama where you have amendment after amendment after amendment, to dig through, and so it's going to be. I couldn't agree more with Eric. Late night tonight, but they always seem to get their job done, right? How many times have we said there's just no way this is going to happen, and then boom, agreement. Everyone votes and they go home.
Well, and when we consider, and Rick is doing a wonderful job, Frederick, speaking to the nuances of the policy making here, how hard and how much legwork has to go into actual outcomes. I would imagine most of the American electorate is not really privy to that process or care very much about it. It's the outcomes that matter here. So what is the optimal outcome of this vote-a-rama for Democrats and for vulnerable Republicans trying not to lose their seats to Democrats?
Well, I think you just asked a great question, and the key word in your question really is the word vulnerable. So while we have the internal machinations of Congress, how that works, and Rick did a great job breaking that down, there's this cloud of the election hanging over everything that's happening. And while a staffer is looking for the seams to figure out how you can make this work legally, the member has to think about their own electoral prospects, and leadership has to look at or do everything with an eye towards November. And looking at the trends since Donald Trump came into office, things have moved very heavily in favor of Democrats. despite what's going on with redistricting and things of that nature. And so that is also a thing here. And then the other part of this is you have people like Cassidy, you have people like Connor, and you have people like Tillis who are either not running for re-election in the case of Tillis, or the others who've been defeated in the primary, who are thinking about their own legacy and thinking about what they want to see accomplished out here. And so they are somewhat freed from having to place for electoral politics. So you have this whole cloud of an election that's really the other part that's impacting what's going on inside the buildings there. But that being said, for Democrats, I think the optimal thing is, number one, we want to see the ballroom die, or I'm sorry, the fund die. We want to see the ballroom die. We want to see Congress reassert its power. We want to see a system of checks and balances solidly and on the president. And then, with respect to this process, we want to see some things that are solidified or codified so that we don't have to deal with this next year. The one thing we do know is that based on what's happened in the primary thus far, that if the Republicans fall into the Senate, next year's Senate is going to be more to the right than this year's Senate, and the opportunities to do something are going to be much more difficult.
All right, Frederick Hicks and Rick Davis, our political panel today. Thank you so much for joining us. Of course, the Schumer amendment may have gone down, but the Vote-A-Rama is far from over, and we'll have more on that still ahead on Balance of Power. We also have to talk about Iran and the prospects for a deal or not. That's ahead.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average off session highs, but we are still looking at an 828-point advance on the Dow, up 1.6%. S&P up 32 right now. Best level of the day, up by 0.4%. NASDAQ turning around since our last update, higher now by 13. That is a gain right now of just about 0.1%. The Dow, by the way, on track for a record close. All of this with a VIX below 16, a 10-year at 4.46%. Gold is up $43 the ounce to $44.77, up now by 1%. West Texas Intermediate crude 92.33 a barrel. Crude oil moving lower by just about 3.8%. United Health shares leading the Dow higher after B of A Global Research upgraded the health insurer to buy from neutral. Shares up now by 5%. B of A, by the way, raising the price target to $450. Right now, United Health at $396. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets for us. Thank you so much. As Charlie mentioned, indeed, we are seeing oil prices down today. We're back around $92 a barrel on WTI, $94 a barrel on Brent. But of course, this comes as we're hearing growing warnings about the potential inventory depletion that is already underway, but that we could really reach in the not so distant future this summer. The bottoms of barrels could be reached if the Strait of Hormuz is not open. And is the Strait of Hormuz going to open back up? Of course, as we told you yesterday on this program, President Trump suggested that the Hormuz Strait opening, at least in terms of the U.S. naval blockade being over, might not happen until Labor Day. I don't know if the oil market is able to hang in there that long, but it's just one of the many open questions we have surrounding negotiations with Iran and whether they are able to become fruitful. And of course, the other major question right now is, can those negotiations move forward so long as there is still a question of Lebanon and Israel's activities in it against Hezbollah?
So consider a couple of headlines. We start with word from Iran, taking issue with and contradicting what we're hearing from the White House. Iran says there has been no progress in talks with the U.S. over an interim peace deal, even as the White House projects, and the president himself, the potential for a deal to be struck at any moment. We now also learn that Hezbollah has rejected the outcome of direct negotiations between Lebanon and Israel. The letter that we got from the Secretary General here is not encouraging, Kaylee, and when you put these together, it's like two different worlds. So we wanted to spend some time with Aaron David Miller. It's always a pleasure to talk with a senior fellow at the Carnegie Endowment for International Peace. Aaron, it's great to see you, and I'm wondering how you're interpreting these headlines. Maybe the president said the most important thing this week, that it will likely be until Labor Day, until the strait is reopened. How about you?
Joe and Kaylee, thanks for having me. Look, I think we're poised somewhere between negotiation on one end and escalation on the other. And the two data points you identified, including, actually there's three, there's Hezbollah, there's Iran saying no progress, and the president saying, hey, what me worry, I'm not in a hurry, we'll wait till Labor Day. All of this suggests to me that neither side, or both sides, continue to believe that they have the potential to get what they want. They have the potential to escalate if they don't. And it's hard to believe, but I think both sides still believe that the other will somehow cave under pressure. And I would just say to you that, and I don't think it's delusional thinking, I think the Iranians, frankly, are in a much better position. And both the comments from Tehran about where the negotiations are and the fact that, again, Hezbollah says there's no ceasefire suggest a regime that's emboldened, has two cards to play, cards that the president desperately wants, reopening the Straits of Hormuz, and some progress on the nuclear issue, not prepared to play them yet.
Well, just a point of clarification, Aaron, when you say two sides here, are we still assuming that the U.S. and Israel are fully on the same side, at least in terms of the outcomes they would like to see, or should we consider Israel's side to be a third side here?
No, I mean, I think U.S. and Iran are the major combatants, right? And I think while the Israelis, particularly the prime minister and the head of Mossad, played a critical role in persuading the president, although I think they were pushing on an open door, Israel is not going to have much of a say, frankly, in how the war ends. Yes, it played a role in how it began. It's not going to have much say in how it ends. And if Donald Trump believes that some deal with Iran will get him out of the box that he's put himself in, he'll pick up the phone. He'll say, Mr. Prime Minister or Bibi, you got to stand down in Lebanon. Because the most important thing in Benjamin Netanyahu's life in 2026 is not Iran, not the West Bank, not Gaza, not Lebanon. It's the fact that either in September or if the government goes to term in October, you're going to have Israeli elections, probably the most consequential in the history of the country. He needs Donald Trump to set up a re-elect Benjamin Netanyahu campaign headquarters in Washington. Trump can't re-elect him. But if Netanyahu is perceived to cross him, he loses the confidence of the president, he's just going to maximize and increase his vulnerabilities exponentially.
As someone who understands the mentality inside the regime more than most we're going to talk to today, Aaron David Miller, I'm wondering your thoughts on the post that President Trump made about the War Powers Act that passed the House yesterday, having seen it already pass the Senate. He talked about the 4 bad Republicans and all the Democrats, as he put it, limiting his war powers right in the middle of final negotiations, he said, to end the war with the Islamic Republic of Iran. Who would do such an unpatriotic thing? What does Iran think of a vote like this? Does that also embolden the regime?
I think if there's any delusional thinking on the part of the Iranians that somehow President Trump is so worried about the midterms, so worried about the affordability issue, that those are the main drivers in his calculation. I think they're miscalculating. I think the greatest constraint on this president is that in a war of choice, which has now become a sort of flawed piece of necessity, and the issue that's going to define more than any other in terms of foreign policy, Trump's legacy, what he really is afraid of is being perceived to be a loser, a sucker, and emboldening the one regime, in addition to Venezuela and Cuba, that he wants to undermine. That is what's holding the president back. He can blame, look, he blamed the Democrats. There will be losses in the midterms, probably, for the Republicans. He'll blame it on bad candidates. He'll blame it on the party. No, I think the real key to understanding why Trump believes he's not going to cave or concede is that fear of being portrayed to have lost. And frankly, right now, if you stop this war today, epic fury would be perceived to be an epic disaster.
It's great to have you back, as always. Aaron David Miller, Senior Fellow, Carnegie Endowment.
Thanks.
As we keep our eyes on what's happening overseas. I'm Joe Matthew alongside Kaylee Lyons in Washington, as we are now apparently going back to San Francisco, Kaylee. Trey Stevens, the co-founder and executive chairman, Anduril Industries, in conversation with Bloomberg's Ed Ludlow.
Because there are deployments of Anduril technology in the Gulf, as an example. You yourself, you have been and will go very soon to the Middle East. How does that work in practice, being an American company that serves the U.S. military and the Department of Defense, but also allies? You must spend a lot of time meeting with the defense apparatus and governments of other nations.
Right. Yeah, I would say it's like one of the most common questions we get on ethics. These are important questions from new employees, younger people that are, talking about joining. They'll lean forward very dramatically and say, how do you make decisions about where we sell our capabilities? And I'm like, well, it turns out there's this whole thing called foreign military sales. Yes. So actually, the United States government decides where our things get sold. So those are very clear rules. It's not like I'm making a decision about I really think we shouldn't sell to this country. It's like, well, yeah, the government has already kind of pre-decided that that's the case. But yes, it is important for U.S. foreign policy in a bipartisan way. This is not a partisan issue. In a bipartisan way, it's important for U.S. foreign policy to provide capabilities to our allies to make sure that they are fully integrated into our joint operations, which is really important, but also that they have the capabilities to defend themselves utilizing U.S. production that may or may not exist in many of these countries. Like they don't, our allies, many of them, are not going to fund and build a 5th-generation fighter plane on their own, nor are they going to develop really complex, multi-million-dollar counter-air missile systems. And so this is a role that we play in the ecosystem, is to go out and say, to countries like Ukraine or like, the United Arab Emirates or Saudi Arabia or Qatar, hey, the United States has the capability. We want you to have that capability as well. And this is how we're thinking about the cost curve for deploying these capabilities and kind of the layered approach that you can take to reducing the cost per intercept or whatever it is. Now, the tricky thing about all this is that, there's a big difference between being a startup that is designing and developing a capability, which is great, and there's a lot of really interesting efforts that are happening there, and being a producer of those capabilities. And this has really been the name of the game for Anduril over the last few years, is transitioning out of just being like a really innovative technology company and focusing almost all of our effort on how do we produce at scale in a way that allows us to not only supply the U.S. customer, which is our primary customer, but also be supportive of that foreign policy mission and supplying those same capabilities abroad. So this is really about manufacturing and production more than almost anything else.
That takes us to Ohio, right? So in January of 2025, you guys phoned me and said, come to Ohio. This is where our next facility will be, Arsenal 1. Remind me, there's a reason there's a 1 next to it. We should get to that in a second. But fast forward, present day, production is underway. You built that place incredibly quickly. What is it doing? And why Ohio, I think? Why did you settle on that state and that specific location?
Yeah, I mean, again, transitioning from a startup where you're hiring a bunch of very well-compensated, software engineers and things like that to build things, to a world where we're producing with, a very different type of labor force, a very different type of skill set that's required. We recognized that we needed to go to a place where we were going to have the ability to scale, like our footprint, literally, that there was going to be enough workforce, skilled labor, that had manufacturing experience to fill out that footprint, and in a place that we felt like we could get the on the ground support from the local government, from the economic development organizations to do this as rapidly as we possibly could.
You know Ohio well as well. That helped.
I know Ohio well. It didn't help. I want to be clear. I'm from Ohio originally. When we narrowed it down to our last 3 locations, I sort of recused myself from the process because I'm like, man, if we pick Ohio, everyone's going to think I put my thumb on the scale. And then at the launch event that you were at, Governor DeWine got up and he said, first off, I'd like to thank Trey's mom. And I was like, oh, man, you're blowing the whole narrative here. But yeah, I think Ohio is this incredible place for manufacturing. Has a long, long history in manufacturing. Just in my family alone, between my uncles and my grandfathers, we have worked at Ford, General Motors, Frigidaire, National Cash Register, Luxor Exotica. I mean, there's a tremendous history of manufacturing, but much of that evaporated. We had a sort of a bipartisan policy around globalization for decades, and it's really easy from sitting on the coast, whether you're in New York or San Francisco, to kind of forget about what happened in the middle of the country during that 20, 30-year run, starting in the early 90s. But every single one of those companies that I just mentioned no longer has factories in Ohio. And there's a lot of people that have been fighting for their lives to find employment. And some of that's coming back now. I think DeWine's administration has done a great job of incentivizing companies like Anduril to come in to build new factory campuses. So it's kind of catching back up. There's some wind in the sails. And, we're really excited for what we're going to be able to do there.
Anduril has had growth in lots of different ways, right? The valuation that you've grown the company to, but also the footprint. We're short on time, so I want to just address the Arsenal 1 thing. It indicates that there is going to be an Arsenal 2 and an Arsenal 3. Is that in the United States, or is it time now where Anduril says, okay, well, if we're serving Western allies, we should maybe manufacture locally to where our technology is deployed?
I think it's both, actually.
Okay.
Arsenal 1 is primarily going to be focused on production of Fury, which is our collaborative combat aircraft, basically an autonomous fighter plane. Initial units will be rolling off the line this summer, so that production is already underway in the first 800,000 square feet that we have up and running. Later this year, we're going to start doing Barracuda, which is our low-cost cruise missile, and Roadrunner, which is our reusable interceptor missile. Both of those will start coming out of Arsenal 1 in Ohio as well. But there are other factories that are going to come online. Some of those are domestic shipyards that we're building out. There could be additional production facilities in the United States. Right now, we have 16 production facilities across the United States, which some of those are being consolidated back into that Ohio footprint. But to your point, internationally, the United States is not the only country that has a national prosperity agenda. Obviously, all of these countries want to see increased investment in their, local economy. And so we feel very aligned in making sure that as we go in and we do some of these larger deals to bring those capabilities to bear with our allies and partners, we want to build that local production piece to feed back into their economic growth as well.
Final one on Anduril, because we've probably spent more time on Anduril than I expected, but a lot of people that know Anduril, they know Palmer Luckey. Mm-hmm. You're the executive chair, Palmer is CTO, a co-founder, there are other co-founders, and then Brian is the CEO. And I mean this with massive respect, but I guess Brian, until quite recently, got less of the limelight. How does it work between the three of you and Matt and others that are running the company? How do you divide responsibility and decisions?
Yeah, Anduril, because of the way that we approach our business, we have many business lines. We have dozens of SKUs, different products that we sell, and almost every single one of those is a scaled startup in its own right. And so there's no way that this company could be run with a kind of a very light or thin executive team. We've focused really intentionally on building as deep of a bench as we can. And that has been, honestly, the most important asset to the company since the very beginning. Mm-hmm. So across the four co-founders, we've kind of divided the world up into pieces, and we each have different chunks of accountability. Palmer is incredibly talented at what Palmer does. The Palmer Show, as many people who have interacted with Palmer know. Brian is naturally more introverted, but he is the boss. Yeah. Like, he is the chief executive officer. His say is the final say. And it is actually required, really, Palmer and I pushing him out the door a little bit to say, look, yes, you need to be out engaging, because his natural tendency as an engineer, he's the most brilliant software engineer I've ever worked with in my career. His personal preference would be, I just want to sit back and work with the SVPs that run the product lines. But I think it's really important to get him out there. And Matt Grimm, our other co-founder, who's the COO, he runs the entire operational side of the business. And, that is an incredibly hard job. There's no way I would want to do that. But I think having those really clear swim lanes is really important.
You Trade do this fascinating job of evenly splitting your time between Anduril and being one of the investing partners at Founders Fund. A much better job than I've done. I've done 3/4 of this on Anduril, but in the time we have left, what is that like for you at being one of the investing partners at Founders Fund, and just straight away in a firm that's preparing to be one of the big beneficiaries of an IPO of SpaceX?
Yeah, I think there's all sorts of different ways that you can approach venture capital. I think for some people, they really want to focus on kind of growth and doing diligence. There's other people that are pure intuition, that are just like, measuring founders to make early stage bets. The kind of strategic slice that I've found that works best for me, given my own personality, is I'm an operator at my core. Like, I'm much more comfortable working at a startup than I am working at an investment firm. But that's actually a really interesting lens into the startup market, because I have exposure every day to what software are we using that works? What are the strategic challenges that we're encountering as it pertains to the rise of AI? These are questions that I'm dealing with on the company level. And so when I have the ability to interact with other startups, I think I have the ability to kind of identify areas where, wow, that would actually be really helpful, or I've seen 3 or 4 other things that approach this in a way that I think is better. So, everyone has their own set of advantages. I feel like doing both in parallel has been a great asset, both to Founders Fund and to Anduril.
Is there a Founders Fund SpaceX thesis that in aggregate across all the investing partners you hold, or is there a Trey thesis that you apply?
We all have very different opinions on every portfolio company. We are a very debate-driven culture. I think SpaceX is kind of a unique encapsulation and a microcosm of the way that Founders Fund works, because we invested very early, like around Flight 2.
2008?
It was way before my time,
Okay.
like 6 or 7 years before I joined the fund. And at that time, obviously, it would have been crazy to think about, like, the Starlink as a part of the business. And even when we made the Starlink era bets in SpaceX, it would have been very difficult to imagine how AI would have impacted, data centers in space and all these other things that are going on. And so now, you look at SpaceX and you're thinking, like, wow, like what is Elon and the team working on pertaining to, like, getting humanity to being a Kardashev type 2 civilization? These weren't the questions we were asking when we made the original investment, where it was like, can we get a rocket into space? It's very different companies at that point.
So you have to, like, refresh in real time.
Constantly,
the thesis refreshes. I mean, how much does the venture capital industry need this IPO? I think what's interesting about the Founders Fund investment is not just how early it was, but when it continued, it was across several funds. It's a big moment for the LPs as well. How much are they kind of banking on this and have been waiting on this?
Well, yeah, we have SpaceX investment in almost every fund, both across our venture funds and our growth funds. So there's a ton of exposure for LPs that were with us since the very beginning, and even the ones that joined us very recently. I think the core lesson that everyone has learned from this experience is never bet against Elon. It's just a bad idea. I think getting the opportunity for people to see liquidity that they've been hanging on to for 18 plus years is a tremendous opportunity to see some of those gains and also reinvest those in whatever the next SpaceX is going to be.
Very quickly, the firm has 12 investing partners. Could you just explain how it works with Peter? Peter right now is in Argentina, but, like, does the firm do the classic Monday morning meeting thing? Does he Zoom in? Are you constantly, the 12 of you, talking to each other? I think there's still a mystique there about how it actually works.
I'll be honest, there's still a mystique to me. I'm not really sure how it works either. Peter he's an N of one. He's a very interesting personality. His location is always, it's like a point of frequent conversation that I don't really understand, because he's as accessible as he's always been, regardless of where he is. If for anyone that's read his book 0 to 1, you can kind of imagine how that would translate to a venture fund. There Monday meetings, for example, we don't do Monday meetings. Why don't we do Monday meetings? It's not because we're lazy. It's because when you create a process, a tracking system for how you move something from step 1 to step 2 to step 3, you end up making relative rather than absolute judgments. So you're like, well, this is the best company I met with this week, so I'm going to bring it to the partnership. And then they say, like, well, this is the most interesting company that we have as a fund have seen this month. And so by the time it gets to the end of the process, you're like, well, it's made it this far, maybe we write a small check. And there's just, like, not a lot of conviction that's built into that. So we have created a ton of friction in the process of getting a deal through, because we have no standing meetings. And so if you want an investment to be made, you have to go and wrangle all of the other people that are required to get that deal done. And
internally with each other?
Internally with each other. And any one person can basically torpedo a deal. And so you have to go charging in as hard as you can with really high conviction. And what that means is that we make, as a fund, significantly fewer investments by number, not by dollar amount, than any other venture fund of our size, but we're highly, highly concentrated into the bets in the fund. So, call it 40% of every fund is concentrated in just a couple of companies. And I think that really is because we've created an enormous amount of friction. It's just really hard to get anything done.
Trey Stevens, Founders Fund, Anduril. We never have enough time, but actually, I think you just gave us more insight into the Founders Fund world, but also the industry right now. than we've had for some time. Ladies and gentlemen, Trey Stevens, thank you very much.
All right, everybody, a very good afternoon. Carol Massar, Tim Stenovec, live here at Bloomberg Tech in San Francisco. Of course, our own Ed Ludlow up on the stage with, of course, Trey Stevens of Anduril Industries. It's just one of the many conversations that are underway. They started last night, and there's a lot going on still.
We are at Bloomberg Tech in San Francisco. It is a gorgeous day, and it's just fantastic programming. Bringing together the leaders of CEOs of companies, investors, innovators. They're harnessing the technology to change the world around us. Folks like Mary Daly, President of San Francisco Fed, Hock Tan, President and CEO of Broadcom coming up, and so many more here at Bloomberg Tech.
Including a guy sitting right next to us. We're going to get to him in just a moment. Samir Samad, he is President of Android Ecosystem at Google. As I said to him, it's a system we just take for granted, but there's so much involved, and it's evolving in a world of artificial intelligence. So we're going to get into it with him. Keep in mind, it's the world's most widely used mobile platform, so what it does is closely watched.
Also, he's just about 8 months into spearheading an AI-led effort to transform his telecom company. Dan Schulman over at Verizon, I still call him the new CEO. We're going to hear from him in just a few minutes.
You got to get to that 1 year mark, and then we start calling you the old CEO.
I still call it Google, by the way, so that's how I roll.
Hey, plus he's one of the godfathers of artificial intelligence. He won the Turing Award because of his work with deep learning. Yashia Bengio will be talking all things artificial intelligence. Looking forward to that deep dive.
Also, I'm looking forward to something a little later this hour because we are a Hatch Sleep family in Brooklyn. We got those products in our kids' rooms, the gadgets that are increasingly in our lives, helping us do things like sleep better. And Grady Weiss, the CEO of Hatch, is joining us in just a bit.
We talk so much about getting a good night of sleep. It's all my doctors are like saying. Hey, folks, a lot coming your way in the next 60 minutes, in the next 3 hours here on Bloomberg Business Week Daily. Let's toss it back to New York City and Charlie Pellet for a check on today's trading session.
Thank you very much, Carol and Tim. And I got 4 key takeaways at this hour. Dow at a record, oil is tumbling, chip makers are sinking, and the S&P 500 index best level of the day. Let's get into the numbers. S&P up 39 right now. It's 75.93. That is a gain of 0.5%. The Dow surging 808 points. The Dow up 1.6%. On track for a record. Wall Street driving a rotation out of chip makers into several other industries. NASDAQ now higher by 50. Spent much of the day in the red, up 0.2%. The NASDAQ 100 index does remain lower, down now by 0.1%. We've got the VIX just above 15 with a 10-year at 4.46%, the 2-year 4.04%, and the 30-year 4.97%. Gold is up $42 the ounce to $44.77, up by 1%. A retreat for crude, West Texas Intermediate. 92.41 a barrel, down 3.7%. Barrel of Brent, 94.67, down now by 3.2%. Broadcom plunging after earnings, down now by 11.8%. This morning after earnings, Ciena down by 14.3%, and CrowdStrike after earnings down now by 4.4%. Recapping, S&P pushes higher, Dow at a record, and for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim at Bloomberg Tech in San Francisco. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I got to say, in prepping for this segment, I actually found a story back in 2019 that Bloomberg reported out. They did a deep dive. The story's entitled, "The Smartphone Revolution Was the Android Revolution." It was by Shira Ovide, and it got into how the mobile operating system called Android drove Steve Jobs at Apple crazy. And the reporting went on to note that while Apple sparked the modern smartphone revolution, Android, Tim, was the essential ingredient that made the devices ubiquitous.
Okay, so fast forward just a few years to today, 7 years later, the open source mobile platform, it's the world's most widely used, depending on the stats that you look at, just about 70% of global share. Leading the global teams behind it, Samir Samad, President of Android Ecosystem. He joins us live here at Bloomberg Tech. Welcome, how are you?
Thank you, I'm great. Nice to see both of you.
It's good to see you as well. Look, we think about Android in the context of iOS, I think, a lot of people, because that's really the duopoly that exists, I think many people would argue. How do you position Android in the United States versus how you position it globally, where it is more widely adopted?
Well, Android is an open source operating system, which is really great because it allows people to build all kinds of different devices. So, of course, we know that Android is popular for phones today, where there's over 3.5 billion Android devices that are used every day. It's the most widely used operating system in the world. But Android is so much more than phones. People use it for cars, they use it for televisions, they use it for smart watches and all kinds of new devices, including some smart glasses that we're working on for later this year as well. So it's really become much more than phones, and it's a whole ecosystem.
Well, it's funny, before we got started, too, when we think about an operating system, how do you think about an operating system within an AI world? That is, we're still kind of figuring it out, right? We're all finding our way here.
Well, it's changing a lot. Things are changing all around us. And I think the way we think about this moment is, we're moving from an operating system to what I call an intelligence system. One that is able to be more predictive and more helpful in the moment for you. So instead of making you the micromanager of your device, which is the way I think computing's worked for 40 years. You have the idea in your head, and you use a pointing device or taps to take that idea and do all the things you need to do to get things done. In this new AI era, how can we actually make the system much smarter? So you give it your intention, your goal, and it can translate that into the action that it needs to take to help you get more done.
Yeah, I want to push on that a little bit, because I still think when right now when a lot of people think about AI, they equate it with LLMs, and they think about LLMs not necessarily as Claude code or helping us vibe code, but rather as glorified search engines, and that actually does search a lot better than we've grown up using. What is the value proposition for an ecosystem in the world of AI? Because you're explaining this idea of us being more productive as a result of this technology, but I don't even know what that looks like. Is it predictive? Does it know what we want before we want it? Like, what is
Which
it?
it gets a little creepy then.
Potentially. Well, let me give you one simple example that I used a new release of Android with Gemini for recently on my Pixel device, which is, I had a list of folks that are coming to a barbecue that I'm holding, and next to each person I had how many people are coming in their family. Are they vegetarian? Are they not vegetarian? The normal thing you do when you're throwing a party, you make this list.
But where do you put that list? Does that go in Google Docs or something?
I think I just had it in an email that I was writing to myself, like we all do sometimes. And I asked Gemini, working on my Pixel device, can you take this list, analyze it, figure out how many hamburgers, how many hot dogs, how many buns, and then go to Instacart and add it all to my shopping cart, and then let me check it out, okay? And, it took that, figured out all the vegetarians, figured out all the things, figured out how many people are coming, how many kids, how many not kids, and it did it for me. And so that probably saved me, 6-7 minutes. You add that up multiple times a day throughout all the things that we're doing, and that's really helpful.
Samir, what do you think in terms of the conversations that we're having about artificial intelligence? Because I do feel like you and I were talking about this at dinner last night. We're just scratching the surface in terms of certainly how we use it and how we need to push ourselves to better understand what this tool can do or eventually do.
Well, I think the most important thing right now is for all of us that are in the industry or even around the industry is to make sure we have hands-on experience. One of the things we tell our teams, and I tell my kids as well, is we should engage with the technology to understand how it can help you and what the limits of it are. And it's changing so quickly. What I tell folks is, even if it wasn't able to help you with something this month, put a note for yourself and check back 3 months later, because it's moving so fast.
What I think is important about your example is that you had the initiative to actually ask Gemini to do that. I think that the challenge in this world is that a lot of people don't know that LLMs like Gemini can actually do that sort of thing. So they wouldn't even know that with that example, AI could save them 6 or 7 minutes. How do you communicate that to a population that has no idea what this technology can do, truly has no idea?
Well, I think that's a great question. And, in the beginning when these interfaces came out, you had a chat prompt, and we didn't know what we could type into it. And I think people do discover over time by trying things. But most importantly, the software itself, this is where the operating system can be really helpful. When you talk about an intelligence system, it should be able to understand from you what your intention is. What's my goal? What am I trying to get done? Oh, I'm planning a party. Okay, well, did you know I can help you with this? And to prompt you to do that and to show you how that it can assist you in that moment. And that's a different kind of user interface than what we've seen.
What I have noticed is with Google search, it's actually pushing me to Gemini within web-based Google search, and it's becoming very natural. So it's sort of like I'm not starting at Gemini, I'm starting at Google search, and then using it, interacting with search like an LLM.
Well, I'm glad it's helping you. I mean, that's great. We have so many different tools that I think are there for folks, and I just want to give one small example of one called Notebook LM. And if your viewers haven't checked out Notebook
People
LM,
love this.
Yes, I mean Notebook LM is one of my favorites, and on the Android app, for example, for Notebook LM, my son who just finished finals, he was like, "Dad, can you help me study for the science final?" And I said, "Sure." Overly confident as I am about this. And then he gave me the material, and I looked at it and I said, I haven't reviewed this in years, but tonight I have to do a study session with him. So I put it all in Notebook LM, and it gave me an audio podcast that I listened to on the way home. And when I got home, I looked like Super Dad, because I could answer these questions and go back. This is where it starts to become helpful. And I think it's all about in the purpose, the way in which we use this technology in a purposeful, intentful way to help make our lives better. And that's what we're trying to do.
So let's go there, because last month when you guys announced a bunch of upcoming features for your Android 17 operating system, you made some comment about there's a great concern about AI for AI's sake, and we want to be very purposeful.
Yeah.
What does that mean?
Well, I think if you look at just go talk to people, the word AI has become pretty overloaded, and I think people they have mixed feelings about it. Let's just put it that way. I think what they really want is to not hear about the technology. What they really want is to hear about how is this going to help. Android has a feature called Circle to Search, okay? And Circle to Search is really simple. You'll hold down the home button, and then you see a flash, and at that point, you can circle anything on your screen. Let's say you have a celebrity on your screen wearing a great outfit. Circle it and say, shop the look. And Google will go take what they're wearing and figure out what the jacket is, what the tie is, what all the different pieces, and bring back each of those to you so that you can figure out where to buy them and if they're right for you. There's a ton of AI behind the scenes there. That's not the important thing. The important thing is that it's super helpful, packaged in a way that's intentful, purposeful for the user to help them get something done that they couldn't do before.
Samir, where do you think AI impacts our world the most? Is it in our personal lives? Is it in our work lives? Is it everything? We keep talking about what it's going to mean for our healthcare and medical world. Like, where do you see it impacting our world the most, or will it be everything?
Well, I think there's a number of places that it's already impacting our world.
Fair.
But I think, if you take the discipline of software engineering, for example, that's going through a lot of change. I think exciting change, but also there are people who are concerned changes, with that as well. I think in the end it will be very productive, and we're going through that same change at Google as well. But I think if you look at every industry, there are amazing applications. And if you look at biotech, there will be amazing applications. If we look at as you said, healthcare, there'll be amazing applications. I'm wearing my new Fitbit Ace, which is a wearable.
I spy 3 different tracking things.
I'm a wearable guy. I'm a wearable guy. But I think the most exciting part about wearables these days...
That's the new screenless Google device from Fitbit.
Yeah, and I love it. And the most exciting part for me is, we've had wearables, as you can see, I've got a bunch of them, and I've been involved in the space for a long time. They're collecting health data, but it's what you do with the data that's most important. Because, if you're looking at your sleep score, I kind of know when I had a bad night of sleep, So the question is, what are the patterns, what are the trends, what are the insights that can really help with my behavior change? And I think that is where AI on the device can really help us with that.
Yeah, if you're listening on radio, Samir's got a Fitbit on one wrist. It looks like an Android watch.
I have a Pixel watch,
an
Oura
Ring. Yeah. He's got to check out what the competition is doing.
Do you have any others to recommend? I'm all ears. Yeah.
So I want to go back to this whole idea of the ecosystem and how it relates to AI and Gemini and the stickiness of it. Because I think that's a part of the conversation that really has just recently occurred to me. And I'm wondering what advantage you think Google has having Gemini as its own AI operating system along with Android, and that working seamlessly across whether we're talking about your Fitbit, whether you're talking about an Android phone, whether you're talking about a Pixel watch, versus sort of third-party LLMs like, Claude or ChatGPT?
I want to say a couple things about that. First, Android is an open platform. And so one of the things that's a central tenet of Android is choice. So Android is the only mobile operating system where you can choose your personal assistant. You can choose the agent that's important to you. So if you want Gemini, you can use Gemini. If you want Claude or something else, you can choose that.
And those will work equally well?
Yeah, the idea with Android is that it's open, and so you should be able to plug in what's important to you. That's a fundamentally important part of Android, and I think it's an advantage in this world where things are moving fast. From a Google perspective, of course, Google competes with some of those companies. And I think Google has a unique position in that it has a full stack of innovation that it's worked on over a decade, from silicon, unique silicon in the data center, foundational models, all the way through to the operating system. And we want to connect those things in ways that are powerful and that help consumers live better lives. That's what we're doing. In fact, recently we announced something called Gemini Intelligence. Gemini Intelligence is the best Gemini experience available on the most premium Android devices. So take a Samsung device or a Pixel device, and that's really where you can experience the best of that entire stack.
Do you think being open source and being able to let users choose and select what their agent will be will give you guys longer term an advantage? Because I do think there's folks say that at some point there's going to be some shakeout because we're not going to need necessarily every big LLM. Like at some point people are going to financially, we heard it from the Cerebras CEO last night, that people are going to select kind of what they need and want.
I think that competition is good. And I think that it's led to a ton of innovation. I mean, look at all the change we're seeing, and that's fueled by everyone competing, which is great. From an Android perspective, the thing about Android being open source and being an open ecosystem, it means that we work with many, many different partners. We work with, for example, of course, Google builds its own hardware with Pixel devices, but we also work with Samsung and Motorola and many other companies. And what that usually leads to in times of very fast-paced change, Android does better because of that open nature. You have innovation coming from everyone. And so you've got foldable phones, you've got different types of LLMs, you've got different types of screen technology. And all of that is great for the consumer and usually pushes the ecosystem ahead.
But it also,
yes, it's an advantage.
I think so.
But it also to me like it's a risk, and it's a branding risk, because the experience that someone might get on a non-premium smartphone or a non-premium device that uses Android might be completely different than the experience that they're getting from one of those high-end Pixel devices that you talked about. So how do you control for that, and how do you sort of protect the brand in an open source world?
Well, it's a great question. And in what we do as Google, our role in this from an Android perspective is to do a couple of things. First is to make sure that the experience has a certain amount of compatibility. Meaning, if you get the Google Play Store, for example, or any store of your choice, and you download apps, they should work. They should work really well, right? So that's a baseline set of compatibility, including the new LLM apps that you want to get. That's really important that we create that baseline of compatibility. But it also means allowing manufacturers to bring the latest and greatest technology. You know, if we controlled everything on our end, you wouldn't have foldable phones. You wouldn't have flip folds or open folds, and that's pushed the industry forward. And so that is the dance. It's Android being open. You want to create a great experience. You also want to let innovation thrive, because that pushes the whole industry forward.
Samir, we've just got about a minute or so left here, and I look at your background, Bachelor of Computer Science from UC San Diego. You completed a program for management development at Harvard Business School. What's your view on AI in education, and maybe how education has to evolve?
Yeah, that's a great question. I think that AI can play a huge role for the positive in education if we embrace it and use it correctly. Obviously, there's a lot of ways and a lot of concerns about misuse of AI in education. I think that my experience is that there is not enough access to high quality education around the world. And if you think about, for example, learning English, that's not only a skill that is important if you want to be bilingual in many countries. It improves your economic standing in many places if you're multilingual, or in particular if you have learned English. Now, how can we get English language learning, for example, to as many people in the world as possible? And there are companies like Open Education and Open English that are doing exactly that, using AI technology. that's awesome. That provides wider access. And I think we're going to see a number of things like that which help level the playing field in many ways.
Samir, thank you so much. Give us so much time. We really appreciate it. Samir Samat, president of the Android ecosystem, joining us here at Bloomberg Technology.
I love the 3 different pieces of wearable technology.
It's pretty impressive.
Yeah. Are you getting consistent scores, Samir?
No.
Oh, it's completely, okay, this is good.
No, I have to say, like, the Whoop is the Oura is the hardest on me, but I really love the new health coach with Google Health. I have, like many of us, I'm sure we all have I'm 48, we all have our ailments. I have a lower back.
Yeah.
It's not great. I told it that. I gave it my MRI report, and it is totally tailored my workout to prevent injury, and like that's been awesome.
Interesting stuff. Love it. Thank you so much. Really appreciate Samir Samat joining us. Let's head to the main stage here at Bloomberg Tech. Dan Schulman, CEO of Verizon, sitting down with Tom Giles. He's Senior Executive Editor of Global Tech here at Bloomberg. Let's listen in.
The pace of change inside, we're falling behind, and that's a really high bar to get over. I think there's some similarities and some differences. I mean, way back when I was at AT&T, we're a big bureaucratic company. Verizon is a big bureaucratic company. It loves its processes. It loves to show its work. But like I'm about outcome and how fast can we move the company forward. We're very risk averse. And I get that. Like there should be places where we are risk averse when it comes to cybersecurity, when it comes to the integrity of our financial numbers. Like my tolerance for risk is like a 1. But for the most part, my tolerance for risk, for trying things and failing fast and then learning from it and moving forward is like an 8 or a 9. And I think in general, the company has probably had a 2 to 3. We're very hierarchical. I need to be very careful what I say because it's taken as gospel. And the truth of the matter is things are changing so fast. Like, I'm always learning. I can't predict the future. I can try and do my best to ascertain like the direction of it, but I'll frequently be wrong on that as well.
It's still less than a year that you've been there, but how do you get from that? You said around 2 in those areas where you want to see people take more risks. How do you get closer to that 8, 9 level of tolerance?
Well, I think you, or I don't know if you would, but, I think leadership is like 3 things in my view. The first is to clearly define reality. And nobody really wants to hear that, to tell you the honest. Certainly, my first coming on stage in front of all the employees of Verizon, I had no slides, nothing on screen, no talk track, just kind of like what I saw. And what I saw was a company that was losing in the market. We had lost market share for 5 straight years. We had gone from being number 1 in market cap to being last. Our forward PE was last in the market and terrible. And so, I kind of laid that out for everybody. And I think we had just gotten used to gently ceding market share as opposed to playing to win. And that just doesn't work for me. I mean, that's just not who I am. When I first came in, I think people were scared because I said that, we wanted to play to win. We wanted to stop losing market share and start gaining market share. And people were worried that was going to lead to, a price war. But that's not the way that you compete. Like anybody can compete on price. Price is easy. It's about competing on other parts of the value proposition where you can actually differentiate yourself and create lasting value. Like if somebody puts a promotion out there, like I can match it now in 2 hours. So there's no competitive advantage to that. So I think it's really about laying out the reality of where you are. And people don't want to be part of a losing team. And then the second thing a leader needs to do is inspire. lay out a vision of what you want to do, how are you going to reclaim your market leadership, and then clearly lay out the path between reality and that vision, and like how are we going to get there and over what time frame, and what things are we going to chew off first and start to work on. So it is going probably faster than I imagined. I'm proud of the team. I don't like giving out compliments that easily, but I am proud of where they are. There's a lot more work to do.
So you've given hints on some of that work that you want to do, moving away from low margin, highly promotional activity, simplify promotions, simplify plans. Put some more flesh on those bones for us. What does that look like?
Well, I think at the end of the day, the reason people leave Verizon is, one, when we price up with no incremental value, and we had done that for 3 years in a row. We had done something like 30 price ups with no incremental value, and that obviously distresses customers, and so we had started to see our churn go up. And I told the company that, like, the first rule of getting out of a hole is stop digging. And so we're just not going to raise prices without any corresponding value. And I'm beginning to see that as our churn starts to come down.
Yeah.
The second is friction in the process. When you come into our store, how quickly can we help you? When we sell you something, is that reflected on your first bill? When you call into customer service, do you get somebody who's empathetic? Do what they see match with what you heard in the store and on your bill? And that's really, really difficult. That's the end-to-end customer experience. Okay. And that's hundreds, if not thousands, of things that you need to do better. And we are focused on every single one of those, just incrementally getting better, because I feel if we can have the best end-to-end customer experience, that's real differentiation, because it's very hard to imitate, and it's extremely hard to do, but extremely appreciated by customers.
It's going to be hard for me as a customer who's been with Verizon for a very long time to notice even many incremental things. I might understand, okay, yeah, I do have a better customer experience, but there's something concrete that I should look forward to keep me from, taking that offer from T-Mobile or whatever.
Yeah, there will be.
Can you give us a little bit more of an indication?
No.
I want to be conscious of
to your point. I mean, the answer still is no. I won't. But I think that when we talk about kind of this end-to-end value proposition, there are little things, there are bigger things. There's how do you simplify things? How do you add elements of loyalty into what you're trying to go do? And so, my view is there's never a big bang in what you're going to do in front of customers, because if you can do a big bang, then your competitors can do a big bang. Right. Unfortunately, it is like having a long-term plan, and as I say inside the company, every single day matters. Like, I want to see incremental improvement every single day. And so learning to use the tools of our time, whether that be AI in how we serve customers much better, whether it be specific offers we put in front of you, elements of the value proposition. So when you see things, expect that there will be other things a month from now, the next month, the month after, because it's got to be a steady drumbeat of improvements.
When it comes to encouraging your staff to use AI tools, what's your stance on that? And specifically, I think early on, a lot of businesses were saying, hey, get out there, use as much as you want, create things, create chatbots, build agents. Have you had to become more disciplined about that? And what are your marching orders when it comes to using AI tools to make either the workplace or the customer experience better?
Well, I'm pretty outspoken on AI, as some of you may know. And I think as leaders of companies, I think we have a responsibility to talk about what could happen as a result of implementing AI.
Yeah.
It's clear to me that whatever we have right now, these are the worst models that we will ever have in our lifetime. Because
don't tell Daniela that.
Yeah, she knows it. Like, she'd be the first to say it,
I get your
right?
point.
Yeah, OpenAI is going to release 4 models, new models, between now and the end of the year. Each one of them will be a step function improvement from where they are today. And so it's clear to me that AI will do at least 3 things inside the company. It will dramatically improve our productivity levels. It will dramatically improve our ability to satisfy customers. You know, in the last 3 months, we've been experimenting with agents that are replacing some of our customer service reps. And those agents, their customer satisfaction rate is 1,280 basis points better than what we had before. Think about that. If it was 50 basis points, that'd be a big improvement. So our ability to satisfy customers, our ability to ingest all of the data around you, like, you may think of yourself as one customer. We think of you as kind of like the sum total of what lines, you know, are under your account. Do your kids under your account? Where do they call? How do you use it? Do you have a Nest associated with your broadband service? And so we need to see all of that to be able to satisfy you. And then finally, AI is going to radically redefine our value proposition. I mean, my view of this is that we have an initiative inside the company called Every Customer Has a Name. And that means that every customer is individual. How we respond to you should be empathetic, but every part of our value proposition should be tailored to the 300 plus different ways that we can look at you and tailor a proposition to you.
To what extent does AI just completely replace, if they're so much better, to what extent does AI replace
You are listening
human
to Tom Giles,
customer
Senior
service
Executive Editor
agents
of Global
completely?
Technology at Bloomberg, asking a question and talking with Dan
For
Schulman,
sure.
CEO of Verizon. They're up on the main stage here at Bloomberg Tech, talking about technology and transforming telecom. Let's go back
With
there.
AI in certain job functions, I don't see how that's not possible. And I don't see how anybody can look people in the eye and say that's not possible.
What percentage of customer service gets displaced?
It can be a large percentage of customer service. I think that function, you know, is a function that has a lot of rote parts of it. I forgot my password. You know, what's my billing amount? Those are all simple and easy things for an agent to go do. More complex things will be a combination of human and machines working together to satisfy. What that doesn't mean, like, you will have functions that will be disrupted for sure. And I don't see how anyone, again, could say that they won't be. But you will have, like what we're seeing in our customer service right now, is the rote stuff can be done by agents. More complex is a combination of an agent and a human working hand in hand to be able to satisfy that customer much better than either of them could do alone. And so I think you'll see all of those things happen, but I'm going to lean heavy, as I think all of my colleagues will, all the Fortune 100 will lean heavy on AI. You cannot be a part of this age without understanding the technological revolution. It'll be AI. I think personally we get to AGI, like some are saying before this now, but I think in the next 2 to 4 years, we're in AGI. I think in the next 4 years, we're at quantum. We're already preparing for Q-Day as early as 2 years away because we need to look at all the encryption pieces of this. And then you're at humanoid robotics, a couple of years after that. That's all happening. And we need to be ready as a society, as leaders of corporations, and then we need to take the responsibility of that. So for instance, I think I was one of the first to pull together a pretty wide scale. We put aside $20 million to train and reskill people that are impacted by AI.
Right.
That's the tip of the iceberg for what we're going to go do. Like my view is we have a responsibility to put serious money, resource, and effort into training not just our employees, not just people that are impacted, but the communities we serve as well in utilizing AI in a responsible way. But as I say to everybody inside the company, you should not be scared of AI. You need to learn AI. You need to be able to use it in your work. You need to be able to use it in your personal life, because that's the age we live in.
One of the first moves you made was a difficult move, admittedly, in eliminating a lot of jobs at Verizon to the tune of 13,000. You set up this fund, $20 million. You said that's just kind of the tip of the iceberg. What are some of the early takeaways from that, and what do companies need to do to reskill workers who are affected by, whether they're in customer service or some other area that's affected by AI?
Yeah. First of all, we're training everybody inside the corporation. We do week-long events now. And that can be from some people don't even know, the right prompts to go use and how to use basic chatbots to being able to gin up agents. We have a whole AI tech stack that we are now implementing, most of which will be done next month in July, all of it finished by November. But you have to move quickly. You have to train. We have 7,000 people in this reskilling that have already applied for that. But as I mentioned, I think our responsibility is to work with government. I'm spending a lot of time down in D.C. To think about how we take our resources, maybe the resources of the Fortune 500 as well. Think about it, if we're putting 50 to 100 million into it, and you multiply that by, my peer set, and then what government can do, you could have a lot of money going into thinking about reskilling, retraining, and how to really utilize AI as hopefully a force that can unleash the best parts of humanity, as opposed to a force that, could add a lot of stress into our democracy.
Speaking of powerful tools, briefly, in our last few seconds, we're out of time. Recently joined, they don't need to know that. Recently joined Project 000. Project Glasswing. Given your background in cybersecurity, give us a sense of, now that you've had a chance to get in there and test it, how powerful is it? What does it do? Should we be afraid of it?
Well, you should always be concerned about cybersecurity. I mean, it is existential. Everything we do is controlled by software. The elevators you go in, the planes that you, board, your financials, everything. I don't know how much money you have in your pocket right now, but, it's probably not a lot. And all of your wealth is digital in some way. So I think, a consumer has their identity stolen every 2 seconds. So I think cyber is existential for us. Mythos, which we've been working with as part of Glasswing, is a tool that can identify a lot of elements that might not have been seen as critical, but when you link them together, they become a critical infrastructure thing that needs to be repaired. Mythos is very powerful. It's enabling us to identify vulnerabilities, but also fix them quite quickly as well. But it's also forcing us to think about, how we ingest third-party vendors into our network and how we everything needs to be patchable remotely. Like within the next couple of months, 85% of everything done in our network, instead of taking multiple hours or days to figure out what's going on, we will identify it in minutes, go right to the element and fix it autonomously.
Lightning round. If the government continues to designate Anthropic a national security threat, given its concerns about how its tools are used in defense, how problematic is that for you as a company?
We have access to it, so I would say Mythos had a head start, but all of these models catch up very quickly. I think OpenAI's model around cyber is extremely powerful as well. And as I mentioned, every 2 to 4 months, these models double in strength and capacity. So I think Mythos was a real good look at what the capabilities of these models can do in specific functional areas. And I'm glad because we do a lot for the critical infrastructure of the United States, and Mythos is going to help us protect it.
Thanks a lot, Dan.
Yep.
Thanks for joining us.
Thank you, everyone.
That is, of course, the main stage here at Bloomberg Tech. Dan Schulman, CEO at Verizon, there with Tom Giles of Bloomberg. He's, of course, senior executive editor, talking a little bit about Mythos there at the end.
Yeah, we're going to be talking a lot more about Mythos throughout the program, including coming up right now, because we're going all in on AI.
Let's go right there. He is one of the godfathers of artificial intelligence, and with good reason. His work on deep learning is why he is the recipient of the 2018 AM Turing Award. It's considered to be the Nobel Prize of Computing. And our team here at Bloomberg Technology reminding us that he is the most cited living scientist in the world across all fields. If you Google him, you will find that he is the only living scientist to surpass 1 million citations on Google Scholar. It's a milestone he reached in late 2025. People are watching what he says and what he does.
We're talking about Yoshua Bengio, founder and scientific advisor over at Mila Quebec AI Institute, co-president and scientific director at his new research organization, Law Zero. It's focused on building safer AI agents. Professor, good to have you on the program. You chair the International AI Safety Report. We'll just start there. Is AI safe?
No, that's the problem. We're building systems that we don't know how to control. They will behave sometimes against our instructions. And this lack of reliability is both a scientific challenge and a problem for the deployment of AI.
So how do we... Okay, if we use social media as the example, we failed that experiment, I think many would say, that we did not keep ahead in terms of oversight, regulations. We could go into all the things that have gone wrong and how it's impacted society. What faith do you have that we get this right? And it can't just be the U.S. deciding or Europe deciding. It's got to be a global work or progress on this.
Absolutely. Safety is a global question because a dangerous model, one that can be misused in dangerous ways, like Mythos, for example, could be designed in one country and then somebody in a second country uses it to attack a third country. So the Americans need to make sure that Chinese models are not used against the U.S. and vice versa. It is an international question.
Can I ask you, is it like missiles and nuclear weapons, and that there will be a mutual deterrence because everyone will be proficient on some level when it comes to AI?
There are analogies. I think one of the big differences is that there isn't as much money to be made with nuclear weapons as there is with AI, which means the incentive structure is now pushing companies towards going faster and faster and not paying enough attention to the safety issues and the public protection.
But I think one thing that I think concerns a lot of people is that, okay, you could have, let's just use Anthropic as an example. You have Anthropic and what they're doing with Mythos, but just because Anthropic has that right now doesn't mean DeepSeek couldn't have that 6 or 8 or 12 months from now, or even something more powerful.
That's right.
So it doesn't matter if like one country is doing things a certain way or one company is doing a certain way if the entire world is not actually adhering to a certain set of framework.
Exactly. That is why we need international coordination. Initially, it's probably going to be just the U.S. and China, but at some point, as other countries are also, beefing up their capabilities, it has to be international.
What keeps you up at night? Like, lay out the doomsday scenario for us.
Well, there are like many catastrophic risks because intelligence gives power, and that power could be in the wrong hands, could be used by terrorists or countries which want to destabilize us. It could be used even by the people in power to create, a dictatorship. And we don't know how to make sure AIs themselves will not use that power against us.
But how? Like harnessing social media, logging in, like taking infrastructure offline, like give us concrete examples of what these entities could do.
So what the companies are worried about right now are cyber attacks because these AIs really have a lot of knowledge of computing and vulnerabilities. And on their radar and the evaluations they're making is also the use of AI to build dangerous viruses. So you could think of people using AI to create new pandemics. They're also worried about what happens when AI itself is used to create the next version of AI. So AI doing AI research, and if we don't control these systems, they could put back doors to create AIs that are not friendly to us.
So
okay, now I am worried.
So in other words, you're talking about AI that can think on its own and work on its own.
Well, it's already the case.
It's already the
case. Whole point of agents is that they're autonomous, they have goals, and they work towards those goals. The real question is, who controls those goals? We would like to be the ones in charge, but right now we don't have the technical answers to make sure that's the case.
Joshua, do you regret then the work that you did years ago?
I think I should have been seeing ahead, earlier, that we were building something that could become extremely powerful and that we don't know how to control, and that it would impact societies in which that currently, on the current trajectory, could be destructive.
So, okay, but here we are, right?
Yes.
And it sounds like it does feel very doomsday and scary, but I do...
And it also feels like it's too late.
No, it's not.
And I want to talk about that, but I also feel like there's a lot of potential to do some great things as well.
Yeah.
Talk to us about that side.
Absolutely. I've been working for many years on how we can use AI to design better drugs. In medicine more broadly, how we can use AI to design better materials, help agriculture, can even help democratic debate tools. The question is,